4 trillion of assets, or more than that, and it effectively grew another Wells Fargo in the time that Wells Fargo had the cap.
It's just amazing, and you think about what this could mean for the next few years. You could get excited, but let's talk about the stock specifically, because you are seeing a reaction in Wells Fargo shares this morning, a little bit higher pre-market. A lot of this is priced in, though. Bloomberg Intelligence points out that, for example, since the November election, Wells Fargo has returned something close to 20%, outpacing the KBW Bank Index. So it seemed like people, specifically traders, were anticipating this.
Yes, I think the momentum towards clearing this hurdle has really ramped up, particularly in this year. It was clearing consent order after consent order. We were hearing optimism from CEO Charlie Scharf that they were really close to being able to say that this asset cap has been lifted. And now Charlie Scharf, he can go on the offense. He can really start to grow the bank, which means boosting investment banking. It means boosting trading, which requires a lot of capital to set up desks, and until now that had not been feasible. It means boosting lending for consumers and winning them back after this brand was tainted, and also boosting lending for companies, trying to attract more wealth managers, targeting credit cards. It's going to be a big challenge, but this is the moment for growth.
I'm just looking at, because Sonali Basak mentioned on our call earlier that they trade at a price to book of 1.5, which, you know, for a guy who went through the Euro crisis, that's a lot. And it's twice what Citi trades at. So their valuation is actually pretty strong.
Yeah, and, you know, if you think about the 10 years we've had, it has gone through a pandemic, and it weathered that well. It went through a regional banking crisis and weathered that well. And Charlie Scharf's kept quite a low profile as they've sought to put all of these wrongs right. So I think, you know, investors probably saw a pretty strong institution. It just wasn't able to grow and close the gap with its rivals.
For context, I meant me. I'm the guy who went through the Euro crisis. And I guess it's kind of inside baseball, because I was actually in Germany for years. And so I'm used to price to book of like a Deutsche Bank in, you know, 2016, which is like 0.3.
Yeah. I was also going to say, I mean, that stat might also say a lot more about Citi than it does about Wells Fargo at this moment
Good point.
in time. But Sally, great reporting. Really know that the team has been all over this, long in the making. That is Sally Bakewell. She helps lead our financial coverage for Bloomberg News. Meanwhile, we're about 20 minutes away from that opening bell, so you take a check on futures right now. The S&P 500, the color is red, but it's pretty much flat. Of course, we managed to close in the green yesterday. We were higher pre-market, and then we got that pretty soft ADP print, and you can see that sort of took the momentum out of the pre-market. The NASDAQ 100, a similar story. The Russell 2000, pretty quiet as well. Small caps have been outperforming, but today it feels like everything is restrained.
How's the Dow Jones Industrial Average doing?
I couldn't tell you.
Just type WEI.
That dusty old index.
On the Bloomberg terminal, up 214 points yesterday to 42,519. So also within striking distance of an all-time high.
Speaking of striking.
Yeah.
CrowdStrike. The outlook disappoints. It wasn't really that bad, and nonetheless, investors are punishing
the stock. We'll talk about the cyberspace next. This is Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
It saved 800 lives, including yours. I dare you to do better.
You will experience fear in the face of certain death.
I hope you know what you're doing.
So do I.
FBI!
There's a storm coming. You're about to be swept away.
That's enough!
Brenda is a CIA-trained interrogator with specialization. She is a closer.
Have you ever shaken someone so hard you broke their neck? That's what I thought.
Your mission.
It's impossible.
They're coming after us with everything they've got.
You're not gonna make it!
You're not helping. Get your seatbelt on. You asking me that now?
Every episode.
We're in.
On demand. Without a trace. Watch it anytime on demand on Pluto TV. Stream now. Pay never.
Let's get out of high interest and look at what's making headlines around the world. China is considering placing an order for hundreds of Airbus planes as soon as next month. The deal could involve around 300 planes, including both narrow body and the good ones, the wide body models. The deal would help cement Airbus's dominance in the Chinese market. It would also be a significant blow to Boeing, which has struggled to make sales in the region thanks to, obviously, those trade tensions. A ship carrying about 3,000 cars to Mexico was abandoned in the middle of the Pacific Ocean after catching fire yesterday. The U.S. Coast Guard evacuated all 22 crew members, transferring them to a nearby merchant ship. The Morning Midas was also carrying about 800 EVs on board. In recent years, there have been a handful of significant blazes involving vessels hauling EVs, prompting concerns that the batteries inside those cars are vulnerable to fire risk and can lead to major disasters. They're really hard to put out. And Hewlett-Packard Enterprise reporting quarterly revenue that topped analyst estimates and indicating the tariff impact this year won't be as bad as originally thought for that company.
Artificial intelligence has fueled a wave of demand for powerful servers and other hardware from HPE and other players like Dell as well, and Katie's super microcomputer.
Very interesting. And of course, HPE reported results last night. So too did CrowdStrike, and it's falling in a big way despite earnings beating estimates in the first quarter. Its unchanged full-year revenue outlook, however, was seen as a negative by some analysts, with Evercore and Canaccord, boy, downgrading the stock. Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh, joins us now. So Mandeep, this is an interesting one because everything was okay. It just seems like this was a case of really high expectations.
Yes, I mean, the multiple has rebounded since their global outage last year, which really did reset expectations, but they have executed well, and some of the metrics like gross retention was solid. They're talking about a second half acceleration, but they didn't change the guide. And that's why, you see the negative reaction. But to me, the big picture here is cybersecurity should benefit from all the AI deployment. When you look at the data that is being used for training these models, the inferencing, how everyone is excited about AI agents, everything involves a layer of cybersecurity. So from that standpoint, you would expect a category leader like CrowdStrike should see an uptick in growth. That didn't come out last night. They talked about second half acceleration, but AI wasn't a big piece of it, and I think that's why investors felt a little let down.
Well, putting AI to the side for a moment, which is hard to do, there's also just the fact that there's so many cyber attacks still. It feels like it's the new normal. You think about Victoria's Secret this week, for example, having its own outages.
Wait, what? What happened?
Yeah, Victoria's Secret had to delay its earnings because it's dealing with outages. Don't get too excited over there. But Mandeep, I mean, just the fact alone that this has become a reality for a lot of companies, shouldn't that be a long-term growth story for CrowdStrike?
There should be, but one thing that's unique about cybersecurity is the attack vectors keep changing. Like you may think it's a certain type of attack, a company is really good at protecting against it. Next time it will be a completely different type of attack, and that's why it's a very hard problem to defend against. But that being said, Google has announced this acquisition of Wiz for $33 billion. To me, that is where security is going. Cloud, browser security. And when I look at, a CrowdStrike, which has to now compete against a Microsoft and a potentially Google closing that acquisition, that is where the pure play companies have a tough task ahead of them because, look, in the end, Microsoft and Google can bundle cybersecurity and everyone will end up using their cybersecurity products because of the bundled offering. So that's the challenge that all the pure play companies have, even though CrowdStrike is a category leader in the endpoint side. But a security attack is never just about endpoint.
Right.
It's all these different vectors that could come into play.
I want to ask about Apple. I was surprised when I typed ANRGO on the Bloomberg terminal, and I saw that there are actually 23 holds and sells on this stock. I mean, I figured everybody would have a buy. Apparently, Laura Martin over at Needham has also downgraded the stock. What's the problem at Apple?
Well, everyone feels they don't have EPS growth without a proper refresh cycle, and the refresh cycle keeps getting pushed out because their AI play is not clear. I mean, when you look at all the other Mag 7 companies, they're going big when it comes to AI investments, data centers, large language models. Apple so far has been watching from the sidelines. Although I would say they have launched Apple Intelligence, it's just they haven't, invested big in terms of CapEx dollars.
Right.
And that's why market is underestimating their, AI prowess. But with that being said, I still feel when it comes to distribution, if you need a personalized AI assistant or anything personal that touches, AI agents, you need to do that on Apple's platform. Where else would you do that? So in the end, they will find a way, but they don't have their own large language model. They're not investing big CapEx dollars, and that's why I think people are slightly negative when it comes to their prospects.
Well, all these problems build on themselves, it feels like, because you say that, the sell side is underestimating the AI capabilities here. It seems like consumers are as well, because as Laura Martin said, this stock needs an upgrade cycle. They don't see it happening because it seems like those AI features aren't enough to entice people to actually upgrade their phones.
And the other thing is the supply chain. I mean, look, the tariffs keep coming back into picture time and again, and their costs have gone up. They quantified that $900 million tariff impact. So that could be even bigger. I mean, $900 million, we could be underestimating that given all the tariff talk. So the supply chain aspect is huge. But in the end, they have that lock-in with the consumers. Like, nobody wants to move out of the Apple ecosystem. And the barriers to entry for anybody coming up with a new device, even though OpenAI has talked about a new device, it's so hard to replace Apple ecosystem given so many devices that they have with the consumer. So that's the hard part.
We'll see what OpenAI and Johnny Ive come out with because no one knows, but very interesting. Mandeep, great having you on the program as usual. Mandeep Singh there from Bloomberg Intelligence. Check out his work by typing BIGO on your terminal. Katie, it's always interesting when we have someone famous.
Yes.
In the building.
Yes.
And I look over here, I see Andrew Slimin.
Sitting
Morgan
to
Stanley.
our left.
This guy has crushed it. I mean, global stocks at an all-time high. U.S. stocks 3% away, and he is beating in the funds that he manages both of those.
Do you think he'll come on TV with us?
Indexes, yes. Coming up, Morgan Stanley's Andrew Slimin. He warns of another drawdown, but just this summer. So is that an entry point before we swing back up? We'll ask him what cracks he's seeing in the rally. This is Open Interest.
All right.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to get bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Did you hear that?
You guys seeing this?
It is our job to take you where others won't.
Join Meredith Vieira and play along to 25 words or less on Pluto TV.
Clever.
Catch 25 words or less all weekend long right here on Pluto TV. Stream now, pay never. Come to me, darling.
I'm in the mood for a relaxing throwdown.
Let's fly! Truth or dare?
Truth. Truth.
You attack me every time I pass you in the hall.
I think you're cute.
Dream on.
Barclays is the latest bank to raise its S&P 500 price target, saying that peak trade uncertainty has likely passed. Barclays joins a growing number of firms upgrading their S&P 500 forecast after cutting earlier this year. Let's discuss with Andrew Sliman. He is Senior Portfolio Manager over at Morgan Stanley Investment Management. Such a treat to have you on set with us. And let's talk a little bit about the trajectory of the rest of the year, because clearly you have some firms coming out, raising their targets up just a little bit, but you think that maybe the summer could be a little bit of a disappointment.
Well, you know, it's hard to get optimistic now. The market's up 19% off the low. The time to get optimistic was in April. Easy to say now in hindsight. But look what happened. People, we started the year with the average price target was 6,500, a 16% return. A lot of optimism. You have a drawdown. Everyone takes their numbers down. Now they're taking their numbers up. So as a contrarian, and you're coming into the summer. I think second quarter earnings will be good, but then you always get kind of this lull between end of July and mid-September, and that's I'm nervous about that because I see a lot more optimism as we started the year. Now we're back to that level. That gets me a little nervous on the summer. And overall, my view has been, we can get into this, is the third year of a bull market, which is from, fourth quarter of 2022, was the first year, second year, 23, and so forth. The third year, is not a great year.
Right. But bull markets don't die of old age, right? So the question is something going to kill this, or do you buy in October when the third year is up? Andrew Sliman is going to stick around to answer those questions and so much more. A check on futures ahead of the bell. Katie, what are we looking at?
Here is the setup as we skate into the opening bell. It's pretty quiet, but the colors are green. The S&P 500 up just a hair. A similar story if you take a look at the NASDAQ 100 and the Russell 2000. Let's see if there's any fireworks to be found at the opening bell. Up next, this is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
This is a chessboard where people test their skill, imagination, and daring. Because it's also a map, complex logistics can be reinvented with AI. Thanks to reliable and secure connectivity from AT&T Business, goods are delivered quickly and efficiently.
hello to needle-free Neffy, the only epinephrine nasal spray for emergency treatment of allergic reactions, including anaphylaxis, that's designed to be fast, powerful, safe, small, and easy. So you can say hello dining out, goodbye missing out, hello celebration, goodbye hesitation, hello freshman year, goodbye needle fear. Use at first signs of allergic reaction. Ask your doctor how to use Neffy. If you have medical conditions or take certain medicines, your condition may worsen. Tell your doctor about nasal, heart, thyroid, or kidney issues, high blood pressure, Parkinson's, diabetes, if you're pregnant or breastfeeding, and all medications. Side effects include nasal discomfort, headache, runny nose, shakiness, and throat irritation. These are not all side effects. Say hello to your doctor and ask about needle-free Neffy.
Hello, Neffy. No needles. Goodbye.
How did you all live like this?
Blow on it. Wait. Pump it. Come on. There you go. Go for it.
I'm an angel. I'm here to help people.
You and your friend saved my life.
Awful lot of good people in this world, Mark. I'm just here to try to help them.
I really love this job.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller, and we're getting ever closer to 6,000 again on the S&P 500. Futures are higher right now, only 0.1%, but this market wants to rally. I said that yesterday, and we're now only 3% away from an all-time high. You hear the opening bell on the New York Stock Exchange. I believe Forbes CEO is ringing the opening bell with some editors at large. What does that even mean? What's an editor at large?
We seem to have a lot of them.
Not a lot of jobs get that kind of freedom. At the NASDAQ, AWS hoping for a unicorn. Celebrating the opening bell with a bunch of startups. Amazon stock is only up 67% in the last 5 years. I was really surprised by that.
Yeah, it is surprising. It's underperforming the S&P 500 over that time frame. Certainly hasn't felt that way. Shall we talk about Wells Fargo?
Yes, big story.
Let's talk about Wells Fargo. Analysts seeing new growth opportunity for Wells Fargo after yesterday when the Federal Reserve lifted that asset cap that has restricted its size for about 7 years. Gains of about 2.5%, which doesn't seem like a huge move, but Matt, as we were talking about with Sally Bakewell, a lot has been priced in since Donald Trump won the presidential election back in November.
All right, so we're going to continue to talk about that throughout the program because it's such a huge deal. I mean, 7 years is a biblical amount of time. And as Sally Bakewell told us, some companies like JP Morgan have grown one full Wells Fargo in terms of assets since that cap was put on. CrowdStrike, obviously it's a much smaller company, about half the size at $120 billion, but it's shrinking today because while earnings came in line with estimates and the outlook was pretty much bang in line, the street is not impressed. They said they're going to have $1.15 billion in sales. The street wanted $1.16 billion in sales. And this shows you how much you get punished for missing in a quarter when so many people beat. We're back here speaking of that with Andrew Slimman. He's a senior portfolio manager at Morgan Stanley Investment Management. And Andrew, one interesting point that you've made is that in the first quarter, companies beat estimates, and yet analysts are still lowering their full-year targets. Why?
Because of I think it's a great setup. I think that's a very that falls into the bullish ledger, which is just to be specific, first quarter earnings beat by $3.50. So in theory, the full year number should go up by $3.50, but the full year number went down by $10. Now that's consensus for the S&P because yes, it was good, but we all know it's going to get bad in the future. Well, what happens if it's not as bad? And so this is the concept that I think is important, which is the hard data is telling you something, but a lot of experts are saying, yeah, but it's going to get bad out there. And if they're wrong, I think you're going to see a chase into the end of the year in terms of people raising their numbers numbers because so far the data hasn't supported this pullback in earnings estimates.
Yeah, on the benchmark level, you've already seen that. Barclays, Deutsche Bank, Goldman coming out in the past couple days. I will note that the S&P 500 now is up 20% intraday from its April low. So if this holds, set to close in a bull market. And with that being the case, Andrew, are there still bargains to be found out there? When you talk about this great setup, are there still discounts or have we rebounded?
Well, I mean, back to Matt's point, which I think is really important, which is, look, can we find companies where they really blew out the number in the first quarter, and yet their full year number went down, right? And Amazon would be a great example of that, right? So there are a host of companies that really reported great numbers where analysts are I think too negative on the full year number. So that's where, I think the market's giving you an opportunity. Anytime stocks diverge from their fundamentals because something's going on, Washington, D.C., blah, 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 that creates an opportunity because ultimately stocks move with earnings.
So far it's been in the AI rally, the picks and shovels, right? Or the gear, the chips, the servers, as we were talking about this morning. But it hasn't been the companies that are making money on their AI, say, software products, for example. We were talking about this yesterday with Bruce Richards. He's bullish, though, that those companies are going to absolutely dominate. When does that happen? When do we see 100%. The ROI?
Completely agree with that. Go back to when we rolled out when the Mosaic browser was rolled out in '94. Well,
Katie?
No. Unfortunately, I do.
Sounds exciting, though.
So, but the internet really wasn't embraced until '97, '98, and that's what caused that big boom in the market in the late '90s was the productivity enhancement. So I think it's a lag, and that's why I think this year is just a pause year. But I think you're going to see this big productivity boom that happens starting next year as companies start to embrace this, because at the end of the day, let's face it, AI doesn't have a healthcare cost. It is saving money for companies.
I will never forget in the year 2000 when my colleague Andrew Bulkley told to me in the Frankfurt office at Bloomberg, just Google it.
Just Google it.
And I was like, what is that? What's a Google?
That was the
I had no idea in the year 2000 what Google was.
That's pretty amazing. I also didn't know what Google was in the year 2000. But I want to talk a little bit here about, so it sounds like you see this productivity boom coming next year. There's a bit of a lag, but it's coming. So what do you do until then? Do you just hang out in your money market fund and be happy?
Well, I mean, yes and no. I mean, now maybe a little bit more so than a month ago or a month and a half ago, because I think at the end of the day, the market will end the year higher, just not substantially higher. But if I say to you, Katie, look, the market's going to be up 4%, 5% this year. Well, the market's not going to go up a little bit every day. There's a lot of volatility, and lo and behold, in low returning years, you tend to have more volatility. So that gets back to the point of, do you tack against the wind, the headwinds? So I think it's unlikely that the volatility is over. I think we'll make an all-time high. I think second quarter earnings are going to be pretty good, and then we're going to get to this pause period, and that's what gets me a little nervous about later. And so volatility can be your friend.
What's your funds, as I mentioned at the top, the Global Concentrated Fund, MLNIX, and the U.S. Core Fund, MUOIX, have outperformed pretty drastically this year. I mean, you beat global stocks by 40%. You've doubled more than the S&P 500. What's your process? Do you look at history? I mean, you were talking about the length of a bull market. Do you go bottoms up? I mean, what do you do to win?
Well, I think winning, I think we put too much emphasis on the ability to predict what's going on from a macroeconomic, and we don't focus enough on the behavioral aspects. This is the only business I know, Matt, where when prices go down, people sell. And when prices go up, people buy. And so as a core manager, I don't know if that's going to be in growth or value or financials or technology. I don't know. But I know people will react poorly. And so as a core manager, whether it's globally or domestically, if we can tack against the wind, that's our advantage. And I'll give you a perfect example of what I mean. When the market was down, close to 20% in in early April. Everyone was buying the safe stocks. It's like, well, they've already worked. The market's down 20%. So that was a time to get more aggressive. Now, as a long equity manager, I think it's a time to, okay, maybe I want to own a few more of those defensive stocks to protect the downside. So I don't know what's going to work. I just know that behaviorally people will consistently kind of move to what's already happened. And if we can tack against that, that will generate good returns.
All right, Andrew, that's a good place to leave it. Hope to see you again in studio soon. That is Morgan Stanley's Andrew Sliman. Meanwhile, let's get a check on this market. Of course, set for a bull market. Like I said, if we hold at roughly these levels right now, we're just below 6,000 on the S&P 500. And if you take a look at the breakdown of how we're getting there, it's kind of an even split when you take a look at the numbers of gainers versus losers. You have almost 270 names in the S&P 500 in the green right now, a little less when it comes to the red. And then you take a look at the individual names. You have Broadcom, Meta, Nvidia, Apple, all leading the way higher when you take a look at the points contribution here. That's what you want to see. That's what's getting us to closer to those all-time highs. On the downside, you have a big weight when it comes to CrowdStrike, as we've been discussing. Investors not really loving the earnings that they delivered last night. You also have Philip Morris and Tesla, Palantir, etc. there. Let's take a look at how this looks on the sector level, though. Like I said, pretty much an even split, a little bit more green than red, though. Communication services at the top, healthcare too in second place. Eli Lilly having a big day, and then big tech coming in. You take a look at the bottom, and you do have some laggards today. Consumer discretionary real estate. Then it gets a little bit more real when you take a look at consumer staples and at utilities, Matt. That sector currently off by about 1%.
Well, that's a good time, I guess, to buy in that case, right? According to Andrew. I mean, especially since that's one of those defensive sectors, but utilities had a pretty good run yesterday with Constellation. Coming up, from extreme weather to supply chain uncertainty, taking precautions is more critical than ever for this, well, business owners, I guess, in this environment. We're going to get insights from Pat Gallagher. He's the CEO of one of the biggest insurance firms that you've never heard of. Gallagher's chairman and CEO joins us next. This is Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
When I started college, so many people warned me about credit cards. They just seemed really scary. When I needed a car, I realized that I needed to build credit. So I got the Chime Credit Builder card because I could safely build credit without being afraid of fees or interest. And there was no credit check. My score went up over 60 points and I bought my first car. As a busy college student, having a car is an absolute must. I feel like I could do anything. My next goal, a 700 credit score. Join me at chime.com.
Watch the NBC Sports Now channel. Enjoy Sports Talk covering the biggest stories, plus events and highlights. Watch now on Pluto TV.
This is the challenge.
The Challenge Channel keeps you in the competition.
The most competitive and cutthroat game on television.
Insane stunts. Endless grit. and scandalous hookups.
It's gonna get ugly.
Turn players into legends.
Legends of the Challenge franchise.
Revel in all the mud, sweat, and tears on the Challenge Channel.
Join Light the Fuse on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, a big call out from Needham on Apple getting downgraded because of growth concerns and because of its position in the AI landscape. The analyst over there, Laura Martin, writing that, quote, for this stock to work, it must have the catalyst of an iPhone replacement cycle, which we do not foresee in the next 12 months. Apple shaking it off a little bit this morning. Next up, we have Snowflake getting raised to a buy over at UBS thanks to an upcoming investment cycle. The software company gave a strong outlook for quarterly sales after launching a number of new products over the last year. And finally, we have Taco Bell and KFC parent Yum Brands getting upgraded to a buy over at Goldman. The firm cites its best-in-class growth versus its peers, and Goldman actually sees 16% upside in the shares, which are currently off by about 0.4%, Matt.
All right, let's talk about big growth business that you may not have heard of. Insurance firm Gallagher released its annual business owner survey. The results finding owners are taking extra precautions to safeguard their businesses, many growing increasingly concerned about extreme weather.
But there are a lot of other serious concerns, like supply chain, obviously, and cyber attacks more recently. Pat Gallagher joins us. He's the chairman and CEO of the company. And Pat, before we get to that, I got to ask about your growth, because I'm constantly astounded when I look at these charts. Over the last 5 years, you're outperforming massively. Over the last 10 years, you're outperforming massively. I look at the analyst chart, and their price targets are consistently under where your stock is going. Why do you think people underestimate Gallagher?
You know, it's a really good question, man. I don't know. I think people, in general, don't have a real clear understanding of insurance. That's one of the reasons I appreciate an invite like this. There's a lot of people that just think of insurance as kind of a tax on what they do. And what you really don't realize is how important it is. I always make the comment that people don't realize insurance is the oxygen of commerce. You don't have insurance, you don't breathe, you don't do anything. You don't send a container somewhere, you don't buy a car, you don't build a house, etc. And when you look at that, then you realize how important it is, and business owners get that. There's no question about it. They know that once they write a business plan and buy a truck, they buy insurance, and that's because it's their family money. And they're concerned about what's going on out there. And when we do our survey every year, and we talk to 1,000 of these owners, you can see clearly that the concerns that come through touch right on risk management and insurance.
Right.
So what are you concerned about? Weather. What do we take care of? Weather. And the insurance industry steps up in these environments and really makes a difference. You've got about $200 billion of catastrophe loss monies that are going to be paid in the United States alone in a year. That's a huge spread of risk. And what that really means is that for those companies to have stability, they need proper coverage. And as that becomes more and more important, people like ourselves are advisors. We don't take risk. We're a broker. So we help that client work through if it's supply chain, if it's weather related. They'll even ask us for advice on where to relocate. If they're seeing, you know, I just can't take another hurricane and keep my business alive.
I got to get out of Florida.
Well, or position yourself somewhere else in Florida. Florida's important. And so it's all those things are very nuanced. They're very important, and it's incredibly important that people realize we're not just selling insurance. Of course we sell insurance, but we're also advising on all the things you should be doing to make sure your risk profile is better.
You have 57,000 employees, right? Or at least you did at the end of the year. And I'm looking at the stock; it's up 800% in 10 years. So you've taken this business from, I guess your grandfather started it, 500 years ago, and now you
100 years.
And now you've grown it. I mean, exponentially.
What is your process? How do you do that?
Well, I think the thing that differentiates us is there's a couple of things that are big differentiators. Number one, we really are a composite of acquisitions. There's 30,000 agents and brokers in America, and I'm very clear about the fact that we're not a roll-up company. We're building essentially a business together with partners who have done well in our business locally. When they join Gallagher, they get a whole composite of new tools. Data and analytics are becoming much more important. The relationship with carriers, what we have in terms of expertise relative to the very verticals they're in, whether it's construction, religious, not-for-profit, real estate, et cetera.
Right.
People want to trade with people that understand their business. So what you've got is these 30,000 entrepreneurs who, by the way, do well. If they combine together, bringing their brain power to what we have, it makes the whole enterprise stronger. And I think our biggest differentiator, frankly, is our culture. We like each other, we work together, we come 100% behind helping a client. And everybody gets that. And so over and over, we buy somebody and they'll say, yeah, I'll be here for about 3 years. I'll sell you the business, but count on about 3 years. And 7 years later, you say, how you liking it? I'm still here.
Well, let's go back to this survey, this annual business owner survey that you launched. You talk about some of the concerns there. Extreme weather, for example, is one. But at the top of the list, I thought it was interesting to see cyber security up there. We were just talking about Victoria's Secret, their cyber issues this week. But it's across every industry, it feels like, these cyber attacks.
So very clearly, I've been saying this now and that's one of the examples of how the insurance industry is so dynamic. We never talked about cyber 15 years ago. I heard you in your previous segment talk about Google. 2020, you didn't know what it was. Today,
2000.
2000.
Yes,
sorry.
2000.
2000.
By 2020, I was already.
You were there. You were there. Sorry, man. But the truth is, if you're running just a little store, bodega, you should be considering cyber cover. And it's that critical to the long-term safety of your company. And people need help with that. What is cyber? What does it include? Well, it includes the help you get after you've had a problem. And that can hit anybody from a small trucking firm all the way up to the likes of Victoria's Secret.
Yeah.
And even if you're Gallagher at 57,000 people and you have a breach, you need a tremendous amount of assistance. And that's a big part of what the product brings. And I think it's good to finally see it making the radar screen,
because we've been telling our clients, and there was a time when we were frustrated. We had said to ourselves, every single client will be talked to about cyber. And about 16% a decade ago were buying it. And that's ramping up incredibly now.
It's a great point, too, that, I mean, okay, it's one thing for Victoria's Secret to have a cyber attack and have to deal with it. It's a totally another thing if you're a small company such as a bodega. Running up against the clock here, unfortunately, I have to leave it. Really great to see you, especially in studio. Our big thanks to Gallagher's Pat Gallagher. Now, coming up, Dollar Tree, warning of a profit hit from, you guessed it, tariffs. Details next. This is Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to get bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Who are you? I'm just another cop.
Lieutenant Kojak.
My name is Lieutenant Columbo.
I won't quote you. Now spell it out.
Columbo.
Those were gunshots. Go discover the bodies. We're gonna find out what the heck is going on here.
How long has he been dead?
What did we miss?
Party's here!
It's like we beat up that beat. GTL, baby. Gym Tan Laundry.
We are here to blow this place apart. I don't know how I'm alive. Watch the Jersey Shore channel now on Pluto TV. Stream now, pay never. Pluto TV has 3 classic sitcoms all in one place.
You want to go upstairs and fool around? No.
Classic TV Families channel on Pluto TV.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks as we approach 6,000 on the S&P 500 again. Right now, 59.86, 59.87, up 0.25%. The NASDAQ gaining about as much as well. A lot of red on the screen for a green day. Crucially, NVIDIA is only down 0.1%. Tesla off more than 2% as Chinese shipments disappoint, down 15%. CrowdStrike, we've been talking about, kind of missing its outlook. And then Dollar Tree, we're going to talk about right now. Katie, what do you got?
Let's do that. Dollar Tree warning of a profit drop due to tariffs despite adding more than 2 million new shoppers last quarter. Now, the retailer anticipates a re-acceleration in sales to close out this year. Let's break it all down with Bloomberg retail editor Emily Cohn joining us now. So let's compare and contrast here because we got Dollar General yesterday. Shareholders seem to like the fact that they were kind of mitigating and navigating these tariffs. A different story when it comes to Dollar Tree.
For sure. So Dollar General is not your typical dollar store. It's much closer to a grocery store. I think something like 80% of its sales come from consumables, things that you eat. Dollar Tree is much more your classic dollar store. And what that means is that they're way more exposed to tariffs, the stuff that's coming from China. China's its #1 source of imported goods. So that puts it at, in a much weaker spot than a store like Dollar General.
So what do? I mean, do they become the $5 store?
There are some pluses and minuses in this report. I think they're saying that more people from upper income families are coming to shop. I think they probably saw a little bit of a pull ahead of people shopping ahead of tariffs.
But they can't raise prices much, Emily, right? Because isn't the idea that everything costs $1?
That's true. That's
or
true.
Is that
but
not
I feel
the
like
idea?
They've moved away from that $1 price tag a little bit.
They can probably raise prices a little bit. They can probably, like Dollar General, negotiate a bit with their vendors. There's some other mitigation efforts there. But yeah, you can't raise prices that much if dollar's in your name.
That's true. We only have less than a minute left with you, but bring us forward to after the bell today because we have Five Below to kind of close us out here.
Five Below is also in a similar spot as Dollar Tree.
Again, locking themselves in on a price with the name. It has to be below 5, right?
It's true. But yeah, we saw in April they turned around a shipments of goods coming from China. They're much more dependent on China, and I think we'll be watching for that and how they're planning to mitigate the cost of these tariffs.
All right, Emily, every time a store that sells stuff for only $1 or less than 5, we're going to call you back. Emily Cohn there talking to us about today, Dollar Tree. Coming up in the next hour, Ann Maletti of Allspring sees opportunity in healthcare stocks. We've seen a lot of M&A there this year. We also have the CEO of the jeweler Kendra Scott on the rise in gold prices, and that rise doesn't look set to stop as central banks continue to buy. Plus, Citizens CEO Bruce Van Saun joins us at the desk to give us the look from a bank that operates on Main Street. This is Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
All reality WeTV.
My family has drama clues.
It's real voices.
Never know what's going to happen once you get us all together. There is a skinnier person inside of me.
It's real emotions.
I do. Robbing a bank is kind of a turn on.
Unbelievable. And it's all in one place.
I had 72 hours before the marshals come after me.
What?
I'm here for it, honey. All of it.
All reality WeTV.
I'm an angel. I'm here to help people.
You and your friend saved my life.
Awful lot of good people in this world, Mark. I'm just here to try to help them.
I really love this job.
We're going to solve this case with a little thing that I like to call police work. Let's get started.
She's the yin.
The brain activity shifts to carry out productive gray.
And she's the yang.
I have no idea what that means.
Watch with Zoe and Isles anytime on demand on Pluto TV.
Rail, name something that's hard to do with your eyes open. Read. This boy in college. He leaned into the mic and said, read, Steve.
Watch the Family Feud channel on Pluto TV.
Sally's falling into some quicksand.
Let's go.
We are 30 minutes into the trading day and pushing towards 6,000 on the S&P.
The moment we've been waiting for. We are looking at bull market territory. They are back. We've been talking about it. The bears are now hiding, it seems like, for now.
Yeah, we're just less than 3% away from an all-time high. That was 61.44. I think we put it at the end of February. And globally, stocks are at an all-time high. So
Yep, and it's interesting because the yields are lower today on the heels of softer economic data. And it actually
didn't even look yet today.
Like we are looking at even more soft economic data. So we're going to bring in our own Michael McKee to talk about that. We're looking at ISM services looking like it's coming in lower than expected.
It's coming in a lot lower than expected. We're in contraction territory here at 49.9, down from 51.6. This is a surprise. The feeling was that it wouldn't be changed during the month at all, go up just a little bit. The other numbers are not particularly good either. Prices paid rises to 68.7 from 65.1, so you get some inflation at the same time that you get a contraction in activity production. 50 goes to 50 from 53.7. New orders falls into a big contractionary territory, 46.4 from 52.3. And employment rises just a little bit, 50.7 from 49. So we'll see how that feeds into what we get on Friday. But the interesting thing, of course, earlier today, we had the ADP number come in as a big surprise, only 37,000 jobs. Not saying ADP is a great forecaster, but
I wanted to ask you about that. And I guess probably 3 or 4 times a year I ask you, hey, Mike, how important is ADP as we head towards the non-farm payrolls number on Friday?
Well, ADP is not particularly important in terms of its overall number, but in terms of the direction, it kind of gives you some information. It might get incorporated a little bit into tomorrow's or Friday's forecast.
But it's not super predictive.
But in April, ADP said there would be 60,000 jobs created, and there were in the private sector, and there were 167,000. So you're not going to get much of a steer from them. But they do get traded on a lot, so people pay attention to it.
All right, Mike McKee, thanks so much for joining us, our international policy and economics editor. And Shanali, I hadn't even checked the yields today. You didn't remind me this morning, and we're below 440 or right there on the 10-year right
Yeah,
now.
and it's interesting. The latest data that we just got at the top of the hour brought yields even lower. Interesting to see how this push-pull is going to play out. I know later in the hour we're going to talk about that tax bill. So the long end being lower is kind of interesting with that.
Elon Musk doesn't like it.
Doesn't like it too
Apparently.
much, yeah.
And he's pretty important. Also very important in these markets, Ann Maletti. She's the head of equity investments at Allspring Global Investments. And Ann, I got to ask you about the bullishness here. I mean, we've now entered an official bull market, as Shonali pointed out, right? So we're 20% up from the bottom. We're 3%, 2.5% away from an all-time high on the S&P 500. Globally, stocks have hit a high. What's going on? Aren't we worried about the tax bill, as Shonali said? Aren't we worried about the tariffs? Isn't there so much uncertainty?
I mean, there is a lot of uncertainty, and I feel like we've had some overcorrection in both directions, right? We had a lot of fear driving the market to the downside after Liberation Day, and then we've had this kind of what I would call maybe a quick, sharp overcorrection on the upside, where people have quickly gotten comfortable with, yeah, tariffs won't be as bad as we expected in the beginning. But I would say policy uncertainty remains, and there's still a lot of things that we need to work through. So while I, still encourage investors to remain invested, where you are invested, I think will matter. And I like to tell people, you got to be comfortable being uncomfortable because, I think we're going to get a little uncomfortable here.
So what does this mean in terms of where you see the S&P going near term? We were talking about a little earlier, heard you and Katie talking about strategists revising to the upside. But if you think that we have corrected too much to the upside, are you still worried about a drawdown before we revise higher?
Yeah, I will never get timing perfectly correct, right? So whether or not this continues, I don't know. But what I would suggest is that there are places in the market that haven't that have maybe been ignored more than others, and those are the places where I'd pay more attention to. Focus on diversifying your portfolio and making sure that you're thinking broadly about risk versus reward instead of being in areas of concentration and areas where there's greater speculation.
I want to ask about the tax bill because Elon Musk has come out and really railed against it. You could say, okay, there's a lot of theater, right? These are very dramatic people. They like to get the headlines. They're all about the changing news cycle. But you could also say he got President Trump elected. I'm not sure how right you would be, but he's been incredibly influential,
He's also
right?
giving fuel to the people who want to vote against
Exactly,
this tax bill.
exactly. So you could use Elon Musk as cover to go against Donald Trump. How closely are you watching this?
I mean, I think the tax policy is critically important. There was a lot of focus on tariffs, and it felt like, the market could kind of focus on one thing at a time. It was tariffs, and now it was kind of a slow shift, but now the shift is a little bit more on tax policy. I think, I'm not an economist, but when I look at all of the reports out there, if we don't get a tax policy passed, the impact on GDP is at least another 1%. So it's significant. It's just as big in some ways as the tariff impact, and so to the impact on growth. So it's critical. I think what we're seeing now is politics in real time and negotiation in real time, and we'll see where that turns out. But to your point of how did we get here, and are we a little bit too frothy based on everything that needs to settle out, that's kind of where my gut is, right?
What are some of the more important parts of the tax bill to you? Ultimately, there's the level of taxes, but then there are the fine-tooth comb details, right? We talk a lot about Section 899, for example, this idea that foreigners...
Maybe not enough.
Yeah.
The revenge tax.
The revenge tax. People are really worried about it, particularly bond investors. Is it something that concerns you?
Yeah, it's funny. I like to take the focus out of what I'm concerned about, because I think one of the best things I can do and investors can do in this market is not put any emotion in what's going on, but say, okay, if I take emotion out, what are the equity markets focused on and what are the bond markets focused on? And I would just say, as an equity investor, I'm a little bit more focused on what the bond markets are telling us here about the potential implications of this tax policy. And I can't ignore that as an equity investor, even though, you know, the market is kind of climbing higher. And so that's where it gives me some pause. And I do think there is real risk. There will be trade-offs, there will be some challenges, and you know, that issue that you point out, I think it's just another point that gets put in the negotiation of, you know, whether it's tariffs or trading, like what's going on in the background that we don't know about.
You know, it's interesting, going back to your thought here on Elon Musk and how he sees the tax bill, I will say the one thing he's not influencing is the bond market. You do have yields lower despite all of the bell ringing that's going on X
but
right
I was
now.
going to say, maybe that is because of Elon Musk. Maybe the fact that he's giving cover to those who could vote against the bill means bond traders aren't worried about Section 899 because it's not going to pass. And that's why we see the 10-year down 7 basis points right now. Anne Maletti, great having you on the program. Thank you so much for joining us. She is head of equity investments at Allspring Global Investments. I want to get a look at some of the single stock movers this hour and kick it off with one that's incredibly important to Shonali and to, I would say, a large base of our viewers. Wells Fargo rallying not quite as much now as it had been, but I think it is. I've been using the term biblical, right? Because it's been 7 years that they've been under this cap, and it is now lifted. And Sally Bakewell told us a bank like JPM has grown an entire Wells Fargo since that cap was put into place.
It's absolutely incredible the amount of business they've lost over the time of the cap. They are now unlocked. They are unleashed. But the challenge for Charlie Scharf is really interesting here, getting deeper into investment banking, into trading against the giants. So I would say the competition is on. A fun fact about the price to book value there for Wells Fargo, not only are they about double Citigroup, they're actually more than Bank of America.
We have a chart. I believe Joe put a chart together. This is just the two, Wells Fargo and Citi. You can see Wells Fargo at the top, 1.5 in terms of price to book. Citi, only 73 basis points, I think.
Yep.
It's interesting, though, if you put in Goldman Sachs, which is like 170, and then JP Morgan, which is like 2.25, right?
Incredible.
So, yeah. You've really got me into these banks, Shonali.
Oh, I'm loving that that's the case.
Thank you very much for that.
Anyways, we're looking at CrowdStrike as well. Cyber has been a really interesting part of this market. They have fallen after a disappointing outlook and multiple analyst downgrades. And HPE, what do you call it?
Hewlett-Packard Enterprises.
Says after it says it expects a reduced impact from tariffs on its businesses this year. It is up, but only marginally, about 0.1%. Now, coming up, PE power players. We're live from Super Return with Steve Wise, Carlyle co-head of America's Corporate Private Equity. This is Bloomberg Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
People couldn't see my potential, so I had to show them.
I've run this place for 20 years, but I still need to prove that I'm more than what you see on paper.
Today, I'm the CEO of my own company.
It's the way my mind works. I have a very mechanical brain.
Why are we not rethinking this?
I am more.
I'm more than
who I am on paper.
goes off.
Party's here! Oh yeah! Guidos everywhere, hot girls, and house music.
It's like we beat up that beat. GTL, baby. Gym Tan Laundry.
That's how they make the Guidos.
We are here to blow this place apart.
As one big blur.
I don't know how I'm alive.
Watch the Jersey Shore channel now on Pluto TV. Stream now, pay never.
Pluto TV has 3 classic sitcoms all in one place.
You want to go upstairs and fool around? No.
Classic TV Families channel on Pluto TV.
Brenda is a CIA-trained interrogator with specialization.
Do I make myself clear?
Right now, while the tariffs and Liberation Day got a lot of the headlines, the market forces, the so-called BOD vigilantes, have woken up those to the concern about the growing deficit in the United States. So in the marketplace right now, with a little bit slower growth and some concern, a lot of hand-wringing, the deficit issue has taken the main stage versus the impact of the tariffs. Now, this administration, we can't get too comfortable. There can be a headline in the next few minutes to change that. But right now, the big focus is on rates, and the deficit, obviously, is the current administration is focusing on their big, beautiful bill.
Now, Apollo President Jim Zelter speaking to Bloomberg earlier from the Super Return Conference in Berlin. Carlyle's David Rubenstein expressing the same sentiment last month, saying that tariff concerns are likely to fade from view by the midterm elections. We're going to head back to Berlin, where our own Danny Berger is standing by with another guest from Carlyle. Danny, take it away.
Shonali, thank you so much. That's right. I am here with Steve Wise, the co-head of American Private Equity at Carlyle. Steve, thank you so much for joining. Really great to see you.
Thanks, Danny. Happy to be here.
So, I mean, it is this moment of incredible volatility where you have policy volatility, volatility in markets, but we've done a round trip in them some, and at least public equities. Are we too sanguine about this moment of stress? Are we whistling past the graveyard?
Well, it's an interesting observation. I think I'm a little bit surprised the market is up where it is. The S&P 500 is up over 5% since April 2nd, and EBITDA multiples are close to 15 times, which is really just a turn lower than the all-time highs in 2021 and really all-time highs in decades. And personally, I don't think we have the clarity to be at that level right now. We really look at the data. You know, Q1 was solid. If you parse out some of the inventory noise, the economy grew at 2 to 2.5%. And April and May so far seem reasonable, pretty benign. Inflation's in a reasonable place. I think some people thought we'd have higher inflation from reaction from businesses. Unemployment is in a pretty good place. But there's a lot of noise around shipping data from China, down a lot into ports into Los Angeles, but in some ways diverted to other parts of Asia and still making its way to the U.S. So it's hard to parse through that. We look at the consumer data as well. That's very important. That's been very choppy. Sometimes the consumer's more confident, sometimes it's less confident. I feel like it's really almost following the volatility in the stock market.
I mean, that's such a hard environment to do business in, with the uncertainty being the buzzword, with uncertainty about consumer trying to understand the data. I know you just had a forum where you met with many CEOs. What is the sentiment? What did you hear from them?
Yeah, we just, fortuitously, we had a forum with our CEOs, about 40 of our CEOs just a few weeks ago. I think the reaction back then was, wow, just trying to understand the magnitude and the severity of the tariffs. It kind of caught a lot of people off balance. But in the last few weeks, they've had a chance to catch their footing. I think a lot of CEOs, certainly our best CEOs, have found their footing in this moment. And they've kind of gone through a playbook. You know, the first thing is assessing the risk. You know, for those that have direct tariff risk, what is that and how do you assess it? That's been done. That happened in a few days. Then it's how do you shore up your supply chains? How do you find, get vendor concessions, alternate supplies? A lot of that's been done, and some price increases to the extent you can do it. The third thing that they've done is look at their balance sheet and their liquidity and make sure they can endure, you know, what could be another change to the tariff situation. And it's also a really good time to find a way to cut costs. It's hard to cut costs in really ebullient times, but in times like this, it's an opportunity to tighten your belt. The fourth thing that they've done, and the most important, is staying close to the consumer, the customer, and seeing what the customer wants and what the customer needs. A lot of our company's competitors had a haphazard reaction to the tariffs and increased prices very quickly, which really made customers upset. A lot of our better companies didn't do that. They talked to their customers, they figured out what was needed, and they're able to take a lot of market share. So that was, hugely important. And the last piece is just investing in their business, being more aggressive, and being having their foot on the gas when others are retreating.
That's interesting, because what we've heard from a lot of businesses is now is the time to pause, to not be spending capital, to wait things out. Is that not what you're telling your CEOs to do? You're saying go full forward and now is the time to invest in yourself?
For companies that have a lot of tariff exposure, and that's a very small part of our portfolio, we want to make sure those first things that we said are in solid shape first. But for a lot of our companies, which are service-based, US-only based, which are in technology, they're in healthcare, they're in financial services, they don't have a lot of direct impact. We're asking them to lean in and be aggressive while others are retreating.
So in Carlyle's last earnings, analysts really lauded it as the return to growth for private equity. There was a lot of excitement, but within that, Harvey Schwartz talked about this idea that we're not in a red light environment, a green light environment, but a yellow light environment. What does it mean to grow Carlyle's private equity business in a yellow light environment?
Well, in a yellow light environment, we are leaning into our power alleys. We're leaning into areas where we have strength. That's healthcare, that's financial services, that's technology, that's aerospace, defense, and government services. As you know, our heritage is in DC. We've got a real right to win in that area. There's a lot happening in national defense and in cyber. We're spending a lot of time there. We're spending a lot of time in healthcare, in medical products, and in pharma, in areas of innovation. And we're spending a lot of time in financial services, where we've have had really good success, especially in the wealth channel and the democratization of wealth.
Well, Steve, we could do this all day, but I'm afraid we are out of time. Thank you so much for joining. Really appreciate you being very generous with your time. And with Sonali, with that, I'll toss it back to you. That's Steve Wise of Carlyle.
Danny, we appreciate it. That is our own Danny Berger at Super Return. We're going to stick with private equity because Goldman Sachs is embarking on its most ambitious effort yet to offer an exit ramp for investors who've been trapped in buyout funds. Joining us now with the details, Bloomberg's chief Wall Street correspondent, Sridhar Natarajan. It's interesting to me because on one hand, you have firms like Carlyle that are stepping out. They're trying to do deals. KKR spent gobs of money in the market downturn buying new assets. It's not the assets that they're buying that are the problem. It's the assets that they've held, maybe since 2021 at the market peak, that they have not been able to let go.
And the biggest clue for you was exactly what our Carlyle guest just said, that when you hear them talk about this yellow light environment or a lot of noise out there, that is code for it is a challenging market out there. And that has been the case for a lot of these private equity firms, and therefore has been very frustrating for their limited partners, for their investors, because it has operated in this time-honored cycle of investors will put in money into a private equity fund, get that money out, more money than they put in a few years, and are able to reinvest in new private equity funds. When any one part of that cycle breaks down, then you have a problem, and that's where we are, which is why we've seen this incredible explosion in secondaries.
Look at the chart here. I mean, we're seeing the explosion illustrated on your Bloomberg terminal there, from 26 billion in 2013 to 172 billion now. How much of a slice of the pie is Goldman taking from this?
Well, Goldman has had a big secondaries business. They have about $44 billion of a secondaries business. Off that, the private equity business, their flagship vintage fund had raised about $14 billion in its last iteration. It will try and top that amount for its 10th fund. So let's talk about 15 billion or more. It could still be challenging, but remember that a lot of these secondaries funds in the past used to directly deal with LPs, used to strike deals with LPs. Now what's happening is a lot of the private equity funds themselves, they don't want to sell off their stakes at lower valuation. So what they are doing is going into this new mode of financial engineering with continuation vehicles. So these so-called GP-led deals are becoming a bigger bigger part of secondaries. One of the reports out there says that 60% of secondaries fund right now are participating in these GP-led secondaries than directly with LPs.
What's amazing to me is even in the lack of activity right now, when you see exits, you find this entire industry finding a myriad of ways to do a whole lot of business. Exactly.
Continuation vehicles,
yeah,
why not?
Let's keep that party rolling. With that said, I want to ask you about what this all means for Wells Fargo, too. You have a bank that is on the brink of re-entering investment banking or doubling down in a bigger way. One of the main competitors still is the private markets. We know Wells Fargo was early to make a private credit deal. However, how are they going to navigate a market where the amount of competitors are now also rising in the non-bank space?
So let's set the backdrop a little bit for our audience, because what happened for Wells Fargo yesterday, the news out of the Federal Reserve, the fact that they no longer have to contend with that asset cap is a big deal. This finally means that they can get out of the gate and compete with the likes of JP Morgan, with the likes of Bank of America. They were shackled from doing that for the last 6 or 7 years. Now that opportunity is there for them again. Charlie Scharf has been talking about the fact that this is not the kind of environment where you go out all guns blazing. You don't just flip a switch and say you'll get big in everything. But their opportunities really lie middle of the fairway. More in trading, more in capital markets, wealth management, credit cards. They could finally go back there. When they were back in 2017, their assets were about $2 trillion. JP Morgan was 2.7. In 2025, Wells Fargo assets are still at $2 trillion. JP Morgan's at $4 trillion. They have grown their assets by about 60-70%. Bank of America by 50%. Everyone else has grown. Wells Fargo, therefore, has a great opportunity without having to worry about having to fend off these private markets rivals and peers.
It's like falling asleep and waking up in a different land, where JP Morgan was your one competitor. Now you have Citadel Securities and Apollo, too.
It's an incredible story. Sri, and great to have you as Chief Wall Street Correspondent to talk us through some of them. Sri Natarajan from the BN side. Tomorrow we'll be back at the Super Return Conference. It's a good one in Berlin, with more, including an interview from Thoma Bravo founder Orlando Bravo. This is Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Do you think there's a chance that you and I could go someplace and laugh together?
Makes you laugh so hard the beer comes out of your nose.
Life is funny.
Hilarity ensues.
So, if you're in the mood to laugh out loud, stream Cheers and Frasier.
Come on, you love these guys.
Coming Coming up, we're going to take a look at how rising gold prices are impacting the jewelry market. Tom Nolan joins us, the CEO of Kendra Scott. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but he persistently missed packages. So he scheduled his deliveries from Amazon Business.
Peter Piper picked peppers, but run, rock, rhyme, Humpty Dumpty fell down. Kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
Bringing a snowboard to a gunfight? That's a Triple X move.
Let's crash this party.
Catch Triple X and Triple X State of the Union now on demand on Pluto TV. Stream now, pay never.
This is the challenge.
The Challenge Channel keeps you in the competition.
The most competitive and cutthroat game on television.
Insane stunts. Endless grit. And scandalous hookups.
It's gonna get ugly.
Turn players into legends.
Legends of the Challenge franchise.
Revel in all the mud, sweat, and tears on the Challenge Channel.
Speed Sport 1 is your home for live racing on Pluto TV.
We got him smacked up fresh!
Speed Sport 1 on Pluto TV, your destination for the best racing action from the U.S. and around the globe.
And I want to pull up a gold chart here for everyone because we're watching gold up over 40% over the past year, bolstered by safe haven demand. Just last week, Goldman advised investors to turn to gold as a hedge against inflation. We're off the highs, but pretty close to them. And Matt, gold might be great if you bought it here at the lows, but if you are buying gold to make jewelry, this price appreciation might look a little differently.
Yeah, absolutely. It can have a real effect on an impact on your business. Let's get a read on how that gold spike, and maybe it's more than just a spike, is impacting the jewelry industry. Joining us now is Tom Nolan. Kendra Scott, CEO. Kendra Scott is a fashion lifestyle brand, continues its brick and mortar expansion, and obviously gold is a very important part of their business. Great to have you, Tom, on the program. It looks like the rise in gold prices may be here to stay. Bloomberg got a great story out overnight about central banks just buying in size, and they don't plan on stopping. So how do you deal with that as a CEO running this business?
I mean, look, there's so much volatility in the market right now. I think the 25-year high of gold was $3,500. We're not quite there yet, but it may be. I think the team's done a great job of hedging on the front end to make sure we have enough inventory on the raw materials and commodity side of things to protect the business, to make sure that we continue to have a high value proposition for our customers. At the end of the day, that's what we care about.
Does it make you force yourself to look elsewhere outside of gold? You look at silver prices, and they have risen over the past year also, but it doesn't look the same as gold. There's more volatility there. What do you want to do with that?
We want to do what the customer wants us to do. So, I mean, the customer said she likes and he likes silver, she likes and he likes gold, so we're pretty diversified across the portfolio.
How does the consumer look to you? And tell us first about your target consumer. So who are you after, and does he or she or do they really feel like spending money right now?
Yeah, I mean, look, I think from a macro perspective, the consumer is in flux. I mean, there's a lot of noise out there. It's a very turbulent, tumultuous environment. Our customer is very diverse. We have my 16-year-old daughter loves our business. My wife loves our business. So does my mom. It gives us a lot of opportunity in white space, but it also makes it challenging because marketing to each one of those people and the constituents is different for each one. So, but we have a very broad base of customers. You know, consumer sentiment, as you all have reported, is challenged right now, but our businesses remain strong. We're up 6% through the first quarter. We're up 40% last year, 40% the year before, considerable EBITDA margins. So,
but who are you competing against? I mean, you're not, I imagine, going up against Cartier and Tiffany. I don't know that much about the jewelry business.
You're on the right track.
On the other hand, you're probably not competing with Kay Jewelers and Signet. So who is it?
You know, it's all the above. I think on the higher end, what we have seen with some of the consumer sentiment, people trading down into our fine jewelry business, which is very high quality. But it's everybody across the board, everybody that you mentioned. We only have a 10% national brand awareness here in the U.S. at a considerable size business that we are. So we've got a lot of white space and wood to chop as it relates to letting people know about who Kendra Scott is and who Kendra Scott the person is. 23 years ago when she started this business with $500 at a spare bedroom of her house, has now become one of the wealthiest self-made women in America. So it's a great story to tell. We do a lot from a philanthropic perspective. We just opened our 153rd store. We launched a new brand called Yellow Rose last year. So it's been a really exciting moment for our business today.
You know, to the point that the consumer has been challenged, is there a price point that you find that people are gravitating toward?
You know, 84% of the U.S. population makes less than $150,000 a year. We're very cognizant and aware of that. I think there's a lot of focus on the very high end. We're talking about it here today, gold prices, diamond prices, some of the commodities. But we really focus on every customer, and they're our boss, right? So the sweet spot for us, our average ticket's right around $100, and we want to have a really high value proposition, and we want to create experiences. In our stores, last year we did 24,000 events, and a large majority of those events were centered around philanthropy. So we're giving back to the community. We're making and buying. Think about when you go buy jewelry or you're gifting jewelry for somebody. It's a memorable, exciting, fun experience. We want it to be that way. So retail has been really important to us. Our e-commerce business is strong. We've got great wholesale partners too.
How have the tariffs affected your business, and what are you doing, by the way? Do you have a war room set up? Do you have a weekly call? Does somebody give you a report every day?
You know, it feels like since COVID, there's been like a daily war room that we've had to have for the last 5 years. It's just been challenging, but our business has done really well through it. So we're paying really close attention to it. I think the worst thing that you could do is make a lot of big material decisions in time of turmoil. So we're listening, we're paying attention. We're a very nimble organization. Our supply chain has changed dramatically since the time of COVID. So we were really well prepared for it. The team did a great job getting ready for whatever was going to come. And I think the thing that we've all learned is whatever you think is going to happen, you know, it doesn't stick with it. So there's constant change. So I think the team has done a great job of pivoting and listening to the customer, seeing what they want, and then reacting to it accordingly from price point and everything.
A couple days ago, we had a really interesting conversation about the movement away from real diamonds into lab-grown diamonds. And it really made me think a lot about consumer preferences and the change you're seeing from people in terms of what they consider to be great jewelry.
Yep.
What are you seeing?
I mean, the reality is a lab-grown diamond is an actual diamond. From a physical standpoint, it's the same makeup as same carbon makeup that a mined diamond is.
Denali doesn't buy it.
So neither does my daughter, by the way. We were in our store in Soho yesterday, and we were talking about the store. She prefers mined diamonds as well. I think it's up to the customer. We offer both. The price point, you can't argue with, is significantly lower in a lab-grown diamond. And that suits some people, and other people choose mined diamonds.
Well, to her point, the lab-grown diamond doesn't hold its value, right? So if you're looking at it as an asset, which you can, as well as an emotional token of love.
What are emotions, anyway?
Who cares about that? If you're looking at it as an asset, right, it just doesn't perform the same way. That's the difference.
I think so. If you were in the business of buying and then retrading diamonds, that holds true. I think for most people, there's an emotional connection to it. If you're getting an engagement ring with a 1.5 or 2 carat diamond in there, I think some people may not be happy if it's a lab-grown diamond, but what we've seen is that emotional connection and the power that has of that moment in time matters more than the intrinsic value of what that thing would be if the marriage doesn't work out and they're trying to sell it in the aftermarket. So
key is not to tell her until then, right?
Yeah.
I say, hey, I got you a 3-carat diamond, and so many people died mining this.
Who knows, actually? But maybe a lab-grown diamond does appreciate in value.
I do think we're so early on this journey as it relates to lab-grown diamonds that could be the case. At the end of the day, it's a commodity. It's still not easy to get or make. There is scarcity value to it, and I think as long as that happens,
Yeah, but that's true.
Yeah, that's fair.
I'm learning so much about jewelry. She knows
Diamonds,
already.
gold, and silver?
Yeah, well, I learned a lot about it too. And the beauty of when I first started at Kendra Scott, I didn't know anything about the industry. It's been a great learning journey for me for the last 10 years too, which has been great.
Very cool. Definitely a fascinating industry. Tom, thanks so much for joining us on the show. Tom Nolan, the CEO of Kendra Scott. You want to take a look at markets?
Yeah, let's do it, because it's been a fluctuating morning. We are looking at an S&P 500 now firmly up about 0.3%. It was interesting, Matt. We did see a dip lower a little earlier, so that tells me that, yes, generally we're seeing a little bit of bullishness. We're back in that bull market territory. However, it's on shaky ground. We had some weak economic data. That 10-year yield firmly below 4.4%.
What is it? It's June 4th, so it's pretty good timing for your new show, right?
Oh my
that we get into a bull market. Are we allowed to announce that yet? It's not yet.
We are. We can tease the trailer, which is out tomorrow.
All right, so we'll watch the bullish trailer tomorrow when we close, hopefully in a bull market today. Let's get a look at some of the single stocks moving at this hour. Dollar Tree lower after warning about a hit to profit due to tariffs. So going the other way of Dollar General because they don't have as much access to or as much inventory of foods and groceries. Apple is getting downgraded over at Needham because of growth concerns in its position in the AI landscape, and then Chart Industries shares, as well as Flowserve, dropping after the equipment makers agreed to an all-stock merger that would create a company worth around $19 billion.
I thought of you this morning. I was going to say, I looked it up. It's really, if you really look at it, it's Chart Industries buying Flowserve. I came prepared with that for
There's
you.
always a buyer,
There's
right?
always a buyer.
Merger of equal doesn't really exist.
And Chart Industries will own more of the combined companies, but neither of their investors seem to love it yet.
Yeah, well, they don't like, the PR doesn't like to say that. Coming up, we're going to discuss how tariff uncertainty is affecting banking with Bruce Van Saun. He's the CEO of Citizens Financial, so we get the Wall Street look at Main Street next. This is Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me, LL Bean. There are questions that I would say are straight up homicide-inducing. Hot take. Nobody thinks your kid is as cute as you think your kid is. I've had it with pictures of food. I've had it.
Did you hear that?
You guys seeing this?
It is our job to take you where others won't.
My family has drama food.
It's real emotions.
I do.
All in one place.
There is a skinnier person inside of me. Robbing the bank is kind of a turn on.
I'm here for it, honey. All of it. All reality, We TV.
Let's go! Oh my!
Welcome to 25 Words or Less.
Join Meredith Vieira and play along to 25 Words or Less on Pluto TV.
14 words, 45 seconds on the clock. Good luck. Okay.
Hey, sports change.
Hi, I'm Meredith Vieira. Watch 25 Words or Less on demand right here on Pluto TV. Stream now, pay never.
Let's go!
Join Light the Fuse on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel.
Over on Capitol Hill, the Senate has begun deliberations over President Trump's big, beautiful bill, and Majority Leader John Thune warns changes will have to be made to the SALT part of that legislation. For more, we want to bring in Kayleigh Lines, co-host of Balance of Power. And Kayleigh, we're also getting headlines from the Speaker, Johnson, saying that Elon Musk is dead wrong when he calls this tax bill an abomination and says it's going to add trillions to the deficit, and that he tried to call Musk last night, but Elon didn't answer.
Yeah, the Speaker said he did speak to Elon on Monday, and he said he would be trying to help Republicans keep the majority, I assume financially. But when he called on Tuesday after this tweet, I guess Elon Musk did not indeed feel like speaking with him after what was multiple posts on social media about the deficit impact this bill could have, which we learn more about from the Congressional Budget Office today, saying that it will add the House-passed bill $2.42 trillion to U.S. budget deficits over the next decade. That's because there's going to be a $3.67 trillion in the CBO's estimation decrease in expected revenues and only a $1.25 trillion decline in spending. And this is the very concern that even some Senate Republicans have, that these spending cuts do not go deep enough and the impact on the deficit is going to be too great, which is why Senate Majority Leader John Thune is going to have some difficulty navigating his majority here with those who want to see steeper spending cuts, with those who actually might want to see the price tag of this bill ultimately go higher, with being made permanent some of the tax cuts that are only temporary in the House-passed measure. That, as well as whatever adjustments need to be made to SALT, which Thune at this time is not getting very specific on, are likely to be discussed at the White House today, where Senator Thune, as well as members of the Senate Finance Committee, which is dealing not just with the tax portion of the legislation, but Medicaid as well, are going to be meeting with President Trump at the White House to try to hash out some of these details.
Kayleigh, I want to switch gears a little bit, too, because you are going to be speaking with Senator Elizabeth Warren a little later. And while on Wall Street, a lot of people look at the asset cap being lifted for Wells Fargo as a lot of joy and excitement, right? This is a big bank able to return to a lot of business. I do want to point out one of the more harsh criticisms I've actually seen of this from Jeremy Kress over at the University of Michigan online. He said the fact that it took Wells Fargo 8+ years to get its house in order and the Fed never escalated its punishment beyond the asset cap is a damning indictment of the current state of bank supervision. Now, the reason I bring this up is because we are about to see a lot lighter of a touch when it comes to bank supervision. Yep. Elizabeth Warren is kind of a lonely voice in Senate these days, fighting for more regulation at this point, isn't she?
Yeah, she is a minority voice. Granted, she does have a powerful one as she is ranking member of the Senate Banking Committee, but she's using that voice to
Largely agree with the tweet you just read out, Shanali, which is that she thinks this is an embarrassment, to use her language, of the Federal Reserve here. She says the entire Federal Reserve Board should be embarrassed by this outrageous giveaway to one of Wall Street's most derelict banks. She said the Fed needs to release reports into Wells Fargo from the last 5 years to the Banking Committee for review. We'll see if that happens. I'll ask her more about this later on today, but it does kind of point to an overall attitude shift that Elizabeth Warren is trying to fight against when it comes to banking regulation. Obviously, we have seen a rollback already of the originally proposed Basel III endgame under the former Vice Chair of Supervision, Michael Barr. He is now no longer in that role, and we could see as soon as today the Senate actually making final the confirmation vote of Mickey Bowman as the new Fed Vice Chair of Supervision, someone who is widely seen, especially among Republicans, as being friendlier to Wall Street and someone who will have a more gentle hand when it comes to some of these regulatory issues. So we're watching for that later today. A cloture vote is expected this morning. If that procedural hurdle is passed, Mickey Bowman could be confirmed as soon as this evening, and with it could bring about a new era of banking regulation as Wells Fargo tries to move into a new era of its own now that its balance sheet is not going to be stuck at 2017 levels anymore.
Absolutely. The banks are very closely watching the Bowman era. That is Balance of Power co-host Kayleigh Lyons. You can catch Kayleigh's interview with Democratic Senator Elizabeth Warren coming up at 1 p.m. New York time. Do not miss it.
I hope she asks what what she thinks the most derelict bank on Wall Street is. Because if Wells Fargo is just one, which bank does Elizabeth Warren hate the most?
She's gotten into very vocal arguments with Jamie Dimon, but interestingly enough, Wells Fargo moving out of things like home lending in a bigger way in the last couple of years and into those Wall Street businesses. But we're going to go right back to Main Street. For our Wall Street beat, we are now joined by Bruce Van Saun. He is chairman and CEO of Citizens Financial Group. Really good time here to really focus in on Main Street. What's happening with the American consumer? How do they feel, and how much do they actually want to borrow at this point in time?
Yeah, I'd say surprisingly, the consumer has been resilient through lots of uncertainty, kind of getting whipsawed by different policy rollout by the Trump administration. I think confidence took a dip in the beginning of April when the tariffs were first unveiled, but people still have pent-up desire to live their lives and spend money, and it actually, once we started to see off-ramps, that the worst case for tariffs was off the table. I think confidence has been restored. You've seen the latest consumer numbers are better. I think the next business poll will be better. And so I think the second half is actually setting up to be pretty good.
I wonder about the small business situation even more than the consumer, right? The American consumer is pretty tough to knock over. But when this whole thing kicked off on April 2nd, we got so many emails from people running small businesses who said, like, I have goods on a ship right now. I don't know how much they're going to cost when they get to port. And the small and medium-sized businesses are like, I think 80% of the CapEx or 80% of job creation in this country. So how are they doing? You service those small businesses.
Yeah, I'd say it's a little tougher there. So certainly bigger companies have more diversity of operations and they can withstand some of these shocks to the system better than smaller businesses. But again, seeing kind of the off-ramp coming, one other thing I would point out is that we've been through a really tough period the last 5 years. So we had the pandemic that companies had to deal with. We had runaway inflation and the Fed raising rates very aggressively. Now we have the introduction of tariffs. I think businesses have become very resilient and very adaptable, and they do scenario testing. They try to think through, how do I have multiple supply lane chain scenarios so that I can deal with what comes down the pike. So yeah, it's been challenging in the here and now, but I think most businesses we're finding are still having reasonably good years and are optimistic about what's going to take place later in the year.
Do those businesses really need lower interest rates at this point? You've seen rates stay at this level generally for a while now, and things have held up.
Yeah,
so
like
what do you feel about
a lot of businesses locked in lower cost financing over the course of the last 5 years. So they've got their balance sheets in pretty good shape. And so I think that hasn't been a big worry.
I wonder about the level of tariffs because a lot of I guess, pragmatic business people come in here and say, look, if we get 10% as a baseline, you know, that's okay, especially if we're getting the tax cuts and incentives to go along with that. On the other hand, I was thinking about this yesterday. You know, 10% is European tariffs on U.S. cars, and it's been enough to effectively lock out U.S. manufacturers from the European car market. So how much is too much?
Yeah, it's a good question. I think the Trump administration is playing for some long-term gains. I'm kind of excited by the fact that some countries are now saying the end game should be let's lower tariffs. That's what Europe is saying. We should have lower tariffs going both ways. Let's negotiate towards that outcome.
That's true, but this president wants to have tariffs to replace tax
I don't know.
revenue.
Like, is that the primary objective? He wants fairer trade. So India's making that proposal as well. It would be good if we can reach a harmonious outcome with our friends, and then actually isolate China as the last big nut that has to be cracked. So anyway, I think you're starting to see some steps in that direction. But again, I think the tariff thing will resolve itself.
The worst case outcomes are off the table. The market is looking forward to tax and spend bill passing, towards regulatory nominees being confirmed, the deregulatory agenda moving forward, pro-energy policies, pro-business policies. There's a lot of pent-up demand to do deals. Private equity has to recycle capital. So again, I'm staying optimistic, cautiously optimistic about the second half of the year.
What about the tax bill? You look at the Congressional Budget Office saying that the tax bill would add $2.4 trillion to the deficit. You have Jamie Dimon warning about a crack in the bond market. A lot of concern about the longer-term interest rates that we're seeing that have close ties to a lot of American financing, mortgages and otherwise. Yeah. How concerned are you?
Well, I think extending the tax cuts is something that had to be done. I think the amount of spend in this bill is less if the Republicans stay unified than if they crack, and then they have to go to the Democrats to get the bill passed to extend the tax cuts. So, you know, it's not ideal, but the legislative process is messy. I think we can absorb the spending that's in this bill. I think the administration thinks that they can grow their way out of some of this deficit by faster growth. So that's the play right here, is to try to create the conditions that the economy
picks up its growth rate, and then all these debt to GDP ratios fall back into line.
Bruce, we are so lucky to have you today. It's very interesting. A lot of investors really banking on that pro-growth part of the story. Let's see if we see it. That was Bruce Van Saun of Citizens. And it's Countdown to Bullish. My upcoming series for Bloomberg Originals is coming soon as the S&P nears a bull market. We're going to talk a little bit more about that. Excited to bring you those guests on this show soon. Stick with us. This is Bloomberg Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
When you have Dell AI Factory with NVIDIA, you can feel it. Your needs are anticipated. Your ideas come to life faster.
For your route, you'll want stronger brakes.
And your business keeps moving forward.
This is Pretection, the everyday skin protection ritual that protects your skin from mosquitoes. The #1 best-selling mosquito repellent brand.
Everything. Prevention is the best protection.
SC Johnson.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me. LL Bean. There are questions that I would say are straight up homicide inducing.
Hot take. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food.
I've had it.
Who's our suspect now? Who did this?
Let's get a quick check on the markets. Right now, looking at the S&P 500, 59.81, 59.82, so up 0.2%. We are back in a bull market now, coming back 20% from the lows. If we close there, it's going to be perfect for your new show.
Yeah, bullish just in time for bullish. But, you know, interesting to me still is that you have a little negativity, too. You have worries in the dollar still, worries about the fiscal situation. You're not seeing that in the bond market, though, today either. That 10-year lower.
Yeah, absolutely. Worries about deficits. And I think people aren't as concerned about a 10% baseline for tariffs as they should be. The damage that did to the U.S. Car manufacturing industry in Europe is maybe irreparable. So I think something to watch.
The big moment of the week also still jobs on Friday. But tomorrow we have a great lineup for you. We're going to talk to Morgan Health CEO as well as a group of investors. Stick with us for that. This is Bloomberg Open Interest.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Who's our suspect now? Who did this?
Yeah. It's showtime. Marvelous. About time.
Do you think there's a chance that you and I could go someplace and laugh together?
I love that. Come on, you'd love these guys.
Your mission.
It's impossible.
They're coming after us with everything they've got.
You're not gonna make it!
You're not helping.
Do you have your seatbelt on? You asking me that now?
Speed Sport 1 is your home for live racing on Pluto TV.
Oh, look out! One upside down into turn number 1!
From grassroots to the international stage.
It's gonna happen over the line! Unbelievable finish!
If you're looking for racing, it's waiting for you on Speed Sport 1.
They touched down the back straightaway!
Check out Speed Sport 1 now on Pluto TV.
She's the yin.
Brain activity shifts to carry off reductal gray.
And she's the yang.
I have no idea what that means.
Watch Rizzoli and Isles anytime on demand on Pluto TV.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from San Francisco, this is Bloomberg Technology. Coming up, President Trump says Chinese leader Xi Jinping is very tough to make a deal with. Tech responds to his late-night social media post.
Plus, GlobalFoundries, the biggest US-based provider of made-to-order chips, announces a plan to spend $16 billion to bolster domestic production.
And Bloomberg makes public for the first time dash cam footage and details from the late 2023 when a Tesla using FSD was in a fatal crash. But first, we check in on these markets. And we're tentatively higher. Look, we've once again got bad news being good news. Slower services than expected in terms of economic data. Slower jobs growth than expected means, will the Federal Reserve give some push to the economic perspective? NASDAQ 100 trades up some 0.3%. Ed, go on a hood. What's moving these markets?
Yeah, we've got some big stories in the show today. Let's start with one that's coming up very soon. GlobalFoundries up 2%, an accelerated and expanded investment in the United States for cutting-edge production capacity. Tesla is down under pressure. A big Bloomberg report making public for the first time some dash cam footage of a crash in 2023 when a Tesla using FSD struck and killed someone. We will get the details later. And then HPE, Hewlett-Packard Enterprise, up 0.6%. Strong revenue growth. Tariffs are an impact. And then there's the activist investor question. We speak to the CEO later in the hour.
Important conversation. But let's get back to what has been really the focus of the markets this morning was President Trump doubling down on tensions with China. Look, in a post on Truth Social overnight, the president called Chinese leader Xi Jinping very tough and extremely hard to make a deal with. For more, Bloomberg's Kaylee Lines is standing by. Kaylee, what is the impact on corporate America and indeed tech America at that?
Well, it's going to depend, frankly, on how the president and President Xi decide to move from here. As Trump says that China is proving, and Xi specifically, very tough to deal with, it seems he's also proving tough to get on the phone, as the White House has 4 days now said that a phone conversation between Trump and Xi will happen in the near future as they try to sort out what both sides have accused each other of as being violations of the trade agreement that was just struck in Geneva. That, of course, brought tariffs down from the incredibly high levels in exchange for some other non-tariff barriers being removed. At least in the U.S.'s mind, China was set to start granting licenses once again for exports of critical minerals and rare earths to U.S. companies that have been choked off from them, knowing that China has a chokehold on rare earth supply. They control about 70% of that market, and those rare earths are needed for a lot of national security purposes in the U.S. Obviously, advanced technology around things like fighter jets, for example, or nuclear control rods. These are things that the U.S. and many U.S. companies actually need access to in order to do their production work. And the U.S. is saying that China is keeping them from getting those materials, not moving as quickly as the U.S. desires. China, on the other hand, is accusing the U.S. of also violating the agreement, as we have seen a further ratcheting up of export controls in different areas, including around jet parts, but also chip design software, for example. We continue to see an expansion of the areas in which the U.S. is not allowing export into the Chinese markets. And all of this raises the risk that if an agreement cannot be made or kept to, that tariffs between these two largest economies could go higher again, which obviously have massive implications for companies that are reliant on Chinese imports in order to make their goods.
Bloomberg Balance of Power host Kaylee Lines, thank you very much. Just days after leaving his position in government, Elon Musk has been criticizing President Trump's signature legislation, his big, beautiful tax and spending bill, calling it a budget-busting abomination. The tech titan's public condemnation pits him against the president at a critical time as Trump is personally lobbying holdouts on that bill. Kara.
Now let's look at how the U.S. government is affecting American chip sector, which, of course, is something that President Trump has been vocal about. Ed, GlobalFoundries, it's the biggest U.S.-based provider of made-to-order chips. Today, announcing plans to invest $16 billion to expand its chip manufacturing and advanced packaging capabilities across facilities in New York and in Vermont. I'm pleased to welcome CEO Tim Breen to the show. Tim, how much is this a reaction to the geopolitical landscape and to Trump's desire to bring manufacturing to the U.S.?
Yeah, well, thank you for having me. So it's really a long-term trend where we see the needs for the technologies that we make here in the US just growing significantly as semiconductors play a broader role in kind of every aspect of our life, from the cars we drive, the phones in our pockets.
How much of this is net new? Is the $3 billion in terms of R&D the real new bit here, Tim?
Yeah, so we're building on our existing plans, and those plans are already underway. So this is a great chance for us to go faster, go bigger, and also bring more innovation. And I think especially the changes we're seeing with the role of AI, both in the cloud, in the edge, and all of the connectivity in between just means we need to be ready for the demand that's coming our way. And so, yes, it's more building on those investments we've already started.
I've studied your capital expenditures, and basically you average about $1.4 billion every year. So I go back to Caroline's question, the $16 billion. What's new in it? What is the composition of that funding, and where does the funding come from?
Yeah. So we have a clear plan to fund this over the coming years, and I think obviously our capex investments are based on customer demand, and so we'll be able to accelerate those as that demand materializes. And we're seeing that renewed interest in US-based manufacturing from many of these companies we've talked about, and so we'll be able to modulate our capex investments to match the demand, and obviously that's what we try to do as a company.
Qualcomm is a pretty high digits customer for you, right? And when the news broke, within minutes, there's an email in my inbox and a quote from Cristiano Amon. It's interesting because you are listing many partners and customers as beneficiaries of this initiative. Which customers are you going to prioritize, and why?
We have a number of great companies that have supported this announcement, and in many cases they've been our partners for decades in some cases. And so Qualcomm is a great example of a company that's always prioritized global sourcing, having optionality, and definitely producing here in the US. And it's a true anchor for us in our US factories, especially in New York. And so I think we're going to be continuing to work with all of these customers to meet their requirements, and those requirements are changing, right? They're bringing new technologies to market, they're penetrating new markets on their own. Qualcomm, a great example of penetrating new industries like automotive, which is again a strength for us, and so very happy to support more of that right here in the US.
It's more expensive to do things here in the US. How much are costs likely to go up? How much more can you charge by bringing your manufacturing here?
Well, manufacturing scale matters, and that's why for us, building on existing factories that have already been up and running with good yields, with high quality, makes it more efficient. And so when you've learned how to do it now for, in the New York case, over a decade and even longer in Vermont, you know how to do it at a better cost structure, and obviously investing more gives you that scale advantage. But the other advantage for customers is that they have flexibility, they have optionality in where they manufacture, and so they can do one design and have it made all over the world for the requirements they have for different markets, including here in the US. So actually we think this for them actually represents a cost saving over the long haul.
Tim, there's also reports out of Germany this morning that you are investing there. What's the latest with that?
Yeah. So today's announcement is very much focused on our US plans, and it's clearly the area we see the biggest mismatch between supply and demand. And so it will be a large part of our investment plan going forward. We have a great facility in Germany, in Dresden. We'll continue to upgrade that and expand it over time. Nothing like the scale we see in the US in terms of new investments in the short haul. But again, a great opportunity to again meet what our European customers need out of that facility.
Tim, do you need more from the government in terms of funding? You got money from the CHIPS Act late last year, and of course that's been in many ways talked down by the current administration. Do you need more funding from the government, or is this the way to do things, with capital partnerships and indeed with capital expenditure from yourself?
Yeah. I think all of these investments always need to be done in partnership. We're really grateful for the support of this administration. They've been impeccable partners. They understand, our business and where we're going. We get great support from them in various different forms, and not just for building the supply, but also encouraging the demand to come back on shore. And I think that's a super helpful partnership for us. Obviously, we can't do this without our customers. That's the reason we exist. And so them being a part of this story and bringing back that demand to the US is also an essential part of underwriting these investments. And so, look, it's all about partnership.
Tim, what's Apple's role in this, and how are you going to be working with them differently as part of this expansion?
Yeah, I think Apple's been very clear that, for them, there's a huge amount of semiconductor content that goes in all of the incredible devices they bring to market. And, if you took your iPhone out of your pocket and opened it up, you'd find an incredible array of different technologies in there. Many of them are technologies that GF produces, and some here in the US, and some will bring back to the US as we go forward. And so, yeah, they're obviously very keen to see more domestic manufacturing. And the fact we have such a long-standing partnership means we know each other well, we know what we do well together, and they're keen for us to do more, as they've indicated.
GlobalFoundries CEO Tim Breen, great to have you on Bloomberg Technology. Thank you very much. Now, coming up, federal regulators are investigating whether Tesla's full self-driving system is dangerous after a fatal crash involving the technology in late 2023. This is Bloomberg Technology.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Beverly Hills 90210 is back on its very own channel.
I love this place.
Here, the zip code isn't just a number, it's a lifestyle.
I'm so excited.
Relive your 90s dreams on the Beverly Hills 90210 channel on Pluto TV.
FBI!
There's a storm coming. You're about to be swept away.
That's enough!
As Elon Musk touts driverless robotaxis in Austin, federal regulators are investigating whether the system it calls full self-driving is dangerous, even with a human behind the wheel. That's after a fatal crash in November 2023 involving a driver using the system. Bloomberg is publishing images and partial footage of that crash for the first time. We should warn the audience the content you're about to see, which Bloomberg News obtained via a public records request, may be disturbing to some viewers. A Tesla Model Y with full self-driving engaged round the curve at highway speed. The sun was low, the visibility was poor, the car didn't stop. Moments later, the Tesla using FSD hit 72-year-old Jonah Story, who was standing helping direct traffic at the scene of an earlier crash outside of Phoenix. She was pronounced dead at the scene. Bloomberg's Craig Trudell, who broke the story with Dana Holt, joins us now for today's Bloomberg Big Take. And I think the most important question, the question that we are getting most, is why is it important that we release the details of a crash that happened in November of 2023? Craig.
Yeah, there's a lot of pushback on that, for the obvious reasons of, it's now June 2024, right? And yet what makes this
2025
crash very significant, excuse me, 2025. What makes this crash very significant for Tesla is the fact that that this is something that led to a federal investigation. This investigation is ongoing. And this speaks to the sort of complexities of the way that the U.S. has approached regulating this technology, right? I think when you listen to Elon Musk talk about his driverless ambitions, he talks about regulatory approval and sort of gives this impression that there are these hurdles that Tesla needs to clear. As long as you're making your cars with things like steering wheels and other components that a sort of quote unquote normal car has, you can put a car on the road today and say we think this is ready to be driverless. NHTSA doesn't have to say safe or unsafe, thumbs up or thumbs down. And what they are doing is picking up on crashes that are reported like this one picking out patterns in them. In this case, this crash, along with some others, there were consistencies in terms of conditions that the system seems to have trouble dealing with. And NHTSA is saying, look, we need to investigate this and whether or not your system is safe.
About 61,000 Model 3 sedans and Model Y Sport utility vehicles from its Shanghai plant in May. That's down 15% from the same time last year, a slump that contrasts with the robust nationwide sales of new energy vehicles, including both EVs and hybrids, Ed.
In other EV news, a ship carrying about 3,000 cars to Mexico, including 800 EVs, was abandoned in the middle of the Pacific Ocean after catching fire yesterday, after the blaze could not be brought under control. The Alaska U.S. Coast Guard evacuated all 22 crew members, and responders are being deployed to support salvage and other firefighting operations. Okay, coming up, software provider MindBody is combining its holdings under a new brand, Playlist. We speak to the CEO next. This is Bloomberg Technology.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The future of trading is here on Robinhood. Purpose-built for how you trade. With new ways to execute your strategies. And analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures in one place.
Epic Games 2025 edition of its Unreal Fest conference just kicked off yesterday in Orlando. The game developer showed off the tech behind The Witcher 4. This was everywhere, and also showed off some of its AI creator tools. Bloomberg caught up with CEO Tim Sweeney for an upcoming episode of The Circuit with Emily Chang, and he weighed in on the competition in the AI space and also Apple's strategy.
Well, AI is interesting because Google's Android operating system is open to third-party AI assistants, and we're seeing some really robust competition there as Perplexity and others provide solutions. Apple so far has been closed. Not only are they stifling other companies from producing AI software that works as integrated into iOS as Siri does, but they're failing to deliver their own AI, and that's very unfortunate. I think iOS is an area where the entire ecosystem, the entire platform should be opened up to third-party competition. Apple should get out of the way and let awesome developers make awesome software, and then let the best win.
Now let's talk about the wellness industry. It's forecast to hit $9 trillion by 2028, according to a study from Global Wellness Institute. But today, a leading software provider for businesses in that sector have announced a major rebrand to bring 3 companies, MindBody, Booker, ClassPass, under a new parent brand called Playlist. Playlist CEO Fritz Lehmann joins us now. And Fritz, why do this? What is it that you're going to be able to do in terms of efficiency here when you're bringing these 3 names in a closer alignment?
Well, you teed me up beautifully there. We have built 3 highly successful different brands. ClassPass, which gives people a way to book fitness, spas and salons, and even food and beverage takeout increasingly. Booker, which is vertical SaaS that's powering businesses that run spas or salons or appointments. And then MindBody, whose bread and butter is giving, kind of the operating system to the wellness industry, or mostly studio fitness owners, but also PT and others serving up wellness. And so it didn't make sense for us to have a brand that was just one of our 3 successful businesses. And really, we wanted to sort of say, hey, look, we are now building a common platform of AI tools, an app partner ecosystem, consumer distribution that can let us go serve experiences businesses. So yes, wellness businesses in the fitness and beauty and spa and salon world, as we already do. But our aspiration, we believe we've earned the right to go even bigger and to build software for anybody delivering great experiences in their town, and to give consumers apps that help them discover and book this stuff, and really give them a playlist for their life, if you will.
So how much bigger does it get? You're already in 40,000 salons and spas, 73,000 gyms and workout places, and across 30 countries. How much does this enlarge your total addressable market?
I mean, again, you teed me up beautifully there. The wellness economy is massive, right? In the U.S., it's over $2 trillion. And so I think we'd be fine. Our investors would have a great outcome, hopefully, if we continue to execute within the wellness vertical. But the fact that we built these, our scale has allowed us to build this industry-leading AI stuff, this consumer aggregation, so we can help these businesses get more reach and distribution and not have to pay social media companies, crazy ad rates to get users. The fact that we have a big partnerships ecosystem, so you can take advantage of premium tools that are built into our software. We want to go much bigger. And there's 20 million small businesses in the U.S. and only a sliver of those are wellness. So we think it substantially increases our addressable market.
Fritz, what's the total active user base of the combined entity? How many people now will be on that platform?
I can't speak to the specifics on, even though sharing metrics and our financials is my favorite topic. The powers that be have prevented me from sharing any specific details. But we're reaching tens of millions of consumers in the U.S. We're operating in 31 countries across multiple verticals. And we want to get an order of magnitude bigger in terms of our impact and our reach.
IPO? Get the name out there?
We can't really comment on our plans. We have investors who are super long-term focused, and right now we're in a position where we don't need to raise capital. And so, we'll keep an eye on the markets and see how they evolve and see where the world takes us. Right now, we're just focused on how can we touch as many businesses and help them achieve their potential as we can. How can we help as many consumers get out of their screens and truly kind of build the anti-tech company, where instead of manipulating you and damaging your mental health, we're trying to get you off your screens and into your city having rewarding experiences. So that's our focus for now.
Fritz Lehmann, CEO of Playlist. Thank you very much for joining us. Okay, coming up on the show, we'll be joined by Permira's Brian Ruder to discuss US exceptionalism and the tech M&A landscape. It's coming up next. From San Francisco, back together. The band is back together. This is Bloomberg Technology.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
This is a chessboard, where people test their skill, imagination, and daring. Because it's also a map, complex logistics can be reinvented with AI. Thanks to reliable and secure connectivity from AT&T Business, goods are delivered quickly and efficiently.
Let's go. Are you ready? I'm looking for an executive chef. It's full. It's burnt. Get it back in the oven. Yes, chef. Why should you stay in Hell's Kitchen?
I have passion. I'm a better chef.
Take off your jacket and get out of Hell's Kitchen. Ladies, well done. Great job. The champion, ladies and gentlemen. This is Hell's Kitchen.
This is gonna be the start of something huge.
Here's to us.
Pluto TV's got nostalgia on demand with The Andy Griffith Show.
Anybody home?
From the early years in black and white to seasons in full color.
Thought I'd drop around and say hi.
The Andy Griffith Show. Anytime on demand on Pluto TV. Stream now, pay never.
Welcome to 25 Words or Less.
Join Meredith Vieira and play along to 25 Words or Less on Pluto TV.
Clever. 14 words, 45 seconds on the clock. Good luck. Okay. Hey, sports change. Hi, I'm Meredith Vieira. Watch 25 Words or Less on demand right here on Pluto TV. Stream now, pay never.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in San Francisco today with you, Ed.
And I am Ed Ludlow. It's great to be back together. Market
Going on, everybody? This is the boy Sniper Fox here. I just wanted to come in for a quick checkout and let you guys know that we've turned $10 into $499 so far in 32 days. And I've been working on a strategy before we start going live and doing all these fun things and face reveals and all that. I just wanted to go ahead and share my strategy of what I am doing right now. And I'm kind of hedging myself on the market. And what I mean by that is I'm expecting some kind of crazy quick pump followed by a dump to some lows. So I am hedging right now. If it breaks certain levels, I'll flip. And we'll go from there because I'm just about making a little bit of profit and not getting chopped up. And it's very choppy right now in this market. So I just want to make sure that we are good to go. You know what I mean? So It's good seeing you guys today. I hope you stop by again. Please like, follow, subscribe, do all those things. This your boy Sniper Fox giving you a shout out just to make sure you are rocking and rolling. Catch you guys soon. Let's get it.
If you look at where Salesforce stock has been since the Informatica deal was announced, it's not doing too well. It's actually down more than what Informatica is worth. So Mark Benioff here is sort of defending the deal to Wall Street, and Salesforce is using words like discipline and patience to show that they're a different acquirer than they were just a few years ago when they bought Slack, when later they came under
in the crosshairs of activist investors. So they're trying to show that they're a different sort of M&A acquirer now. Still a serial one, but maybe not paying as much as they would have even a year ago when they first started talks with Informatica.
And the need for Informatica became ever more necessary in a way as generative AI just became the focal point for Salesforce and for Mark Benioff. But how did they therefore keep the conversation alive? How did they show this discipline over the course of 12 months?
So we reported in the story that the CEOs stayed in touch. As you know, when two companies come together, it's kind of like a marriage. It takes a while to get comfortable. And we also know that there was interest in Informatica, not just from Salesforce. We reported that Cloud Software Group, a big privately held private equity-backed company, was also interested. And Mark Benioff did say we were lucky to get this company because it does seem like it was a competitive auction. Goldman Sachs was working with Informatica, JP Morgan was working with Salesforce, and it just took a long time to come together, but it did accelerate ahead of our scoop. They had a handshake agreement before we reported it a few weeks ago.
Yeah, Mark Benioff got that handshake with Amit. We thank you, Leanna Baker. It's been great reporting throughout. Let's discuss it further with someone who has a lot of focus on that particular deal and others. Brian Ruder, his co-managing partner and co-CEO of Permira, who's an investor in Informatica. And what's so interesting, Brian, is perhaps you say that $1 back today is worth more than $1 back perhaps a year ago. How has liquidity changed? How has this deal-making changed?
Yeah, I mean, thanks, Caroline, Ed. Good to see you guys. The environment for private equity has been really tough in terms of getting liquidity back to investors. You've had extending investment horizons for a lot of businesses. That's usually actually good news in the case of like an Informatica, which we've been invested in for a decade at this point, kind of leading to this transaction. But it's been very hard to get liquidity. And actually, this kind of liquidity to our investors is particularly valuable because it's coming from a strategic, it's an all-cash transaction. It's not private equity to private equity, which from an LP's perspective is fine, but also it tends to be left pocket, right pocket. They might actually be an investor in that private equity fund that's buying from the private equity fund that they're an investor in as well. So this is particularly precious DPI. As we say, distribution to paid ins, like real liquidity relative to the value of what's in the fund. So we're very proud, very happy with this transaction at this particular point in time especially.
And so how repeatable is that? How many strategic buyers are out there with the guts, the determination to keep following these sorts of processes?
We think strategic activity, certainly the interest that we're seeing is very high in the kinds of businesses that we back. And I'd say for our investment philosophy, it's really strong. You know, Informatica is one of these great stories of really product-led growth that we try to back for long periods of time. And that's what actually strategic buyers want. They're not trying to buy an EBITDA-optimized, gutted private equity portfolio. What they want is really well-invested product sets. And so if you have businesses that are doing that like we do with our technology portfolio, it generates a lot of strategic interest. So we expect it's certainly very active today in terms of dialogue, and we expect that's going to continue.
I was really looking forward to this conversation because of the private equity lens rather than what is more common on the show, which is venture-backed deals. But what they have in common, right, is the exit environment and what types of exits are on the horizon. Do you see Salesforce Informatica as a sort of starting gun and signal of more activity to come in different formats? I'm particularly thinking about this administration and the regulatory environment that would allow something like that to happen.
Yeah, I mean, we think what a lot of the big strategic buyers that we see are looking at is actually generally pretty appreciated currencies in their own stock price, a lot of liquidity, and then the need and the excitement to really get their story together for the emerging and kind of really accelerating AI landscape, and Informatica is exactly that. So you want to find businesses that are going to help, codify kind of what you're going to be able to do in that AI world, and Informatica is like right in the middle. So for those, like if you have assets that kind of bolster that story, and there's like so many companies that are out there in the private ecosystem today, it's a bit of a smorgasbord.
Is $25 a share good?
It's great for us, yeah. I mean, this has been more than $6 billion back to our investors.
Wow. Yeah.
It's a very, very significant, large, multiple billion-dollar gain.
I asked that because of the reporting, right, that 1 year on from their initial talks, a big factor was the downward pressure on the stock that allowed them to proceed. And I don't know how you view it. You might say, well, what might have been at $30 or $35? I don't know.
Yeah, I mean, there's a lot of volatility in the world today. You see kind of everywhere. What we focus on is like the point. What matters to us is the point-to-point over 10 years, not over 12 months. And over that period of time, I mean, the really cool thing about Informatica, and there's a lot in there, is that the products that Salesforce is buying with this company are overwhelmingly products that we created with the management team post the going private in 2015. So the cloud business was really zero at the time we invested in them. We saw a team that we really thought could build a next generation cloud data management platform that's the company's guiding to more than $1 billion of ARR this year from a starting point of zero. Not a lot of private equity backed
software businesses can say that they've done that. So from that kind of point-to-point level, like, we're thrilled. Our investors are very happy with the transaction. And look, it's a very good home. I think Salesforce will get a lot out of Informatica.
I like the way you said there's a lot of volatility in the globe right now, because you're a global footprint kind of PE. In fact, for Ed and I, we think about your European chops, because that's the place that we come from. I'm interested as to how, therefore, the landscape differs. We talk about US exceptionalism. Is that where the deals are going to happen? Is it global in nature?
Well, we think, I mean, a side effect, or kind of a very direct consequence of what's going on in the world today, and particularly in this country, is that the commitment that we see in Western Europe about investing in Europe is very high. It's about the highest that I've seen it in my investing career. And so that's going to have like really interesting benefits to the economies there, to the innovation pace, and frankly, it's overdue. I mean, look at all the hyperscalers based in the U.S. We are looking more at bringing the best of Silicon Valley into Europe, as we've always done, and there's never been a better time, in our view, to have a very deep European origination network to be able to invest behind where a lot of that innovation is going to come.
We were just showing actually some newsletter coming out of our European colleagues, Mark Bergen, who's writing about how this glimmer of hope is on the returns that are yet to be born in Europe for the VC community, for the PE community. What needs to get done here in terms of actually starting to see IPOs for darlings like Revolut or actual exits? Is it going to be actually your kind of companies that help foster the M&A side of things?
Yeah. We'd be very happy. Like, we're here in Europe, and we think that the capital base that we've got to be able to really building the next generation of innovators and disruptors in Europe, that's a very fine thing to be. There will be plenty of capital now from us and folks who look like us in the private markets.
Listen carefully. 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 Listen carefully.
p.m. Eastern, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
I've never seen cash machines as lucrative as these companies are.
Just close your eyes and buy.
Many Koreans find this really shocking and unbelievable.
This needs to be a wake-up call for Europe.
You can have only one captain of the ship, and we are the captain of the ship.
You love it or hate it, you can't ignore it.
Insight with Haslinda Amin, only on Bloomberg. In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last?
The question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
The top names in business are on Bloomberg.
Is America a bad investment destination? No. If you were going to take all of your money and put it in one country, it would still be America. I mean, it's still the most prosperous nation on the planet. It's got the best military on the planet. It's got huge amounts of innovation. People are catching up. That's a good thing. You know, China's doing some very good innovation in medical and AI, and we should assume they continue to do that. But America's still got the best. We should fix our problems because we could grow a lot faster, which help all of our citizens.
Nobody covers business like Bloomberg.
Yet more announcements of investment in the US by big data center players. This one, Amazon, coming out saying they're going to be investing $10 billion in North Carolina at the moment. It's expanding its AI infrastructure, creating, we understand, about 500 new high-skilled jobs. What's interesting, though, Ed, here is the commitment to reskilling, the training, the education programs, the fact that they want to be really bringing about more engineers in particular. That is what a lot of people have been worried about, this move to generative AI, this move to manufacturing. Where is the skill base? Here's Amazon committing $10 billion, a lot of AI hardware and infrastructure, but with that, some support for skills as well, Ed.
Yes, we're thinking about where their data centers are on the East Coast and Southeast Coast, particularly of this country. Okay, HPE says tariffs will have a smaller than expected impact on sales this year. AI revenue also beat analyst estimates, but the company continues to face headwinds, and that includes an activist investor. HPE CEO Antonio Neri joins us now. I find what you said about tariffs and how that's reflected in the numbers so interesting, because the hyperscalers, for example, told us that one reason capital expenditures were raised in that period is the reflection of the higher cost of doing business because of tariffs. For you, it's like almost the opposite story.
Yeah, good morning, Ed. Thanks for having me. Look, we raise our guidance for a number of factors. Number one, because of all the work we have done throughout a very diversified supply chain, we find ways to mitigate the tariffs. Obviously, the USMCA plays a role in that. But at the same time, we know we are performing better in many of our businesses, and we have had a number of targeted actions to continue to mitigate any impact from the tariff. And that's as today as we know it. But the reality is that the original impact we communicated at the earnings call in Q1 now is significantly lesser. And therefore, together with the cost actions, together with the better performance of the business, and the lesser impact on tariff, we raised the bottom range of our guide by 8 cents.
Antonio, is it possible for you to quantify for us the sort of sales channel impact that you provide for NVIDIA? So we talk endlessly about all of the projects, domestic and overseas, and NVIDIA's involved in, the great build out. But as you know so well, and I spend hours tearing servers apart, nothing happens without HPE and others assembling the designs. I just want a number on it, that's the thing.
Yeah, well, hard to put a number, Ed, because many of these build-outs are happening as we speak, and it takes a little bit of time to go from an agreement with a customer working with us and NVIDIA to building and deploying it, and then eventually put it in production. But I can tell you, look, we have a deep, long-standing relationship with NVIDIA. We are covering all segments of the market, whether it's these big, large build-outs in the service provider space, whether it's sovereign or enterprise. And one of the things I'm really proud is that the work we put together with NVIDIA last year when we announced the NVIDIA Computing by HPE and our private cloud AI is growing very rapidly. In fact, 1/3 of the net new orders we booked in Q2 were from enterprise. But at the same time, we are completing one of the largest deployments on the GB200 as we speak, and that's a very large deployment. And then we said that our backlog grew quarter over quarter. Now it's $3.2 billion. On a cumulative basis, for the last 2 years, we booked over $9 billion, and we have multiples of the backlog in our pipeline.
That $1 billion that you attributed to the AI in particular is good, but it's not as much as Dell, for example. I hate to put it so on the nose in that way, Antonio, but how much is perhaps Elliott on your board or others around you sort of saying, look, capitalize on AI even more?
Yeah. No, that has nothing to do. Look, the previous quarter we booked ourselves a very large order, which is the one we are deploying today, and that was not, Dell didn't do that. So this is a lumpy business, and you will see us also talking about some of the large orders we may get in the current quarter or subsequent quarter. So, this goes back and forth, but ultimately you have to play with discipline. And our goal is to grow in the AI and the rest of the business with a capital structure that works, because the reality is that there is revenue growth, then there is profit accretion, and then it's working capital. And that working capital is something you have to watch very, very closely, because the timing from winning a deal to the time of revenue recognition in these large deals can be long, and therefore you impact cash flow from operations. So we're trying to balance all of that while we deliver on our commitments, both on the revenue growth and on the EPS growth.
Well, you delivered in terms of 6% revenue growth on the quarter. We appreciate it, Antonio Neri, HPE CEO, for joining us. Now, some breaking news, Ed.
Yeah, Apple has just erased all of its gain in the session. One reason, the FT is reporting that Apple and Alibaba's AI China rollout has been delayed by regulators. And you see that stock going from positive, dropping right down on the right side of that chart to negative, Kara.
We'll keep an eye on Apple. Meanwhile, coming up, we discuss the venture opportunities for AI and consumer tech. Perfect segue from Apple, really, with the NEA partner, Anne Wodecki. This is Bloomberg Technology.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The average person would rather suffer through team-building exercises than look for insurance. The Zebra searches over 100 insurance companies for you to find savings no one else can. Room for one more? The Zebra. We do the searching, you do the saving.
Kansas, here we come!
beautiful day in this neighborhood.
Make your day extra special with Mr. Rogers' Neighborhood on Pluto TV.
My neighbor.
Celebrate National Game Show Day all month long with our favorite wins on Buzzer.
Cement. Concrete.
I was so busy thinking of a clue.
Oh!
I've got one. Have you?
Section. Slab.
Yeah!
Oh, that's great, Rob. That's just great. Celebrate all month long. Watch now on Pluto TV.
The enterprise gets a lot of attention when it comes to AI adoption, but consumer technology is AI as well. At least that's according to today's VC Spotlight guest, Ann Badetsky, a partner at NEA, and Ann joins us now on set, San Francisco. I mean, ChatGPT is the easiest example, the lowest hanging fruit. The user base is all of us going on our iOS-based app saying, oh, sorry, or thank you, or please could I ask this question, crashing the GPUs. But I think that's kind of what you're looking for in your thesis, right? The next version of that.
Well, thank you so much for having me on. And you're exactly right. We're at the beginning of an incredible new consumer AI renaissance. If you think about it, we're now in the third subwave of the AI supercycle. 2023 gave us large language models. 2024 gave us multimodal, the ability to generate voice, video, images. And 2025 is now the year of agentic capabilities and applications. Incredibly exciting time to build the new generation of consumer category creating companies. If we look back, companies like Uber, Spotify, Netflix, we cannot imagine living without these consumer products today. And we're at the beginning of a new wave of consumer applications today.
I don't know about Caro, but I feel like the stories we're covering in this domain are largely early stage companies. They are moving so fast.
Yes, we are early, but what's really exciting right now is how quickly consumers are adopting AI tools, AI applications. The stats are absolutely remarkable. We're seeing faster consumer adoption than any of the prior tech waves. If you look at it today, 80% of consumers already use zero-click search, AI search, for over 40% of their searches. And Gen Z, which is always the tip of the spear for new consumer products, 93% of Gen Z knowledge workers are using 2 or more AI tools every single day. So consumers are experimenting, they're hungry for new tools, and they want more. Who isn't adopting fast enough? I mean, sometimes there's a hand-wringing element that maybe there's a gender divide as well. Is that something you see borne out in some of your data research? Yeah, we're starting to see more research reports on consumer adoption. One of the interesting disparities is that if you look at mainstream U.S. consumers, only 27% of U.S. consumers are using AI tools regularly versus, let's say, 79% among AI experts, really the people who are building and working in Silicon Valley today. So there's an interesting trust and awareness gap that still exists, and that creates the perfect opportunity for consumer product companies to come along, make AI useful, make AI really relevant in people's everyday lives. They may not even know it's AI behind the scenes. They're just going to be incredible new consumer products, and they have to be trusted brands. Trust is a really important element in building consumer AI products. I mean, Apple is a trusted brand, and it seems to be being really slow, and it's getting stalled in China by regulators. How much do you need the juggernaut of Apple, and indeed Google and Android, to push through generative AI now every day, and then you get more 11 labs, 12 labs, companies that you're backing to build into that? Well, I think those companies are incredible distribution partners, and their investment in the AI ecosystem, the infrastructure, the GPUs, the model capabilities is really important. But ultimately, startups are always the best position to take risks, to innovate, create magical new products that people love. And I think it's incumbent on these large players to find the right partners in the startup ecosystem.
Can I ask about that really quick? I wanted to get your reaction to Johnny Ive, IO, and OpenAI, because the bigger picture question is there a world beyond the smartphone interaction or PC interaction in form factor? So when you look for a company, they're developing for, I don't even know what.
Well, so far we have not needed a new device for hundreds of millions of consumers, right, to try these new AI tools. But the interesting thing is, I think the desire for an AI native device, and many companies have it, not just OpenAI, is also a signal that we want a more open ecosystem, one where developers can freely build AI native applications that connect to our devices. So will there be new AI native devices, whether it's eyewear or, you know, something on your lapel that records?
That didn't work.
Yeah, we'll see them very, very soon. And it's great to have you here. Great to have her in the studio. Anne Bodetsky, partner at NEA, All Things Consumer AI. Well, that does it for this edition of Bloomberg Technology, though, Ed, but we've got some big conversations to have today.
Yeah, tune in tonight as the Tech Summit kicks off in San Francisco, first with a conversation with Alphabet CEO Sundar Pichai, and we'll be on the road tomorrow for a special edition of Bloomberg Technology live from the summit. Don't forget the podcast from San Francisco. This is Bloomberg Technology.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Oh, I see your kitchen sink is draining your bank account. No problem. An American Home Shield warranty covers important parts of plumbing systems with a fix or replacement. Aha! Good fortune. Sign up today at ahs.com.
On things. Put a bird on it. What happened?
I fell to the floor again.
Everyone's been so nice to me.
Everyone?
Well, not you.
Celebrate National Game Show Day all month long with our favorite wins on Buzzer.
Cement. Concrete.
I was so busy thinking of a clue. Oh, I've got one of you.
Section. Slab.
Yes! Oh, that's great, Rob. That's just great.
Celebrate all month long. Watch now on Pluto TV.
She's the yin. Brain activity shifts to carry out productive gray. And she's the yang.
I have no idea what that means.
Watch Rizzoli and Isles anytime on demand on Pluto TV.
I'm just a click away each and every day on the Martha Stewart channel. Together we can tackle all your gardening. Everybody loves succulents, cooking. Oh wow, look at that. Crafting and homekeeping projects. And we'll have a little fun.
Cook it 20 minutes on one side. During that time, we can drink wine.
Watch the Martha Stewart channel on Pluto TV. The Martha Stewart channel, it's a good thing indeed.
Welcome to Bloomberg Markets. I'm Bonnie Quinn. Let's get a quick check on those markets now as we head in towards the lunchtime hour. It could be another day of gains for the S&P 500. We're still 0.1% higher. Remember, that index is up more than 1% for the week so far. About half and half, though, when it comes to movers higher and movers lower. So it's not all good news out there. Bit of a mishmash of elements today. The NASDAQ 100 up 0.25%, and that's probably why we're seeing so much green on the board, because many of the tech companies are higher. The dollar index, though, down another 0.5% practically today. The
euro is one of the big beneficiaries there, obviously sterling as well. And we are seeing treasuries rallying today. That 10-year yield at the beginning of the session looks like it might actually test the 5% mark again, but right back down to 488.77. Traders pricing in fully 2 cuts now before the end of the year off the back of some maybe weaker economic data, but we'll dive into that in a moment. First, let's highlight a couple of individual equity movers. Bloomberg's Isabel Lee joins us. Isabel.
Hey, Vaughn, we're looking at tech stocks. So it's green on the screen up here. We have Broadcom edging higher by 1%, Meta Platforms up by almost more than 2% now, and Microsoft is edging higher by 0.4%. So altogether, all these tech stocks are really lifting the S&P higher. We have Broadcom on Tuesday announcing that they're shipping a new version of their data center switch chips that can boost the efficiency of AI accelerators. And we have Constellation Energy also agreeing to sell power from nuclear plant to Meta. So all these taken together just really signal a renewed bullishness on AI demand.
We're also looking at Guidewire. So we see shares here also in the green, up by nearly 20%. That's after the company boosted the revenue guidance for the full year. We have results exceeding analyst estimates. And for example, we have a Needham analyst saying that, quote, execution in driving cloud migrations remained impressive. And last, this is a different story. We have CrowdStrike. So shares are in the red, down by 5.5%. Multiple firms also downgraded the company in the wake of their first quarter results and outlook. So we have sales for the second quarter going in as much as $1.15 billion. That's just shy of estimates of $1.16 billion. So in all, while analysts see some positives, they also caution the growth potential of the company. Back to you, Vonnie.
All right, Isabel, thank you so much for those movers there. Well, today's markets have been a little whipsawed by all of the U.S. economic data. S&P futures hit by new jobs data earlier that showed hiring decelerating to the slowest pace in 2 years. Plus, then a little later on, you had that services data showing contraction.
So for more on all of this and what it means, let's bring in Stuart Poll, who covers the U.S. economy for Bloomberg Economics. So ADP is a little different of a report in the sense that it measures private hiring, and that was a lot weaker than economists were anticipating. But what do the details show, Stuart?
Well, so the major downside surprise is really the news for the day. We also expect that non-farm payrolls, the big kahuna for the week, is going to surprise to the downside. There wasn't a ton that we could tell thematically from ADP. Some of the industries that we would have expected to show a contraction, like leisure and hospitality, actually showed a bit of an uptick during the month. That was very surprising to us. Manufacturing decline, that's to be expected. When we think ahead to non-farm payrolls and we do our bottoms-up analysis, where we end up getting to is about 96,000 jobs added during the month of May, and that's going to be too slow of a pace of hiring to support a steady unemployment rate, so we're expecting a bit of an uptick to 4.3%.
The other concerning element of today's data was services. They'd been holding up so well. They'd been sort of, leading everything else in the economy, and now we're seeing contraction there. Will that be revised?
It might be revised away, but I think that the thing that we're focusing on most is just the collapsing demand that we saw in the May ISM Services PMI. New orders declined at an accelerating rate. The backlog of orders declined at an accelerating rate. And on the supply side, supplier deliveries actually ended up slowing, making it difficult to provide some of the services that folks might show some more resilient demand for. But again, slowing demand. What does it all end up shaking out to? Well, the thing that probably matters most is the prices sub-index, where prices are still accelerating as folks are trying to pass on higher input costs. So a bit of a stagflationary reading in today's ISM Services report.
Yeah, and of course we had the upping of the steel and aluminum tariffs today, which will have a ripple impact on some of the other data points that we're looking to receive. One other thing that was very notable about today's data is that the president responded, right? He responded to the ADP report with a post on Truth Social, basically complaining that Jerome Powell is too late again. We're not really thinking that he's going to get rid of him before next year, though, right? He's put that to bed, or is it still a possibility?
I think that's put to bed. I think that the bigger concern now when it comes to the interaction between the White House and the Fed is just how much of a counterindicator rhetoric from the White House actually could end up being for monetary policy. The Fed has been really clear that it's trying to stay insulated from political pressures, and if it looks like the Fed starts inching towards a cut, it could look like the Fed is capitulating to that political pressure, which is not what they want to do. So there's a sense in which the more outspoken President Trump is, the more the Fed has this incentive to sort of sit pat, show some backbone, and move slower. It has the opposite of the intended effect, I think.
Well, to your point, though, we did see Treasury
Treasury yields lower across the curve. Now, was that primarily because of the data, or was it because of the idea that there's more pressure on the Federal Reserve Chair?
I think it's more because of the weak data than it is because of the political pressure. I think markets are looking at a very weak ADP and getting nervous about non-farm payrolls. We know that the Fed is looking for an uptick in the unemployment rate before it starts lowering rate, and I think that that's in play. And like you said, services, which had shown some resilience, are now starting to show widening cracks in demand. And I think that that's what really matters for markets, because that's what matters for the Fed, more so than rhetoric from the White House.
All right, well, the big one is, of course, tomorrow morning we're going to be waiting on that as another sign for the even bigger one, which is non-farm payrolls Friday morning. Stuart Paul, thank you so much. Stuart Paul is with Bloomberg Economics. Well, another issue weighing on investors and economists, of course, the U.S. deficit, which is set to grow if Congress passes the Trump-backed budget bill. Some GOP senators are pushing back on the bill because of the spending. For more, we go to Bloomberg's Tyler Kendall, who joins us live from Capitol Hill. So, Tyler, there was quite an amount of daylight between some senators and the bill just in the last few hours. Has there been any movement or any kind of reconciliation or anything like that in the last few hours?
Yeah, hey, Vonnie. Well, President Trump is really trying to ramp up the pressure on these Republicans that you're talking about that are threatening to withhold their vote from this bill unless they see some changes to the House's package. And perhaps the most vocal group that's emerging are a group of Republicans really pitching themselves as fiscal hawks because they want to see some deeper spending cuts. As the CBO releases a new analysis earlier this morning that predicts the House plan could add $2.4 trillion to the deficit over the next 10 years. Now, I did have the chance to catch up with a few of these Republicans, including Senator Ron Johnson, a Republican from Wisconsin, who told me he's working closely with the White House on this, but he realizes that the type of deeper spending cuts he wants to see is going to be hard to accomplish.
If I'm wrong, challenge me. You know, I want to get in that dialogue, and quite honestly, that is really my discussion with President Trump. And so he had Kevin Hassett call me up right away. I'll be meeting with the secretary. So he wants to engage. Again, he wants to reduce spending. It's just hard to do. I'm not denying that fact.
See, one of the tough things here for the White House is that they're dealing with conflicting demands. On one hand, you have members calling for these deeper spending cuts, but on the other, you have Republicans who are really raising concerns about what that could mean for benefit programs like Medicaid. Now, we should say broadly there is agreement when it comes to sort of those core pillars of this package, including the main tenets of extending the key 2017 tax cuts. But by and large, there's a lot of different little disagreements that could emerge here that could ultimately slow this bill down. And Vonnie, I will quickly point out one of them that's sort of becoming a flashpoint here up on Capitol Hill, and that's what's going to happen with lifting the SALT cap. Maybe not contentious in the Senate, but when they kick this legislation back to the House, could pose an issue. I did catch up with Senate Majority Leader John Thune and asked him what sort of sweet spot number they're looking at lifting that cap to. Of course, the House plan lifts it to $40,000. He told me that they are still working that out, which means that we could anticipate some changes.
Well, Tyler, the other thing that sort of emerged overnight was that Elon Musk seems to be a massive opponent of the bill as well. He called it in a post on X a disgusting abomination and talked about how pork-filled it was. Can Elon give any support to some of these senators perhaps who are holding out? Does it give just a little marginal momentum?
Yeah, he potentially adds fuel to the fire for some of these deficit hawks that are withholding their vote at the moment. There's about 4 of them. Keep in mind that the White House can really only lose 3 votes in order to get this bill over the finish line. And it does add a little bit of fodder here to their argument when it comes to deficit spending. Also, Ron Johnson told me that he's concerned about what some of the tax incentives look like and whether or not those sweeteners, like no taxes on tips or overtime pay, would really incentivize growth in a meaningful way when you hear the White House talk about things like stabilizing the debt to GDP ratio. But at the end of the day, we also have to probably, I think it's fair to put into context the fact that Elon Musk has also come out against how this bill is rolling back some of those clean energy tax credits under the IRA, which would impact electric vehicles such as Tesla.
All right, Tyler Kendall, thank you so much for joining. That is Bloomberg's Tyler Kendall there on Capitol Hill. And I do want to mention that we have some new projections now from the Congressional Budget Office, estimating that President Trump's tariff policies, in effect as of mid-May, would help shrink U.S. fiscal deficits by $2.8 trillion. So these are the tariff hikes that President Trump has already implemented. Of course, some are on pause and some haven't been put into effect yet. But these tariff hikes, according to the CBO, would reduce budget deficits by $2.5 trillion over the decade through 2035 and by another $500 billion thanks to interest cost savings. Something interesting to talk about over the dinner table. Coming up, Trump speaks out against Premier of China Xi Jinping as trade talks continue between the two nations. We talk supply chains and trade next with Cameron Johnson from Tidal Wave. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
It's just like our new house. I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Oven beyond repair? If AHS can't fix your covered item, then replace it, no matter its age. Sign up today at ahs.com.
Join Light the Fuse on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel.
The dark side of human nature. Are killers born, or are they made? This is 48 Hours.
This is why we have a death penalty.
He'll strangle me with his hands.
Can we unlock the mystery of the mind of a serial killer? It's the kind of mystery that turns all of us into detectives.
Hi, CBS. I'm Tom Ellis. I can't wait for you to see my new show, CIA, coming CBS Fall.
This is Bloomberg Markets. I'm Vonnie Quinn. U.S.-China trade talks do not appear to be progressing all that well. Last night, President Donald Trump said in a social media post that Chinese leader Xi Jinping was, quote, very tough and extremely hard to make a deal with. Now, that post in particular doesn't bode well for economic truce. With fresh tariffs, export restrictions and visa bans now all in play, the pressure might be on the U.S.-China supply chain, and it is mounting. Joining us is Cameron Johnson, senior partner at Tidal Wave Solutions. He's based in Shanghai and has more than 25 plus years of in-country experience in supply chains, though we are very happy to have him in New York today and in the studio, so thank you so much for joining. First, Cameron, talk to us about the impact so far that you see in Shanghai, because these tariffs went on and then there was a little bit of a ratcheting back, but there certainly has been an impact.
There was. What you saw essentially was factories and many supply chains stopping up until the Geneva Agreement. And so since then, in the last couple of weeks particularly, you've basically seen it's like a fire hose. Everything is turned back on. Everybody's trying to produce product, particularly because we're on a short time frame, but also there's a lot of stock of everything, pieces, parts, components. So they want to get that through the system so that the inventory doesn't hang over them for the rest of the year.
How do they go about doing that?
Well, essentially, when retailers are, the Christmas season, for example, those orders would usually be placed in March, maybe April, but they were late. And so essentially what you're seeing is the companies talking through the entire supply chain. Let's not miss this opportunity because this may be the last one before the end of the summer if trade continues to deteriorate between the two countries. So basically, anybody who has product, material, pieces, components are working together to try to move it through the system as fast as they can and also to ship it out of the country as fast as they can.
Now, we just before you came on air got some numbers from the Congressional Budget Office which estimate that President Trump's tariff policies, and this is not just for China, but that they would help shrink the U.S. fiscal deficit by $2.8 trillion over the longer run, a decade or so for most of that. But that will give him ammunition. But President Trump and Xi Jinping have negotiated before. They're both very adept at it, and no one more so than Xi Jinping, most likely. How long will he wait before he allows there to be a call, or before he perhaps even reaches out himself?
I think part of the challenge is both systems communicate differently. On the U.S. side, it's seen as very top-heavy. Trump wants the call, right? He wants to deal directly. The Chinese don't want to do that. They want to go through multiple layers, make sure everything is understood. What are we really talking about? What are we really agreeing to, not agreeing to? So the process is different. On top of that, the reality is in the U.S. political system, the pain is felt much earlier here than it is in the Chinese system. So in some regards, there is a wait-and-see mode on the Chinese side to see how much pain can the U.S. actually take before they make the call.
Will Xi Jinping want to see something given on the part of the US? I mean, the visa ban in particular on students was very insulting, right? What will Xi Jinping want to see, be it something to do with, you know, restrictions on people or fewer restrictions on technology? Will he want to see something before he's agreeable?
To some degree, I think it's also, again, that after the Geneva Agreement, not 24 hours had passed before the Commerce Department put additional restrictions on Huawei. That's basically sticking the finger in the eye of the Chinese side, and they take great affront. And then on top of that, you had other restrictions. Now you have the students, and part of them are asking, well, if we agree to anything today, how do we know you're not going to change tomorrow? And instead of actually trying to work with us on this, it's becoming a bigger and bigger problem. So there's not really a trust on either side.
Rare earths is becoming a real issue, you know, very imminently, and there's going to be a lot of factories that are running out of things like magnets and so on. How do you see that conversation changing?
So the reality is the Chinese are in the pole position. The U.S. can do very little about it. So the U.S. is going to have to give something. There is very little alternative, particularly to anything at scale. In Southeast Asia, I was just there last month. You can buy magnets, rare earths, and other components, but it's in small quantities and at a much higher cost. So the reality is that, especially for rare earths, there will have to be some give in there.
Yeah, and we are on watch for basically any CEO that comes out and says, look, we're running out or we've had to source them somewhere else. You've been in Shanghai for 25 plus years. Have you seen supply chains change, particularly since COVID? I mean, you would think that we wouldn't be so dependent on one country since COVID, right?
Absolutely. I mean, there has been a kind of China plus one strategy for about a decade. Sometimes it's China plus two, maybe a primary factory in China and a secondary factory in Southeast Asia, or maybe Mexico, Latin America. And that has accelerated, particularly over the last 5 years. But with the global tariffs now of 10%, many businesses are asking themselves, well, what's next? How do I know if I go to a country that it's going to be of any benefit to me? So because of that, I'm going to stay closer to China because China produces a lot of the raw materials, the rare earths and other components that I actually need in my supply chain to build out.
Now, you needed something before you came to studio today, and you were able to just pop into a deli and get it, right?
That's right. That's right. Yeah, this is your typical lint roller. In China, this is made for about 20, 25 cents, and so it's sold down the street for $1.25. And the reality is this is never going to be made in the United States, ever.
And why not?
It's the margins are too low. Nobody wants to make it. Even when you talk to manufacturers in the United States who do want to make products, they want to make large runs, large volumes, so they can actually have margin and revenue. A lot of Chinese factories are okay with making smaller runs. Maybe it's more specialized, and to take kind of the lower margin hits. So the other thing is just the ability. When you include all of this, it's not just this part, but it's also the machinery, the plastics, the stickum for the paper, and all of these things. They do not exist at scale here in the United States in any one particular area. In China, there's at least half a dozen areas where you can make this and around the country.
And I'm sure you only paid a few dollars for this, whereas you might have had to pay much more than you would have been willing to pay had it been made in the US.
Absolutely.
Well, thank you, and at least it worked. Your suit is perfectly lint-free. Our thanks to Cameron Johnson, Senior Partner at Tidal Wave Solutions. Coming up, potential red flags in private markets. We bring you our weekly alternatives coverage next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
This is a chessboard where people test their skill, imagination, and daring. Because it's also a map, complex logistics can be reinvented with AI. Thanks to reliable and secure connectivity from AT&T Business, goods are delivered quickly and efficiently.
Eczema isn't always obvious.
Eczema isn't always red.
But now, eczema isn't always going to stop you.
With Ebglyss. Ebglyss is a once-monthly treatment to help those with moderate to severe eczema find real itch relief and real results.
Like skin that's still more clear at 1 year. Don't use if you're allergic to Ebglyss.
Allergic reactions can occur that can be severe. Eye problems can occur. Tell your doctor if you have new or worsening eye problems.
You should not receive a live vaccine when treated with Ebglyss.
Before starting Ebglyss, tell your doctor if you have a parasitic infection.
Skin that's still more clear, even at 1 year? Clearly, it's possible with Ebglyss.
Talk to your doctor about Ebglyss for eczema.
Ooh, I see your kitchen sink is draining your bank account. No problem. An American Home Shield warranty covers important parts of plumbing systems with a fix or replacement.
Aha! Good fortune. Sign up today at ahs.com.
This is Bloomberg Markets. I'm Bonnie Quinn. Time now for our weekly segment on alternatives. Right now, one of the largest gatherings of private capital leaders is happening at Super Return in Berlin. Bloomberg's Kriti Gupta spoke earlier with Apollo Global Management President Jim Zelter on red flags he's seeing in private markets. Have a listen.
Certainly, there's been a tremendous growth of a variety of credit markets, whether it's investment grade, high yield, direct lending. And I think we have to differentiate between a credit cycle and industries where there may be an overabundance or an overenthusiasm. So certainly what's going on right now with in DC with reimbursement, the whole area of healthcare and medical reimbursement, you want to make sure that you are not overly concentrated to any one player or any one provider. In the enterprise software business, a lot of concern about technology change and technology innovation in light of AI, and certainly also you want to make sure you don't have a concentrated business. So those are really red flags that would be the case in any credit cycle, but certainly as we are a bit long in the tooth in the cycle, you have to be more focused on it at this point in time.
You mentioned the risk out of Washington, D.C. specifically. Connect the dots for us in terms of those deficit concerns out of D.C. to the private credit space. How quickly do you see an effect?
Well, right now, while the tariffs and Liberation Day got a lot of the headlines, the market forces, the so-called BOD vigilantes, have woken up those to the concern about the growing deficit in the United States. So in the marketplace right now, with a little bit slower growth and some concern, a lot of hand-wringing, the deficit issue has taken the main stage versus the impact of the tariffs. Now, this administration, we can't get too comfortable. There can be a headline in the next few minutes that change that. But right now, the big focus is on rates and the deficit, obviously, as the current administration is focusing on their big, beautiful bill.
When it comes to kind of the folks you're speaking to here in Berlin or around the world, how does that sentiment you just laid out affect perhaps the nervousness in terms of credit lending, but also kind of in the equity space as well? Are you seeing some of that nervousness rise to the top?
Well, I think we've been very clear about the role that we play as a broad-based capital provider, and I think that when you see the macro headlines right now, your calibration of risk on levered equity needs to be a bit higher. But at the same token, you have real rates, 4% plus on nominal rates in the U.S. right now. And for our perspective, as a credit lender, you're getting paid for the first time in the last 15 years. So it's a wonderful time to be a player in credit. But at the same time, I do think there's appropriate caution with buying equity at the bottom of a levered capital structure.
And that was Bloomberg's Kriti Gupta at Super Return in Berlin. Meanwhile, another longtime fund manager is flagging risks in alternative investments. The $17 trillion alts boom is being called costly and wasteful by an investments veteran. In a forthcoming study, Richard Ennis, who advised pensions and endowments for decades, writes, quote, All spring extraordinary costs, but ordinary returns, namely those of the underlying equity and fixed income assets. He added that they, quote, cost way too much for what you get. It's that simple. Well, for more, let's bring in the reporter covering this story now, Bloomberg's Denitsa Tsakova. So which alternative investments is Richard Ennis talking about? And give us an idea of the types of returns they've had for institutional investors.
Yeah, that's a very fascinating thing. He mixes real estate, private equity, hedge fund, infrastructure, and he constructs an index to compare their performance to the performance of a simple portfolio, mixing stocks and bonds according to the risk the other categories offer. He looks at how this has affected performance for pension funds and endowments. And for example, endowments, which have had much bigger allocation to alternatives, about 65%, they have had a really big drag in performance. He estimated to be more than 2 percentage points a year over 16 years. For pension funds, that's a little bit more. It's 1 percentage point. But again, over 16 years, this really adds up. So the thing is, the drag comes from the fees. The performance hasn't necessarily been so bad, but when you feature the fees, they would have been better off on a simple investment like an index fund or a low-cost fund that offers exposure to stocks and bonds.
That is fascinating. And real quick, Denitsa, because there's a push to have some of these alternatives included in things like 401ks and ETFs even.
For sure, that's the big question, right? If they haven't helped endowments and pension funds that much, what happens if like a retail investor has it in their 401k? And we've seen private credit ETF just launched. We've seen more and more sophisticated ETFs being there for retail investors. And those comes with very high fees. And potentially they could lower performance as we have seen with those investments.
Fantastic story. Our cross-asset reporter there, Denitsa Tsakova. Coming up, we'll talk more trade. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Ooh, fun. Yikes. The leaky refrigerator coil card. Is that bad? Oh, death! Death? Of an AC fan motor. Oh, no. But your future is bright with an American Home Shield warranty to protect your covered appliances and home systems. Are there bees behind me?
My bees escaped.
Bill, we talked about this. American Home Shield. Don't worry, bee warranty.
Join Light the Fuse on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel.
It's like we beat up that beat. GTL, baby. Gym Tan Laundry.
We are here to blow this place apart. I don't know how I'm alive.
Watch the Jersey Shore channel now on Pluto TV. Stream now, pay never.
When life gives you lemons,
make lemonade.
No, you don't. You learn to be a good wedge player.
Hey, Golf Pass, I'm Natalie Sheehan.
Chris Como here.
Devin Bonebreak here, host of the Golf Fix.
Put pressure on the lead leg, you flex the lead leg, and you just move laterally.
It does not matter how much you are slicing. I'm going to help you fix it.
I'm just trying to really visualize how it's going to run when it gets on the green.
This is Bloomberg Markets. I'm Bonnie Quinn. Let's get a quick check on those markets now. And it seems like the S&P 500 has erased its paltry gain for the day. We are up 2 days in a row, though, so it is already sitting on a 1% gain so far this week. And we're just about erasing that. Same with the NASDAQ 100. We're only up 0.1%. Still a little bit of strength in tech today, but we are seeing some weight and maybe just perhaps a lunchtime lull here as well. As you can see, the dollar index continues to weaken another 0.5%. The beneficiaries today, obviously the euro trading at 114.28. Sterling as well, also stronger by almost 0.4% at 135.66. And as you can see, we're down now to 486.94 on the 30-year. Treasury's rallying today. You could say that it's that weaker economic data, the services index in contraction, and also a weaker private employment report. But there are 2 more days of employment data to get through before we have a fresh picture of the labour market in full. Now let's highlight a couple of individual equity movers at this hour. Bloomberg's Alexandra Semenova joins us. Alex.
Hey, Vonnie. Shares in Chart Industries and Flowserve are tumbling after the companies agreed to an all-stock merger. The deal between the equipment makers would create a company worth about $19 billion. Chart shareholders will receive just about 3 shares of Flowserve for each share owned. That gives Chart's investors about 53.5% ownership of the new company. And also, this is a fun one. K-Wave Media, a company focused on K-pop, or short for Korean popular music, is soaring today after saying it would sell up to $500 million of shares to buy Bitcoin. The company surged as much as 236% today. It says that it aims to become the meta planet of Korea. This plan follows Michael Saylor's strategy, selling shares to purchase the cryptocurrency. And Dollar Tree warned second quarter profit may be down 50% from a year ago, citing tariff-related costs. That's including 145% levies on some products from China. The company expects profit to re-accelerate in the remainder of the year. Its sale of Family Dollar for about $1 billion will also allow it to focus on its stronger Dollar Tree chain. Vonnie.
Wow, some fascinating stories there, Alex. Thank you so much. That's Alexandra Semenova there. Markets, of course, also laser focused on international trade talks. The European Union and the US are headed in a so-called right direction. That's according to EU Trade Commissioner Maros Sefcovic after his meeting today with US Trade Representative Jameson Greer. Bloomberg's Brendan Murray has been following the talks very closely and joins us live now from London. So, Brendan, on the one hand, there are the large things that are happening, like President Trump signing 50% tariffs on steel and aluminum. And then we have these talks in Paris. Are they leading anywhere?
Well, if you were before today, the deal that needs to get done by July 9th, that the U.S. is trying to negotiate with all of its major trading partners, that was least likely to get done was the one with the EU. But we've got some positive signals out of both sides today. They cited good progress. They cited a clear path for negotiations ahead. But we shouldn't misunderstand that for the difficulty that these two sides have ahead of them. There is a 50% U.S. tariff threat hanging over the European Union that will kick in on July 9th if the U.S. doesn't feel like its demands have been met. There are non-tariff barriers that are ingrained into the European Union system that the U.S. wants undone that Brussels won't give up very easily. So while they're making moves in the right direction, they both had some positive things to say today coming out of their meetings in Paris. There's still a tough road ahead and some major issues yet to tackle between these two. This is basically the world's largest trade and investment relationship, and it's very complicated, and they have a lot of issues to work out before any deal can be signed.
And it seems like that all has to be done within the month, right? Brendan, we're kind of hitting up against that July deadline, really. So what happens next? How do they meet? And will there be pressure put on Europe not to work with China on the part of the United States?
Yeah, exactly. There's this sort of triangle of pressure going on between the U.S., China, and Europe. The U.S. is obviously, involved in a trade war with China. At the same time, China is trying to apply pressure to both the U.S. and the EU with its control over rare earths. So, and in some sense, the European Union is trying to find some middle ground between the stance that the U.S. has taken and the stance that China has taken. The imposition today of doubling the U.S. tariff on steel and aluminum is not going to help the talks between the U.S. and Washington, between Washington and Brussels. That's going to hurt European steel makers. We saw that in some of the earnings announcements today of European steel producers, and of course European automakers are under pressure from U.S. tariffs as well. So it's really coming at Europe from all angles at the moment, and the U.S. is going to have to. U.S. has a lot of concessions they want to see before they can declare that some sort of truce has been arrived at, some sort of deal has been arranged to either call off the July 9th tariffs or postpone that for a number of more months of talks.
Brendan, thank you so much. Following every single last thread when it comes to trade, that is our trade czar, Brendan Murray, in London for us. Thank you. Coming up, Waystar is celebrating its one-year anniversary on the Nasdaq. That stock outperforming the index handily since it went public. CEO Matt Hawkins joins us next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
And play along to 25 words or less on Pluto TV.
Clever.
Watch 25 words or less on demand right here on Pluto TV. Stream now, pay never.
Join Light the Fuse on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel.
WOW Women of Wrestling on the WOW Women of Wrestling channel on Pluto TV. Stream now, pay never.
Beverly Hills 90210 is back on its very own channel.
I love this place.
Here, the zip code isn't just a number, it's a lifestyle. Dive back into the glamour, the gossip, and the scandal.
It's outrageous. I'm gonna get even. Oh my God. Brenda, how could you? I'm so excited.
Relive your 90s dreams on the Beverly Hills 90210 channel on Pluto TV.
It's a beautiful day in this neighborhood.
Make your day extra special with Mr. Rogers' Neighborhood on Pluto TV.
My neighbor.
This is Bloomberg Markets. I'm Bonnie Quinn. Time now for our stock of the hour. 1 year ago, Waystar made its debut on the public market. It was one of 2024's largest deals, raising around $1 billion at the time. CEO Matt Hawkins saying then that he was building a durable, high-growth, AI-powered business with the goal of simplifying healthcare payments. Waystar shares closed at $20.70 on the day of the IPO, while they're up almost 90% since then. Joining us exclusively to mark the anniversary, CEO Matt Hawkins. So Matt, thank you so much for joining. Talk to us a little bit about the amount of good fortune, let's say, you've had since the beginning, which is less than a year ago at this point. Your revenue has increased substantially and you've just taken on so many more customers.
It's been fantastic. It's been a fast and important year for us. Thank you for the acknowledgement on our stock price performance. We've delivered 4 consecutive quarters of double-digit revenue growth and strong adjusted EBITDA margin performance. And, you know, being public has been a force multiplier for us in a way. It's helped us drive awareness. We talk a lot about the importance of our mission that you highlighted to simplify healthcare payments with cloud software and AI that automates tasks and does important work for our clients. It's helped us deliver credibility and certainly strengthen our balance sheet too in the last year.
Now, you definitely seem to be able to solve a problem that I'm sure many other companies have tried to do and just maybe haven't had quite the success. So what you do is, as you say, process insurance claims. But for example, if something is denied, if a claim is denied, it used to take a few hours to appeal that. With your software, apparently it just takes minutes.
Yes.
What have you discovered that other people didn't?
Well, we're unlocking the power of generative AI. We've launched something that we call Altitude AI. It is generative AI that we've imbued in our software platform. It's pervasive across our software platform to prevent the likelihood that claims get denied, and then also to follow up rapidly to help clients when, heaven forbid, a claim does get denied. And the statistics are astonishing. We're taking work that has historically taken 3 days, and we're minimizing that to 3 minutes with the power of AI. That drives real excitement and certainly return on investment for the clients that we work with.
Now, who's providing that AI ability for you? Who are you paying in terms of data centers or large language models or whatever you have to use?
We have an effective partnership with Google Cloud, and they have a fantastic large language model that they continue to improve. It's state of the art. We're partnered with them, but you know, we work with over 1 million providers across every setting of care and process 6 billion insurance transactions annually, constituting over $1.5 trillion of gross claim charges. So we bring a tremendous amount of data and know-how and knowledge and expertise to that large language model in this partnership. We've launched now several effective use cases, and we're converting this hype around AI to ROI reality for our clients. And so that's coming to fruition as we look at business performance. We're pleased with our progress.
Is it a bit of a sort of a land grab? Because if you have one client, you could have all of the clients, right? I mean, you're doing similar things for many of your clients, and if you have 1,244 generating 100,000 each, you would like that number to go higher, and it shouldn't take much more on your part to do that. So how do you get those clients to switch if they're using somebody else?
Well, we know the vast majority of decision makers in healthcare want to begin to use cloud software and generative AI, but they're cautious. They want to be smart and responsible about it. They don't want to work with an upstart or a fly-by-night, not well-funded business, so to speak. And so they're looking to partner with people they can trust. Waystar is that person, that entity. We're building value for our clients, and the growth prospects for us are strong. We have momentum. We are invited to participate, given the awareness in the market about who we are. We're invited to participate in conversations and RFPs, and we've noted that in our earnings calls. We're also, grateful for the clients that participate in case studies with us and actually are references for the success that they derive when they use our software.
Now, you said on your first quarter earnings call, and that's a little while ago now, so things may have changed, that you don't anticipate any impact whatsoever from policy. Has that changed, or is that still the position?
Well, we're watching this closely, and we know that in any economic cycle, Waystar software can help providers navigate that successfully. It's a true statement that providers are constantly forced with addressing increased utilization with the same or less resources. There's some policy that informing or potentially forming that addresses those types of things. One thing for sure, Waystar helps providers get paid faster, fully, and accurately, and helps them generate cash flow. We know our software can work successfully in those those settings.
Well, congratulations on your one-year anniversary.
Thank you.
Went public perhaps at a good time, but also you've proven yourself to the markets, and the stock is trading just under $40 a share, thanks to Waystar CEO Matt Hawkins. Some breaking news now. President Trump and Vladimir Putin have had a call. President Trump confirming that call lasted 1 hour and 15 minutes, not one that will lead to peace. According to President Trump, that conversation is not the conversation that will bring peace. They did discuss the Ukraine attacks on Russian planes, and Vladimir Putin said that he would respond to those Ukrainian attacks. Again, Vladimir Putin telling Donald Trump that he will respond to the Ukraine attacks on Russian planes. He also said that Putin suggested he'd participated in Iranian talks. More on this next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Switch to Square and join over 4 million businesses worldwide. Scheduling is easy with Square Appointments. Clients can book online 24/7. Take payments at your station or the front desk to offer seamless checkouts. Keep track of commissions and split tips with just a few clicks. Gain time and peace of mind with beauty tools that bring everything together. Switch to Square today at square.com.
This is gonna be the start of something huge. Here's to us.
Autobots, roll out.
Dear God, what is this?
You have to get in the car. Trust me.
We're under attack!
Oh my God.
This is Bloomberg Markets. We have some breaking news now with the president saying that he had spoken to Russian President Vladimir Putin on a call that lasted 1 hour and 15 minutes. Let me read out what the president posted on Truth Social. I just finished speaking by telephone with President Vladimir Putin of Russia. The call lasted approximately 1 hour and 15 minutes. We discussed the attack on Russia's docked airplanes by Ukraine and also various other attacks that have been taking place by both sides. It was a good conversation, but not a conversation that will lead to immediate peace. Once again, that phone conversation happening just within the last couple of hours. Let's get to Washington, D.C. now and our Tyler Kendall. So, Tyler, were we anticipating that this phone call would take place?
Yeah, hey, Vani, we did not have an update that this was going to ultimately happen, though we do know that it comes after the pair of leaders did speak late last month. And that key line that you read out there, President Trump saying that it was a good conversation, but not a conversation that will lead to immediate peace. Of course, this comes amid growing frustration from the Trump administration that they have yet to see positive momentum when it comes towards a ceasefire deal. Now, you also mentioned, and this is an important key part here, this recent really surprise attack by Ukraine that used these stealth bombers that went as far into as Siberia, ultimately, at the end of the day, with with Vladimir Putin saying very strongly that he will need to respond to this recent attack on airfield. So whether or not this is going to be an escalation here that could slow down the peace talk process. Now, earlier today, Bloomberg News had reported that Putin did dismiss the idea of meeting with his counterpart, his Ukrainian counterpart Zelensky, as Ukraine continues to call for these leaders to to ultimately meet face-to-face. Vani, as you well know, we've been reporting that the U.S. has been trying to get them to the table. That's included even offering freezing the battle lines where they are. But our Ukrainian allies have said that they do not want to talk about any sort of territory concessions until they get some firmer security guarantees out of this White House. And at the end of the day, that doesn't even seem to be enough to budge Russia to the negotiating table either.
Tyler, thank you so much. That's Tyler Kendall there in Washington, D.C. And any idea of Russian retaliation for those Ukraine attacks, at least not impacting the market in the immediate term? Sticking with President Trump, and for our equality segment, he has been cracking down on DEI initiatives. Bloomberg News' Shaquille Omari shows us how President Trump's push to end DEI is reframing corporate America.
So help me God. Congratulations, Mr. President.
Following President Trump's inauguration, with a stroke of a pen, he began rolling back efforts on diversity, equity, and inclusion.
These are policies that were absolute nonsense throughout the government and the private sector.
Signing executive orders to end DEI offices, terminating affirmative action enforcement for federal contractors, and eliminating federal DEI positions across multiple agencies.
DEI at HUD is dead. DEI is dead at the VA. DEI is dead at the EPA.
The following weeks, the White House clamping down on corporate America to follow suit. Companies including Boeing, Home Depot, Meta, Amazon, Disney, Citigroup, Bank of America, and Barclays changing their tune.
What we removed were specific gender and diversity related targets which we had for employees.
Back in November, Walmart announced its rollback on DEI efforts, but the world's largest retailer kept most initiatives, only making minor changes, like replacing the word diversity in job titles with the word belonging. Some companies did not waver. Costco defending its DEI programs as legal, saying, quote, "Our commitment to an enterprise rooted in respect and inclusion is appropriate and necessary." Target, once praised for hitting the bullseye on pro-diversity measures, dialing back on its DEI goals, causing a nationwide boycott. The decision contributing to a near 4% decline in the company's first quarter sales, leaving executives disappointed.
I want to be clear that we're not satisfied with this performance, and we're moving with urgency to navigate through this period of volatility.
As the backlash against Target continues, President Trump's crackdown on DEI initiatives has sparked lawsuits both on state and federal levels, with many calling his decisions on the topic unconstitutional. It'll be certainly one to watch on how the courts decide in the coming weeks and months. In New York, Shaquille Omari, Bloomberg News.
We also got news today that Florida State University leaders voted to reject Santo Ono as president of the University of Florida due to Republican backlash over his previous support for diversity programs. Let's discuss all of these issues now with Verna Myers, diversity pioneer at the Verna Myers Company, on the ongoing debate within corporate America on rolling back these DEI programs. Verna, how much are these corporate leaders putting their money where their mouth is? So they're coming out perhaps with statements, but are they actually implementing new policies within their rank and file?
You know, it's interesting because most companies are somewhere between, frozen to hiding. There's fear, but there's also a great deal of confusion because most of the EOs coming out of the administration has no specificity to it. It's just sort of calling things illegal without any understanding or explanation of what is illegal. Because, of course, we still have the law, and the law, Title VII, says that employers cannot discriminate against anyone based on a whole set of categories: race, gender, sexual orientation, you name it. Although in the federal, it's probably not sexual orientation, but in states there are. So I think what's very difficult for companies is that these kinds of anti-discrimination campaigns that we've seen are kind of antithetical to how employers of choice operate. This is about their core values. That is how to be equitable and how to be fair and how to be respectful. That's how companies that want the best talent and want to keep the best talent, that's how they've been operating for a very long time. To suggest that the ways in which you bring in diverse perspectives and that you bring from people from all sorts of backgrounds is the best way to get the best talent and to serve your customers. To go against that is very difficult for companies, and it's at cross purposes to their success and their financial prosperity.
Verna, how are plaintiffs and their teams approaching the courts on this? Because there is so much case law precedent on inequality, for example. How and what kinds of arguments are they going to be making?
Well, I think mostly what they're arguing is what I said about the law, which is many of the ways in which companies have thought about how they operate is to avoid discrimination, to make sure that there is no group that is being targeted and as less than or actually having less opportunities. And we know that historically that has been true, that intentionally there has been exclusion and there's been a great disparity and a lack of representation. So to really conform with the law, you have to be proactive in making sure that there isn't bias and that your leaders understand how to cultivate a kind of environment where people of all backgrounds are feeling like they're respected. And so this is, I think, where the law is going to help guide us. And of course, everybody's got their lawyers out trying to figure out what is legal and what is illegal. But I would say that there is discrimination and then there is DEI. DEI in itself is not illegal. Could there be ways in which some companies may have crossed the line? I guess that's possible, but that isn't true for the clients that I have worked with.
Verne, thank you so much. We'll certainly be keeping an eye on those court dates, at least as a first step towards watching this debate play out. That is Verne Myers, diversity pioneer and founder at the Verne Myers Company. Let's get a quick look at these markets now as we head towards the afternoon. With that weaker economic data, having treasuries selling off those yields lower, with the 30-year yield now down to 434.93, it certainly looks like. And we have the 2-year yield at 386.24. 2 Fed cuts baked in now for the rest of this year. We're back positive for the S&P 500. If we hold in the green, that would be a third day of gains. That does it, though, for Bloomberg Markets. I'm Bonnie Quinn. Balance of Power is next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
The average person would rather suffer through team-building exercises than look for insurance. The Zebra searches over 100 insurance companies for you to find savings no one else can. Room for one more? The Zebra. We do the searching, you do the saving.
Still in here?
What's that? There's movement over there.
We're not here to scare you.
What is that? I think something's investigating us.
here to help people.
You and your friend saved my life.
Awful lot of good people in this world, Mark. I'm just here to try to help them.
I really love this job.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Another meeting of the minds. President Trump says he just got off the line with Vladimir Putin. Welcome to the Wednesday edition, Balance of Power. As news of this phone call, more than an hour in length, breaks today, and the president now suggesting that peace is not imminent in Ukraine. I'm Joe Matthew alongside Kaylee Lines in Washington. It's good to have you here on the early edition of Balance of Power on Bloomberg TV and radio. Kaylee, he said a lot more than that, also addressing talks with Iran and a potential collaboration of sorts with Vladimir Putin. Says he may join the discussions.
Yeah, the Russian president suggesting to President Trump that he could be helpful when it comes to Iran and forcing a more rapid conclusion to the discussions the U.S. has been trying to engage in with Tehran. Noteworthy, of course, that the president is speaking to President Putin, or did so today, when he has been asking publicly to speak with a completely different president entirely, Xi Jinping of China, as he says Xi is now being tough to deal with. Certainly a busy day for President Trump as he not only seeks that phone call, but also will be meeting later with key members of the Senate Republican Conference, specifically those on the Finance Committee and the Majority Leader John Thune about the One Big Beautiful Bill.
Well, we thought that would be our lead story right now because indeed members of the Senate Finance Committee, Republican members, are on their way to the White House for the next throwdown here. That group will include a number of holdouts, including Ron Johnson, who says he's a no flat period unless this changes. But Kaylee, the CBO may be the best thing that happened to Donald Trump today in that conversation.
Yeah, he hasn't expressed too much happiness with the CBO and its scoring of his tax bill, which, according to their report today, says will add $2.42 trillion to the deficit over the next 10 years. But they also say his tax cuts will reduce the deficit by $2.8 trillion, or tariffs, that is.
The tariffs will help pay for this.
Will help pay for it. So maybe the offset conversation is a real one. We'll get into all of that this hour, but we begin, as always, with a check on the markets. And for that, we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lines. Great reason to keep it locked into Bloomberg Television and Radio. Lots of moving parts to this market today. Bottom line here, we do have the Dow higher by 45 right now, up 0.1%. Stocks have been meandering, but right now we've got the S&P up 10 at 59.80, a gain there of 0.2%. NASDAQ up 49. That's an advance of 0.2%. Bottom line here, S&P 500 holding steady in the face of weak data. We do get the beige book coming up in 1 hour from now. The 10-year, 4.35%. The 2-year, 3.86%. Gold up $20 the ounce, up 0.6%. 33.74 right now, while West Texas Intermediate crude is retreating by 1.2%. 62.63 a barrel on WTI. Wells Fargo shares are higher after finally escaping that Federal Reserve asset cap that has restricted its size for more than 7 years, unleashing the firm from the unprecedented punishment in a major win for CEO Charlie Scharf. Today, Wells Fargo up by 0.9%. Again, recapping here, the Dow, the S&P, NASDAQ all advancing. S&P up 11, a gain there of 0.2%. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet in New York checking on the markets for us. Thank you so much. Meantime, here in Washington, we are following breaking news that we just got from President Trump, courtesy of his True Social feed, where he informed us he just spoke to Russian President Vladimir Putin by phone for over an hour. A conversation that the president described as a good one, but not a conversation, he said, that will lead to immediate peace, noting that Putin said very strongly he will have to respond to the recent attack on the airfields, referring, Joe, of course, to the drone strikes we saw across deep into Russian territory last weekend.
This could mean some very difficult days ahead for the Ukrainian people, knowing that Russia has a preference of attacking civilian targets, unlike what we saw from Ukraine. Over the course of the next half hour, we're going to bring you two very important voices in the midst of breaking news today in Washington with all the stories we're talking about.
Republican Senator Bill Hagerty of Tennessee will join, along with Democratic Senator Elizabeth Warren of Massachusetts, all in the next 20 minutes. here on the fastest show in politics. We do want to start on Capitol Hill, though, Kaylee, with all of the breaking news today in Bloomberg's Tyler Kendall. First, Tyler, welcome back. On this phone call, lasted over an hour, Trump and Putin. What else do we know?
Yeah, hey, Joe. Well, Kaylee read one of the key lines from President Trump's Truth Social post, which is that he said it was a good conversation, but not one that's going to ultimately lead to immediate peace. Now, of course, this was, it was not known that they were going to have this call, but does come after the two leaders did speak by phone last month, and it contributed to what was really mounting frustration from this White House when it comes to really stalled progress towards reaching a ceasefire. Here, we're going to be watching how this really escalates as President Trump does confirm that Vladimir Putin has those plans to retaliate after we really saw that surprise drone attack by Ukraine that went so deep into Russian territory it hit areas as far as Siberia. Now, we should say that earlier today, Vladimir Putin did come out and he dismissed the idea of meeting face-to-face with his Ukrainian counterpart, something that Ukraine says ultimately needs to happen if there is going to be progress when it comes to these talks. It also comes against a broader backdrop of a Bloomberg News scoop earlier this morning that the U.S. does not have plans to provide air defenses to back a reassurance force that would comprise of the United Kingdom and France that has been trying to convince the United States to give some firmer security guarantees moving forward here that would back any potential deal. So we're going to be watching closely how this ultimately ends up developing because, as you well know, the U.S. has gone to Russia before with a potential plan that could even see freezing the battle lines, the battlefield lines where they were, but that hasn't been enough to move the needle in really a significant way as of yet.
Well, and Tyler, as we consider the implications for what this means in terms of Russia's behavior in negotiations over the war in Ukraine, it seems President Trump is also suggesting that Russia will have a role to play in separate negotiations with Iran.
Right, exactly. And that's going to be a really interesting one to follow here, too. As we know, this really is a priority for this White House to ultimately try to make some kind of progress here. I believe that the fifth round of talks just concluded, and we're seeing Oman really be a mediator in these talks. But details haven't really emerged, including how a potential deal would differ from the JCPOA, which the U.S. pulled out of under the first Trump administration.
Tyler, we thought we'd be talking first with you about reconciliation. This is an important day on the track to make the Trump tax cuts either permanent or extended. You've got Republican members of the Senate Finance Committee headed to the White House to meet with President Trump. Among them, Senator Ron Johnson, who says he's a flat no unless these deficit numbers change. This, of course, follows the missive, several of them overnight again, from Elon Musk, and now news from the CBO. How important is this meeting today, Tyler?
Yeah, the stakes are incredibly high, Joe, as the White House really does try to ramp up the pressure on these Republicans, with President Trump picking up the phone and calling them directly. Now, you alluded to this before. Perhaps the most vocal group that's emerging is this group that are pitching themselves as fiscal hawks, and that includes Ron Johnson. And I actually had the chance to catch up with the senator from Wisconsin earlier today. He's pushing for those deeper spending cuts. He says he's in close touch with the White House, and he realizes that it might take some time to get the sort of spending cuts that he's really looking for.
If I'm wrong, challenge me. You know, I want to get in that dialogue. Quite honestly, that is really my discussion with President Trump. And so he had Kevin Hassett call me up right away. I'll be meeting with the secretary. So he wants to engage. Yeah, he wants to reduce spending. It's just hard to do. I'm not denying that fact. It was a slender majority in the House, and Democrats having no interest whatsoever at reducing spending. That's our problem.
Now, of course, the other side of this, Joe and Kaylee, is that the White House is dealing with conflicting demands. So you have some senators here that are calling for deeper spending cuts, raising some concerns about how some of the tax sweeteners, whether or not they would really contribute or incentivize growth over the long term. But then you have a group of Republicans that are concerned about what spending cuts ultimately will mean for Medicaid. Now, we should say that there's pretty broad agreement about those core pillars of this plan, including extending the 2017 tax cuts. But at the end of the day, there are really slim margins here in the Senate. They can only afford to lose 3 votes.
Indeed. All right, Bloomberg's Tyler Kendall live on Capitol Hill for us. Thank you so much. And it's on Capitol Hill that we stay here on Balance of Power on Bloomberg TV and radio as we turn to Republican Senator Bill Hagerty of Tennessee, who is back with us on the program. Senator, we appreciate your time. As we just heard our colleague Tyler there outlining that various
portions of your body have demands as to what it will take to get them to a yes vote on this legislation. What's yours? What change do you need to see for you to vote for this package?
I think the most critical thing to keep in mind, Kaylee, is the fact that if we don't get this done, Americans are looking at a north of $4 trillion tax increase. I was talking with Kevin Hassett at the White House yesterday. His projections are that that would yield a 6% decrease in our nation's GDP. That would be terrible for America, frankly, be terrible for the world economy. We can't let that happen. The main interest I have is making certain that we stimulate more capital investment in America, because more capital investment will beget more jobs, more economic activity. This will have a very positive impact on the economy, and frankly, it's something that the Congressional Budget Office completely misses in their analysis. They missed it at an incredible level back after the 2017 Tax Cuts and Jobs Act were passed. In fact, they missed it by north of $1 trillion worth of revenues. So I think that my colleagues need to certainly take into account the fact that this is a pro-growth bill. This tax package is going to stimulate more economic activity here in America. We will see growth that's not captured in these CBO estimates, but will have a material impact on our economy, on our well-being, and frankly, in terms of going the right direction to reducing the deficit.
Well, Senator, we've got a lot of questions about what's inside, and it's great to have you back on Bloomberg. You mentioned the CBO, so I do have to ask you about that. Two big headlines today coming out of the Congressional Budget Office. First, the Republican tax bill that cleared the House, they say, would add $2.4 trillion to U.S. deficits. But that same Congressional Budget Office, which I know Republicans criticize a lot, is now projecting the Trump tariffs will cut the budget gap by $2.8 trillion. Do you buy that number? And if so, is this bill paid for?
Well, in the first case, what they do is static analysis. They don't take into account the dynamic of investment in the economy that will yield growth. So I think that's patently wrong. And the second, with regard to tariff revenue, it's possible, but we're not nearly to the end of our trade negotiations. Jamieson Greer, our trade rep, working his heart out to try to bring together a significant sea change in the way America is treated on the global stage. I think we're going to make great progress, but it's very hard for me to say right now, and I don't know how the CBO is able to say this, where we're going to land on tariff revenues as well.
Well, yeah, it is worth pointing out the CBO was only scoring tariff revenues through where tariffs stood as of May 13th, and we already know changes have been made since then. There's still some legal questions around whether or not IEEPA is going to stand, Senator, so we have to bear that in mind. We've heard from the Senate Majority Leader John Thune that there's going to have to be some adjustments made to the SALT cap, something that House Republicans from those SALT districts say would essentially mean that the deal dies when it returns back to the House. Knowing that the debt ceiling lift is also attached to this legislation, do you see risk around making changes like that? Could that bring the U.S. closer to the brink of default?
Well, I think there's always risk in any situation like this where you have a complex bill, Kaylee. We're going to have a conference meeting right after I'm on with you now to begin the process of talking through where the Senate is going to land here. And I do expect that there'll be improvements. It will be different. There'll be deeper cuts. And we'll start to see text coming out on Friday. What I don't want to do is try to get ahead of those who are negotiating. As you know, the Finance Committee is going to the White House right now to meet with President Trump. This is a process that's underway, but I can say this at a very high level. My colleagues in the Senate want to see more cuts, more deficit reduction, but at the same time, I've been encouraging everyone to move expeditiously, to make certain that this happens extremely quickly, because the United States economy needs certainty. And with that certainty, we're going to see more capital investment. The longer this takes, again, the less certainty we've got, and that's going to have a negative impact on capital investment here in America.
With that in mind, Senator, I'd love to explore the idea of permanence with you, because we're hearing about this a lot more now. The likes of Steve Daines and others who say, no, we need to make permanent certain business tax breaks, specifically the full research and development deduction, bonus depreciation, and interest expensing. Are you on board with making them permanent?
Certainly I am. I agree with the premise completely. And, you know, Steve Daines is a business person just like me. We understand the importance of being able to make long-term plans with respect to capital investments. That's what's driving Steve's position. I think he's exactly right. And we need to extend these as far as we possibly can. Permanent is the best possible answer we could achieve.
Senator, of course, while you and your colleagues are working on reconciliation, there is also actively underway an effort to advance the stablecoin legislation, the Genius Act. Last time you were on with us, we talked about some of the various amendments that were being put forward, which you said are being worked through. Have you had direct conversations more recently with either the Majority Leader or Senator Roger Marshall about whether or not the Credit Card Competition Act is going to become a real factor here?
Yes, those conversations are underway. I certainly respect the process that we're addressing. But right now, this really isn't about policy, nor is it process. We're just trying to get floor time right now to get this processed. We have broad agreement, Kayleigh, with respect to the content of the stablecoin legislation, My Genius Act. And this is going to, I think, take us into the 21st century in terms of upgrading our payment systems. It's going to have very desirable effects, taking the U.S. economy into the digital assets arena, keeping innovation here, lowering risk here in America, and putting in place guardrails that will protect consumers, because every one of these stablecoins will be backed up dollar for dollar with U.S. Treasuries. Very positive outcome here. We've got very strong support.
So, okay, what's the timeline, Senator, and what does it mean for the Clarity Act coming out of the House?
Joe, the timeline is the key issue right now. The window is closing on us to get this done because we've got to turn our attention to reconciliation. As I mentioned, we're going to a conference meeting, our first broad conference meeting, to talk about the reconciliation bill. We need to get the Genius Act passed. We need to get it on the floor, and that's where my discussions have been with the leader and with my colleagues, is getting that time on the floor as soon as possible. I'd like to start it today, tomorrow, but I'd like to get that time on the floor as soon as possible, so then we can turn our attention to dealing with the Reconciliation Act and getting more confirmations across the floor.
And when will your attention, Senator, turn to market structure? And when the time comes to actually look at a market structure bill, how akin do you expect it will be to the Clarity Act that was just introduced in the House last week?
Well, there's been a great deal of good work that's been done in the House. A lot of questions have come up in the process of building the stablecoin legislation that have been more appropriate to market structure. We're focused on it. We've already begun the process of building it here in the Senate. Again, as I mentioned, a lot of it's a natural outgrowth of the stablecoin legislation that we've been pushing forward. So we're going to turn our attention immediately to that. But I think the most immediate thing that will happen is the reconciliation bill coming to the floor of the Senate. In the meantime, I pledged to President Trump I would get this done in the first 100 days. If I possibly could. We've exceeded that by a bit, but President Trump wants to see this legislation on his desk. J.D. Vance was at the Bitcoin conference in Las Vegas just last week saying he wants to see a clean bill in front of him on stablecoin legislation in front of President Trump, and I think we can get there.
Interesting as you bear down on the reconciliation, tax and spend legislation here, Senator. I know it's going to be an important day, and you're walking into this meeting after we're done with our conversation to begin hearing from Republican members of the House who apparently didn't have enough time to read the whole bill. Congresswoman Marjorie Taylor Greene says she's a no, having not read a section banning states from passing their own AI regulations. Mike Flood, Republican from Nebraska, doesn't like this idea of making it harder for judges to hold officials in contempt of court. They both didn't see it in the first pass. Have you had a chance to read that bill?
I haven't gone through the entirety of the bill. We're in the process of reviewing all the text that just came over in the past couple of days. But again, we're moving on it. The Finance Committee is at the White House negotiating it right now. The text is in process, and it's an item that's in motion. I understand that there may be items here that not everyone is happy with, but at the end of the day, we're going to have to compromise and get it done. I'll come back to the original point. The American economy needs this certainty, and I'm going to be working my heart out to make certain that we deliver the best possible product we can here. But I'll remind you as well, this isn't the last bite at the apple. We'll have the opportunity to have another reconciliation process coming up fairly soon. So we're going to find a number of other opportunities to improve the situation here in the American economy, achieve some of the other objectives of our legislators, and we can, if we don't solve it all here, we'll have another opportunity to do that.
Well, Senator, you will have an opportunity as soon as tonight to vote for the confirmation of Mickey Bowman to be the Fed's new vice chair of supervision after the cloture vote passed earlier today. This comes just a day after the Fed officially lifted the asset cap on Wells Fargo. Starting today, is this a new era of banking regulation in the United States?
I certainly think so. Michael Barr took us in exactly the wrong direction, and I'm very glad to see someone with the sensibilities of Mickey coming into this position. She's going to do a great job. What we need to do is return to the overarching mission of making certain that our capital markets are as competitive and safe as they possibly can be, get out of the business of these extraneous policy issues, whether it regards climate or other sorts of issues that essentially make the U.S. economy less competitive. And the gold plating that Michael Barr attempted to do, making us subject to even more regulations than the Europeans, only hampers American capital formation. Mickey has a very different point of view, and I'm very excited to see her come into this role.
Well, it is interesting seeing this asset cap lifted on Wells Fargo today, Senator. Your colleague, Elizabeth Warren, who's going to be with us a bit later this hour, is asking for 5 years of exam reports from the bank as a member of the banking committee. having suggested that they have not gone a year without breaking the law. Her statement says it's stunning. The Fed could not wait till the company went a full year without breaking the law before wiping its slate clean. Should she get those documents? Should the committee see them?
I'm all for transparency, Joe, and I'm all for having committee members have access to the information that they need, but I'm not about to respond to something that Elizabeth Warren has said just based on what she probably doesn't have. You know, she doesn't have access to the documents at this point, so I don't understand her leveling these accusations, but she's want to do that.
Well, I wonder, Senator, if you'd like to respond to something President Trump has just said, as he shared with us on Truth Social, that he spent an hour and 15 minutes on the phone today with Russian President Vladimir Putin. He suggested that phone call will not lead to an immediate peace with Ukraine, but went on to say that Putin believes or suggested he could participate in discussions with Iran. And of course, the U.S. Approach to Iran is something I know you feel quite passionately about. Is it appropriate for Russia to be stepping in here?
Well, I think you understand well the fact that the previous administration removed all of the maximum pressure campaign that we had imposed on Iran. We had Iran to a point where they were ready to deal. Their reserves were below $10 billion. As soon as the Biden administration came in, they stopped enforcing the sanctions. They put Iran in a position to fund terror. We saw what happened with Hamas. We saw what happened with Hezbollah. We saw what happened with the Houthis. We're bringing that situation back under control. We're putting back in place maximum sanctions, and we also have the opportunity to get the world behind us, and I think the world should be behind us to ensure that Iran does not have the capability to threaten the rest of the world as they, seem to want to do. President Trump has every right to seek out other world leaders, to find allies wherever he may. But at the end of the day, it's going to be up to us to take the leadership position to deal with Iran and to make certain that they don't have the capability nor the capacity to threaten the rest of the world as they have in the past. And understand this, they're behind all of the terror and all the disruption in the Middle East. It's got to come to an end.
A deep dive with Republican Senator Bill Hagerty of Tennessee. Senator, it's good to see you, and we appreciate all of your time today on Bloomberg TV and radio. We're going to continue our conversation as we cross the aisle coming up to speak with Democratic Senator Elizabeth Warren of Massachusetts about these very same issues on the fastest show in politics. First, watching Wall Street, Charlie Pellet has an update for us on the markets live from New York. Charlie, how's it look?
And right now, solidly higher. Joe Matthew with the Dow, the S&P, NASDAQ, all gaining right now. Tech stocks leading the way with right now the NASDAQ Composite Index up 34, NASDAQ 100 Index up by 0.3%. To be clear, the NASDAQ Composite up 0.3%. It's higher by 66 points right now on NASDAQ. We've got the S&P up 12, gain there of 0.2%. The Dow up 44. That is an advance of just about 0.1%. So the gain in tech coming offsetting weak economic data on jobs and services. Coming up at 2 o'clock Wall Street time, we'll be getting the latest Beige Book report. Bottom line here, stocks pushing higher. S&P up 0.2. The 10-year 4.35%, with the 2-year 3.86%. Gold now up 0.7%, 33.75 the ounce. West Texas Intermediate crude oil down 1.1%, 62.71 a barrel, and Bitcoin down 0.4%, 105,400 on Bitcoin. Earnings news: Hewlett-Packard Enterprise shares right now they are up 0.4% after earnings. CrowdStrike after earnings down 5.4%, and shares of Snowflake they are higher now by 1.5%. Analysts positive on the software company in the wake of its summit event. UBS upgraded the stock, and again Snowflake up by 1.5%. MongoDB after the close of trading. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues. Once again, your hosts Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet checking on the markets for us. Thank you so much. Charlie, of course, noting the move we're seeing in Wells Fargo shares today, up just about 0.75% on the day after the Fed lifted the asset cap that has hampered the bank's growth for years now. But I would note, Joe, that Wells Fargo shares are also up about 20% since Election Day. So there was a lot of anticipation that this asset cap would indeed get lifted under this Trump administration.
They're definitely popping corks at Wells Fargo. Elizabeth Warren, on the other hand, is not. As we told you, will be joined here by the Democratic senator from Massachusetts, having issued a blistering statement following this Fed decision. Kaylee, saying the entire Federal Reserve Board, including appointees of both parties, should be embarrassed. She's with us now, the Democrat from Massachusetts, live from Capitol Hill. Senator, it's great to see you back on Bloomberg TV and radio. You are demanding 5 years of exam reports from Wells Fargo. And I wonder what leverage you have here, how far you would go to get them. Would you threaten to hold up the nomination, for instance, of Michelle Bowman as the Fed's vice chair of supervision to get them?
Look, I'm already opposed to having Michelle Bowman as the vice chair for supervision. This is someone who has never seen a regulation for a giant bank that she wasn't willing to cut or undermine. But understand this about Wells Fargo. I think before you decide to lift this big penalty that's been in place for Wells Fargo for 7 years now, you should ask for like maybe 1 year in which they aren't caught breaking the law. Remember that in January of this year, the SEC tagged Wells Fargo for cheating investors. In December, the CFPB tagged Wells Fargo for cheating American consumers, by the way, to the tune of over $800 million. And in September, the OCC tagged Wells Fargo for money laundering. So we have the three big banking regulators all saying Wells Fargo's out there still breaking the law. And then a report just a few weeks ago by former and current Wells Fargo employees saying that the very activities that Wells Fargo engaged in 7 years ago, where they created fake accounts for people and so on because they were pressing their employees to get those numbers in, to get more people signed up for more accounts, that same activity is occurring today. And those are the circumstances under which the Fed unanimously says, hey, Wells Fargo, get on out of here. You don't need any extra regulation. No, that just doesn't wash.
Do you see any potential benefit here, Senator, though, of Wells Fargo being able to better compete with other big banks for the competitive landscape to change in that way?
Look, I'm all for competition, but I don't think that cheaters ought to have a leg up in competing. And that's really the part to remember here about Wells Fargo. The reason we want to have good enforcement of all of the banking laws is that the banks that actually follow the law, the banks that aren't engaged in money laundering, or the banks that are not cheating their investors, that those banks ought to be able to play on a level playing field. And Wells Fargo, we know, starting 7 years ago, that Wells Fargo was so boosting its profits and, by the way, its CEO compensation based on cheating American customers. And in fact, it was so awful what they did that it wasn't just civil penalties, they were in violation of criminal laws. So the idea that, boy, we want to get them right back out there competing with the other banks at a time when their own employees are saying, hey, they're back to doing the stuff they were doing before. That's not the direction we want to go.
Senator Elizabeth Warren live with us on Bloomberg TV and radio. I'm going to ask you to walk with me here for a second, Senator, because I don't know if Donald Trump is watching us right now, but the president is posting about you right now, just on Truth Social. Donald Trump writes, quote, I am very pleased to announce that after all these years, I agree with Senator Elizabeth Warren on something. The debt limit should be entirely scrapped to prevent an economic catastrophe. He's reposting you here where you suggest as much. This is less than 24 hours after Elon Musk said shame on Republicans who passed the reconciliation bill in the House. You're finding yourself within a 24-hour period agreeing with Donald Trump and Elon Musk. What's going on around here?
Well, look, I think on the debt ceiling, I've been on this for many, many years. The debt ceiling is just something that's been used as leverage in negotiations. The United States should never, never threaten to default on its debt. We should get rid of this debt ceiling altogether. When we pass a bill saying that we're going to do a certain thing, that is our saying, and we're going to pay for it. That's what the United States government does. So I think that Donald Trump and I, hey, listen, I'm ready to join up with him and make that happen. We need to get rid of the debt ceiling altogether. Not extend it, not say, ooh, while this is going on, this budget negotiation, let's just roll out a few $1 trillion more in the debt ceiling. Nope. That has gotten us into trouble before. It continues to get us into trouble. Donald Trump is right. Let's get rid of it altogether.
Well, so, Senator, if we are to see if the Senate and House cannot get this reconciliation bill through in time for the mid-July request the Treasury Secretary has made to avoid bumping up against the X date, would you support an initiative like that separately, a legislative effort to eliminate the debt ceiling before that X date comes?
Yeah, look, we should do it now. There's no reason to delay. Donald Trump is exactly right on this. It's what I've been arguing for literally for years, and that is get rid of the debt ceiling. It's serving no function except for holdout parties to try to use in negotiations. And that makes no sense. That doesn't serve our nation. But we should do that now. It doesn't need to be tied to anything. It doesn't need any special date on it. Ask the Republicans. They're the ones in control of the floor. Let's bring that to the floor right now. It's a simple piece of legislation. I'm ready to go on it. I think it's the right thing for us to do.
Senator, I want to ask you from your perch on the Armed Services Committee about what else we heard from Donald Trump today. He had an hour and 15-minute long call with Vladimir Putin. At the end of the call, he wrote about it and said that peace is not imminent in Ukraine. He did say, however, that Putin will have to respond to the recent attack on the airfields that Ukraine conducted over the weekend using this wild scheme with drones that had been smuggled into the country. What do you make of this assessment, and what is Ukraine in for in the days ahead?
Right. Look, Vladimir Putin has been playing Donald Trump, and pretty much everybody in the world can see that. That's not just me seeing it, not just people in the United States see it. Leaders around the world see it. And it looks like Donald Trump is beginning to figure that out and starting to push back against Putin. We owe it to Ukraine to do everything we can to support them in their fight. They are on the front lines fighting for democracy, and they are on the front lines against an expansionist Russia. Understand this. If Ukraine falls and Vladimir Putin gets either a big chunk of it or all of it, he's not stopping there. He's coming for more and more and more because that's who Vladimir Putin is. It is important right now to help Ukraine push back. They are on the front lines fighting the war for democracy on behalf of all of Europe, on behalf of the United States, on behalf of freedom-loving countries everywhere in the world. And we should give them all the support we can.
All right, Senator, we appreciate you joining us on Bloomberg TV and radio. The Democratic senator from Massachusetts, also ranking member of the Senate Banking Committee, Elizabeth Warren, with us here on Balance of Power, reacting not just to President Trump's Truth Social post about his conversation with Vladimir Putin, but also his Truth Social post about Senator Elizabeth Warren, who he agrees with when she says the debt ceiling should be eliminated entirely. So on that note, we turn to our political panel today. Jeannie Sheehan Zaino is with us, Bloomberg Politics contributor, senior democracy fellow at the Center for the Study of the Presidency in Congress, and Democratic analyst, alongside Republican strategist Chapin Fay, founder of Lighthouse Public Affairs. Chapin, as we hear Senator Warren say, I agree with Trump, let's do this, get rid of the debt ceiling right now. Is this the potential off-ramp for if the Republicans cannot get through this partisan reconciliation bill with a debt ceiling hike attached in time?
Well, what wild times we're living in, right? Cats and dogs are living together. Elizabeth Warren and Donald Trump are almost praising each other publicly in agreement. But yes, to answer your question, I do think this is a way maybe to grease the skids there, grease the wheels, so to speak, and get a deal done. By the way, this is how throughout history, American history, this is how big deals get done and how major programs, like some of the programs the Big Beautiful Bill are arguing over right now, get done, right? Compromise and agreement among people on the left and the right. So I think this is good news. I mean, I have always seen, I think MAGA sees Donald Trump as a deal maker on behalf of the American people, and they have faith in him to do that. It will be wild to see them support Elizabeth Warren in the same endeavor, but we'll see.
That was a wild moment. We have to stop down and acknowledge what just happened here. The president's posting about Elizabeth Warren while she's live on the air with us. Jeannie, is that how this ends? With the debt limit?
He's your biggest fan, Joe and Kaylee, so I love it.
You can't help but to watch.
Who can help but watch you guys? The reality is that I love his post too, which is strange because it seems to me he's calling for some bipartisan movement forward. He ends the post by saying, "Let's get together, Republicans and Democrats, and do this." I'm not sure if that is just limited to the debt ceiling, which absolutely needs to be scrapped, but it should also pertain to this issue of the reconciliation bill overall. So I don't know if it's a bad sign for the president that the Republicans aren't moving on the bill, so he's reaching across the aisle, or a good sign that he's just found religion that he needs to work across the aisle. But I'm in favor of you two bringing the parties together like this. I love this.
Getting a lot done here.
Balance of power is what we aim to do here. Chief, and finally, we just have a minute left, but President Trump and Republicans overall have had a lot of words about the CBO in recent days that they've shared, specifically poo-pooing essentially their estimates on the tax bill. But now the CBO says tariffs could reduce the deficit by $2.8 trillion over the next 10 years. Is that argument now nullified?
I don't think so. I mean, this is sort of some of the sausage being made that always spills out into the public. And if the CBO says something you like, you support it, you use it as a proof point. And when the CBO, goes the other way, you can do what the Republicans are doing recently. But it is helpful to have the CBO give some numbers that can help an argument and push things forward for sure.
Jeannie, what's your thought on this when it comes to the CBO? I think I know your answer, but I think Republicans are suggesting that the broken clock is right once a day when it comes to CBO's take on tariffs, but CBO is broken when it comes to scoring the tax cut bill because it doesn't use dynamic scoring. Am I warm on this?
You are hot, Joe. Let's say you're hot. The reality is that the CBO, I think, is a good day for the CBO because they give it and they take it away. You know, as you guys have been talking about on the tariffs, they are, supporting what the president is doing. I mean, not partisan-wise, but in terms of the impact on the deficit. And yet, when it comes to the issue of the reconciliation bill, they are, underscoring the fact that this is going to increase the deficit an awful lot. So I think it's a good day for the CBO because it shows that they are indeed bipartisan, or nonpartisan is probably a better term. But the reality is that the president and the Republicans are going to have to really get their head around what Elon Musk, what so many people have been talking about. You simply have a math issue when it comes to the reconciliation bill. You cannot add 2.5 trillion plus to the deficit and call yourself economically or fiscally responsible. I know Russ Vought and others are out there saying about this static scoring and all of this. The reality is the CBO is running the numbers right. Elon Musk and others know how to run the numbers. This doesn't add up. So you either have to cut spending or you have to increase taxes. It's pretty basic.
You just heard that from Bill Haggerty. Broken clock is right.
Yeah.
Twice a day.
I do want to follow up on your point on Elon Musk, though, Jeannie. To what extent is he actually credible in his contentions that the budget deficit is a problem and Congress is making the wrong choices here, knowing that, A, his companies benefit from massive government contracts, and B, as the Speaker of the House was quick to point out, he also wanted those EV credits that this bill rolls back to stick around. So maybe there's a bit of a personal issue here.
Yeah, I mean, certainly as it pertains to the NASA administrator, as you mentioned, to the EV mandate, to Starlink, he apparently wanted to maintain his special status as a special government employee. All of that is true, but the reality is Elon Musk knows how to do this math, and anybody who looks at this objectively, there is no way that you can make the claim that it doesn't add an enormous amount to the deficit, and we will be strapping our children and grandchildren with a government and really a country that is economically and fiscally in a horrible position, not just as a result of the Republicans, Democrats as well. We all own this, and we have to get out of it. So he's right on the math here, regardless of his reasons for being frustrated.
How are you looking at this Elon Musk thing, Chapin? Obviously a MAGA darling until, I don't know, a few hours ago when this post hit. He hasn't always seen eye to eye with the president, but are you looking at this as a disgruntled government contractor or a guy who saw too much when he was in Washington?
No, I think Elon Musk is an honest broker here, and he's giving his input, right? And it's important input. While I don't know the level of influence he'll retain after leaving, the president's side, after seeing him at the president's side almost on a daily basis. But there's no question that he has input, and like Jeannie and you all said, he knows the math, he knows the numbers, and he's trying to shape the legislation just like the president and every other special interest. I wouldn't call them special interests in the negative way, but that's what happens right now when you're in this precarious situation while they're reconciling the two bills and trying to get this passed without destroying the economy and the budget. And Elon Musk has always been an honest broker in my mind on the numbers, on the math. So that's what he's doing. I don't see him as a disgruntled employee. I think he's doing his part to continue doing his part.
Chapin, you and, frankly, Jeannie, are both joining us from New York. So I want to ask you about the contention the majority leader has made that there's going to have to be adjustments made to the SALT cap deal that was struck in the House, lifting it from $10,000 to $40,000. Chapin, if that adjustment is material, do you see any way in which those SALT caucus Republicans are going to be able to vote for this package when it returns to the other chamber?
It's going to be interesting to see. They have sort of boxed themselves into a corner, fighting for this, some of them, and some of them sort of are going to go along. So it'll be interesting to see what the final outcome is. But this is a huge deal in New York and in their districts, in some of these Republican members' districts in particular, in the suburbs, like Congressman Lawler, right? So, sort of the northern suburbs of New York City. And this is a critical issue to them and their reelection in some cases. So I think you're going to see some of them fighting for it really hard, and I think some of them are going to, go along quietly and hope for the best.
Great conversation with our panel. That's Chapin Fay, Republican strategist, Lighthouse Public Affairs, and Jeannie Sheehan Zaino, Bloomberg Politics contributor. Great to see both of you, and we do appreciate the analysis. We've got a lot ahead, including a conversation with the Premier of Alberta, Canada. Kaylee, one thing we have not mentioned over the course of an hour and 40 minutes here on the air is that at 12:01 a.m., the 50% tariffs on steel and aluminum took effect.
Yep, a doubling from 25%. Of course, Alberta, not as much of a steel producer as other parts of Canada, but they are a big oil producer, which has been a factor in these ongoing trade conversations as well. And we're going to get into all of it with her in just a moment.
Important trade talk ahead right here on Bloomberg. First, we look at Wall Street with the help of Charlie Pellet. He's got an update on the markets for us live from New York. Charlie?
And good day, Joe Matthew, with the Dow, the S&P, NASDAQ all pushing higher. We are about to get the Beige Book report coming up 2 o'clock Wall Street time with the S&P right now higher by 11. That is a gain of 0.2%. The Dow up 40 right now, up 0.1%. S&P, as I mentioned, holding steady in the face of weak economic data. NASDAQ up 56 now. That is a gain of 0.3%. The 10-year at 4.35%. The 2-year 3.86%.
Spot gold up $26 the ounce, $33.79, up 0.8%. And West Texas Intermediate crude down 1.2%, $62.62 for a barrel of WTI. Tesla's vehicle shipments from its China factory fell for an 8th straight month. Tesla shares today down by 3.2%. Meanwhile, a ship carrying about 3,000 cars to Mexico, electric vehicles, I might add, abandoned in the middle of the Pacific Ocean after catching fire. Just getting word that Reddit is suing Anthropic, alleging wrongful use of Reddit data.
This according to the Wall Street Journal. Reddit shares are up now by 6.1%. And finally, Jane Buffett, the widow of singer Jimmy Buffett, is seeking to remove the co-trustee of her husband's estate, saying he has failed to act in her best interest. The singer died in 2023 and left an estate with $275 million in assets. Recapping, S&P up 13 right now, a gain of 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your hosts. Here they are, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet tracking the markets for us. Thank you so much. Meantime, here in Washington, Joe Matthew and myself are tracking a lot of different stories, a lot of moving parts in politics and geopolitics today as we watch the reconciliation fight on Capitol Hill, which is, of course, going to the White House today with a meeting between Senate Finance Committee members and President Trump. Also, President Trump focusing on other areas of the world, including, of course, the ongoing war with Russia and Ukraine, having spoken with the Russian President Vladimir Putin for an hour and 15 minutes earlier today. And then there's another story, which, as Joe rightly pointed out a few minutes ago, we haven't even had time to touch on with all of this other news, and that is the fact that effective today, steel and aluminum tariffs have doubled. They've officially gone up from 25% to 50%. And Joe, we've seen the impact on futures in markets.
That's right. Our brave new world is here. And so is Mike McGlone. Always a pleasure to spend time with the senior commodities analyst at Bloomberg Intelligence. Mike, the United States imports more steel than any other country. What does this next leg of the tariff story mean for our economy?
Well, I think you nailed it with the question, Joe. It's not going to be good to raise those prices. It's going to be somewhat akin to, remember when crude oil spiked in 2008 to $4 a gallon, and then the kind of recession followed? It's not going to be similar, but it is similar, where there'll be higher costs for the producers who use that steel. The key thing from my standpoint that really matters is what it means for globally and U.S. traded copper, because steel is mostly traded over in futures outside of the U.S., but it really boosted up the price of copper. And U.S. price of copper there is up 20% on the anticipation of tariffs, potentially on the back of those other tariffs. But that's kind of an odd situation with crude oil collapsing. So I'm worried that that's kind of an area where we might have some issues where the price in the rest of the world is not up nearly as much as in the U.S.
Well, you refer to crude oil, Mike. We are seeing downward pressure on oil once again today. WTI down about 1%, even as we get news that the Saudis want OPEC Plus to continue accelerated supply hikes. Is this going to happen? What does this mean for supply and demand dynamics?
It's an impressive part of the crude oil cycle. It's in a clear bear market. Sentiments is very bearish. And now it has a significant reason to keep going lower. What you hear from the Saudis is very impressive, that they want to increase that supply, help reduce that backwardation. There's a bit of a glut of forward of supplies, and into the summer driving season, which is the time to do it. So my base case, what happened yesterday with crude oil, it bumped up a little bit. It's trying to get above last year's low, about $65 a barrel, and it can't do it. Every time it gets there, we see responsive sellers, and we see people like the Saudis coming in there. So I think that's the issue. Crude oil's heading towards probably $50 a barrel or lower. That's the average cost of production in the U.S., and that's what I think OPEC and Saudis know. To really shut off that shale, you need to get that price to go lower.
All right, Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, joining us from Miami. Thank you so much. We appreciate it. Of course, oil, big export of Alberta, Canada specifically, as Canada is also contending with what we were just discussing with Mike as well, higher steel and aluminum tariffs. And we want to get into all of it now here on Balance of Power on Bloomberg TV and radio, where we're joined live in our Washington, D.C. studio by Danielle Smith, the Premier of Alberta, while she's here in D.C. Premier, thank you so much for being with us. As we consider that today, as you're in Washington, steel and aluminum tariffs have now gone up to 50%. I know this is a bigger problem for the eastern part of your country than the western part, but do you still view this as something that warrants a response? What response to it would you advocate for?
I have always felt that tariffs are their own punishment, and I still don't understand why Americans want to punish the consumers of aluminum when you get 60% of it from Canada. It's also a product that Americans can't produce themselves. You don't have bauxite, so there is no way to have a homegrown aluminum industry. So we're kind of scratching our heads in Canada saying, why is this on the list? In fact, I think aluminum really should be in the same category as critical minerals and elements that we have a special relationship over. I understand why every country wants to have its own steel development. I understand that the Americans don't want the Chinese using Canada as a backdoor to dump product into the market. But some of the decisions are a bit of a head scratcher for us. And I hope it's the beginning of what will result in a new renegotiation of the USMCA so that we can get back to enjoying the virtually tariff-free relationship that benefits both of us.
Well, you're clearly ready to have a conversation. Is that how this ends? What are you hearing as you're in Washington? What are the prospects of a trade deal to get around this?
I know in Canada there's optimism. I just this week met with my counterparts, the 13 premiers, as well as the federal prime minister. And because we've got G7 taking place in the coming weeks in my home province of Alberta, in Kananaskis, I think that everybody's hopeful that it would be really nice either just before or during or just after to announce that there has been some kind of détente or interim step towards getting to a comprehensive renegotiation of trade. I know that Dominic LeBlanc, who is our counterpart to Howard Lutnick, is in Washington as well, having some of those conversations. I don't want to prejudge what the outcome would be, but at the moment we have a virtually tariff-free relationship with the United States. For all of the threat of tariffs, all of the USMCA compliant goods don't have tariffs on them right now. We've got a problem with steel, cars, aluminum, and timber. But I think that I think we're beginning to see a realization on both sides that we are stronger together, and it's better to maintain the relationship as it is.
Well, as you mentioned, all of the premiers getting together, what are you asking of Prime Minister Carney? Are there things you're pushing for him to do in terms of action?
I think what you're seeing is that the sentiment is that if the Americans truly do want us to find other trading partners, then we should be serious about that. We should be trading more with each other. Maybe rather than sourcing some of our steel beams and other products from America, maybe we source it from Ontario and Quebec. Maybe rather than talking about new pipelines to the Gulf Coast, maybe we talk about pipelines to British Columbia and the Hudson Bay in Manitoba, so that we can go to both Asian and European markets. So I think the conversation in Canada has maybe shifted in a way that Americans weren't anticipating. America remains our strongest and most important trading partner. Most of the provinces trade north-south, but it's really initiated another conversation about how do we trade more with each other to counteract the effects perhaps of America buying less from us, as well as how do we find new markets. And I'm hopeful that we'll be able to do that as complementary to Americans' interests in especially energy dominance. But at the moment, is when you've got a friction in your relationship, that's one of the things that we're trying to sort out. Are there new markets that we can be that we can go into?
A lot of conversations about pipeline in Alberta. You currently have excess capacity. TMX, Enbridge. Why would oil companies sign up for a new line if that remains the case?
I think that there's been some misinformation.
Yeah.
I know that the environment minister, who wants to keep it in the ground, has been suggesting that somehow TMX is only at 40% capacity. It's simply not true.
What is it?
It's at 85 to 90%. One of the things we have to do is dredge the channel that it goes through so that we can have heavier boats going so they can be filled up. But we also just recently saw a new auction that went through, and there were 400,000 barrels of demand for what was only going to be 100,000 new barrels of supply. So I have no question in my mind that if we build a new pipeline, it will be filled, especially as we look towards the Asian markets. We have been able to build a pipeline to our west coast with Trans Mountain. Initially, we thought that most of that product was destined for refineries on your west coast, but in fact, more than half of it is now going to Asian countries. Korea just announced that they're going to buy an additional $1 billion per year. They want to receive of their 3 refineries an extra tanker. They've tried our heavy oil. They like it. And there are other heavy oil refineries around the world that realize that now that it's on Tidewater, we can get there directly. Yeah. And so we're going to continue looking at those opportunities. But I think that there is an incredible growth opportunity for Canada. We have a different kind of oil than America does. America has light sweet. So you've got certain markets. You've got the heavy stuff. So I always look at it as more like cooperation as opposed to competition, because we can fuel and feed different markets than America can, and it doesn't diminish at all the American aspiration for dominance. I think, in fact, Canada and U.S. together are going to be the ones that can achieve that energy dominance for all of North America.
Well, when we consider the prospects of a new pipeline that would allow you to ship, as you were describing, more oil to foreign markets, it seems Mark Carney is behind this idea, as long as there are kind of offsetting factors in terms of green investments. You described this earlier this week as a grand bargain. As you think about that bargain, how should that kind of effort be paid for, and what do you think is the most realistic route to actually get where that pipeline should go?
Our biggest oil sands producers have been proposing something called the Pathways Project. So with a combination of carbon capture, utilization, and storage, maybe small modular nuclear, direct air capture for the last mile, we believe that it can be carbon neutral by 2050, at which point that would make it the lowest carbon barrel in the world. And we also know with heavy oil, you can make 6,000 different products out of a barrel of oil. And so it can be used not only for gas and diesel and aviation fuel, but also for asphalt and other types of petrochemical products. So we're really excited about the potential for that to occur. I think our best option is another pipeline to the west coast, northwest coast, probably around the Prince Rupert area. It's only about 8 to 10 days to get to the Asian markets of Japan and South Korea by going that way, and then on into, of course, China and India as new markets as well. So if we can have decarbonized bitumen going through that pipeline, not only does the pipeline project through Pathways would cost about $10 to $20 billion. It's a big hit. But if we build that pipeline, we would get about $20 billion a year in revenue for the foreseeable future. So that's the reason why I think it's a pretty good bargain. Everyone benefits from that.
I know your oil industry is dealing with wildfires right now in Alberta at last check, affecting 7% of output. Is that roughly still the case? Can you update us on what's happening?
Yeah. When we have fires in Alberta, it's normally northern Alberta. We've got a lot of boreal forest up there. It's aged, and so once you get forestry that's about 100 years old, you either have to clear it or nature clears it for you. Yeah. And so we work very closely with our energy industry. When we hear that there's a problem, we help them. We give them clearance to do fire breaks, but we also have heavy equipment to assist with that, water bombers. We do infrared drones as well as nighttime vision helicopters, and a large number of firefighters who can help that. We've also prioritized that we want to make sure that those assets are protected when we end up with this kind of terrible fire season. In the past, we've been able to be successful in that, and we're hopeful that we'll be able to get those back online soon.
Well, and the season does seem like it's becoming semi-regular, and we're seeing the impacts of it all the way here on the east coast of the United States in terms of air quality. Is there anything else Alberta is looking at doing in terms of mitigation, trying to make sure that even with the seasonality that these fires are not as severe in the years to come?
I think we have to be realistic about the incredible volume of forestry that we have and how old it is. And so that does require the proactive approach, that you either can do prescribed burns so that you can control it, or you do mechanical removal so that you can take away the fuel, or nature will take its course. And so we've seen that now for the third terrible fire season that we've had. But those are the mechanisms that we're using. We've got to get new green growth going, because that's going to be the way that we have a differential in age in our forests, and hope that we don't end up with these problems. I should also mention we found that 67% of fires are started by human caused. So people being careless. And so we put out campaigns just saying, make sure you douse your fire, make sure that you're not sparking anything with equipment, because those are some of the reasons why we can end up with these terrible wrecks as well.
Well, we hope that everyone is safe and that you get around this. And I know you have a lot of experience in that area. Danielle Smith, great conversation. We appreciate your visit. Good luck with the rest of your time in Washington.
Thank you. Appreciate it.
Premier of Alberta, Canada.
Wish luck to the Oilers. Stanley Cup.
Okay.
Go Oilers.
There it is. You got it in. That's for producer James. Hey, we'll meet you back on the late edition of Balance of Power at 5 p.m. Eastern Time here on Bloomberg TV and radio with the latest on reconciliation and the meeting with Republican senators and President Trump at the White House. It's all ahead here, only on Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
This is a chessboard. It's a playing field where people test their skill, imagination, and daring. Because a chessboard is also a map, complex logistics and global supply chains can be reinvented with AI. Thanks to reliable and secure connectivity from AT&T Business, goods are delivered quickly and efficiently. And a chessboard is a bridge, connecting generations, creating new friendships, and encouraging us all to be more thoughtful about our next move. And the one after that.
Welcome to 25 Words or Less.
Join Meredith Vieira and play along to 25 Words or Less on Pluto TV.
14 words, 45 seconds on the clock. Good luck. Okay. Sports change.
Hi,
Pluto TV, Meredith Vieira here. Catch 25 words or less all weekend long right here on Pluto TV. Stream now, pay never.
Join Light the Fuse on Instagram Live for a stream-along of Mission Impossible Rogue Nation, Thursday, June 5th at 8 p.m. Eastern on Pluto TV's Action Channel.
Do you think there's a chance that you and I could go someplace and laugh together?
I love that.
Come on, you'd love these guys.
Look at that. The best part of summer is getting to fire up the grill and cook outside. Oh yeah, beautiful. This season, we've tracked down folks who are growing, harvesting, and making the best the South has to offer, and turning their goods into delicious summertime feasts. Oh yeah, babe. Welcome back to Emerald Cooks Summer Grilling. Oh yeah, look at that, folks. Cheers. Let the good times roll on the Emerald Lagasse channel on Pluto TV. Stream now, pay never.
Why do black women always have to save the day? If we don't do it, who else will?
The Chi, new season, now streaming only on the Paramount Plus with Showtime plan.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Good afternoon, everybody. This is Bloomberg Business Week live on Bloomberg Television and Bloomberg Radio, streaming on YouTube and Bloomberg Originals. I'm David Gura, alongside Emily Grafeo. Carol Masser and Tim Stenivek are off today. Let's start with the setup this hour on this Tuesday, June the 3rd, where markets are reacting to weaker than expected economic data, a disappointing report from ADP. The latest ISM data showing a contraction in U.S. service providers, that providing the backdrop to the market action today. More on the trade in just a minute.
And ahead this hour, we're going to be talking about the Beige Book, those headlines coming in just a couple seconds right now. The Federal Reserve is going to be releasing this for the month of May. We'll take a look at what stood out in that report from regional Fed banks around the country amid all of the economic uncertainty.
We're also going to look at the oil market after OPEC Plus boosted production again, this time by more than 400,000 barrels, what that decision means for the cartel, for Russia, which was against that decision, along with a handful of other producers, and what it means for oil prices as well.
And the latest estimate from the Congressional Budget Office of what President Trump's big, beautiful bill, as passed by the House of Representatives, would mean for the deficit, as the Senate works on its version of that legislation. Henrietta Treyz of Vita Partners is going to join us with the latest state of play.
A lot to come, but first up, a check on the day's trade and top business stories with Bloomberg's Charlie Pellet.
Thank you very much. Here's what's going on. Do want to begin with the developing story. Just getting word, headline right now on the Bloomberg Professional Service. Yale nearing a deal to sell up to $2.5 billion of private equity stakes. That news breaking right now. The Dow, the S&P, NASDAQ all higher right now. A lot of economic data. S&P up 18, up 0.3%. The Dow up 73, up 0.2%. And NASDAQ up 87, up by 0.5%. 10-year at 4.35%, with the 2-year 3.86%. Gold up $26 the ounce, up 0.8%. And a retreat for crude down 1.2%, 62.65 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. All right, a lot of news about the U.S. economy on this Tuesday. Hiring slowing in May. Private sector payrolls increased by just 37,000, and that's lower than all of the estimates in a Bloomberg survey of economists. And we're also getting those headlines right now from the Beige Book. The Fed saying U.S. economic activity has declined slightly. Employment little changed since the previous report. As we get all of this, we're going to bring in Katerina Saraiva, Bloomberg News Federal Reserve and economics reporter. She joins us now from Bloomberg's bureau in Houston. Can we get your live reaction to the Beige Book? I mean, it really just came out like 15 seconds ago, Katerina.
Yeah, that's right. But what we're seeing, seems to indicate that it's a pretty similar report to what we've been seeing this year. It's showing that businesses and consumers are kind of waiting to see, not making huge decisions yet, kind of waiting to see how this tariff fight plays out. You can see that activity declined slightly, but nothing major there, and that the labor market and inflation are kind of going along, kind of steady state as they have been.
I did something cumbersome here. I did a Control F, just look to see how much tariff appears here in this document. 122 times in total, and it's a kind of scan just to see what's happening in different regions across the country. So many of them saying here economic activity declining modestly, speaking to that level of uncertainty, maybe some hesitation among businesses as well. Katerina, how does the Fed look at this release in particular? Of course, it has that panoply of data, both hard and survey data it's going to look at when it meets in Washington in just a little over a week. How much credence do they give this kind of anecdotal data that's been collected by the Federal Reserve banks all across the country?
I think right now they give a good amount of credence to this type of data because the hard data, right, the indicators that the government publishes on a monthly or quarterly basis are just that. They're about a month or a quarter behind. So data like this that's showing kind of what's happening on the ground can be really valuable for Fed officials, especially right now when there is all this uncertainty.
I feel like we've been talking for so long about weakening consumer sentiment, and you see it cropping up in corporate earnings. You see it just in terms of the data that we're getting. If you look here in the Beige Book, it does say that consumer spending increased slightly in recent weeks. Retailers reported steady to increasing sales. They noted a decline in big ticket purchases. As someone who studies the economy closely, what's your current take of the state of the consumer in the U.S.?
Yeah, I mean, it's really interesting, right? Because we heard a lot of concern when tariffs were first announced that this was really going to hit consumption. And the consumer, of course, has been a massive driver of the economy. I mean, it's like 70% of our economy. So it's very important. But we haven't seen that weakness materialize. Consumer sentiment was very negative in April, but that turned around in May. And people are attributing that to, some of these pauses on tariffs and just kind of more optimism that deals are going to be reached. So it's been a really interesting story because the consumer has stayed strong. And I think a big part of that is the labor market, right? People still have jobs, so they can spend.
You look at all of the sections herein, there's trade and services, there's manufacturing, there's a portion on prices as well, and that's where I'd love to go next. There's a line here. When asked about anticipated changes to their industry's costs over the next 6 months and how they expect their competitors to respond, more than 2/3 of those firms surveyed, anticipated increasing costs and expected their competitors to increase prices in as little as 2 months. That, of course, is such a huge part of the narrative surrounding this trade war and the underlying uncertainty. Could you dovetail that with what we've heard from Fed policymakers, presidents, and others here in recent weeks just about what concerns exist about the kind of unanchoring of or kind of dissolution of inflation expectations?
Yeah, I mean, that is of paramount importance to them. If inflation expectations, especially in the long run, like how people think about inflation in 5 years, if that becomes unanchored, if that basically goes higher than around that 2% level where the Fed likes inflation to be, then that completely takes away the Fed's ability to control prices even in the near term. And then that's where the trouble really starts. That's where you have to see either rates stay at these levels for longer or potentially move higher because they are really going to want to get that under control. But so far, we haven't seen that in most of the measures. We've seen that a little bit in the University of Michigan data, but other measures, including market measures, are showing pretty stable inflation expectations.
Katerina, I want to get to your story that you published today with Katanga Johnson about Trump's pick for the Fed's top bank cop, Michelle Baumann. Tell us about who she is, how important this is for Wall Street to have her as the vice chair for supervision.
Yeah, so she has been a Fed governor since 2018, so she's been at the Fed, for a while. She speaks a lot, so she's made a lot of speeches, detailed speeches on bank policy, where she thinks that should go, and on monetary policy. So her views are very widely known. There's, not really going to be any surprises here, probably. And she is a supporter of a lighter approach to bank regulation. She was came out against Barr's proposal for increased capital. She's kind of aligned with kind of the industry when it comes to that. But she is also someone who is pretty outspoken about good supervision and kind of staying strong on that front. She wants to do an independent review of what happened with SVB, with the SVB collapse. So she is, while she has kind of a lighter approach in terms of regulation, she is, pretty dedicated to still supervising the industry in a rigorous way.
I was so interested reading this profile that you wrote with Ketanji Johnson, and something that really stood out as you wrote about Mickey Bowman's rise is the way in which she kind of paved her own way here to get to this position. Talk a bit about that, and I know that we've seen some quiet here when it comes to the president bad-mouthing Fed Chair Jerome Powell, but does she represent the kind of prospective Fed chairman that this president might like to see in that seat going forward?
You mean for the chairmanship or for the vice?
Yeah, for the chairmanship, just in terms of leadership of the Fed, sort of what does she represent? I know that she's sort of out of mode with the terms of kind of traditional academic economists that have been on the board in recent years.
Yeah, but I think, if that were, once, I think they're going to start looking to replace Chair Powell in the fall. His term ends next year, so they will start looking around for a replacement for him. And I think her name will probably, be in contention for that. She is already on the board. She's kind of proven herself to be, a dedicated policymaker. But I think that her name could be in the mix. But I do think they want her for this supervision post because she is, I think, quite aligned with how the administration thinks that bank regulation and supervision should be approached. So for that position, I think that there's, we've seen, obviously, the administration felt confident in nominating her, and she's expected to pass through the Republican-controlled Senate, perhaps even this week still. So I think that is something that where those folks are supportive of her.
And someone who stands in such stark contrast to Michael Barr, who had the position beforehand. Katerina, thank you very much for the time. Thanks for going with the flow here on that 54-page beige book and getting through the details so much as we could here in real time. Again, the takeaway from that seems to be uncertainty kind of pervading all of the Fed's districts around the country, but so much economic news today. Katerina Saraiva is the Federal Reserve and economics reporter for Bloomberg News, and she's based in our bureau in Houston. I want to switch now to the energy market and what rising stockpiles mean for the global economy. We saw OPEC Plus, that group of oil-producing countries, decide to add 411,000 barrels a day in August, maybe the same amount in September as well. And there was some dissent in the cartel this time around. Russia, Algeria, and Oman all pushing back on that decision, which was strongly advocated for by Saudi Arabia. Fortunate to have with us today Ellen Wald, author of the book Saudi Inc. She's the president of Transversal Consulting and a senior fellow at the Atlantic Council. She joins us now from Boca Raton in Florida. Dr. Wald, let me ask you first of all just about the motivations for this decision. We've seen Saudi Arabia pushing for this over the last couple of meetings here. What's motivating them to do it? I recall last time there was a lot of talk of them wanting to punish producers who weren't upholding their end of the bargain. Is it as simple as that?
No, I think that there's much more going on here, especially a very kind of comprehensive look both at the markets, but also at where supply is going and where supply is going to be coming from in 2026. They're talking about some very small incremental increases in production that had been voluntarily kept off the market by certain producers. So they're not even really talking here about amending the overall quotas, which would require, a consensus from the entire group. So this is oil that certain producers have been keeping off the market in order to kind of help prop up prices. And I think what they're seeing is that their efforts aren't necessarily propping up prices all that much at this point. So, why are they keeping this oil off the market? The more oil they can sell, even at, slightly more depressed prices, is still more money in their pocketbooks. And then they're also, as I said, looking forward to 2026. And, they're looking at reports that shale oil production is potentially, peaking, is not necessarily going to be growing as much or at as nearly as fast a rate as it has been. And so they'd like to be the ones that are kind of filling those gaps potentially in the market and get ahead of that. And so I think that that's really where this is coming from, more than kind of an idea to punish overproducers.
How long can Saudi Arabia tolerate prices as low as they are, and if they drift even lower still? So I look at Brent here at about $62.60 a barrel. That's low, and I know that it must be causing some modicum of pain, at least on the Saudi Arabian economy. How long can they continue to push for this and deal with prices being at that level?
Well, Saudi Arabia can tolerate it longer than any other country or company. Aramco, the national oil company in Saudi Arabia, has the lowest cost of production of any producer in the entire world. We're talking between $2 and $6 a barrel is their cost of production. So no matter what, they're making more money per barrel of oil that they sell than any other producer out there in the entire world. So they can tolerate it. The company Aramco can absolutely tolerate this. Would they like oil prices to be higher? Sure. Most producers would like oil prices to be higher. They don't want them to be too high because they feel that can kind of start to crimp demand. But from their perspective, they definitely like it. They're fine. I don't think that they're in any rush to have oil prices higher right now. I do think that they're aware of how things are going. Aramco did just issue another bond. That doesn't mean that the company is in trouble. That doesn't mean Saudi Arabia is in trouble. Would the Kingdom of Saudi Arabia love to have more money to play with? Sure, who wouldn't love to have more money to play with? Does it mean that their economy is about to fall apart? Not at all.
Dr. Wald, bring Russia into this. How do the falling prices of oil and these rising global stockpiles impact Russia, especially when it's still in the middle of a war?
Yeah, this is a really interesting issue for Russia because reports are that Russian oil revenues, or at least the money that they're getting just on selling crude oil, are at their lowest point, at least in the last month, than they have been for 2 years. And that's basically reflective of the price of oil because they're still shipping essentially the same volumes. And so, when you look at this fact off the bat, you might think, oh, well, that might actually affect the Kremlin, that might affect their decision making when it comes to their war and their country and their economy overall. But that number and that statistic doesn't really speak to Russia's revenues from its oil trade because while revenues per barrel may have dropped, it has started selling shipping services and insurance, and it's been making quite a bit of money on that. And we don't really have a good measure of how much money it is making on that. They're also making quite a bit of money selling LNG. Their LNG, sales have gone up. They're actually selling quite a bit to Europe, believe it or not. And so that's also making money for them. So I would say that yes, it's an interesting fact, but it doesn't mean that they're suddenly, not going to have enough ammunition to continue their war. I think, this is a very long, drawn-out issue, and oil is not necessarily the key to the solution here.
We're going to talk in a few minutes here with our colleague Nick Wadhams in Washington about a phone call that took place today between President Putin and President Trump. So we'll get more into the relationship, the dialogue between these two countries. But in the minute that we have left, I'd like to ask you about another delicate dance of diplomacy that's taking place here when it comes to some sort of deal with Iran. So again, with just a minute here, how does that stand to change the kind of energy calculus as those talks continue, and if there's to be some sort of agreement maybe in line with what there was in place during the Obama administration?
Yeah, I think the most important thing to remember about this Iran deal or negotiations for oil markets is that Iran's oil output on the market is much higher than it used to be. It's over 3 million barrels a day. And so if sanctions suddenly disappeared tomorrow, Iran is not holding on to a huge amount of oil it can suddenly flood the market with. It's basically where its oil production is at. And if sanctions were to disappear, there would be some impacts, but it wouldn't really impact the amount of crude that Iran can put on the market. So those kind of ideas that suddenly we're going to have a lot more supply if there is a deal, that's really unfounded.
Ellen Wald, thank you very much for the time, for that perspective on what's happening with OPEC Plus, with that cartel, its decision to boost production, and also insight into one member of that cartel, of course, Russia, which was pushing back on that decision to boost production here in August and looking ahead to September as well. And as I mentioned, we're going to talk in just a few minutes with Nick Wadhams about the status of negotiations, talks between the U.S. and Russia. President Trump having a phone call today with President Putin in which they talked about some sort of deal for peace in Ukraine, but also about Russia's intention to retaliate in response to the attack that Ukraine made on a Russian airfield just a few days ago with drones. Ellen Wald is the author of the book Saudi Inc. She's the president of Transversal Consulting and a senior fellow at the Atlantic Council. On this Wednesday, with a new beige book from the Federal Reserve, looking back at the month of May. David Gura here with Emily Grafeo on Bloomberg Business Week, on Bloomberg Radio and YouTube, Bloomberg Television as well. Much more to come. We're in for Carol Massar and Tim Stenbeck, who are off today. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me, LL Bean. There are questions that I would say are straight up homicide-inducing.
Hot take. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food.
I've had it.
Time to save the universe again, then, is it?
Absolutely. This is where I stop to have fun.
This is going to find Pandora's box.
It's your destiny to see what's inside.
Do you think there's a chance that you and I could go someplace and laugh together?
Makes you laugh so hard, the beer comes out of your nose.
Life is funny.
Hilarity ensues. So, if you're in the mood to laugh out loud, stream Cheers and Frasier.
Come on, you'd love these guys.
This could get crazy. All reality, WeTV.
My family is drama too.
It's real voices.
Never know what's going to happen once you get us all together.
There is a skinnier person inside of me. It's real emotions.
I do.
Robbing a bank is kind of a turn on.
Unbelievable.
And it's all in one place.
I had 72 hours before the marshals come after me.
What? I'm here for it, honey. All of it.
All reality, WeTV.
Did you know that a young boy drowned here? His name was Jason. Jason was my son. And today is his birthday. Friday the 13th, films 1 through 8. Now on demand on Pluto TV.
Your mission.
It's impossible.
They're coming after us with everything they've got.
You're not gonna make it!
You're not helping.
Get your seatbelt on. You asking me that now?
Your father saved 800 lives, including yours. I dare you to do better.
You will experience fear in the face of certain death.
I hope you know what you're doing.
So do I.
We're gonna put birds on things. Put a bird on it. What happened?
I fell through the floor again.
Everyone's been so nice to me.
Everyone?
Well, not you.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The latest beige book is out. Economic activity in the U.S. declining slightly in recent weeks. Tariffs and uncertainty affecting the economy. Right now, we have got the S&P, the Dow, NASDAQ all advancing. S&P 500 index up 17. Gain now of 0.3%. The Dow up 55, up 0.1%. The NASDAQ Composite Index higher by 84, up by 0.4%. Our Mag 7 index up 0.3%. The 10-year 4.35%. Busy day for economic data. The 2-year 3.86%. Spot gold currently trading higher by 0.8%. 33.80 right now, while West Texas Intermediate crude down 1.1%, 62.74 a barrel. Tesla's vehicle shipments from its China factory fell for an 8th straight month, extending a global sales slump for CEO Elon Musk. Right now, we got Tesla down 2.9%. This is a ship carrying about 3,000 cars to Mexico was abandoned in the middle of the Pacific Ocean after catching fire. Many of those vehicles on board EVs. President Nicolas Maduro's government is cracking down on Monitor Dollar. That's a social media account that provided exchange rates for the Venezuelan bolivar on the black market, arresting nearly 24 people associated with it. Recapping, stocks higher. S&P right now up by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. Well, let's get back to the big, beautiful bill. On Capitol Hill, Republicans in the Senate are working on their version of what President Trump calls this big, beautiful bill. And as they do that, we're getting new details from the nonpartisan Congressional Budget Office about what the House version as passed would do to the federal deficit. The CBO estimates it would add $2.4 trillion to U.S. budget deficits over the next decade. The CBO also says it expects it would leave almost 11 million people in the United States without health insurance in 2024. Henrietta Treyz is the co-founder of Veda Partners, where she is director of economic policy with a particular expertise in how the Senate works. So she joins us now. Talk about these numbers. What exactly do they tell us, Henrietta?
These are big numbers. 2.4 trillion is a record breaker. The last highest reconciliation bill was 1.9 trillion, so this will be winning some awards for sheer deficit increases on that account, which is exciting. The bill is going to change a lot from here, and my base case expectation, knowing the Senate, is that it's going to become more deficit financed. I think for bond investors, there's something to watch for here, in that the senators are going to use a current policy baseline where the House does not. And this is a big differential between the two chambers. The House assumes that passing an extension of the 2017 tax cuts, plus some of the other components of the bill, will generate $2.5 trillion of economic activity, dynamic growth. On the Senate side, they're not going to use that formula to wipe away some of the budget costs. They're going to instead assume that extending the existing rates costs nothing. $3.8 trillion or $1.3 trillion more will be deficit financed. So the scale of the Senate bill is going to be quite a bit more substantial. They're going to try to make some of the business provisions more permanent than the House bill. The SALT cap is going to have to come down. The IRA cuts are going to have to come down. The Medicaid cuts are going to have to come down. The deficit is going to grow, is the bottom line, as the Senate spends the next 4 weeks crafting their version of this bill.
Henrietta, I'm curious, as I'm sure you are, about how a Senator Rand Paul is looking at the numbers from CBO today, maybe a Rick Scott, maybe a Ron Johnson as well, as I kind of make the argument for deeper cuts in the Senate version of this bill. I heard Senator Paul talking about the power that he thinks he and these other holdouts have here in these negotiations, and I'm curious if you think that he's right about that these holdouts are going to be able to exert some real sway here as the Senate gets down to brass tacks and reshapes this bill.
Great question. I actually think this is some of the most interesting change that we've seen since the Senate has taken up this bill and gotten back from recess. Rand Paul's material objection is to the $5 trillion increase to the debt ceiling that the Senate bill is going to include. And so there's already discussion of trying to get him back into the fold as a potential yes vote in changing the debt ceiling numbers associated with the Senate package. So right now, the sort of whisper around the senators in the Republican conference is that, hey, maybe we just cut that in half and get Rand Paul over to our side again. Because right now, if Rand Paul is a no, just on the debt ceiling alone, then Senator Thune only has 2 votes to lose from there. So cutting the debt ceiling hike, which is not the same as the deficit, but a really important part for Rand Paul, down to $2.5 trillion, which would get the Senate and Congress functionality through about March of 2026 instead of November of 2026, is, I'm told, a part of the conversation. So we're really trying to move the parameters of what might get Rand Paul, which to me really underscores the trouble that Leader Thune is going to face when we get back to what you were just mentioning, the 10.9 million individuals will be kicked off Medicaid, 9.5 million of whom are not in the undocumented migrant space that Republicans talk about a lot. These are just regular, everyday Americans who will be kicked off the Medicaid program. So there's going to be a lot of loss from West Virginia, Susan Collins in Maine, the Alaska senators, that's Sullivan, who's up for re-election next year, and Murkowski. So there's a lot of moving parts that Thune needs to walk through here. Getting Rand Paul on board by cutting the debt ceiling hike in half might be very helpful.
So how then do you anticipate the timeline of this bill eventually making its way to President Trump, maybe assuming that we do get those holdouts, the Rand Pauls, signing off on it? Is the timeline really realistic that this does get on Trump's desk by July 4th?
No, it's going to go through the Senate by July 4th. That's the strategy that Senator Thune is working with right now. There are 3 committees who are rolling out their bill this week. There will be another next week. And then the Senate Finance Committee, which is responsible for almost all of the package, all the tax provisions and the Medicaid cuts, they're going to go last. And that'll come either the week of the 16th, right before Juneteenth, or it'll come the following week, the week of June 23rd. This bill is going to get very messy, very complicated. They have a lot of changes that they need to make with the House Republican package. As I mentioned, the Salt Caucus alone is going to raise holy hell with them, and they're going to be in a meeting at some point. They haven't been given an audience yet, but they will have to do that. And then what that creates is a scenario where the House and the Senate actually go to conference. First and foremost, for investors, what you should hear when I say that is this is a time suck. It can be 1, 2, 3 weeks even. So that paints the picture for passages of this legislation at the end of July. July 24th is when the House is scheduled to go on recess. August 1st is when the Senate is scheduled to go on recess. The X date for the debt ceiling is in mid-August. That's the time horizon folks should work with.
Very quickly here, just what is happening at this moment, drawing on your experience working in the Senate, what's happening at this moment in time? I know committees are releasing their legislation sort of one by one, but in the minute that we have left, sort of what's the actual state of play? What's happening on the ground in Senate office buildings today?
Lobbyists are fanned out everywhere. They're trying to get their IRA tax credit back in. They're trying to tweak the I-899 provision that gives the Treasury Secretary the authority to tax unfair tax countries, foreign entities and such. There's a lot of behind-the-scenes work going on before that bill gets released. The rule of thumb in D.C. is you want to get your provision out before the bill gets released. Get it out before it's in. Once it's in, you can't get it out. So the aggressive lobbying happening behind the scenes right now.
Henrietta, always good to talk to you, get your update. That's Henrietta Trey. She's the co-founder of Veda Partners, where she's the director of economic policy. I want to turn now to another story we've been following this afternoon. That is another phone call today taking place between President Trump and President Putin. Trump said his Russian counterpart had a warning for Ukraine that he plans to retaliate for a recent drone strike on Russian airfields. Joining us now with the latest on this is Nick Wadhams. He's the leader of Bloomberg's national security team in Washington. And Nick, I'll start with a basic question here. We've been watching as President Trump has aspired to get on the phone with President Xi. He's had more success talking to President Putin. What precipitated the call, and what do we know of what they talked about?
A couple of things. I mean, obviously, the big one was the drone strikes over the weekend where Ukraine launched strikes on Russia's strategic air forces deep within Russian territory. It was a shocking development over the weekend. And then, obviously, the U.S. has really been pushing Russia to agree to an unconditional ceasefire in Ukraine. It's a pretty extraordinary post on social media by the president in one way because he seems to be granting credence to the Russian argument that they can't agree to a ceasefire at the moment and will have to respond to the Ukrainian attacks. And then he also goes on to say that Russia has offered its help on on the Iran nuclear issue. So the president is speaking to Putin very much as an equal, seems like almost as a partner. So really underscores and will fuel a lot of criticism from some of the president's critics, certainly on the left, who say that he's willing to give President Putin essentially the benefit of the doubt over Ukraine.
Right, I'm just kind of reading this social media post and quoting here from Trump. President Putin did say, and very strongly, he will have to respond to the recent attack on the airfields. What exactly is Trump kind of insinuating here? What would that kind of response look like, or do we not know?
Well, I mean, one of the big dynamic, the context here is that the president has said previously that he wants a ceasefire immediately in Ukraine. He wants to stop the fighting, and he wants a ceasefire to pave the way for a peace deal. Ukraine has said repeatedly, okay, it's on board with that idea. And then at the same time, the president has criticized Russia in the past for launching continued strikes on Ukraine. So the president has, in the background, gotten a little bit more impatient with Russia for not agreeing to that ceasefire. But then what you see him doing here is saying essentially green lighting the idea that Russia has every right to respond and that there will be no ceasefire. I think he also says in that tweet that it's not looking good for peace at the moment. So you have a very contradictory statement from the president, where on the one hand he's pushing for a ceasefire, but then essentially standing out of the way as a major U.S. adversary. Russia says it's going to launch new strikes on a putative U.S. ally, Ukraine.
Nick, in the minute we have left, I'd love to ask you about dialogue between two other parties, the United States and Ukraine. I'm curious, was the U.S. caught unawares by this attack by Ukraine on Russia? And how much conversation is there among those two nations about the path forward here?
Well, I mean, that's certainly been strained. As far as we understand from the administration, they were not tipped off by the Ukrainians about this attack. I mean, I don't think that would necessarily be a huge surprise. It's not clear to me that the Biden administration would have been tipped off on it. I think regardless who the U.S. president was, Ukraine has shown an occasional willingness to seek forgiveness rather than permission in some of its strikes on Russian territory. Joe Biden also came out against some of those and said that they would lead to an escalatory spiral. So not a huge surprise there, but it does raise bigger questions, because while the U.S. has not been re-upping its military aid to Ukraine, it has been willing to continue to supply Ukraine with a lot of intelligence, satellite data, and things like that to help it fight the Russians. So when you see a tweet like this from the president, it really does open up the possibility that sort of everything's on the table. And, you know, the real question is what President Trump does with Ukraine right now. There are Ukrainian officials in D.C. at this moment meeting with Marco Rubio and other administration officials. So really trying to figure out at this moment what they're telling them.
Nick, appreciate it. That's Nick Wanhams. He's the leader of Bloomberg's national security team, joining us from Washington, giving us detail on that latest phone call between President Trump and President Putin.
And still to come, today's Bloomberg Big Take, an investigation into Tesla's full self-driving function, how it's led to fatal car crashes, and how regulators have responded. And just looking quickly at markets, we do see S&P 500 in the green. We're up over 0.2%. Yields much lower as that economic data came out weaker today. NASDAQ 100 higher, though, outperforming those tech stocks.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me, LL Bean. There are questions that I would say are straight up homicide inducing.
Hot take. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food.
I've had it.
Let's go!
along to 25 Words or Less on Pluto TV.
Clever.
Catch 25 Words or Less all weekend long right here on Pluto TV. Stream now, pay never.
Let's go!
How you doing? Catch Eddie Murphy in his iconic action comedies.
I'm Axel Foley!
Anytime you want to watch them.
You put a really good package together. Thank you.
Beverly Hills Cop films 1 through 3, now on demand on Pluto TV. Stream now, pay never.
Let's go. Are you ready? I'm looking for an executive chef. It's full! It's burnt! Get it back in the oven! Yes, chef. Why should you stay in Hell's Kitchen?
I have passion. I'm a better chef.
Take off your jacket and get out of Hell's Kitchen. Ladies, well done. Great job. The champion, ladies and gentlemen. This is Hell's Kitchen.
Classic TV comes home on Pluto TV.
Anybody home?
Catch Gunsmoke and The Andy Griffith Show. Relive the earliest moments in black and white and ride off into a sunset full of color. Timeless TV anytime. Catch Gunsmoke and The Andy Griffith Show anytime on demand on Pluto TV. Stream now, pay never.
We got a problem here?
But we had one night where there ain't no fight.
I want to do something with my life, all right? I want to be somebody. They don't care about what's going on in the hood.
Something wrong? Yeah, just too bad you don't know what it is.
Hello? Is there anybody still in here?
What is that?
Why is the shower detector going off?
What's that?
There's movement over there.
We're not here to scare you. Will you come talk to us?
Is there anybody here with us?
I like something tug my jacket. I think something's investigating us.
Oh, what? This is gonna be the start of something huge.
You are exactly what I need right now.
I just want you shopping all night.
Oh, what the?
Oh, we have something extra.
We're not hiding no more.
I just want you shopping all night.
Get your popcorn, boo.
Celebrate National Game Show Day all month long with our favorite wins on Buzzer.
Cement.
Concrete.
I was so busy thinking of a clue. Oh, I've got one. Have you?
Section. Slab.
Yes! Oh, that's great, Ron. That's just great.
Celebrate all month long. Watch now on Pluto TV.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks in the green right now. The Dow, the S&P, NASDAQ all advancing. S&P currently higher by 14 points. That is a gain of just about 0.2%. Dow Jones Industrial Average up 19 on the Dow. That is a gain of just under 0.1%. Little change there. NASDAQ, meanwhile, up 88 points for the NASDAQ Composite Index, a gain of just about 0.5%. Weaker than expected economic data, leading to speculation that the Fed will cut interest rates at least twice this year. The 10-year, 4.36%. The 2-year, 3.87%. Gold is now higher by $25 the ounce, up 0.7%, $33.78. And West Texas Intermediate crude oil down 0.7%, $62.99 for a barrel of WTI. Wells Fargo shares up 0.1% after finally escaping a Federal Reserve asset cap that has restricted its size for more than 7 years, unleashing the firm from the unprecedented punishment and a major win for CEO Charlie Scharf. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you very much. And one of the most read stories on the terminal today is the Bloomberg Big Take, a harrowing account of a fatal 2023 car crash involving a Tesla Model Y that was using full self-driving, a crash that took place in Arizona on Interstate 17 between Flagstaff and Phoenix. Bloomberg News senior technology reporter and contributor to the Elon Inc. podcast, Dana Hull, writes that as Elon Musk touts robo-taxis in Austin, federal regulators are investigating whether the system in the Tesla is dangerous even with a human behind the wheel. Dana joins us now from the Bloomberg San Francisco Bureau, and I should commend this piece to everybody. It's sobering and includes very dramatic video captured by this car as it goes at highway speed and crashes into someone next to her Toyota RAV4. Dan, talk a bit about the video that you were able to obtain, that Bloomberg News was able to obtain here. It was through a public records request. But what it shows, what it reveals about what seems to be a huge flaw here in this feature that Elon Musk has touted.
Yeah, so thanks, David. To back up for a little bit, in October, NHTSA announced that it was investigating what Tesla calls FSD because of 4 crashes where the system seemed to struggle with fog, glare, dust storms, things like that. And they mentioned one of the crashes was a fatality involving a pedestrian. And I read the NHTSA report and was like, wait, what, a pedestrian was killed? Like, what was this? What happened? And there weren't any other details. So I filed a records request and got the crash report, over 250 photographs, and some pretty harrowing footage, some of which we shared with everyone today. And it just really shows this vehicle not slowing down despite the glare on the screen, and not seeing parked cars with their hazard lights on, not seeing another human being like desperately kind of signaling to them to slow down, and then hitting this one. We stopped before the impact, but then obviously this woman is sort of hit straight on, and it just raises a lot of questions. And Tesla fans will say that the software and the hardware since then has been upgraded, and I'm sure that it has. But at the time, the driver was using what was likely the most up-to-date version of that FSD that existed, and it's just a really tragic case that a lot of people don't know about.
So, talk a little bit about full self-driving, and in the case of this crash, what we know about what the driver was doing, what drivers of Teslas with FSD are told. Are they supposed to keep their hands on the wheel? Do they have full control over the brakes and wheel? How does that work?
So that's been a big issue in terms of how Tesla has marketed this. It is marketed as FSD, but Tesla makes very clear in all of its literature to its owners that the owner of the car is responsible for the car at all times and should be ready to take over. So we don't really know. All we have is what the driver said in the crash report, which was, "I'm sorry, it all happened so fast. All of a sudden there were cars in front of me and I couldn't stop." So we don't know more than what he told police right in the aftermath of the crash. I do think it's significant that Tesla ultimately reported this crash to NHTSA, and the investigation NHTSA's investigation is ongoing.
Dana, you could step outside our bureau in San Francisco and you could hail a Waymo, a self-driving taxi. And I think it's useful to explain the difference in the way these self-driving systems work. So we're talking about a Tesla system here that relies
Yeah, so if you live in a city like San Francisco or Austin, where Waymo is ubiquitous now, they have a lot of sensors. They use cameras, they use radar, they use LiDAR. LiDAR is a thing that kind of spins around on the top. A lot of people complain that it looks very clunky, but they have a very robust sensor suite so that the vehicle is not reliant on one input. They are kind of actively gathering data from around the car using multiple sensors. And that is one approach. That is the approach that Waymo has taken. It's the approach that, others like Aurora and Zoox have also taken. Elon Musk has taken a very different approach. And his idea is that a vision-based system or a camera-based system with a lot of machine learning and these incredible neural nets can basically do the same job for much cheaper. And part of the argument is that Tesla has so many cars on the road that they have a lot of data that they have trained their systems on. And so, there's a big debate in autonomous vehicle development about whether you can truly be self-driving without LiDAR or not. I just think what this crash shows is that a camera-based system struggles sometimes with glare, and this was one of those very tragic edge cases.
What have the regulators said if anything, about these systems that just use cameras?
I mean, they have not, they are investigating 4 crashes where, they seem to struggle in these certain conditions like glare, but they have not, they're not ordering a recall or anything like that. And just note that investigations do take quite a lot of time. There's typically a lot of back and forth between NHTSA and automakers. They ask for a lot of engineering details, and they often do take several months.
I'm curious here sort of about the way that this administration and the Department of Transportation in particular see the advent of and the adoption of self-driving vehicles like the one that's featured in this story. Do they see it as the future? Do they see it as kind of a complement to the way that we drive today? Sort of how are they looking at the prospect of these cars being on the road?
I think they very much see it as the future, and we have to remind everyone that roughly 40,000 people die in traffic accidents in the United States every year. A lot of traffics are because of speeding, because of drug and alcohol use, and if there is anything that we could do to really drive that number down, that would be terrific. And that has always been the promise of autonomous vehicles, that autonomous vehicles can drive when you're tired, and they can do long-haul freight runs, that kind of thing. But as we're seeing these vehicles, being deployed either in testing situations or, starting to become commercialized, there have been accidents. And I think that the industry needs to be very upfront about what those accidents have been.
We only have about a minute left, but I'm wondering if you could compare, where Tesla currently is in this race for autonomous driving versus other U.S. automakers.
I think the big competitor to Tesla is Waymo. As David mentioned, I can, step outside of my San Francisco office and hail a Waymo, and it will show up, and there is not a driver there. Tesla does not yet have a functioning robotaxi, customer service-based system yet. They are talking about kind of launching one in Austin this month. We'll see whether that's a big event or like a soft launch, but, they are definitely, they don't have a commercial business doing a robotaxi yet. However, that's been the big promise of the company for quite some time now, that, we're going to see robotaxis everywhere, and eventually if you own a Tesla, will be able to add your vehicle to this growing fleet.
Dana, thank you very much, and thanks for the reporting as well. The piece is A Fatal Tesla Crash, shows the limits of full self-driving by Dana Hull. She wrote it with Craig Trudell and features, again, this very sobering video. We didn't show any of it to our audience on television and YouTube, but you can see up until the moment that self-driving Tesla hits a pedestrian in Arizona just a couple of years back, and it's well worth reading just to hear about the limitations of that software, of that feature in the Tesla. You can read the full story and more from the Bloomberg Big Take on the Bloomberg Terminal and at Bloomberg.com/Big Take. Again, that piece there by Dana Hull with Craig Trudell. Look at markets here on this afternoon. We see stocks up slightly. S&P 500 up about 0.25% on the heels of all that economic data, the ISM report that we got this morning, data from ADP as well about job openings. As we look ahead to Friday, of course, Jobs Day, when we'll get the latest read on the U.S. labor market, about a week plus away from the next time the Federal Reserve sits down. We'll be talking about how markets are viewing that meeting and future ones coming up here on Bloomberg Business Week on Bloomberg Radio and television and YouTube. David Gura and Emily Graffeo in for Tim Stenevec and Carol Masser. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Why don't you like us anymore? Why are you leaving us? Oh, we're so sad that you left us. You don't even know me. LL Bean. There are questions that I would say are straight up homicide inducing.
Hot take. Nobody thinks your kid is as cute as you think your kid is.
I've had it with pictures of food. I've had it.
Clear skies, beautiful scenery on the grass.
Great venues all across the board.
The grass season underway. I love this part of the season. I love watching it. I love talking about it.
It's great to be back on grass. The most difficult surface to learn to play on.
You have to have a lot of patience.
Moving on the grass is not easy. You get a little slick.
Pristine lawns, pins, cups, and fresh strawberries right around the corner.
Truth or dare?
Truth. Truth.
You attack me every time I pass you in the hall.
I think you're cute.
Dream on.
Classic TV comes home on Pluto TV.
Anybody home?
Catch Gunsmoke and The Andy Griffith Show. Relive the earliest moments in black and white and ride off into a sunset full of color. Timeless TV anytime. Catch Gunsmoke and The Andy Griffith Show anytime on demand on Pluto TV. Stream now, pay never.
Do you think there's a chance that you and I could go someplace and laugh together?
Makes you laugh so hard the beer comes out of your nose.
Life is funny.
Hilarity ensues.
So, if you're in the mood to laugh out loud, stream Cheers and Frasier.
Come on, you'd love these guys.
Did you know that a young boy drowned here? His name was Jason. Jason was my son. And today is his birthday.
Friday the 13th. Films 1 through 8. Now on demand on Pluto TV.
You ready to laugh at the neighborhood? Yes! All the episodes are ready to watch.
You ain't gotta twist my arm. Ow.
The Neighborhood. All episodes now streaming on Paramount Plus.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
And this is Bloomberg Business Week. Let's take a look at some stocks on the move today. I'm Emily Grafeo with David Gura, and we're joined by Bloomberg News equities reporter Alexandra Semenova for stocks on the move. Alex, what are you looking at?
Hey guys, great to be on with you. I'm taking a look at a really fun one actually, K-Wave Media. That is a company focused on K-pop, short for Korean popular music. It is soaring today, up 134% right now after saying it would sell up to $500 million worth of shares to buy Bitcoin. The company at some point was up as much as 236% today. They say that they plan to become the meta planet of Korea. And actually, funny enough, they're following the same strategy as Michael Saylor's company strategy, where they sell shares of the company to buy the cryptocurrency. Really interesting. Investors are really liking this.
This is becoming like a model, I think. Maybe not a widely spread model, but I see other companies like doing that.
You can make a lot of money doing it when Bitcoin is at over 100,000.
Yeah, and just a broader testament to like risk investment fully back on. The risk mood is obviously very high with companies like this doing so well. They also went public last month through a blank check company, sounding a little bit like 2021 again.
Here we are. That's KWM. What else are you watching this afternoon?
Also looking at Dollar Tree, just taking a look at the move right now. It's down more than 8%. It warned its second quarter profit may be down 50% from a year ago, citing, of course, tariff-related costs. That also includes the 145% levies on China. The company did say that it expects profits to reaccelerate in the second half of the year, but obviously that wasn't enough to please investors. It said that its sale of Family Dollar for about $1 billion earlier this year will allow it to focus on its dollar store chains, but it is navigating what it says is called a rapidly evolving environment. And
still laughing at the fact that, like, I was on surveillance yesterday, and John Tucker posited that Tom Keene had never been in a Dollar Tree store before, which may be in fact true, and he's not here to defend himself. But how much is this like part and parcel of a theme that we're seeing among retailers, just kind of expressing concern about, yes, the uncertainty, but about tariff policy more specifically?
Yeah, I mean, uncertainty has been the name of the game in all these corporate earnings. One of my colleagues did a story about how mentions of the word uncertainty reached more than 3,000 this earnings season. So investors are really, companies are trying to navigate it, investors are trying to navigate it. But something fascinating is Deutsche Bank actually said that the earnings hit is going to be a third of what initially projected because Trump has been backpedaling on his trade policy so much. So it may not actually be as bad as a lot of companies are saying.
Okay, and so Dollar Tree ticker DLTR down as much as 11%. Today. It's still pretty much holding on to those losses, down about 8% right now.
Taking quite a hit right now.
What else?
Last one I'm looking at is CrowdStrike, also having a bad day today, down about 5% right now. They projected revenue for the current quarter that came in below Wall Street estimates. They expect sales of $1.15 billion, and despite actually beating their earnings, their stock is down it was down as much as 9% earlier in the day. So they've also been struggling with facing investigations by prosecutors and regulators over a deal with Carahsoft Technology. And so they're dealing kind of with a lot of problems right now.
Yeah.
Thank you very much, Alex Semenova, with that update on the movers this afternoon. And we're going to bring you those throughout the afternoon here. For more conversations like this, you can listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere else you get your podcast. David Gura with Emily Grafeo here in for Tim Stenovec and Carol Masser. Just looking at the markets more broadly, you've mentioned this before, but we've seen this most manifest in the bond market on the heels of that economic data this morning. Anything catching your eye as you were looking at the stock market today?
I mean, just to go back to CrowdStrike for just one moment, we just got reporting from Bloomberg about like a couple minutes ago. CrowdStrike Holdings said U.S. officials have asked for information related to the accounting of deals it's made with some customers, and said the cybersecurity firm is cooperating with the inquiry. So it's interesting that not only was it an earnings miss, but potentially also now these headlines coming late in the afternoon also weighing on the stock. But yeah, the bond market data is kind of taking all my attention. That 30-year, it was almost at 5% like 2 days ago. Now we're back down to 4.8.
How far we've come.
How far we've come. Everyone was talking about duration, and yeah, now we're really seeing people talking about potentially a Fed cutting more than they thought this year.
Yeah, it'll be interesting to see sort of where we go from there. And again, looking ahead to Friday, we have this jobs report, and so much of the narrative, as I've sort of seen it and heard folks talking about it, has to do with the fact that we've seen this jobs market weaken so much. And being on the Federal Reserve Board of Governors, no job that I envy at this point in time, having to deal with all of this, the kind of underlying uncertainty that we were talking about just a few moments ago in the context of these companies, certainly with the president's trade policies, but then having to navigate this kind of collision of sentiment data with hard data like those jobs numbers that we're going to get on Friday as well. Yeah, interesting to see sort of how people are kind of rejiggering or changing their forecasts for cuts over the course of the year.
And yet, S&P 500 is higher, not by much today, but it's not like risk appetite has completely left markets. You also look at like the kind of more animal spirit type stocks. The ARK Innovation ETF is higher. A basket of most shorted stocks from Goldman Sachs is up almost 2% right now. So that kind of like bid for speculation is still here, David.
I'm going to use the Fed here as a segue to say that it was yesterday that Wells Fargo emerged from that cap that had been put in place by the Fed when Janet Yellen was the Fed chair. Just a couple of minutes here, we're going to hear from our Bloomberg TV colleagues. They're going to sit down, Romaine Bostick and Katie Greifeld, with Wells Fargo's CFO, that's Mike Santomassimo, to talk about where the bank goes from here. I should say investors are very excited at the prospect of that cap being gone. This is Bloomberg Business Week on Bloomberg Radio, television, and YouTube.
When you need your sports in us now,
we're bringing you that breaking news right here on HQ.
Find it on CBS Sports HQ, streaming free anywhere you are.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Economic resiliency being put to the test, and so too is the stamina of financial markets. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Katie Greifeld, kicking off to the closing bell here in the U.S. You take a look at the S&P 500 right now, building a slight rally underway. The S&P 500, that big benchmark, up about 0.2%. We're still below 6,000, but we're pretty close to an intraday bull market, up 20% from the lows. We'll see if we can finish there. You take a look at the Russell 2000. This was your leader yesterday. That position being given up a little bit today. The Russell 2000 off by about 0.1%. And the bond market, Romaine, here is where a lot of the action is. You take a look at 10-year Treasury yields right now, down about 9 basis points, more in just a minute, but quite a rally there.
Absolutely. And as far as that intraday bull market, we are within reach of that, but the economic data not necessarily cooperating. That ADP jobs report, 8:15 a.m. Wall Street time, a sobering prelude to Friday's official government report. ADP saying private sector payrolls increased just 37,000 last month, the slowest in 2 years and lower than all estimates in a Bloomberg survey. Now take note, ADP is just a supplementary view of labor market conditions, and that doesn't necessarily predict what we're going to find out on Friday with the government's monthly unemployment figures. But still, things got even more messy at 10 a.m. with the Institute for Supply Management saying its index of services, that fell into contraction territory, dragged down by retail, construction, and warehousing. Order backlogs, they shrank, and prices paid, they jumped to the highest since November of 2022. Now remember, the services industry accounts for the lion's share of GDP, so as it goes, so goes the economy. One bright spot, though, could be found in hotel and food services, so some resiliency there. But as Kendrick would say, maybe it's just not enough. Traders of swaps contracts that predict Fed rate changes now pricing in higher odds of lower rates, 2 quarter-point cuts by year-end in October and December. And Katie, the possibility of a move in September, that bumped up to 95% from 82.
Well, you look at how that is playing out in the bond market. I have yields of the different maturities up here from short to long. And as you can see, over the past 2 weeks or so, yields have been coming down. Let's focus in on this blue line. That is your 10-year Treasury yield. Right now, we are below 440, trading at 4.36%. We were as high as 4.6% just about 2 weeks ago. Of course, you can see if you zoom in that move just today, that coming on the heels of that data that you talked about, Romaine, really setting the scene for Friday's non-farm payrolls report. It feels like the 10-year yield can't get too far away from 4.5%. That has been the story of the past few months, but could be starting to see a little bit of a different message.
Absolutely. We're going to get back to that in a second, but let's take a little bit of a walk back in history, back to 2018. That was when the Fed hit Wells Fargo with an unprecedented penalty for years of misconduct, an asset cap that basically prevented it from growing. Within a year, the CEO was out, a new CEO was in, Charlie Scharf taking the helm, tasked with really cleaning up the bank's marketing practices, reining in a lot of those costs, and of course, mending ties with Washington. And one of the first big hires he made was as CFO, Michael Santomassimo. And now 7 years after that asset cap was put in place, it's now been removed. The Fed satisfied that the bank has indeed shored up risk management and board effectiveness. Pleased to say that Mike Santomassimo joins us right now from the floor over there at Wells Fargo. All right, Mike, we've had you on this program a lot, particularly around earnings season. I think every quarter we ask you about the Fed constraints, that asset cap. Every quarter you've elegantly dodged my questions. Now that cap is gone, and of course investors, they want to know what's next.
Yeah, well, first, thanks for having me. And you know, like the result of the asset cap going away is really the culmination of like years worth of work for thousands of people across the company. And so we're proud of that work. We're thankful for all the effort that was put in there. And when you look at all of what we went through to get it validated and reviewed, I think we're very happy that's where we got to today. And as you sort of look forward, I think it's a lot of the priorities that we've been talking about now for the last number of years in terms of all the investments we've been making across the consumer and the wholesale businesses, and that's really what's going to drive growth over a long period of time.
Is there a sense now, I mean, with these constraints removed, and I know this has been a long evolution, so no one's expecting sort of a switch to flip and you're just going to be a totally different bank. But I am curious about what is needed, particularly from your end as CFO, to sort of chart a course of growth rather than just kind of making things better as they are.
Well, that course was charted years ago, right? And while we were fixing all of the risk and control work and building out that infrastructure, that was always the top priority. But along with that, there was we set out 5 years ago to really start to take a lot of the efficiency savings that we were generating and reinvest those back in the businesses. You can look at our credit card business as an example where we've replatformed all of the products and have launched 11 new products since 2019. We've been investing in our branch system by refurbishing those branches, investing in the people in there, changing what they do, and providing more advice across the investment side of the business. We've been investing in our wealth management business more broadly to continue to improve the productivity and the capabilities they have. And then on the commercial side, it's adding hundreds of commercial bankers across the country. It's adding senior investment bankers across a number of different areas in the investment bank. And then within the market markets business, it's continuing to just methodically invest in technology and people to see growth over a very long period of time. This is not something, as you say, that's like all of a sudden, you start to see the growth like this morning. This is something that'll be over the next 5, 10, 15 years where we'll see, good sustainable growth across all of those businesses as we make the investments.
Well, Mike, let's talk about what's still left to do, because my understanding of the situation is that, okay, the Fed lifted the asset cap that had been in place since 2018, but the rest of the consent order remains in place. So what work is still left to do, and do you have a timeline for when we might see the rest of the consent order lifted as well?
Yeah, no, sure. It's a good question. And, as you look at, where we are, we've completed phase one, and that's what you see when the asset cap's released. And what that is really adopting and implementing all of the changes that we need to do. And phase two is just seeing those sustain themselves for a longer period of time, and that'll get revalidated as we go. No time frame. That's really up to the Fed ultimately. I'm sure that's a familiar answer, Romaine. Sorry. But ultimately, we'll see that through like we have all of the other consent orders that have gone away over the last number of years.
And one of the things that you mentioned that the bank has been doing has been refurbishing branches, for example. And when it comes to the actual customers of Wells Fargo, 2018, it feels like a lifetime ago, but in actuality, it wasn't all that long ago. Do you think that you truly have won the trust back of those customers, or is there still more work to do there as well?
Well, it's certainly something you do every day as you serve customers. And I think when you look through and see, the engagement that we had throughout the years, the engagement was still quite good across many of the businesses with our customers. What you didn't see happening, though, over those years was growth, for all the reasons that we've talked about over time. But look, you're always working to ensure you're providing the right experience, the right products, the right capabilities with customers. And that just builds and builds over time by execution. And so that's something you try to never lose sight of.
Hey, Mike, I do want to get your thoughts, since we have you here, just on kind of broader economic conditions, kind of the state of consumer spending. And I know we got some flavor out of that on your last earnings report and earnings call here. But given all that's transpired and given all the volatility, of course, it seems to be associated with Washington policy and, of course, economic conditions, are you still confident in the forecast that you've given? And are you confident here in the consumer business, particularly when it comes to making sure that the folks that you've lent to are going to be able to pay their bills?
Yeah, no, there's certainly a lot to look through when you think about headlines or a lot of what's been reported. But when you do that, the trends have been actually quite consistent now for the last couple of quarters, where we see the consumer still very much actively spending and out in the supporting the overall economy. Those categories, and I think you talked a little bit about this in your intro, the categories move around a lot. They could be spending on travel in one month and other categories in other months. And so, but in aggregate, you're still seeing some growth year on year, and that spend that people are having both on the debit side and the credit side. And so they've been very, very, very consistent now for for a while, and you still don't see any real signs of real systematic stress coming through in the credit side. You certainly see that lower end consumer in terms of lower wage earner being more stressed than others, but that's been pretty consistent now for a while, and you're not seeing things deteriorate in any significant way at this point. So I'd say so far probably better than people would have expected coming into the beginning of April or post the announcements in the beginning of April. But so far I think it's been a pretty consistent trend, and so hopefully that continues and should continue to support the broader economy.
Have you had to or had any meaningful discussions about tightening your own internal lending standards?
No, not meaningful, not substantial. You're always in any environment thinking about, risks that might, come through all your portfolios. But anything we've looked at is sort of really on the margin, nothing substantial in terms of that at this point. And then certainly same thing on the commercial side, very consistent in terms of the overall underwriting that we have. But you certainly think about, different scenarios as you look forward in case things turn out to be a little bit worse than you might expect. But so far, we're just not seeing that come through in the data.
And Mike, I want to get your thoughts thoughts on the state of the deposits business, because it feels like for the past several years in this higher rate environment that banks such as yourself have been competing with money market funds for deposits. You can still get about 4% for a money market fund, and Romain was just talking about what's priced in terms of rate cuts this year's just about 2 quarter-point cuts here. So how is that going, that deposit side of the business, and are you seeing growth there?
Yeah, look, it's been pretty stable now for a number of quarters, and we did see a little bit of growth in the first quarter, as we reported, and a lot of that migration into money market funds has somewhat stabilized now over the last probably year plus. You still see a lot of money in money market funds for sure, but you're not seeing the same level of migration into either higher yielding deposit products or money market funds as we saw call it 18 months ago or 2 years ago. That trend certainly has stabilized. And what will grow deposits over a long period of time are really two things. One, just growth in the economy, right? So if the economy continues to grow, there's the deposits in the banking system should follow it. And then two, as we continue to do and execute on our priorities and see growth in the underlying businesses, that should support deposit growth as well. And those are the things you'll start to see, I think, hopefully, as we go through over the coming quarters. But we're not seeing any sort of big changes in the behavior or trends than what we've seen in the last couple of quarters.
What does competition look like for you right now, Mike? I mean, particularly when we start talking about deposits and just, I guess, what we would consider traditional banking, and you look at all of the new players and new entrants into this space, the fintechs, if you will, for lack of a better phrase here. Do you see those folks as formidable competition?
Well, look, it's a competitive space for sure, right? I mean, I think, you look across the banks or just the broader, financial services spectrum, we operate in a competitive environment. And so that's why it comes back to, having really good capabilities. I think the advantages of having, one of the largest, branch networks across the country, all of the digital capabilities that we can provide, the broader set of lending that we can give consumers, the investment management advice that we can provide that sort of, complements that relationship. Those are the things that I think are really hard to compete against if you're a fintech or other provider that's got a pretty narrow solution. And so I think our the fullness of our capabilities allows us to compete very well in this environment. But it is competitive, and that'll likely be the case, which is not a bad thing, necessarily for consumers, and sort of makes you make sure your capabilities are where they should be.
All right, Mike, we know it's a busy day on your end. We really appreciate you taking the time. That is Mike Santomassimo. He is the CFO of Wells Fargo.
Just gave him a promotion.
Gave him a promotion. What a big day over at Wells Fargo. Let's get back to these equity markets right now, because global equities hitting a record high for the first time since February. Signs of a resilient U.S. economy seem to be overshadowing the themes of uncertainty surrounding global trade negotiations, a move that Wall Street's, quote, smart money didn't seem to anticipate, but retail traders did. Here to break down where the money is moving is Steve Quirk. He is Chief Brokerage Officer over at Robinhood Markets. Great to have you with us. And what an interesting perch that you have when it comes to viewing what individual investors are actually doing with their money. So if you take a look at the activity on Robinhood's platform, what trends have stuck out to you?
Well, I think a trend that actually kind of emerged during COVID has sort of resurfaced, and that is, the retail customer is sort of stepping in and buying on the dip. And, there was a lot written about that period, that there was a lot of institutional selling in all the names, the hotels, the airlines, everything that was suffering as a result of COVID. And retail customers stepped in, and they were rewarded pretty handsomely for doing so. This was kind of a repeat, because we had two of our, the way that we can look at that is we look at the amount of deposits that we get and then the activity. The first 2 months were the biggest deposit months we've ever had in the history of Robinhood. And then we looked at our equity activity, our option activity, even some of the crypto activity. And they were definitely stepping in and purchasing.
Yeah.
But we had some, you think about it, you had some of the most popular names down close to 50%. And so customers are like, look, these customers are in their early 30s. They have a 30-year investing duration. So they're quite savvy. They realize, hey, I might not get this perfect, but I have quite a while for these stocks to recover, and these are great names.
if you have a strong enough stomach and a long enough investing timeline, I see your point that a lot of these names have been on sale, but compare and contrast to the COVID period. You mentioned that airlines, for example, that was a popular buy the dip trade back then. I have to imagine this time around we're talking about the NVIDIAs, the Teslas that are out there.
Yeah, the compare and contrast is like the tariffs were impacting a completely different set of names. And these, by the way, these were some of the hottest names because they do a lot of business internationally or are reliant on supply chains and things of that nature. And our customers are also well aware that this isn't over yet. So, I mean, as much as they have benefited from stepping in, you see them start to rotate out of some of these where they've seen 40% appreciation in, a month. I mean, who wouldn't take that, right? They kind of act as portfolio managers within their own portfolio, which is amazing. I love it. I mean, from a retail customer standpoint, it's great to see investors do that.
I am curious, though, about the evolution of this. And I think it's interesting that you put it that way because you do see a lot of elements of that. When you talk about how, and to your credit, how Robinhood has actually moved the needle forward on the evolution of financial markets, there's also been a lot of talk about having more consistent trading, basically round the clock. You know, obviously, we are on 9:30 to 4 p.m. It's a tradition. I understand that. There is after-hours trading, but is there going to be a real, true 24-hour ecosystem that is going to be liquid and reliable?
Yeah, we started this in 23, and we have 1,000 symbols that trade around the clock. But if you think of the number of asset classes that already trade around the clock, it's something that, if I came into the marketplace as somebody who was intrigued by crypto, that's what I'm accustomed to. I don't understand a market where, some person who looks like me has to ding a bell twice a day for anything to happen. And our customers do about 70% of their research or their homework and work on their investment theses when the market's closed. So it's very foreign to them that they have to wait until the next morning to put, if I want to buy stock ABC at $10, I don't care if I buy it at 3 a.m. I don't care if I buy it at 2 p.m. And with the market moving news that's happening around the clock today, I mean, our biggest days in the overnight sessions are all this tariff news is happening on a Sunday evening, on a Friday. I mean, it's not happening during regular market hours.
I'm really fascinated by this. And I think it was a few weeks ago we had the head of your prediction markets on the program.
JB McKenzie.
And wonderful guy. And I am curious about just this idea also, and we talk about the evolution of financial markets, of prediction markets. And I know, you bristle at the idea of calling it betting, but we've seen it applied in very legitimate and in some cases reliable ways. And I am curious as to pending regulatory approvals, how much further you can push into that.
Well, I think what it is like, really where it started is like, I'll go back a little ways. In the commodities market, they used to, they used to look at the weather and, if there's a drought, prices of commodities went up pretty dramatically. As soon as it rained, all of a sudden they all came down, and they're like, well, why are we hedging on the commodity market? Why don't we just hedge what we're really hedging, which is the weather? It's just a derivative of that. Another example of that was even the election, which we did. Like it moved predictable symbols, predictable sectors, and so people were able to say, hey, I don't need to hedge my portfolio. I just need to hedge the election, or even the Fed rate decision, or gasoline prices, or whatever it is. If you're into, you have a basket of energy names. So I think what it's allowing people to do is just be more precise with their investment. And I'll give you an example of where this is going to go. Take Apple. I'm a person who studies Apple. There are a lot of people who really love Apple. They get the number of phones right, they get the revenue right, they get everything right. And their thesis is not rewarded because suddenly there's guidance that says something and boom, the stock goes down. And that's very frustrating for them. So they want to abstract that and say, why don't I just have a contract that says all the variables that I nailed are going to reward me for my research. And I think that's going to be beneficial. Very beneficial. So you can imagine where this goes.
All right, Steve. Really fascinating conversation. Got to get you back soon. Steve Quirk is Chief Brokerage Officer over at Robinhood Markets. We did have some breaking news across the wire just a little while ago. This is involving Columbia University and the fight by the White House to potentially pushback on some of the policies and practices that these universities has. The latest news that we're getting right now is that the Education Secretary, Linda McMahon, has now said that Columbia University no longer appears to meet accreditation standards. To find out a little bit more about what this means, let's bring in Akayla Gardner, who's down there in our D.C. bureau. And Akayla, I'm a little confused. Are they pulling the accreditation for Columbia, or are they just threatening?
So the Education Department doesn't actually have the power to pull the accreditation, but they are asking the entity that has approved Columbia's accreditation to reconsidering it, say that they have violated civil rights obligations that they have as a university. And essentially what we have seen here is this is a new strategy that the administration hasn't pursued yet. We've seen them revoke funding. We've seen them use other levers to pressure schools. But with Columbia University, what's so interesting about this is the secretary has said, as well as the president, that conversations are moving in a positive direction, especially compared to Harvard University. So this seems to suggest that those conversations maybe are not turning out the way that Columbia certainly wants them to, hoping to reach a closed-door negotiation and a deal with the White House, I should say, to get their funding back.
Akayla Gardner in Washington with that breaking news on Columbia University, the Education Secretary taking a closer look at the accreditation of that university. We turn back to the markets right now as we count you down to the close and take a closer look at shares of Apple. Medium actually souring on Apple today. Remember, it had a buy or a strong buy rating going all the way back to at least 2016. But today, that recommendation now drops to a hold. Increasing AI competition, tepid growth trends among the reasons for that downgrade. The analyst Laura Martin says for this stock to work, it must have the catalyst of an iPhone replacement cycle, which we do not foresee in the next 12 months. Laura Martin joins us right now of Needham to talk a little bit more about this. And I was taking a look, Laura, at just the revenue growth for Apple over the last few quarters. 5%, single-digit percentages, not awful for a company of its size and maturity. But then you look at Meta and Microsoft and some of the other big tech names there. This company is lagging in a big way. And I'm wondering if this is just about iPhone refresh, or is it about something deeper?
Yeah, I mean, good question. I think our downgrade today is really there's urgent problems with Apple and there's important problems with Apple. The urgent problem is, as to your point, it's 26 times next year's earnings, which is twice its historical multiple and a 25% premium to the S&P 500. But also another problem is there's real fundamental risks to this earnings stream. That's the consensus projection, and that is China iPhone demand. There's a negative Epic Games court case out there that would threaten 30% payouts that Apple demands on every app on its platform. And we've now got 5 fines coming out of the EU in multi-billion dollars for privacy regulations and monopoly impact. So lots of things are threatening, not to even mention tariffs, which is today's news. But there's just lots of things working real time against the fundamental outlook here. And then more importantly, competition is coming. Meta has already sold 1 million Ray-Ban glasses as an alternate computing platform, which is code for replacing the smartphone. Google has now entered that business. And we have Johnny Ive, who designed every single hardware product that Apple currently sells, just did a deal to sell his company to Sam Altman over at OpenAI, and they're going to try to create a hardware device based on generative AI, which Apple is taking a pass at, which really does threaten displacing Apple's hardware system, I think.
Right, absolutely. That was a head turner to see that OpenAI deal with Johnny Ive. A lot of anticipation over what that partnership will bear and what fruit it might bring. But let's talk a little bit more about the upgrade cycle, because a conversation I was having with Mandeep Singh of Bloomberg Intelligence earlier today was that Apple is seen as being behind in AI, and it feels like these are two related conversations, that the AI features that they do have aren't enough to entice consumers to go ahead and upgrade their phones.
Agree 100%. And that's why the stock has slid so much, I think, because a year ago, remember they were talking about Apple Intelligence, and the market Wall Street loves generative AI because it's going to retool the entire U.S. economy, I think is the consensus view. But Apple not only didn't get it done, all the rumors for Monday's WWDC, which is their big developers conference, say it's going to take a pass. It's not going to announce anything about Apple Intelligence. So that's problematic because it looks like it's just ignoring it.
I'm sorry, Laura. Really? Because that surprises me. So what did they announce? I mean, I guess what are your expectations for WWDC? Because if it's not somehow AI related, I mean, is there anything else out there that consumers and more importantly developers are looking at right now?
Yes, they're like, there's chipsets and there's colors and there's new cameras and there's alignment of where the cameras sit, all kinds of cool new things they've been working on. But generative AI, look, the point is you need an Apple iPhone refresh cycle. So you need enough stuff, including generative AI, but not limited to that, that makes consumers want to go out and tomorrow, like when they announce the 17 in September, they buy it. And nothing we've heard makes it likely that happens, we believe.
All right, Laura, really appreciate your time today. Definitely a call that turned a lot of heads. That is Laura Martin. She is Senior Entertainment and Internet Analyst over at Needham & Company. And Romaine, it's...
Chipsets? I don't want to hear about chipsets.
Chipsets? Come on, what's
I know.
that?
I mean, I know this is for developers. I know they probably care, but
yeah.
I don't know.
Not me, though.
Yeah, not me. It's all about me.
I do want to point out that fewer than 60% of the analysts tracked by Bloomberg recommend buying Apple right now. You compare that to their large cap cohorts, that's very, very few.
Yeah, absolutely.
Yeah, so Apple, the shine currently coming off the rose. We'll continue to track that. But coming up next, we'll be speaking to Tobin Marcus. He is head of U.S. policy and politics over at Wolfe Research. That conversation about the latest with trade war negotiations, including President Trump's take on China's Xi Jinping. That's up next. This is The Close on Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Let's go. Are you ready? I'm looking for an executive chef. It's full. It's burnt. Get it back in the oven. Yes, chef. Why should you stay in Hell's Kitchen?
I have passion. I'm a better chef.
Take off your jacket and get out of Hell's Kitchen. Ladies, well done. Great job. The champion, ladies and gentlemen. This is Hell's Kitchen.
My job is to help people to understand what dogs really need.
I believe any dog can become a wonderful companion with the right combination of exercise, discipline, and affection.
When a dog is balanced, you are going to enjoy a true friend. I rehabilitate dogs. I train people. I am the dog whisperer.
I'm an angel. I'm here to help people.
It's a miracle. The doctors, it's all they can say.
You've been an angel your whole life. Don't be afraid to believe what you feel in your heart.
You and your friend saved my life.
An awful lot of good people in this world, Mark. I'm just here to try to help them.
I really love this job.
So do I.
The crime scene was horrific.
No matter how long it takes, we will find it.
You had your man.
Yes, we did.
You're not chasing murderers, you're chasing monsters.
.30 p.m. in a beautiful New York City on this day. This is the countdown to the close. I'm Romaine Bostick.
And I'm Katie Greifeld. And we're all focused on what Friday brings when it comes to the payrolls print. But ADP this morning, I know you were in because you were on surveillance.
I was in.
What a miss.
What a miss. And it's funny, you know, most people poo-poo ADP. They say it's not really predictive.
Never trade on ADP.
But when you have that big of a disparity between what the expectations were coming in and what we got, 37,000 jobs. And more importantly, I thought it was kind of interesting to see the complexion of where those jobs were not being created, I should say.
Right.
And this idea that there might be a bit of stagnation going on out there that maybe we're just not seeing just yet.
I'm actually scrolling furiously to find it, but Peter Bukvar was out with a note right after the results, and he showed that small businesses, they actually shed workers on a net basis.
Yes.
Less than 50 workers, those businesses lost 13,000 jobs.
Well, I'm glad you pointed out, because the majority of the softness that we saw were in businesses, smaller businesses, basically those with 19 or fewer employees. That's not a good thing, because remember, they are the bulk of our employers. I mean, we tend to think that it's the Walmarts and everything else, but they only represent, I mean, what, like 25% of the total employment base out there. Of course, the president weighed in on it almost immediately. He saw the ADP number, and he was like, oh my gosh, we got to cut rates. Taking to Truth Social, saying Jay Powell, the Fed chair, Powell must now lower the rate. And you know, when he puts it in caps, he's serious. Lower the rate. And he also referenced the ECB cutting rates. We should point out the ECB has cut 7 times, not 9. But he quoted, but it's interesting that he would make that connection between what's going on in Europe and what's not going on here in the U.S. Of course, the economic stories are a lot different than what's going on there and what's going on here.
Absolutely. Yeah. Well, let's keep this conversation going and discuss with Tobin Marcus. He is head of U.S. policy and politics research over at Wolfe Research. And I was just looking it up, Tobin. So I believe Jerome Powell's chairmanship doesn't end until May 2026. We know that the president has backed away from talk of firing Jerome Powell, but certainly that doesn't apply to taking shots at him on social media.
Yes, certainly not. I think there's nothing that has happened or is going to happen that's going to restrain the president from making his voice heard. You know, separate from him backing off the threat to fire Powell, we did also have the brief Supreme Court decision that alluded to a separate standard that they will have for the Fed if ever asked to opine on whether or not the Fed chair is fireable. So I think we're in relatively stable position on that, but certainly the noise will continue.
Certainly the noise will continue. That seems to be the narrative across a lot of different issues right now, including when it comes to that tax bill. It's interesting to see former Doge head Elon Musk come out really critical about this bill, I believe tweeting in the last hour or so as well, encouraging people basically to call their senators, call your congressmen, and get this bill killed. Tobin, I wonder, you know, you think about the heft of Elon Musk and the influence that he had in this last election. Even though he's not formally involved in this process, do you think that this is going to play a role?
If he really puts his shoulder to the wheel, I think it is possible that he could make a difference here. I don't think just tweeting about it is going to be enough. You know, compared to the last time that he really tanks a bill in December of 2024 when he brought down the continuing resolution, at that time, he was very closely allied with President Trump, which is no longer as much the case. And he was fresh off having spent a ton of money in 2024 and holding out the prospect of spending money in the future. Whereas now he's sort of declared that he's done spending money on politics. If that changes and he really makes it look to these guys like they run the risk of an extravagantly funded primary challenge that he's backing if they continue supporting the bill, I think that will start to get tougher, but ultimately I think this is still essentially too big to fail. They will pass it because they have to pass it.
Yeah.
The cost of failure for the Republican coalition is just too high.
Yeah, and we should point out, I mean, at least publicly, a lot of the Republicans have already turned on Elon Musk, kind of spinning the narrative that he was never really part of the club, if you will. I am curious, too, when we talk about this idea of what is working its way through Congress, there's, of course, still the trade side of this equation, trade and tariffs. Obviously, that's being effectively litigated straight out of the White House. But I am curious as to whether there is a little bit more unification on what Trump is doing, or at least trying to do on tariffs, trying to strike trade deals that, at least for right now, still appear to be elusive.
Yeah, I mean, the litigation uncertainty, I think, is going to create a little bit of uncertainty in the trade deal landscape. I think it certainly is not going to stop the process of talks. There's very much a threat that's still outstanding to our trading partners, and so they have to continue talking. But I do think that there's going to be a desire to kind of take a pause and figure out what's going on in some of those cases. Similarly, his ongoing moves to escalate in certain elements of the tariff landscape, I think, complicate those deals. If we're holding out sort of reserving the right to raise the sectoral tariffs from 25 to 50% on steel, in addition to the prospective sectoral tariffs that we're still expecting on semis and pharma and various other things, it does make it that much harder for other countries to agree to anything. Of course, reportedly, these letters have gone out. I guess the White House press secretary confirmed that they've sent out these sort of ultimatum letters to various different countries saying to make your best offer, and then we'll come back and figure out what we want to do.
Yeah.
So if they go through with that, that could bring resolution sooner rather than later.
Yeah, and technically they were supposed to do that by Wednesday, which is today, Tobin. I haven't actually seen any headlines on that yet, but of course we'll bring them to our viewers as soon as we get them. It gets to the point, though, as Washington gets done, and we know Washington likes to sort of, take their holidays in the summertime. If they do sort of get this bill done by, let's just say, the end of June, beginning of July here, are we sort of going to end up in this void with Washington where whatever's left unresolved is basically going to be unresolved until September and everyone comes back in the fall?
I mean, from a legislative perspective, this bill is really the one train leaving the station on major fiscal priorities. It will be the vehicle for the entire Republican fiscal agenda. Whatever's in it will get done, whatever's not in it won't get done. Then they will have the August recess. But even beyond leaving town for a month, the only things remaining to happen are, I think there are some bipartisan areas, for example, on crypto that we could see action. But from a fiscal perspective, they need to keep the lights on. They need to fund the government into FY26. So there will presumably be some kind of stopgap bill in September. But there's not going to be a lot of big, kind of substantive legislation. Like, this really is the one bite at the apple, which is why there's been so much focus on what's in and what's out.
Yeah, absolutely. The stakes are high and the clock is ticking there. I do want to go back to the trade picture right now, and specifically the relationship with China, because before the ADP post on Truth Social at about 2:17 a.m. Washington time, President Trump also posted on Truth Social about President Xi, saying that he likes President Xi of China, always have, always will, but he is very tough and extremely hard to make a deal with. We know that the Trump administration has been pushing for both leaders of both countries to talk directly to one another there, Tobin, but we know that the Chinese delegation doesn't want to do that they would prefer not to have the two leaders actually talk directly to one another. And when you think about the chips as they lie right now, it just seems like we're in a stalemate here.
Yeah, I think a stalemate is a fair characterization of where we are. It's better to have a stalemate at 30% than at 145% tariff rates. But ultimately, there are a lot of unresolved issues between the two countries. And the reason why we're seeing tensions reemerge is because none of these problems was ever solved outside of the tariff space. The Chinese were incensed that we are continuing to crack down on Chinese semis. We've also seen moves to crack down on aerospace, on natural gas liquids, on Chinese students' ability to study in the U.S. And those are all outgrowths of the fact that, across the administration, across Washington, for the most part, China is seen as an adversary, a strategic rival that you kind of need to do things to assert our interests. And so as long as those tensions exist, and they're certainly not going anywhere, it's going to be challenging to truly de-escalate the situation on trade or anything else.
All right, Tobin, always appreciate it. Tobin Marcus, head of U.S. policy and politics at Wolfe Research, as we count you down to the closing bell. Fractional gains for the S&P and the NASDAQ, the Dow and the Russell unchanged on the day. A look at some of the individual movers, and there are some big ones, including Applied Digital. It's our stock of the hour, and it's up next. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but he persistently missed packages. So he scheduled his deliveries from Amazon Business,
Peter, Piper, Big Peppers, run, rock, rhyme, Dumpty, fell down, kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
The average person would rather suffer through team-building exercises than look for insurance. The Zebra searches over 100 insurance companies for you to find savings no one else can. Room for one more? The Zebra. We do the searching, you do the saving.
Bringing a snowboard to a gunfight? That's a Triple X move.
Let's crash this party.
Catch Triple X and Triple X State of the Union now on demand on Pluto TV. Stream now, pay never.
When life gives you lemons,
make lemonade.
No, you don't. You learn to be a good wedge player.
Hey, Golf Pass, I'm Natalie Sheehan.
Chris Como here. Devin Bonebreak here, host of the Golf Fix. Put pressure on the lead leg, you flex the lead leg, and you just move laterally.
It does not matter how much you are slicing. I'm going to help you fix it.
I'm just trying to really visualize how it's going to run when it gets on the green.
All right, let's take a look at our stock of the hour, and it is Applied Digital. The share is rallying about 30% after the AI-enabled digital infrastructure platform, building on that multi-day move on the back of a deal with CoreWeave. Jumping to the highest level in 3 years, options volume also hitting a record as investors buy in, with one analyst expecting around 15% upside for the stock. Those shares, we should point out, a 29% gain. That's the best day for these shares since Monday. Jess Menton joining us right now to talk a little bit more about this. This is a phenomenal rally, and I joke, the shares rallied 40-something% on Monday.
That's right.
They took a little bit of a breather today. Now they're kind of up again. What's going on? I mean, this deal was announced, or we found out about it a few days ago.
Well, now you're seeing more sell-side analysts begin to jump in and boost those target prices. So Needham is one of them, talking about how this would really help as far as bringing in more cash. And also, this is a crucial moment because this company is also trying to transition to more of a data center real estate investment trust. So part of this deal with CoreWeave is supposed to be a big part of that transition because that's a longer term type goal. And there's 2 different periods within this. And so that's really supposed to really help kind of the longer term story for a company like this.
Yeah, it's interesting to see, as you point out, I mean, this is a gain, but it looks pale compared to what we saw on Monday. CoreWeave, I also want to point out, co-founded by a Haverford College graduate.
Oh, wow.
There we go.
You talk about how the company wants to reposition itself, be known as a data center REIT, and it feels like that's the move in this market. Those are the types of companies that investors are rewarding right now.
It has, and especially not even just more recently, but in the last year. I mean, from the spring of last year through the fall, I mean, you would see the utilities sector taking off, but a lot of that, usually you'd think of that more of a defensive type play, but it was more geared toward those data center type businesses. It wasn't like it was sort of the water type tied sub-industry group to utilities that was taking off. And even utilities year to date, I mean, the best performing sector is industrials, behind that staples, but then you have utilities behind that too. But still, nonetheless, a lot of that is sort of that optimism for those data center businesses, but also the IPO front. If you think about CoreWeave too, even since it IPO'd in March, when it came to that pricing, some of it came in a little bit below expectations, but priced around 62. Actually, where it's trading now, I think it's above $162. So actually, it's like a 300% move there in the IPO front. So when you're thinking kind of more of the public market markets as well, so more optimistic.
Well, this is what I'm curious. This is kind of the evolution of that AI trade too. And I see some of the peers. I was trying to find some of the peers for Applied Digital. They also seem to be moved. Some of them are moving on this, Rackspace and a few others. But is this kind of the next evolution of it? So we get beyond chipsets, and into something else?
Well, part of it too is when you think about some of these newer cloud computing type services and how expensive it is to rent some of this out. For CoreWeave, looking at a company like Applied Digital, that's something that's cheaper for them because obviously they're backed by NVIDIA and they want to license. And also when you're thinking about trying to seek some of those chips that are backed by NVIDIA to software developers, this ends up being a play for them as well because that's cheaper. So people are looking ahead to your point, other parts of that AI story, and this is a big part of that.
All right, Jess Menton.
That's a good point,
Yeah, definitely. And great roundup on Applied Digital shares going parabolic. That is Jess Menton with the latest. And Romain, I think it's really interesting that you talk about this data center push, and of course that's what's hot in the stock market right now. It's sort of just turned how we typically think of utilities on its head. Typically, utilities have been seen as kind of a defensive play, but not necessarily in this market.
They've been on fire, no pun intended, and not just to go to the traditional utilities. We talk about all the nuclear power stocks that, I didn't even know about, a few years ago, and now, of course, they're the hottest thing out there.
Yeah, the new shiny objects. Now, coming up, we'll take you to the closing bell with Steve Sosnick, Chief Strategist over at Interactive Brokers. That's next. This is The Close.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Words or less. Join Meredith Vieira and play along to 25 words or less on Pluto TV.
Clever. 14 words, 45 seconds on the clock. Good luck. Okay. Sports change.
Lock them up.
Hi, I'm Meredith Vieira. Watch 25 words or less on demand right here on Pluto TV. Stream now, pay never.
There's this guy. He doesn't care about the law. He only cares about what's right.
I am not a hero because I have nothing to lose.
Who are you, mister?
I'm just a guy who wants to be left alone.
Baby,
He is a controlling, manipulative, cold-blooded killer.
You're not chasing murderers. You're chasing monsters.
Paint the town red.
Time to save the universe again, then, is it?
Absolutely.
We can be partners.
You might try to kill me.
I'm not going to kill you.
I said you'd try.
This is where I start to have fun.
This is going to find Pandora's box. It's a weapon more powerful than you could ever imagine.
It's your destiny to see what's inside.
Classic TV comes home on Pluto TV.
Anybody home?
Catch Gunsmoke and The Andy Griffith Show. Relive the earliest moments in black and white and ride off into a sunset full of color. Timeless TV anytime. Catch Gunsmoke and The Andy Griffith Show anytime on demand on Pluto TV. Stream now, pay never.
When it comes to game-changing innovation, the James Webb Space Telescope is literally light years ahead of the pack. Webb's near-infrared camera captures 5,000 galaxies in one exposure, including images from the birth of the universe 13 billion years ago. 100 times more powerful than its predecessor, the James Webb Space Telescope is revolutionizing our understanding of the cosmos. For more mind-blowing tech, keep watching Modern Marvels on Pluto TV.
I'm on a mission for what's left of the government, and I need your help.
You're looking at the only human known to have survived being bitten by a zombie.
I suggest we run for it.
I had to make lies real, or people would die.
The Agency, Central Intelligence. All episodes now streaming on Paramount+.
10 minutes until the closing bell. Romaine Bostick alongside Katie Greifeld with stocks fading just a little bit here into the close.
A little bit, but the color is still green, and that's important. You can see the S&P 500 up.
Am I supposed to be impressed by 0.07%?
I'm going to round up and say that's a whole 1/10%, Romaine. We are below 6,000 and getting farther away. You take a look at the Russell 2000, already flipping into red, down about 0.2%. That had been your big winner for the past month, fading a little bit. But you know what's winning?
What's that?
It's the bond bulls. The 10-year Treasury yield down by about 9 basis points here. We had an offering of weak economic data this morning from ADP, kicking us off at 8:15, and you can see that's translating into a bid in the bond market.
And then that ISM services data, which was, I think, also came as a bit of a surprise to some folks. And there were a lot of components in that. I think something like 10 of the components were still higher, but you had 8 components and really key components like in retail and in construction and transportation and a couple other things, warehousing, that were effectively going down towards contraction territory.
Absolutely. You add it all together, and you could build a case for getting a little bit concerned here, and it seems like that's what's percolating, at least in the bond market, maybe the stock market, a little bit more sanguine.
All right, well, you're seeing Bitcoin down a little bit here on the day. The dollar back on the weak foot once again here, though the VIX still subdued, back below 18. Steve Soshnick joins us right now, chief strategist at Interactive Brokers here in Studio 2. And let's start off with the bond market, because that seems to be where more of the activity is, at least today. You saw those moves, 9 basis points on the benchmark 10-year, pretty much across the board. We're getting 8 to 10 basis points lower. And it seems like anytime we have major economic news, major trade developments, we see much more volatility and much more of a price reaction in treasuries than we do in equities.
Well, Romaine, I think there's less of the buy the dip mentality in the bond market or sell the rally mentality in bonds than there is in stocks. I think, you know, when I look at the way stocks are trading, it's almost mechanical at this point. If there's a dip, it's got to be bought. If there's a rally, it's got to be chased. Bonds don't necessarily react that way. Bond traders, I guess, are just more focused on, am I going to get paid back or not, or fewer stories to focus on. So today, where you have a roughly parallel shift in the yield curve, that's telling us it's all about economic numbers. The ADP number was surprisingly bad. It's a very imperfect indicator of the jobs number on Friday, but not good. There was no way to spin that as good. And the ISM numbers, I mean, part of it was the prices paid ticked up a lot, but they're not really too focused on that. But so as long as the curves are as long as the moves in the curve, I should say, relatively parallel, that's okay for stocks. We can deal with that. I think if we start to see meaningfully steeper yield curve, particularly in the back end, it's just telling us that foreigners or other investors don't want to buy our biggest export, which is our debt. That would tend to be a problem for stocks.
This gets to the idea too about maybe, and I don't want to call it completely divergence here, but maybe somewhat the disconnect between equities and in bonds. You talk about bond investors, of course, are more worried about just basically making sure they get their money back. For equity investors, it's still about the bottom line in corporate America. That bottom line held up pretty well in the last quarter. I'm not sure how it's going to hold up in the next quarter, but at least some of the guidance the companies gave, or at least the commentary they gave, it certainly wasn't a case for alarm, or maybe it was for you. You tell me.
I'm going to give you a yes, but. I think it wasn't a case for alarm, but we're back at levels where we're back around flirting with 6,000 here. Last time we were at 6,000 on S&P, market was expecting, call it 12, 13% earnings growth for 2025. Now we're talking 6, 7, maybe 8. So so right now that's the fundamentals telling us that they're not as good as they were before, but the stock market not caring. The other thing is we've become momentum junkies. We all have. Every stock trader that I speak to is pure momentum. Here's the problem with momentum. If you're just strictly using prices and trends to guide your trading, which by the way does work an awful lot of the time, but at some point if you take it to extremes, you're just saying, I don't care about the fundamentals. It's going going up, so I'm going to keep buying it. And I see a lot of stocks out there where that behavior is going on. You know, it's not purely, we've kind of, I'm not going to say we're completely divorced from fundamentals, but people are willing to divorce themselves from fundamentals when it's convenient.
Let's talk about a trend that you highlight in the notes you send over to our producers, and that is the fact that you have these pesky foreigners, as you call them, selling overnight. And it is a pattern that I've noticed over the past week, especially that futures tend to fall in the after-hour session, and then you come in and they tend to get bid up over the U.S. day in the cash session. And I wonder what you make of that.
What I make of that is this is the momentum at work, because I put together a little rubric. It's out there on Twitter. It's out there on LinkedIn if you want to find it. Basically, it's facetious, but only to a point. And it was, let the foreigners sell overnight, because I do think money is flowing in general out of U.S. stocks. And then you see sort of around, depends when people wake up, but call it between 6 and 7 a.m., you start to see the futures tick up. And I joke that, people, I think hitting the buy button before they get their coffee or brush their teeth or take a shower or whatever it is they do in the morning. I think first is so you see the futures start to tick up. They sort of move up until about 8:30. Then you could get, today you had a bad piece of news at 8:15 because it's a little off. And then, that was a buying opportunity. And then we kind of churned along until 10 o'clock. Another piece of bad news. Down we went. Up we go again, because that's another buying opportunity. And then, today we're not seeing a lot, at least as far as I can tell, not a lot of buy on the close imbalances, because otherwise you get that sort of rally through the afternoon and then the 350 jump.
Yes, yeah.
Right.
And so, it's a little too easy. When the pattern is that obvious, it lends it, everybody gets sucked into the pattern, and something happens to break it, and I can't tell you what that is. I think it's bond related.
Right. A quick check on the S&P 500 right now, because you mentioned it. We are fading a little bit. The color's still green, but we'll see if that holds for 4 more minutes.
0.02.
Steve, zooming out from the hour-to-hour movement, I want to talk about how you think the rest of this year goes, because in the last few days we've seen a few price target upgrades when it comes to the S&P 500, Deutsche Bank among them, Barclays, and I believe Goldman as well. But we're talking about very small gains, in their view at least. Basically that the rest of this year is going to be pretty tepid in terms of the actual total return, maybe with some volatility thrown in. What's your view? What do you think the trajectory looks like through the end of 2025?
I think the trajectory is going to be a lot more rocky than we've gotten used to, which is hard to say considering we had 20% up and down and up. But I do think, I think now we've sort of settled into a bit of complacency, VIX below 18. Yeah. I think that we're still looking at a lot of volatility. We don't know how the budget bill is going to come out. We have a grand total of 1 trade deal worked out. I'm not going to get into the politics of chickening out, whatever else. But bottom line is, all these things keep getting kicked down the road, but that leads to volatility. And at some point, the market has kind of started to ignore it, which is why you start to see volatility dampened. But I just think there's just too many moving parts going on between the global economy, the de-globalization, what's going on necessarily in China, in China as well. There's too many moving parts for me to just be completely sanguine and say we're going to keep going in a straight line. Yeah. So I think we're going to get some backing and filling.
All right, Steve Soshnick, Chief Strategist over at Interactive Brokers, helping us count you down to the close. We should point out, at least on a global basis, you did see some strength overseas in Asia, and actually that helped to lift emerging market assets as a group here. But back here in the S&P, we are in the green, but only 0.02%.
And a lot can change in the next 2 minutes or so, so we'll have to see. Below
a full breakdown of all of today's market action starts with our global simulcast right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld, taking you through to the closing bell with a global simulcast. We're joined right now by David Gura and Emily Grafeo in the radio booth, filling in today for Carol Massar and Tim Stenovic, who are on assignment. Alex Steele and Scarlett Fu also on. Is everyone on assignment today?
Everyone
anyway, Katie and I, David and Emily are here to break down all of today's market action here. A really interesting day, guys. Fractional gains on the S&P here, but big moves in the bond market.
Yeah, absolutely. And obviously the economic story is so crucial today when we look at the data that we got from ADP and from ISM. I'm also just focused on what we got from the Congressional Budget Office today, indications that the House passed big, beautiful bill, to use the president's term, would add $2.4 trillion to the deficit. Just interested, guys, how that's going to kind of color the job that the Senate has right now as it tries to piece together its version of that legislation, with the president's goal here of getting that bill on his desk by July the 4th, one I think we can call a wildly ambitious goal, but we see the Senate kind of working working at it now, and I wonder the effect that's going to have on them as they kind of haggle over it and hash it all out.
Yeah, David, I mean, you mentioned the weaker economic data. It was interesting that for a lot of the trading day, the S&P 500 was able to climb higher, even though it showed that economic data was weaker. But into the close now, you're starting to see the trade reflect that.
Well, it's funny. It feels like the bond market and the stock market have been talking past each other for a while right now. And Romain, that certainly was the story for the bulk of this trading session today.
Absolutely. So we should point out there are some pretty big gainers, particularly when it comes to the semiconductor space. But you are seeing weakness in other parts of tech, including Tesla and CrowdStrike, Dollar Tree, among one of the biggest decliners here on the day. You've added up all together here, and you basically got a market, let's just say it, guys, really going nowhere on the day. The Dow Jones Industrial Average giving up about 80 points, or about 0.2% as we wait for these numbers to settle. The S&P 500 right now straddling the line between gains and losses, 59.70.84 on your screen. But once again, that number could adjust just a bit. If it stays where it is, that is basically unchanged on the day. The NASDAQ Composite up about 62 points, or 0.3%. Similar gains for the NASDAQ 100. And to the downside, transports, mid-caps, and the Russell 2000. The Russell 2000 down 0.2%.
Romain, as you say that, I'm looking to see sort of how much green there is on the screen, how much red there is on the screen. 241 of the S&P 500, 244, higher than they were at the beginning of the day. 257 of those stocks down, one unchanged. So a real mix in keeping with what you've been describing here, the way that the market is kind of muddled through today.
Yeah, and let's put that in sector terms as well and take a look at this circle right here. You can see there's a lot of green. You have information technology, certainly a big proportion of that. What did the best on the day actually was communication services. You can see that green is a little bit brighter than the others. And then you have some sectors you don't necessarily always see leading also in the green. Materials and real estate. Real estate obviously makes sense with that big bond move. On the downside, you do have energy off by about almost 2% as a total sector. Utilities also in the red in a big way, off by about 1.7%, David.
Let me take you through some of the gainers that I've been looking at today, starting with BKNG, Booking Holdings. I love a Delaware-based holding company here. This owns Booking.com, Priceline.com, Kayak, and the rest. Obviously, we're focused on the way the travel companies are dealing with the economic uncertainty and the kind of contours of the trade war. JP Morgan maintaining it with an overweight, raising the price target there from 53.60 to 6,000, so one that I've been following this afternoon.
All right, one other mover here on the day is Five Below. They dropped about 0.8% in the regular cash session. The share is moving even lower now in the after-hours trade after its earnings just crossed the wire. The company said the first quarter EPS did come in at about 75 cents a share. That is a beat, so that is certainly good. But here's your guidance going forward. For the second quarter, the company says it expects a range on EPS of 45 cents to 57 cents a share. The street on average was looking for 58 cents. So the high end of that range is below the average of street estimates. As for sales and revenue here, comp sales, excuse me, let me just go back to the full year here. They are providing a full year sales figure. Net sales 4.33 to 4.42 billion. That actually, believe it, is actually above its previous guidance that it had given of 4.2 to 4.33. So you add it up all together, you had a beat in the quarter, but the guidance going forward seems to suggest some weakness on the bottom line, though they do seem to be guiding a little bit higher on the top line.
A lot of interest in those trendy fund and affordable finds at Five Below, it seems. Let me turn to another stock I've been watching today, but also over the course of the year. That's Netflix. We saw UBS raise its price target on Netflix to $14.50. UBS citing secular trends and competitive dynamics remaining supportive of Netflix's ability to drive stronger monetization and operating leverage. And just to give a little bit more color here, Netflix up 40%, nearly 40% this year. And I'll stick with companies based on the West Coast. Meta as my last gainer here. Saw a price target hike from JP Morgan a day after a company announced a partnership with Constellation Energy. Talked a lot about that yesterday, but that 20-year deal that it brokered for nuclear power going forward, and I think kind of encapsulates this company's interest, doubled down interest here in using AI and using AI for advertising in particular.
Okay, let's get to some of the decliners. CrowdStrike dropping over 5% today. This is a cybersecurity company that projected revenue for the current period that trailed estimates. They see sales for the second quarter will be as much as $1.15 billion, just slightly missing estimates of $1.16 billion. This, of course, was the first financial update since the company announced it would cut about 5% of its global workforce. Later in the trading day, we also got a headline out of this company that they said the DOJ and the SEC sent inquiries on firm accounting. The firm, though, said that they are cooperating with the inquiry, but that stock, again, down over 5% today. Dollar Tree was another company with a warning out today. They warned investors that their second quarter profit could be down as much as 50% from a year ago as it deals with tariff-related costs. Dollar Tree, not to be confused with Dollar General. Dollar General generates about 80% of sales from food and consumable goods, which are less reliant on imports. Dollar Tree gets almost half of its revenue from those categories. It's more reliant on goods from other countries, so they are more exposed to that hit.
I do want to get to some other earnings. We just got through Five Below. Let's turn our attention to MongoDB coming out with their results. They boosted their full-year adjusted EPS forecast. They also beat estimates. Their first quarter adjusted EPS came in at $1.06. The estimate had been for just 67 cents, so quite a beat there. You take a look at their full-year adjusted EPS. They see it between $2.94 to $3.12. Previously, they had seen $2.44 to $2.62. So quite a big beat there, and you're certainly seeing that in the after-hour movement in the shares, up about 9% at the moment there.
Yeah, this was a much-needed bid for MongoDB. This stock was down 14% year-to-date through today's close, so we'll see how those gains translate into tomorrow's trading session. But just back on the decliners, my last one is not a stock. It's an ETF. Oh. Katie's going to like this.
Go on.
I did this for us. XLE. This is an energy stock ETF. Energy was the worst performing sector in the S&P 500 today. We saw stocks across that sector retreating, along with crude oil prices, after Saudi Arabia is now pushing for more supersized output hikes from the OPEC Plus group of producing countries. Marathon Petroleum, Valero were some of those names that were dropping. And of course, that ETF down, closing the day almost down 2%.
All right, we have to talk, of course, about what we saw in yields, because we came into today, yields were higher, but only fractionally. It looked like we weren't really going to get any real movement in yields, and that changed in a big way right around 8:15 a.m. New York time on the back of that ADP report, and the decline accelerated once we got to 10 a.m. And that ISM services report. We basically went from yields higher to yields lower, down about 8 to 9 basis points between the 2 and your 10-year. And of course, you see that 30-year yield dropping about 10 basis points, a big revision. We should also point out in forecasts in the swap market for what the Fed may do next, pricing in the possibility of at least about 3 cuts this year, potentially, and now potentially more certainty for a cut by September. I do want to turn our attention to another story that was really just burning up the Bloomberg terminal. Have you been following this ship that's just out, apparently just drifting out there in the Pacific Ocean? It's full of electric vehicles. Apparently, it caught on fire. And of course, the crew realized, when you have a fire like that with those lithium batteries, you get the heck out of there. A big incident out there. We don't know exactly which cars are on there, do we? But this seems to be a repeat of what we saw. Remember, a while ago, I think that was, it was a couple years ago, when you had all those ships coming over from Europe, those cars coming over from Europe that sunk.
I will just say, it's important to note that the U.S. Coast Guard did evacuate all 22 crew members, so now we're allowed to make a little bit of fun of the story. There were 800 EVs on this ship, 3,000 cars in total, and a large proportion of them, you guys, were EVs, so there you go.
There's a metaphor here somewhere, but I was struck as I read that piece and had to kind of imagine the ship bobbing about on flames, this conflagration in the open seas. That EV fires can take up to 8,000 gallons of water to cool, so yes, the folks are gone. We can laugh at the circumstances itself here, but really an indication that this is a difficult thing that these shipping companies are having to deal with going forward.
Yeah, and that other big one, of course, that was off the Dutch coast with those back in 2022. Of course, we were all wrapped by that incident as well. All right, guys, that does it for us. We'll let you get back to it there in the radio studio as we wrap up our cross-platform coverage on Bloomberg Television, Radio, and YouTube. And a reminder that Bloomberg Business Week is now on Bloomberg Originals. All 4 of us, or I think some combination of us, will be back same time tomorrow, same place. Thanks for watching. And our coverage does continue here on Bloomberg Television as earnings wrap up. We're going to try to get a better read on the consumer, and we're going to get that from a legend in the retail space, Mickey Drexler, joining us in just a second, right here on The Close on Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
up. It's time to binge on Garfield and Friends. The Garfield and Friends channel on Pluto TV.
Speed Sport 1 is your home for live racing on Pluto TV.
Oh, look at one upside down into turn number 1.
From grassroots to the international stage.
It's gonna happen over the line. Unbelievable finish.
If you're looking for racing, it's waiting for you on Speed Sport 1.
They touched down the back straightaway.
Check out Speed Sport 1 now on Pluto TV.
Her face was unrecognizable.
You got a barrel, you got a body,
You had your man.
Yes, we did. You're not chasing murderers, you're chasing monsters.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
All right, welcome back to The Close. When you take a look at equity markets, particularly the top line of your screen, that really does tell the story. Not a whole lot of price action going on in stocks on this day, but you did see a lot of price action going on in other parts of the market. A big drop in the dollar and a big drop in yields on this day, largely because of that economic data that we got out this morning. A jobs report from ADP, maybe potentially a prelude to what we get in official government data on Friday, and ISM services data that did show some degree of contraction in that space. Remember, services, the biggest part of our economy. Bitcoin also selling off just a tad on the day, as there was a little bit of risk-off sentiment. You take a look here at some of the individual movers on the day. Fannie Mae taking a big leg down about 9%. Remember, it fell double digits yesterday. A lot of concerns right now about the potential to finally release that company from its conservatorship. That might not actually be as fruitful for investors as they would have hoped. The idea that the government may maintain some control. Meanwhile, Wells Fargo, which had actually rallied hard earlier in the day, only closed fractionally down, but a big story there, of course, with the Federal Reserve lifting its asset cap on the company, giving it a chance to grow. Two other interesting stories out there. Guidewire, the biggest gainer in the Russell 1000 here on this day, on the back of its earnings, a beat and raise earnings period. And to the downside, the biggest decliner in the Russell 1000 was Dollar Tree, down about 8%. A company not just only grappling with the potential for a slowdown in consumer spending, but more importantly, still grappling with those tariffs and the uncertainty around it. And that brings us to our top story of the hour, the state of retail and the apparel industry. Earnings season for that group is largely winding down, as this season was of even greater interest for investors amid concern about consumer discretionary spending and the impact of tariffs on the bottom line. Now, we're still waiting to hear from PVH a little bit later. That's the company that operates Calvin Klein and the Tommy Hilfiger brands. But we've already heard from all the others, the Abercrombies, the Gaps, American Eagles, Ralph Lauren, VF Corp. And it was a mixed bag overall, with some brands showing resiliency and others, well, struggling for relevancy. So what separates a winning apparel brand from the rest, especially at a time when consumers are becoming a bit more selective? Well, who better to pose that question to than retail royalty? Mickey Drexler. His creative direction helped to make the Gap and J. Crew the epitome of cool, taking fashion basics and making them feel anything but basic, and he's still going strong. He's now the chairman of Alex Mill, and he recently collaborated with the boutique retailer Henry Lehrer. Pleased to say Mickey's joins us here in the studio.
Thank you very much.
Looking sharp as always.
Well,
when you look at the state of retail right now and apparel, there were a lot of great stories. I mean, we've had some comeback stories for the Gap, for Abercrombie, and a few others. But we're also at a period now where people are concerned about consumer spending, whether they have the money or not. People are concerned about tariffs and how that's going to impact sourcing materials. How, as an apparel maker, do you even navigate in an environment like this?
Well, you know, this is a tough environment. Plagued with unpredictability. How do you deal with running a business longer term when you're not sure short term what the cost of goods will be? And right now, a lot of people are raising their prices because they have to cover the costs, and others probably aren't, but very selectively. For us, for example, we look at every style to see what should go up, what might stay, but I've never experienced what's going on today. And I think, I don't know from consumer confidence reports, but you know, when you read about the news, you watch the news, and it's real news. And even the budget thing, I don't know much about that stuff.
Yeah.
But it's all scary.
Well, let's take tariffs for a second, because we know so much of our apparel right now, to some degree or another, is sourced from other overseas, whether it's the fabrics or in some cases the entire product.
Absolutely.
And it's not just buying from China. I know that's kind of the narrative, but it's, you might get something from China, then it goes to somewhere in Southeast Asia for stitching, it may go to Mexico for something else, for finishing, and then come back to the U.S. for the final touches here. So how does that disrupt the process when you don't know what you're going to be paying on those goods, whether it's going to be a 10% increase or a 50% increase?
Well, it's disruptive by definition. We're looking at prices, say, from China, 37.5% more. And, we're not passing. We're a small player in a big world.
Right.
But, it's just difficult to fly blind. And a lot of us are flying blind right now. I speak to a lot of my friends. Well, anyone. It's not just in the apparel world, toy world. You look at the, and America cannot manufacture clothes. For a number of reasons, they don't do it. The factories in the world are mostly, China's our factory headquarters for everyone.
Hold that thought, because I'm curious about that. And I just want to point out to our viewers, we are getting results out of PVH. This is the maker of Tommy Hilfiger and Calvin Klein. We should point out on the bottom line, they did beat in the most recent quarter, $2.30. Revenue came in above estimates. But of course, the guidance is what's causing problem. The guidance for adjusted EPS for the current quarter, that's going to be lower. The revenue, on the revenue side, that's going to be lower. Why? This is the headline. They says the tariff mitigation actions have not really taken effect just yet, and that the tariff impact will be negative, a tariff impact, in their words, of about $1.05 a share. And you see the reaction in the shares. And I am curious about this idea, Mickey, of what mitigation there is, because you say we're not making anything here. Is it that we don't have the expertise to do it, or is it just too costly to do it? What's holding us back from reshoring things as the way the president wants?
I think, we've had a world economy and a world sourcing, and all of a sudden, in America, it's not that we can't do it. We just haven't done it. And how would you get geared up to become a manufacturer in America? There's a few out there, and we're looking at the very few. But we're not geared to run a company long term with buying. We do all our jeans in America. We do whatever we can do. But you don't get geared up for this. You go to where the best makers are. You go to where the best sewers are, the detail, fabrics. That's the business we're all in. Good products. But I don't know of any business, I'm not an expert on this, where something or other's not made in China.
How much pricing power do these apparel makers have right now, if at all?
Well, when you say the wholesalers, or
I'm talking more. Well, let's start with the wholesalers. I mean, how much can they pass those prices on to the
there's
buyer?
My personal opinion, wholesalers usually inflate prices to their customers, retailers, department stores, because they build in the sale. If you look at what's going on today, the integrity of pricing in America, everything's on sale. Or if you look at TV ads, and 40 off this, 50 off that. And people know that when you give 50%, even the networks, NBC, they have shows in the morning, everything's 40 off.
So does that mean they can absorb some of those costs? Because it's funny you point that out. I'm not going to say which company, but I was looking at a particular clothing item, and I noticed some shenanigans on the pricing on the website. I went, and they had a sale, and then I went back a few days later, and it was a different sale, but the price didn't match up with what they had previously. It was very confusing.
You go online with a lot of companies, you pay less than you do in the shop. That's, if you look at it, the integrity of pricing. I learned as an early merchant at Bloomingdale's, you sell the goods at the same price wherever you buy it.
I want to get your thoughts on the retail model. You mentioned Bloomingdale's. There's been a lot of talk about department stores, or really just multi-line retailers all over. And I mentioned in the intro, you're collaborating with Henry Laird, and obviously this is a much smaller scale store. But is there still a role for the multi-brand, multi-line, consumer-facing retailer?
Well, I have a lot. I'm actually speaking. We sell the multi-brands, our brand. I moved out of multi-brand when I learned that if I couldn't own my products, I can't control the market. And I learned that at Bloomingdale's because Alexander's, an old discounter, would be carrying the same goods as we might on sale. And I didn't know anything but to meet, I was a buyer in a big corporation. I didn't know anything but to meet the prices. And I think that goes on all the time now.
Yeah.
High-low, it's called.
Yeah, but what can they do to fix it? I mean, and the other day I was walking home and I walked past the old Barney's building, which is near the Bloomberg headquarters, which is still vacant. And it was kind of a reminder of kind of what the golden age of department stores used to be. And I know Bloomingdale's is still going strong, and to a certain extent Nordstrom is finding its footing as well. Do you see, though, that it will just have to be maybe one or two big players like that, and that's the only space that will allow?
My friends accuse me of saying that for 20 years.
Yeah.
It's very hard today, if you don't control your products, to protect yourself against a discounter. I always say to people, when you're ready to buy something, before you give the credit card, go online and check the price of that. There's always something out there that you're buying that someone's running a sale on. So what does that do long term to the reputation? Look, when I was a young guy, there were like 30 department stores around. Now the big ones are the dominant ones. We do business with most of them, so I hope they don't get mad at me for saying what I'm saying. But when I went to Apple, Steve Jobs wanted to do, he didn't want to depend upon the big department stores, the discounters in his case.
Yeah, and there were a lot of people that derided that decision when they first made that announcement. They were moving into retail. They were saying this doesn't work, and of course now it's become the centerpiece of who they are.
People deride most good ideas.
Yeah,
you have an idea,
but you were involved in that, and you had a way of sort of looking at what the retail experience is going to be. Now they got it right. At the same time, it has to evolve. When you look at, I don't know if you've been in an Apple store lately, but has it evolved enough?
Well, it's evolved, but Steve, we lost a great person. The stores are pretty much the same way. I worked with him on the design. They're simple. The products speak. So I think the stores are great, and it's a great company, but look at the problems they're going to have. Steve was one of a kind.
Yeah.
I mean, who knows what he would have done had he lived longer.
Yeah. So, and it's kind of interesting, too. We were talking about the other day of Johnny Ive, who's now part of
Johnny and Steve, lunch every day.
He's with Sam Altman now, and apparently they're working on some AI device. I don't know if you're involved in that at all.
No,
but I think about just his design aesthetic that he brought to the computers and eventually to the iPhones and iPads, and that was something that I know is difficult to replicate. And in fairness, and I'm not just trying to gas you up, you kind of fall in that category as well when it comes to dealing with the clothing basics and providing a certain aesthetic that was hip and cool, that was hard to replicate because it was all just up here, wasn't it?
It's all up. You can gas me up anytime.
Okay.
But Johnny and Steve, and you can't do this without the right team. Every day they had lunch in Cupertino. Johnny was, you're right, he did it. I don't think you can learn what they did in school. People say, how do I get to be this, that, and the other thing? There's a DNA, in my opinion, that people have. It's kind of a gift. I interview people with DNA in mind on creativity. You're not born with some, well, you are born with certain skills, as you know.
Yeah.
But, it's, they were a duo like no other.
All right, Mickey, always a pleasure talking to you. Always appreciate you coming in. Mickey Drexler, of course, now chairman of Alex Mill. All right, we do want to take a look, go back to those earnings that we got out of PVH. Those shares moving lower here. The company saying that adjusted EPS for the full year will be in a range of $10.75 to $11 a share. That's below the previous guidance it had given of $12.40 to $12.75. Mary Ross Gilbert joins us right now to break this down for us. And I guess this wasn't a surprise, Mary, but give me some idea here of what they're saying as to why they had to lower their guidance.
Yeah, so Romaine, it's kind of like you said, it's really the tariffs. They expect a $65 million hit, so that's like $1.05, but that's unmitigated, and we expect them to be able to mitigate some of that higher cost, and it will happen in the second half. That's what they talked about. They also talked about in the quarter they saw some headwinds in Asia Pacific. We knew that was going to be off due to the timing of the Lunar New Year, so we expected the double-digit climb that came in there. But as you pointed out, they beat. They beat on the top line, they beat on the bottom line, and most importantly, when we're looking at the guidance, they reaffirmed guidance to be flat to up on a constant currency basis. And when you look at everything that PVH is doing in terms of their Tommy Hilfiger and Calvin Klein brands, we just got this new collab with Formula One. So what they're doing is they have a new APX GP collection, and this is in concert with the Formula One, the movie, and that stars Damson Idris, and he is one of Tommy Hilfiger's.
Well, that should be good. I'm excited to actually see that movie, and I didn't realize that there was that tie-in there with the PVH and Hilfiger. It gets to this idea though too, and I just want to ask you just specifically on the tariff front too, because PVH did say that their tariff mitigation strategies are largely going to be in the second half of 2025. Do you have any idea of exactly what that means? What are those strategies?
Yeah, well, just when you look at all the other apparel companies and what they're doing, they're negotiating with their suppliers, so the suppliers are absorbing some of it. They're also focusing on, hey, where can they save money? It also includes selectively raising prices, so it's not across the board. It will be on items that they feel are, more inelastic. So that's really how they're going to go about it. So I think when I look at the news, I don't think of it as really being all bad. We expected to get a hit from tariffs. I mean, every single company is being affected.
So kind of wrap this up, Mary, and I don't mean just with PVH, but overall, I mean, we're basically through the apparel retail earnings season. I know we still have Lululemon coming on Thursday here, but was this overall in line with your expectations?
Yeah, I would say in line to better in many cases. There were only a couple of companies really that had a miss or were disappointing, and usually it was due to some execution issues. But other than that, I would say across the board, it was kind of as expected to maybe even better in some cases.
All right, Mary, always appreciate you taking time. Mary Ross Gilbert over at Bloomberg Intelligence. A closer look at the breakdown of retail earnings, specifically with PVH just crossing the wire. Those shares are moving lower on the day. And just a reminder, we also are going to get Lululemon earnings on Thursday after the bell as well. So a closer look there at a different side of the retail landscape. When we come back, we're going to talk politics. We're going to talk policy. Daniel Tannenbaum, partner over at Oliver Wyman and a senior fellow with the Atlantic Council, is going to share his thoughts on President Trump's call with Vladimir Putin and what it could mean about imposing new sanctions on Russia. You're watching The Close on Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
We beat up that beat. GTL, baby. Kim Tan Laundry.
We are here to blow this place apart. I don't know how I'm alive.
Watch the Jersey Shore channel now on Pluto TV. Stream now, pay never.
He is a controlling, manipulative, cold-blooded killer.
You're not chasing murderers. You're chasing monsters.
Paint the town red.
anybody still in here?
What's that? There's movement over there.
We're not here to scare you.
What is that? I think something's investigating us.
The most amazing season of Ghosts is on Paramount Plus.
This is the most amazing sight I've never seen.
Ghosts. All episodes now streaming on Paramount Plus and returning CBS Fall.
Our President Donald Trump spoke to Russia's Vladimir Putin in a phone call earlier today, according to Trump. Putin warning the president that he would retaliate for the Ukrainian drone strike on Russian airfields over the weekend. Now, this all comes as more than 80 senators have signed a bipartisan bill to impose new sanctions on Russia, testing Trump's appetite to punish Putin. Joining us right now is Daniel Tannenbaum. He's a partner at Oliver Wyman and a senior fellow with the Atlantic Council. And of course, you specialize in sanctions, so perfect person to talk to. I want to start off first with this phone call that we heard about earlier today. Obviously, we don't know all the contours of the detail. Other than that, Putin apparently, I don't know if he's going to strike Ukraine in retaliation, but it did seem like that was part of the conversation.
And that he doesn't want peace. So President Trump has actually cleared a lane somewhat for the Republicans to put this, what should be big, beautiful bill on the floor of sanctions on Russia that they've been reluctant to move on for fear of what the president's reaction would be thus far.
So does this give them cover then to move that forward?
I think it does, because the whole point of these sanctions, and actually the language even in the bill, is if it seems that Russia is not willing to negotiate, then the president should impose X sanctions, and it lays out what he should do. This gives him cover of, well, he doesn't seem like he wants to negotiate. Businesses are not exactly clamoring to get back into Russia. Now, there has to be some thoughtfulness here because it imposes a 500% tariff on any goods coming from countries that continue to buy things from Russia, which includes Europe and India and China.
About to say, I was like...
so there's carve-outs that are being contemplated, but I think this does give the president some air cover.
I mean, we mentioned all of the Republican support for this. Is this going to be a veto-proof bill, though?
Right now, 82 senators have signed on to this bill, which is a veto-proof majority. Speaker Johnson in the New York Post yesterday was quoted saying he's supportive of sanctions, so signaling that the House could move on this as well. So you're really seeing a big push, especially off the back of Senators Graham and Blumenthal's visit to Kyiv this past weekend, coming back saying we have to put more pressure on Russia.
I am curious about how much pressure can be applied, and maybe you could kind of walk us through, because I've kind of lost track of saying, when I hear like new sanctions on Russia, I think, okay, well, like what more is left to actually sanction?
Oil. There's still oil and gas purchases.
But they made it clear they don't, in the past, that they really did not want to do that because there would be dire economic consequences, not for Russia, but for the folks buying it.
The last administration was hell-bent on ensuring no adverse impact on the energy markets. This administration, as we've seen, may not be as fond of looking for unintended consequences, which could play to the advantage of further punishing Russia. So there are more revenue that can be attacked on energy. There's still raw materials in the form of uranium and other minerals that are purchased from Russia, so continuing to deprive them of that capital, there is more that can be done there. There's also countries that are supporting them militarily in Ukraine, like North Korea, which have supplies from other countries like China. So there's other countries you can begin to put pressure on to try and further isolate Russia.
Has Russia's hand gotten weaker in all of this? Because, I mean, coming into this presidency, U.S. administration, the general consensus was that Putin would have the upper hand given his relationship with Trump, however you want to interpret that.
The defense sector is keeping the Russian economy afloat. So this war is essentially funding what is perceived as the growth of the Russian economy at this point. It's hard to say who has a weaker hand. Certainly the Ukrainians, between destruction of the bridge in Crimea and their successful drone attack almost 3,000 miles into Russia this weekend, certainly showed that they still have some cards left to play. But he is still weakening the longer this goes on. The Russians are losing more revenue with every passing month in the energy space.
But then at the same time, and amidst all this, there was the reports that the U.S. would not provide air cover support for Ukraine should there be some sort of peace agreement, which seemed like basically saying, look, you're going to be on your own one way or the other.
It's pretty unclear where this administration really stands on Ukraine. On Russia, anytime there's a negative thing said about the Russian government, there's a both sides thing talked about Zelensky and the Ukrainians. This administration has continued to provide some degree of support, but it's certainly been limited. They actually have done some things in terms of increasing pressure on Russia in March, allowing an energy trading waiver to expire that essentially banned certain oil trades with Russian banks. The president also extended a Biden-era Russia sanctions package in April to to no fanfare.
I am curious, in about 10 or 11 days, the G7 leaders, at least, are supposed to meet in Alberta, I believe, in Alberta, Canada. I assume this is going to be a big topic of conversation. Do you think that there's any chance there will be any sort of consensus?
I think it's becoming clear, especially as you see the Republicans in the House and Senate begin to speak out a lot more publicly on their views, that the president realizes he has the air cover to actually pick a side, and that side might not be Vladimir Putin. I think we are seeing movements in that direction. There really wasn't much publicly said, certainly not by Speaker Johnson, and very few senators were speaking out beyond Senator Graham. The support is there to punish Russia. Now, this Congress has said it won't do anything without the executive branch. There is a precedent where in 2017 they did pass sanctions and made them veto-proof. I think it was 98-2 in that instance in the Senate. So there is a chance that the Senate could move without the president's blessing. I'm not sure if that'll actually happen, though.
Yeah, and I mean, they got to first deal with this budget bill, and then I think after that, they all just want to go on their 2-month summer holiday. Final question, and this is just a little bit of a pivot away from just what's going on with Russia, and it's really just about the whole tariff strategy overall that Trump has deployed. And I know we've got so many deadlines coming up, but I do wonder, particularly with some of the clients you deal with, how they're navigating that. And I know this doesn't sort of fall into the category of sanctions, but it does fall into the category of how you do business in a global economy where you have no idea if the rules are going to be different tomorrow versus today.
Look, you had Mickey just on talking about this. I got a note from my girls' camp that the slides that they were supposed to get for the showers are not showing up because of supply chain issues. I mean, my daughters tried to buy bathing suits and saw massive tariffs on the e-commerce portals. This is having a real impact on American consumers. And that uncertainty makes it impossible for companies to pivot accordingly because they don't know where that policy could go next.
All right, Dan, we've got to leave it there. Always love talking to you. Daniel Tannenbaum is a partner at Oliver Wyman and senior fellow with the Atlantic Council. All right, we want to stay on the topic of trade because the U.S. Trade Representative Jamieson Greer is now saying the talks with the European Union are advancing quickly. Now, the EU's commissioner told Bloomberg Surveillance earlier today that retaliatory tariffs could be on the table without a mutually beneficial agreement. Here's what he had to say.
From European Union side, we are willing to find a mutually acceptable solution with United States as regards the tariffs, also to put an end to this uncertainty and to avoid further also global economic fragmentation. If we are not able to find mutually acceptable solution, we are ready also to put those counter tariffs in place.
Vladis Dombrovskis talking a little bit earlier today, and we should point out that alcohol distributors are also caught in the crosshairs, with China using a brand levy to bring France to the table. For more on how tariffs are impacting the world of alcohol, let's bring in Marvina Robinson. She's the founder and CEO of the champagne brand B. Stuyvesant. She imports her champagne directly from the Champagne region of France, as the name implies. Great to see you again, Marvina. I hope to one day talk to you under much better circumstances, but I think the last time we spoke was right around Liberation Day when we were starting to see these tariffs at least be announced. And I know to some degree a lot has changed, to some degree nothing has really changed. And I am curious as to, are you still anticipating that you're going to have to basically pay more to get your goods into the United States?
Well, post our last time speaking, I did pay my first tariff bill about like 2.5 weeks ago. I have not passed that fees on to my consumers. Being that there's still discussions, I don't want to have yo-yo with my prices. And it is a little roller coaster trying to decide what the prices are going to be because the tariffs change daily. my opinion, right? 1 minute it's, okay, this is going to be the price. This is the threat. When we started with the 200%, then on Liberation Day we got 20%. Then we got, oh, we're going to pause it for 3 months. Now we're at 10%. But if conversations don't go right, there's always a threat of where the tariffs can go. So me as a small business owner who business is really based in Europe, it's hard to really plan, especially for quarters, what's going to happen with as far as inventory. I try to keep my inventory high because I did pay my tariffs to get shipments over here just in case things change. But I normally don't move as much inventory as fast.
Now with champagne, I would think, I mean, just correct me if I'm wrong, but you can kind of keep that in inventory on ice,
yes, as long as you,
for a long period of time,
you have to properly chill it.
It doesn't necessarily expire, right? It's not necessarily
perishable.
perishable.
No, about 4 or 5 years. If you're in a good warehouse, no, it's not direct sunlight.
Okay.
You know, so we have that. But for me, my business is based on fresh disgorgements, which we used to do quarterly. Now with the tariffs, I'm in the process of moving inventory up faster, just in case something happens, and I don't want to get stuck in the crossfire.
How are you able to move things forward? I mean, because obviously this is still dependent on just the normal agricultural cycle of when things are harvested, and obviously the whole process to make champagne takes some time. So is there an opening, like when you see, okay, tariffs are on pause, can you sort of hit a button and say, okay, give me everything I need right now?
So when we first got introduced with tariffs, and this even started from last year, I always have inventory semi-prepped and ready to go, right? Because it's also transportation. You have to get a boat slot and schedule. So when we first started conversations, I started to do a disgorgement so that when it's time, when it's ready, when we get a break, okay, let's move the inventory. When there was a threat of the 200%, everything was put on pause because once it's on the water and it imports into the States, I would get hit with the tariff if it was at 200%. Obviously, I'm not going to pay that. So when we got the notification of 20%, I said, okay, we have shipments, pallets ready, let's move this.
Sorry, just to be clear, so when we talk about the tariffs that you have to pay on the U.S. side, that's based on when it hits the U.S. port or when it leaves the port over in Europe?
Once it hits in Europe, in the U.S., we'll get the notification.
So you can basically have your ship in the middle of the ocean and then find out that you're going to pay more for that shipment than what you thought. What are shipping costs themselves like right now? Have they been affected by all of this?
The shipping prices are kind of semi-standard for me. I haven't seen a jump in that, but what happens is as we get more congestion, like towards the end of the year when it's peak time for champagne imports, prices do go up. I have not seen any price differences yet, so I'm really glad about that. The only major difference I have right now is the tariffs.
I am curious about the consumer side of this. There's been a lot of talk about whether consumers are pulling back, and particularly on discretionary goods. And let's face it, for champagne is a discretionary, for most people, discretionary good. I'm sure some people,
not for me. No.
Some people it's a staple. But it gets to this idea: are you seeing any pullback that people just maybe are saying, I'm just not going to buy the bottle of champagne, or I'm going to buy a cheaper bottle somewhere else?
There has been a mixed feedback. A lot of my customers have sent in emails like, we're still here, we're supportive. I've been gracious enough to actually break into the Texas state industry, so I'm happy about that. We got picked up with a new hotel, a new private club. I think it all becomes down to each person's individual. Even myself, like I'm a shopper of champagne as well, and you know, I look to see what prices have changed, where I know what prices are, to see if any have changed. I have witnessed prices have increased on other brands. But for myself, you know, like I also, you know, I take heed as anybody else.
I am curious, do you think consumers will notice if you just bump the price up a little bit? And the reason why I ask is I feel like there are certain products out there that as consumers, we know exactly what they cost every day. And so I know if I go into the store and it's $1 more, I'm going to notice it. I have to say, I buy a lot of wine. I might not actually notice if that, you know, $50 bottle of wine is now $53 or something like that. And, you know, I'm not trying to be sneaky, but is there a way that you can pass the cost on to consumers in a more incremental way where it's not going to really shock them?
Well, I've sent out notifications to all of our clients and customers that with the pending tariffs, you know, you might see an increase coming in the near future. We haven't done it as yet, but when I do, I want to be crystal clear. There will, you know, I will send out notification. And if we did have to do a price increase, I'm going to try to keep it as low as possible. Like you said, a $3, $4, $5. I'm not going to just go to like 10,
But you want to
15.
be transparent about it. You want to say.
I will be transparent about it.
And
yes.
you're not worried. I mean, I don't want to get political, but you're not worried about backlash. We've seen, of course, the president go after bigger retailers who have basically said our prices are going up, and it's specifically because of the tariffs.
I'm not worried about it because I want to be fair to my customers, and I want them to know why we're doing so. And that's the reason I'm not worried about it because I want to be fair to my customers, and I want them to know why we're doing so. And that's the reason why.
Do you think And I mean, I hate to look at a worst case scenario, but do you think there could be a point if this tariff situation isn't sorted out that you would just have to stop importing altogether? No.
I will be, part of this also is based in the U.S. I also decided that I need to break into other markets in case these tariffs do become a serious problem so that I can still keep my business running.
All right, Marvina. Well, I appreciate you coming by to check in with us, and we'd like to check on you again some point in the future.
Yes.
Wish you the best of luck. Marvina Robinson there. She is the owner of B. Stuyvesant Champagne. All right, let's take a look at how markets closed here on the day. Fractional gains, and I use the word gains very loosely here. The S&P 500 just barely poking into the green. You did see the NASDAQ Composite and NASDAQ 100 higher by about 0.3%. The rest of the equity space was in the red, including those cyclicals, which had big outperformance yesterday. But the big action was in the bond market and was in the dollar. The dollar back on the back foot with the BBDXY back down to 1209, and your 10-year yield dropping almost 10 basis points to 4.355. 5.2 and change. This is the close on Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Slow down, honey.
Ah, a new driver. You'll need new insurance. Zebra compares over 100 insurance companies to find savings no one else can. Up to $400 a year.
Trevor!
Oh, look, it's my stop. The Zebra. We do the searching, you do the saving.
Anybody still in here?
What's that? There's movement over there.
We're not here to scare you.
What is that?
I think something's investigating us.
All right, welcome back. Taking a closer look at markets and taking a closer look at animal spirits that may just be alive and well in the IPO market. The stablecoin issuer, Circle, now has an impending debut and is now expected to price above the market range. We're on watch for that right now. It could cross the wire at any minute right now. Let's bring Katie Roof into the conversation, who's out in our West Coast bureau. And Katie, I mean, this is, I'm taking a look, $27 to $28 per share. That is the range that they were marketing at least according to Bloomberg sources. Any additional information, any idea if they're going to hit that?
Sure. So according to Bloomberg reports, it's going to price either at the top or above the range, which usually indicates strong demand. So, it's a good sign for Circle, and it's also part of a pattern we've seen recently with, the recent tech IPOs pricing at or above the top of the range.
Absolutely. I mean, we talk about eToro going public was a couple weeks ago. A couple others I'm sure I'm forgetting. I mean, this is also a big test of appetite just for the crypto space overall. And I can't remember, you can kind of remind me, I can't remember the last big crypto-related IPO that we had. I mean, this is a pure play here. And I am curious, given all the bounce up that we've seen in Bitcoin and some of the other major tokens, as well as just the general attitude right now in Washington towards the crypto industry, there's a possibility this could be successful, right?
Yeah, and so, eToro, as you mentioned, crypto is part of what they were doing, but, you're right, this is purely crypto. It's different than Coinbase, which was one of the bigger IPOs, or really they did a direct listing in recent years. Rather than being a crypto exchange of all sorts, Circle is more focused on stable coins. They are largely connected to USDC, which is a stable coin that moves in tandem with the US dollar.
When we talk about this idea of what the appetite would be for this, and I know there are a lot of people that have looked at this idea of the stable coin and kind of said, well, why would I need to buy, as an investor, buy into Circle? What's going to be the uptake for their stable coin, particularly given that there isn't a big moat around this. I mean, you have Tether, which is already out there. There's been a lot of talk that at some point in the future, you might even see big tech companies, big retailers even move into the stablecoin space as well.
Sure. I think the key is that a lot of people like to diversify their investments. And so I think that, the Circle or crypto in general is just one way to do that. I mean, certainly we've seen, different types of crypto investments. Some have, ridden a wave and then crashed and then come back up. So it can be more volatile. But supposedly the stable coin appeal is that it could be more stable.
Yeah. And speaking of that demand, I was just kind of taking a look at the reporting, and I guess based on what we learned out of the filings here, ARK Investment, of course, the empire run by Cathie Wood, planning to buy, or interested, I should say, in buying about $150 million of the shares from the IPO, and BlackRock, which of course has a big reason to buy this, 10% of the IPO shares, according to people familiar with the situation. That's not insignificant, and if BlackRock says they need 10%, that must mean they're seeing demand on the other end of that side, on the other end of that equation.
Yeah, I'm sure they have good visibility into what demand looks like. I think this is part of a broader trend, not just with crypto, but tech in general. For a while, there weren't a lot of tech IPOs, but the few that have gone in the last year or so have actually mostly done well. And so I think what large institutional investors are looking at is that, they're buying at the IPO and they're seeing that those tech IPOs are making them money. And so for now, it looks like the window is open for tech IPOs.
So what's the appetite then? When we talk about this idea, and we knew that all these companies were it was kind of that pent up demand, basically coming off that weakness that we saw out of last year. So when we talk about the runway of what's out there, Katie, is there still a lot more that is going to potentially come out of this fire hose at some point? Or have we kind of gotten the gist of what's already out there?
So we have Chime, which is coming up. That's a fintech neobank. But, actually, other than there's Discord and Figma that are considering going later this year, but there actually aren't that many venture-backed IPOs likely for this year. A lot of them are still very spooked about the tech correction of 2022, but the reality is we have 1,000 unicorns. It's 1,000 private companies that have yet to go public, and they have to do something to provide some sort of returns for their investors. So we may see a lot more at a later date.
All right, and we should point out to our viewers, they have just updated their S1 filing here. That's just crossing the wire here on the Edgar database here. Not enough time to really parse through it here, but of course we will break that news right here on Bloomberg as soon as we get it. Katie Roof out there in our West Coast bureau as we await potentially the newest IPO, and that would be the stablecoin issuer Circle. That is going to be one of the things to watch for overnight and into tomorrow. We're going to also fill you in on some of the other things to keep an eye on when we come back after the break. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but he persistently missed packages. So he scheduled his deliveries from Amazon Business.
Peter Piper picked peppers, but rhyme, Dumpty fell down.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
Three, 2, 1.
Let's do this.
Okay, we're up and away. To not coming last. Ow!
Oh man, that was
All right, let's push ahead to the next 24 hours. Some of the potential market-moving events to keep an eye on, and that includes earnings. Before the market, one more read on the consumer, and this time in the restaurant space with Cracker Barrel, set to report earnings before the bell. Now, after the bell, we do get a continued read on the consumer, but this time on the retail front. I want you to pay attention closely to Lululemon because that, of course, has some outsized effects when it comes to discretionary spending and, of course, when it comes to tariffs. We're also going to get earnings out of Petco, and we're also going to get earnings from the tech space as well. Broadcom is set to report here. Remember, this is also a chip story. It's also an AI story, and it's going to be an interesting setup, of course, heading into Apple's big Worldwide Developers Conference on Monday. Meanwhile, on the economic and trade front, we should point out that the ECB is scheduled to make a rate decision 8:15 a.m. Eastern time. They have cut rates 7 times this rate-cutting cycle. Be interesting to see what happens from Christine Lagarde in the morning. Meanwhile, we'll also get a read on the U.S. trade balance, and of course, we know where that's been going. It will be a big focus on imports and whether those imports have continued to decline. 8:30 a.m. Eastern, team surveillance will be all over that. And tomorrow, the start of the NBA Finals. Unfortunately, the New York Knicks won't be in it, but it'll be an interesting matchup between 2 mid-market teams. All that and more coming up a little bit later right here on Bloomberg. Stick around. Balance of Power is up next.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
there's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
part of summer is getting to fire up the grill and cook outside. Oh yeah, beautiful. This season, we've tracked down folks who are growing, harvesting, and making the best the South has to offer, and turning their goods into delicious summertime feasts.
Oh yeah, babe. Welcome back to Emerald Cooks Summer Grilling. Oh yeah, look at that, folks. Cheers.
Let the good times roll on the Emerald Lagasse channel on Pluto TV. Stream now, pay never.
Welcome to Wow, an hour of power.
Let's get it on. Force of nature.
Hi, Pluto TV. I'm Xena Phoenix. Catch WOW Women of Wrestling on the WOW Women of Wrestling channel on Pluto TV. Stream now, pay never.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Welcome to Balance of Power on Bloomberg TV and radio. Alongside Kaylee Lyons, I'm Joe Matthew, coming to you with some developing news tonight from the White House.
Happening as we speak, Republican senators sitting down with President Trump, discussing his one big beautiful bill, capping off a day of whiplash headlines, putting Washington and Wall Street at an inflection point.
Elon Musk tonight doubling down on his opposition to the bill, urging his 220 million Twitter followers to call their senators and congressmen, writing emphatically, kill the bill.
The tweet coming only hours after the Speaker of the House said he flatly disagreed with Musk. And after the Congressional Budget Office projected $2.4 trillion could be added to the deficit as a result of the mega bill.
Now, one by one, lawmakers like Marjorie Taylor Greene are stepping up against the legislation. Why? Because they never read the full bill and its various provisions. Joining us now with the latest as those Republican senators continue to meet with the president as we speak, Bloomberg's Eric Wasson covering things on the other end of Pennsylvania Avenue. Eric, what's the latest?
You know, I think the CBO score really was an interesting mixed bag here. $2.4 trillion in deficit increases. 11 million people would lose health insurance. That's certainly a major talking point for Democrats attacking this bill. On the other hand, CBO released a separate score saying if Trump's tariffs were in place for 10 years, that could raise $2.8 trillion in revenue. Republicans are out there saying that this will help pay for the bill. Of course, that assumes they remain in place for 10 years. Trump himself has said they're a negotiating tactic and would go away. So interesting on that front. On the wider political front, Elon Musk is really doubling down his attacks on this bill. Republican senators are showing a strong, brave face in the wake of that. Kevin Cramer of North Dakota saying if Elon Musk was going to tell me how to go to the moon, I would listen, but he doesn't get a vote. They're basically saying, you know, they are serious policymakers. They're going to make their own decision whether or not Elon Musk issues threats or threatens to, you know, spend money to primary them or not.
So let's talk about the decisions that could be being made as we speak inside the White House, Eric, as the majority leader has suggested there may need to be some adjustments to the SALT cap, for example. But the Senate Finance Committee members who are sitting down with the president right now aren't just in charge of changing tax policy, but potentially Medicaid as well. What could realistically emerge here?
You know, the big goal of Leader Thune in the Senate is to expand the temporary business tax breaks that expire after 5 years in the House bill. This is, you know, on depreciation, interest expensing. That will cost hundreds of billions of dollars. So they may need to find additional savings in places like Medicaid. There was even talk in Senate lunch about looking at waste, fraud, and abuse, as it's called, in Medicare, which would be, you know, sort of a third rail potential topic. So there's an ongoing conversation about that. But on the SALT cap itself, you know, there's a real sense among Senate Republicans they're going to reduce that $40,000 SALT cap that was in the House bill, sort of a necessary item to get 4 key swing district Republicans on board. But those Republicans themselves are telling our reporters this is going to cause a massive problem for them, and they will kill the bill in the House. So we'll see if they actually tweak the cap itself or find some other workaround, perhaps an income limit to sort of satisfy and create a compromise there. But there are going to be tweaks. We're expecting a new draft of the tax provision at the end of next week.
All right, Bloomberg's Eric Wasson live on Capitol Hill for us. Thank you so much. And today on the early edition of Balance of Power, we spoke with someone else on Capitol Hill, Republican Senator Bill Hagerty of Tennessee, and asked him what he needs to see in the bill to vote yes.
If we don't get this done,
Americans are looking at a north of $4 trillion tax increase. I was talking with Kevin Hassett at the White House yesterday. His projections are that that would yield a 6% decrease in our nation's GDP. That would be terrible for America, frankly, be terrible for the world economy. We can't let that happen. The main interest I have is making certain that we stimulate more capital investment in America, because more capital investment will beget more jobs, more economic activity. This will have a very positive impact on the economy, and frankly, it's something that the Congressional Budget Office completely misses in their analysis. They missed it at an incredible level back after the 2017 Tax Cuts and Jobs Act were passed. In fact, they missed it by north of $1 trillion worth of revenues. So I think that my colleagues need to certainly take into account the fact that this is a pro-growth bill. This tax package is going to stimulate more economic activity here in America. We will see growth that's not captured in these CBO estimates, but will have a material impact on our economy, on our well-being, and frankly, in terms of going the right direction to reducing the deficit.
Well, Senator, we've got a lot of questions about what's inside, and it's great to have you back on Bloomberg. You mentioned the CBO, so I do have to ask you about that. Two big headlines today coming out of the Congressional Budget Office. First, the Republican tax bill that cleared the House, they say, would add $2.4 trillion to U.S. deficits. But that same Congressional Budget Office, which I know Republicans criticize a lot, is now projecting that Trump tariffs will cut the budget gap by $2.8 trillion. Do you buy that number? And if so, is this bill paid for?
Well, in the first case, what they do is static analysis. They don't take into account the dynamic of investment in the economy that will yield growth. So I think that's patently wrong. And the second, with regard to tariff revenue, it's possible, but we're not nearly to the end of our trade negotiations.
You can find the full conversation with Republican Senator Bill Hagerty of Tennessee online or on the terminal, as we now hear from the other side of the aisle on Balance of Power and bring in Democratic Senator Peter Welch of Vermont. He's a member of the Senate Finance Committee, and it's great to have you back, Senator, on Bloomberg TV and radio. I'd like to start with the CBO, since we were just talking to Senator Hagerty about that. It is quite the dual headline today. The tax bill would add $2.4 trillion to U.S. deficits, but at the same time, the CBO is estimating that Donald Trump's tariffs could cut the budget gap by even more, $2.8 trillion. So will tariffs pay for the tax cuts?
No, I mean, I actually see it exactly the opposite way. It's $5.2 trillion that is essentially going to be added to the deficit. Here's how, okay? The CBO says it's a $2.4 trillion deficit buster right now. The tariffs, the question on tariffs is who pays. Are those paid by foreign governments? That's essentially what President Trump is asserting. But when I talk to folks, farmers, they're paying 25% more for their fertilizer. When I talk to steel manufacturers that use steel, they're paying 50% more. So that revenue is a tax that's paid by our businesses and by our consumers. And you're seeing the president trying to shield that by telling Walmart to eat it. They're not going to do it any more than any other supplier can. So that's really bogus. Everybody knows we're going to pay those tariffs.
Well, as we consider the way in which tariffs, Senator, factor into this revenue picture, knowing there could be revenue lost as a result of these tax cuts, it is worth noting that taxes are not the only thing in this one big, beautiful bill. It also is intended to raise the debt ceiling by $4 trillion, at least the version that passed the House. And President Trump today suggested the debt ceiling should be abolished entirely, actually saying he agrees with your colleague, Democratic Senator Elizabeth Warren of Massachusetts, who we spoke with about that earlier today. This was her live reaction, sir. Let's listen together.
I think that Donald Trump and hey, listen, I'm ready to join up with him and make that happen. We need to get rid of the debt ceiling altogether, not extend it, not say, ooh, while this is going on, this budget negotiation, let's just roll out a few $1 trillion more in the debt ceiling. Nope. That has gotten us into trouble before. It continues to get us into trouble. Donald Trump is right. Let's get rid of it altogether.
Is this an effort you too would sign on to, Senator?
You know, I think the debt ceiling is a bit of a sideshow here at this moment. The question really, with or without the debt ceiling, should we be raising the debt by $2.4 trillion when we're going to pay for that by kicking 16 million people off of health care on the Medicare program, where we're going to make folks who are on the Affordable Care Act lose it because they won't be able to afford it, when families that depend on nutrition benefits in the SNAP program are going to lose that. So, you know, what I see see here with the economic policy of Trump is, one, tax cuts that are not going to be pro-growth. I do disagree with Senator Hagerty. Two, a deficit that is going to result in higher interest rates. It means higher car payments for folks, higher cost of mortgages, and of course, any businesses that want to borrow money are going to pay more. So what I'm concerned about is not the policy of the debt ceiling. I'm concerned about the policy of fiscal policy of increasing the debt that's going to increase our interest rates and doesn't go into any productive pro-growth activities.
Senator, I know you're joining forces with the aforementioned Elizabeth Warren on an inquiry into Republicans' effort to use something called the current policy baseline. Our audience here on Bloomberg is pretty familiar with it at this point, and it essentially sets the baseline for this entire construct when it comes to how to pay for these tax cuts. You're arguing it amounts to magic math and a sleight of hand. This was back in February when the inquiry was launched. What have you come up with?
Right. This is a political debate where the proponents of the tax cut are trying to make it appear as though it's not going to result in a deficit by doing essentially magic accounting. I mean, the bottom line here is we should have an on-the-level debate. The CBO says this will add $2.4 trillion to the deficit. So the question is it worth it? What are we going to get out of it? Who's going to win? Who's going to lose? That's really the heart of this question.
Well, as we consider the CBO score, not just of this bill, but what you were speaking about a moment ago, Senator, they're scoring on tariffs as well, who ultimately will bear the cost of them. I would like to ask you, given you were just part of a congressional delegation to Canada over the Memorial Day recess, about Canada in particular. As earlier today, we spoke with Danielle Smith, the Premier of Alberta, and this is what she had to say about the prospects of trade negotiations going well between our two countries.
In Canada, there's optimism. I just this week met with my counterparts, the 13 premiers, as well as the federal prime minister. And because we've got G7 taking place in the coming weeks in my home province of Alberta in Kananaskis, I think that everybody's hopeful that it would be really nice either just before or during or just after to announce that there has been some kind of détente or interim step towards getting to a comprehensive renegotiation of trade.
Senator, did you leave your trip to Canada feeling like they are ready to make a deal? And do you think the same of the Trump administration?
Well, the tone that I just heard is the tone I heard there. They regard themselves as our closest allies, and I regard us as their closest ally, especially those of us like Kevin Cramer, North Dakota on the border, me, Vermont, Senator Shaheen on the border. But the reality is there was really significant heartburn on the part of Canadians with the 51st state discussion, the Governor of Canada discussion. And what is happening right now is our farmers, like in Vermont, they're paying 25% more for their fertilizer. In their tight margins, they can't make it. Our tourism is collapsing with the Canadians. Senator Shaheen mentioned that the manufactured products that used to be going to Canada from New Hampshire are really way down. So the real world impact of these tariffs is affecting business. The other thing that's really problematic is the president has changed his tariff policy 22 times already. And what I hear from businesses, we were down at Orvis in southern Vermont, there's no way they can plan with this constant situation up and down. The business folks wake up and they look at the news or they try to find from whatever source they can, what are our tariffs today? And folks who have products coming in on a boat, they don't know whether to accept delivery because of the ever-changing nature of these tariffs. So the chaos is really tough.
Well, if in fact we are on track to some progress here, Senator, just to get back to the question, is there any chance you could see the framework of a deal or something more robust around the G7 in the weeks ahead?
You know, the reality is none of us know. You know, I know as much as you know. So we ask somebody and we get the latest information. We read what's on the news and what's on the blurs. But the fact is, there's been no coherent policy that has been sustainable. That's the constant changing. So In truth, none of us know. And it's not as important that I know. It's really important that a farmer knows. What are they going to pay for fertilizer? It really is important what a manufacturer knows what they're going to have to pay for steel or aluminum. And stability is so essential. And it doesn't matter whether you're a Republican business that might have voted for President Trump or you're a business where you voted for Harris. The bipartisan nature of this policy is to inflict pain on everyone.
All right, Senator, we appreciate you joining us. Democratic Senator Peter Welch of Vermont, thank you for your time. And we still have a conversation with the senator's Republican colleague on the Finance Committee, Senator Roger Marshall of Kansas, coming up live from the White House following the ongoing meeting with the president. But up next, President Trump's call with Vladimir Putin, the retaliatory strike that Putin vowed to carry out, and more as a potential ceasefire deal moves further out of reach. That's next on Balance of Power on Bloomberg TV and radio.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning. Fantastic.
No more child marriage. No more street harassment. No more staying quiet. It'll take all of us working harder than ever until we are all equal. So all girls can lead, learn, decide, and thrive. Are you with us? Give now at planusa.org/no more.
It's Balance of Power on Bloomberg TV and radio alongside Kaylee Lyons. I'm Joe Matthew. Thanks for joining us. The U.S. is now refusing to provide air defenses to back the reassurance force the UK and France are planning for a post-war Ukraine. That, according to people familiar with the matter, seen as a major step back at a time when world leaders are insisting on the U.S.'s role in deterring Russia in the future. And it comes as Vladimir Putin and Donald Trump spoke on the state of the war just hours ago. For more, we go to Bloomberg's Natalia Drozdiak. Natalia, it's great to see you. How much expectation was there that this administration would go along with this plan to begin with?
Well, that's true. I mean, they were always keeping their cards close to the chest, but I think the allies had hoped that, you know, even if there isn't anything formalized or very public, that there would be some form of support. And now they're, the Brits and the French are just, they've been convinced that this is not going to happen at this point.
Mm-hmm.
Well, when we look at what else the president told us about his conversation with Vladimir Putin, he doesn't mention air defenses coming up, at least the role that the U.S. would play, other than to say that Putin expressed to him very strongly that Russia will be responding for the aerial attack, drone attack that Ukraine conducted deep inside Russia. Do we have a sense, Natalia, of what that response is likely to look at, and if the president is actually encouraging Russia to hold back? Because the Truth Social post doesn't suggest that.
Exactly. I think that's what struck me the most from what Trump said, was that he was broadcasting Putin's plans, but without condemning them in any way. And that's a big shift from what we've seen, even from Trump himself just a few weeks ago, you know, threatening sanctions on Russia, calling for a ceasefire, and we didn't see any of that today. So when I look at that post, I think this is just another example of, the U.S. walking away from this process to some degree and prioritizing other areas. We saw him mentioning Iran in that post.
All right, Bloomberg's Natalia Drozdiak, thank you so much for joining us. And we want to get more on this now with retired General Ben Hodges, former commanding general for U.S. Army Europe and now senior advisor for Human Rights First. General, welcome back to Bloomberg. As we think about, as we were just discussing with Natalia, the things the president did not say in his readout of his conversation with Vladimir Putin, does a Russian response to Ukraine's attack have to be inevitable? Do you think there's realistically anything here that the U.S. or anyone could do to manipulate Vladimir Putin's response to something like that?
Well, first, I agree with Natalia's assessment and the things she pointed out. I think this embarrassing Truth Social post confirms for anybody that still was wondering that the Trump administration has zero interest in doing anything to put pressure on Russia to help Ukraine or to get to some kind of sustainable peace. I mean, it was too hard for them. Their approach was doomed to failure from the very beginning because they never appreciated or cared about the cause of the war, the fact that Russia's the aggressor, the culture, the geography, why the Ukrainians were fighting. And so the Kremlin can see that as clearly as anybody else. And so they mock the president. They have zero respect for this administration. So there's nothing now that Trump could do or say, I think, that would change Russian perception unless maybe he was to support the sanctions bill that Senators Blumenthal and Graham have put together.
Mm-hmm. Well, you wonder what the response, General, could be from Russia, knowing that Ukraine was already responding to what was one of the biggest drone attacks of the war against civilian targets, by the way. We've been asking a lot of experts about this over the course of the week, the odds, the expectations that you might have that Vladimir Putin would use a nuclear weapon.
So I'm glad you pointed this out. The largest drone attack of the war happened before Ukraine's amazing drone strike against these Russian bombers. But this is a war that's been going on 11 years. So we're so far past the point where somebody has a justified retaliatory strike or something like that. We are 11 years into this war. And Ukraine, of course, did what they did as a way, what we would call killing the archer instead of trying to intercept all the arrows. Where these attacks are coming from, and it's Kinzhal cruise missiles being launched by Russian bombers. But your question about a nuclear option by the Russians, of course you have to take it serious because they have thousands of nuclear weapons. They don't care how many innocent people get killed, including perhaps even some of their own. But I think there is zero chance they use a nuclear weapon because there's no benefit for them. I mean, there's no benefit. Nothing good happens for Russia if they use a tactical nuclear weapon. The best thing for them is when they threaten nuclear weapons, because they saw that the Biden administration and now the Trump administration react to these threats. The Chinese, this would be a problem for the Chinese. I think they would be extremely unhappy if Russia were to do this. And so I think I just don't see Russia doing that.
Mm-hmm. I'd like to return, General, to something you just brought up, the topic of sanctions. As we asked retired General Wesley Clark, the former NATO Supreme Allied Commander Europe, about the prospect of harsher sanctions and what that really would accomplish in terms of efficacy. This is what he told us last night.
These countries are going to put up with the economic hardship and continue to support Russia until the United States really puts its foot down. But sanctions are not really the way of putting the foot down. All the rhetoric, so I'm disappointed in Vlad, please stop, and all that stuff, that's for domestic consumption. What makes a difference in international affairs is action. That action is sanctions, number one, and additional armaments to Ukraine, number two. And number three, no more talk of redeploying forces out of Europe.
And I wonder, General, if you agree with that assessment, that even harsher, the harshest potentially of sanctions are not enough alone.
Well, I do agree with most of what General Clark just said, except the sanctions that the Graham Blumenthal package are talking about are sanctions on customers, people that are willing to buy Russian oil and gas. Of course, that's China and India, which is where 70% of Russia's oil and gas goes to. I think the point is, the Kremlin is not going to change their approach, regardless of the fact that there are almost 1 million casualties in this war. It's going to be when Putin realizes he cannot win. And until the West demonstrates that we are willing to do the hard work of economic pressure, stopping their use of these illegal shadow fleet vessels in the Black Sea and the Baltic Sea, manipulating the market to get the prices down, and then these sanctions that would be on customers of Russian oil and gas, they're going to keep doing what they're doing. And certainly we should be providing unlimited weapons, ammunition, no restrictions to Ukraine, because it's in our interest that Ukraine is successful. And the Europeans can see, and Canada can see, that the U.S., this administration, is really not going to do anything. So they're going to have to do it themselves, I think.
Yeah.
General, we've only got 1 minute left. The Chancellor of Germany is in the Oval Office tomorrow. Should he prepare for an ambush?
I think Mr. Merz is sage enough to know what the possibilities are. But, he's a big, tall guy. He's a very successful businessman, really successful businessman. And he's got a good news story to deliver, that Germany is significantly increasing their defense spending. And this is a chance for Germany to lead by example. And I think he'll be very confident when he goes in there.
It's great to have you back. Retired General Ben Hodges, former commanding general for U.S. Army Europe, now senior advisor for human rights. First, we thank you, as always, General, for the insights. Coming up, the latest step the administration just took against elite universities, this time targeting Columbia. But up next, Republican senators meeting with the president as we speak. We're going to turn to how Senate Republicans are working to push through President Trump's tax bill with our political panel. They're coming up next. Alongside Kaylee Lyons, I'm Joe Matthew in Washington. This is Balance of Power on Bloomberg TV and radio.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
Putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
WCK is obviously at the center of this entire massive effort. Food heals people, and that's what we're doing.
Oh, I see your kitchen sink is draining your bank account. No problem. An American Home Shield warranty covers important parts of plumbing systems with a fix or replacement. Aha! Good fortune.
Sign up today at AHS.com. My mom, she says I'm brave, but really, she's the brave one. She knows just what I need, even when I don't know myself. She seems really busy, but she brings me to my swim classes because she knows it's good for me. I feel safe because she's always there, cheering me on every time. So this is for you, Mom. Thanks for helping me feel like I got this.
Goldfish Swim School. You got this.
There's this guy. He doesn't care about the law. He only cares about what's right.
I am not a hero because I have nothing to lose.
Who are you, mister?
I'm just a guy who wants to be left alone.
Two scoring sensations square off. Tamwa Shawinga and the first place Current battle Esther Gonzalez and Gotham FC. Saturday on CBS.
This is Balance of Power on Bloomberg TV and radio alongside Kaylee Lines. I'm Joe Matthew. Private sector payrolls increased by 37,000 last month, marking the slowest pace in 2 years, lower than all estimates in a Bloomberg survey of economists. Despite the slowdown, pay gains remained robust, with workers who changed jobs seeing a 7% increase in pay, those who stayed put seeing a 4.5% gain. On the data, President Trump taking to Truth Social once again today, saying that the too late Powell should cut interest rates. This comes now as some Republican senators meet with the president inside the White House, and we've got our eyes on the West Wing for you for when they emerge. And there is more news coming out of the administration today involving its war with elite universities, this time taking on Columbia University. And joining us now with the latest on this, Bloomberg White House reporter Akayla Gardner. Akayla, thanks for being here. The Education Department says Columbia University no longer meets accreditation standards. How come?
Well, to specify here, the Education Department notified Columbia University's accreditor that they do not believe that Columbia meets their standards for accreditation. The administration does not have the power to pull Columbia's accreditation, but they're basically asking this entity to reconsider it. And this really is all stemming from their concerns about anti-Semitism on campus and the protests that we've seen over the war in Gaza. But this really represents a significant shift from what has been the narrative from President Trump, from Secretary McNabb, that conversations with Columbia were going in the right direction. We have seen the secretary and the president have direct conversations in the last couple of weeks here, and this suggests an escalation, certainly, in the negotiations between them.
And we're just hearing right now, Akayla, from Columbia, which says it's deeply committed to combating anti-Semitism on campus, continuing to work with the government to address that issue, saying it is an issue that they take seriously. But to the point you were just making, Columbia, unlike Harvard, was one that decided they wanted to acquiesce to some of the administration's requests when it was threatened that funding would be pulled. Are we to assume that kind of trying to make those deals isn't always necessarily going to be enough to protect these higher educational institutions?
Well, it certainly seems that Columbia is taking this approach of sort of a more moderate approach when it comes to negotiating with the administration. But I think what's been a really key point of tension here is we have seen Columbia push back on some of these issues of academic freedom that they call it. Harvard, that is exactly why they're pushing so hard against the administration, because they believe that they're trying to control their faculty, the viewpoints of their students, by raising this concern of viewpoint discrimination, with the administration essentially saying that these schools are too liberal and they do not represent some of the ideals that really drive President Trump's movement of conservatism and really those ideologies here. And so it certainly seems that Columbia is going to continue to try to create those conversations behind closed door, even as Harvard now has 2 lawsuits against the administration.
All right, Bloomberg's Akayla Gardner, thank you so much. And for more, we turn now to this evening's political panel. Megan Hayes is with us, former special assistant to President Biden and Democratic strategist, alongside Republican strategist Sarah Chamberlain, president and CEO of the Republican Main Street Partnership, both with us here in our Washington, D.C. studio. But we're, of course, focused at this hour on what's happening, a mile away, Joe, at the White House, because the meeting is still underway between President Trump, the Majority Leader of the Senate, John Thune, and members of the Senate Finance Committee. Sarah, they're going to be talking about the tax bill, obviously. Are you expecting that substantive changes to what the House was able to pass narrowly might emerge from this meeting at the White House?
I think they're going to have to tweak it. I don't see substantial, because if they do substantial, it has to come back to the House, and it will not get through the House. So they're going to have to make some tweaks that the senators can live with. I think that's why President Trump has them there. Some of my members of the Republican Main Street Partnership are there. So I'll get updated later on that. But they can't make huge changes. I mean, we passed it by one vote in the House.
One of the people in the room is Ron Johnson, who says he's a no vote unless there's much more significant cutting here and much less addition to the deficit. He's even calling to break it in two. You went through Build Back Better. You've been through reconciliation before. How many different iterations could we see here, or are we actually getting to a final product?
Ironic that they have similar initials in BBB here. It's very confusing for us who lived it before. I think that there could be several iterations, right? I think that the new CBO score, the Congressional Budget Office, came out. They're still adding $2.7 trillion to the deficit. That's going to be a non-starter for some of these Republicans. But just like we were mentioning, the House won't vote for it, and there's even members who are now saying they wouldn't have voted for it with some of the provisions that they have now read that are in it, so it might not have passed originally. So I do think that this is really problematic for the Republicans. I think that the Democrats have been really, really steadfast here and really have banded together. They are not going to vote for this in any way, shape, or form if there were cuts to Medicaid and Medicare and Social Security, with still giving tax cuts to the top 1%.
Yeah.
Well, and I'm wondering if it's not just Democrats to watch here, but Elon Musk has been very active in this conversation over the last 24 hours. His tweet today: call your senator, call your congressman. Bankrupting America is not okay. Kill the bill, he says. Megan, is Elon Musk suddenly Democrats' best friend on this issue?
I mean, it's unclear if this is self-motivated because the EV cuts were cut in the House. So it's, but I think that Democrats will take anyone who is on their side of not cutting these 18 million people off of Medicaid and 14 million people off of Medicaid and 18 million kids losing food assistance. So I think that Democrats will take the help here, but I'm not sure that his motivation isn't more personal than political here.
Is that what we're talking about here? That's the refrain from Republicans, the EVs. But we heard from President Trump that he said Elon Musk never talked to me about it, never asked me about it. What's the change of heart all about?
I do think it's personal for Elon Musk, because I do understand that he did not express any concerns about this. The members were at the townhouse last night. Yeah. There was no discussion that Elon Musk had any problems. He did not call any of them, and now all of a sudden he does. So, welcome to D.C.
Right. Some would suggest, though, you come to D.C., you get a look under the hood, and maybe you respond like Elon Musk did. Did he see too much while he was here?
He might have. He might have. And Elon Musk, I mean, he does have a sort of agenda for himself, and it got hurt in this bill. I mean, let's call it what it is. So now he's trying to get the senators to put the provisions that hurt him back into the bill. So, welcome to politics here in D.C.
Well, yeah, and speaking of politics, there's been a lot made of the politics of what's supposed to be nonpartisan Congressional Budget Office, specifically by Republicans who have said it doesn't use dynamic scoring. You can't trust the way they've scored this tax bill. But they also scored Trump's tariffs as of May 13th, at least, where those stand now, Megan, and found that actually those tariffs reduce the deficit by $2.8 trillion over the next 10 years, which could pay for the deficit impact they're saying cutting taxes could bring. Is that actually proof that this administration's policy, that you have to view all of this as kind of one big economic policy equation rather than viewing it in separate parts, is justified?
I mean, sure, but I still think that having these tariffs and having an unstable economy and unstable markets is not good long term. It's definitely not good for the middle class, and I think that's where Democrats are focused, is making sure that the middle class the costs are lower for them.
You mentioned a couple of members of the Republican conference in the House falling off the wagon here with concerns about items they found having continued to read the bill. And Sarah, I'm curious your thought on this. Marjorie Taylor Greene doesn't like something about AI regulations.
Is that a surprise?
Well, listen, maybe not, but to see Mike Flood, Republican from Nebraska, he said he hadn't read the section that would make it harder for judges to hold officials in contempt of court. Do we just have a much bigger problem here, dropping 1,000-page bills, and lawmakers don't have enough time to read it?
So Mike Flood, for full disclosure, runs the Republican Main Street Caucus with Dusty Johnson. They did not see this. They were at the House the Wednesday before the Thursday morning vote. They did not see that provision.
You had a big group read?
We did.
Yeah.
We did. They
But
were
this
there.
is
They were
the-
talking. They were negotiating.
This is the danger of moving too fast, no?
It is. It is a danger of that. Absolutely. That will come out in the Senate. As Congressman Flood said, he's already called the senators like, listen, we have to remove that. But the overall bill, most people did know 99% that was in it. Marjorie Taylor Greene, I can't speak for what she did or didn't know.
Not a member of the...
I think it's also the problem with doing things in the middle of the night, too,
Yeah.
right? They did these hearings in the middle of the night, so people weren't aware of it and people were sleeping, and the American people were sleeping. So I think that maybe we should go back to legislating during business hours and during the daytime might be more effective, and people can't say that they didn't read the bill. But this has also been a problem, to be fair. This has always been a problem, and they need to have a solve for it.
This is a bipartisan
Exactly,
problem.
exactly.
Yeah, really.
100%. They drop bills that are too long, people don't have enough time to read, and that is unacceptable. That is not serving anyone's
You can
constituents.
just imagine the staffers feeding the AI models. To read that.
Totally.
Yeah.
Or the sleepy members who would agree with Megan on the business hours thing as they struggle to stay awake in the chamber or miss the vote. Exactly. One other thing I want to ask about, we're looking to see if more detail on this will emerge from the meeting, Sarah, is changes to the SALT cap specifically, because Senator Thune says there will have to be adjustments on that. Is anything short of 40,000 threatening not only the passage of the bill in the House a second time, but potentially the Republicans' majority being held?
Absolutely, because New York, New Jersey, and California, the most affected by this, they are the majority makers. They're holding strong. I think Senator Thune needs to go and talk to the SALT caucus, which is made up of all the Main Street members in those 3 states, and talk with them about, okay, what can you live with? 40,000 was kind of their break point. They actually wanted more. Maybe they can go down a little bit, but I don't see a lot of room for negotiation here.
I wonder if we find that number out sooner than later as senators emerge from this meeting. Great conversation with Sarah Chamberlain and Megan Hayes. Thank you so much both for your time. To some other big news that we're following today in Washington, the Department of Health and Human Services announcing its plan to rescind 2022 federal guidance to healthcare providers, requiring that people have access to an abortion in the event of a medical emergency, even if their state restricts the procedure. HHS saying the guidance from the Biden administration does not, quote, reflect the policy, unquote, of the current administration.
And in another part of the administration, Defense Secretary Pete Hegseth has ordered the Navy to rename the USNS Harvey Milk, a highly rare move that will strip the ship of the moniker of a slain gay rights activist who served as a sailor during the Korean War. The change was laid out in an internal memo that officials said defended the action as a move to align with President Donald Trump and Hegseth's objectives to reestablish the warrior culture.
Also today, the air quality in the northern U.S. is reaching dangerous levels, with 12 states now issuing safety advisories and alerts as wildfire smoke from the more than 100 blazes burning in Canada drifts into the region. We spoke earlier today with Canadian Premier Danielle Smith about the situation on the early edition of Balance of Power. Here's what she said.
I think we have to be realistic about the incredible volume of forestry that we have and how old it is. And so that does require the proactive approach that you either can do prescribed burns so that you can control it, or you do mechanical removal so that you can take away the fuel, or nature will take its course.
Coming up, we'll turn back to the conversation on how Senate Republicans are working to push through President Trump's tax bill with someone who was just in that meeting at the White House. Republican Senator Roger Marshall of Kansas will join us next with news on Balance of Power on Bloomberg TV and radio.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated.
We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate.
Putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
Saturday mornings were made for shopping. Get ready to meet up with your HSN besties for super savings and tons of fun. We've got you covered. Kick back and start your Saturday shopping with HSN.
Pluto TV's got nostalgia on demand with The Andy Griffith Show.
Anybody home?
From the early years in black and white to seasons in full color.
Thought I'd drop around and say hi.
The Andy Griffith Show. Anytime on demand on Pluto TV. Stream now, pay never.
I am Dracula.
He came to me, and he made me drink.
You're crazy to know who I am, aren't you? I'll show you who I am and what I am.
Now I know his horrible plan. He's going to kill her, make her a living mummy like himself.
I shall awaken memories of love.
This is Balance of Power on Bloomberg TV and radio. Alongside Joe Matthew, I'm Kaylee Lyons, live in Washington. We're still watching the White House, a meeting between President Trump and Senate Republicans still ongoing on the tax bill. But the Senate also could act as soon as this evening or later this week on a confirmation vote of Mickey Bowman to be the Fed's new vice chair of supervision, something that could come just a day after the Federal Reserve finally lifted the asset cap on Wells Fargo that has had its growth limited for years as a result of what regulators saw as bad behavior. And earlier today, on the early edition of Balance of Power, we had the chance to speak with the ranking member of the Banking Committee in the Senate, Democratic Senator Elizabeth Warren of Massachusetts, about that. Here's a piece of our conversation.
Understand this about Wells Fargo. I think before you decide to lift this big penalty that's been in place for Wells Fargo for 7 years now, you should ask for like maybe 1 year in which they aren't caught breaking the law. Remember that in January of this year, the SEC tagged Wells Fargo for cheating investors. In December, the CFPB tagged Wells Fargo for cheating American consumers, by the way, to the tune of over $800 million. And in September, the OCC tagged Wells Fargo for money laundering. So we have the three big banking regulators all saying Wells Fargo's out there still breaking the law. And then a report just a few weeks ago by former and current Wells Fargo employees saying that the very activities that Wells Fargo engaged in 7 years ago, where they created fake accounts for people and so on because they were pressing their employees to get those numbers in, to get more people signed up for more accounts, that same activity is occurring today. And those are the circumstances under which the Fed unanimously says, hey, Wells Fargo, get on out of here. You don't need any extra regulation. No, that just doesn't wash.
Do you see any potential benefit here, Senator, though, of Wells Fargo being able to better compete with other big banks for the competitive landscape to change in that way?
Look, I'm all for competition, but I don't think that cheaters ought to have a leg up in competing, and that's really the part to remember here about Wells Fargo. The reason we want to have good enforcement of all of the banking laws is that the banks that actually follow the law, the banks that aren't engaged in money laundering, or the banks that are not cheating their investors, that those banks ought to be able to play on a level playing field. And Wells Fargo, we know, starting 7 years ago, that Wells Fargo was so boosting its profits and, by the way, its CEO compensation based on cheating American customers. And in fact, it was so awful what they did that it wasn't just civil penalties, they were in violation of criminal laws. So the idea that, boy, we want to get them right back out there competing with the other banks at a time when their own employees are saying, hey, they're back to doing the stuff they were doing before. That's not the direction we want to go.
Senator Elizabeth Warren live with us on Bloomberg TV and radio. I'm going to ask you to walk with me here for a second, Senator, because I don't know if Donald Trump is watching us right now, but the president is posting about you right now, just on Truth Social. Donald Trump writes, quote, I am very pleased to announce that after all these years, I agree with Senator Elizabeth Warren on something. The debt limit should be entirely scrapped to prevent an economic catastrophe. He's reposting you here where you suggest as much. This is less than 24 hours after Elon Musk said shame on Republicans who passed the reconciliation bill in the House. You're finding yourself within a 24-hour period agreeing with Donald Trump and Elon Musk. What's going on around here?
Well, look, I think on the debt ceiling, I've been on this for many, many years. The debt ceiling is just something that's been used as leverage in negotiations. The United States should never, never threaten to default on its debt. We should get rid of this debt ceiling altogether. When we pass a bill saying that we're going to do a certain thing, that is our saying, and we're going to pay for it. That's what the United States government does. So I think that Donald Trump and I, hey, listen, I'm ready to join up with him and make that happen. We need to get rid of the debt ceiling altogether, not extend it, not say, ooh, while this is going on, this budget negotiation, let's just roll out a few $1 trillion more in the debt ceiling. Nope. That has gotten us into trouble before. It continues to get us into trouble. Donald Trump is right. Let's get rid of it altogether.
You can find our full conversation with Democratic Senator Elizabeth Warren of Massachusetts. We covered the waterfront online or on the terminal, of course. Pretty remarkable moment to have the president posting while she was talking with us today on Bloomberg as we reassemble our political panel for their take on this. Megan Hayes, former special assistant to President Biden, is with us, our Democratic strategist, alongside Republican strategist Sarah Chamberlain, president CEO of the Republican Main Street Partnership. So is this something we all agree on here, or at least you two? Yes, Elizabeth Warren, eliminate the debt ceiling.
Yeah, absolutely. I mean,
is that music to the partnership as well?
Absolutely, because every year it's a fight, and it's a ridiculous fight. We have other more important things to do.
It's being used as like a political football here, and it just is. It's code to cut Medicare and Medicaid and other entitlement programs. So why do we have it? It just creates a false crisis.
Right.
Well, but what conservatives fiscally will tell you is that no, this actually creates incentive to try to exercise some fiscal responsibility, Sarah. I mean, even if there was a real effort to do this, would it ever be able to get through this House of Representatives when the conservatives are so loud?
I think you can. Okay, so removing it does not mean, okay, go spend anything you want. We still have to control that, and we need to probably do a little bit better job at controlling that. But the reality is, this is a dumb fight. We have it all the time. We always know it's going to pass, but you know, it's just a blood sport here that can just be eliminated from both sides. It doesn't matter if when Biden was the president and now with Trump as president, it's always a lift to get it done. And there's so many other things they should be focusing on. Just remove this.
You tend to wonder if this reconciliation effort slows down to the point where the debt limit needs to be addressed separately, if this could actually be something, God forbid, Democrats and Republicans work on together and agree on?
I'm not sure that we are there yet,
Crazy
but
talk?
I mean, if you have Donald Trump and Elizabeth Warren agreeing on something, that's pretty remarkable in my opinion. But
Right.
you never know. Stranger things have happened. Washington is an unpredictable place, but I'm not sure that we are there at this moment to have a partisan view on this.
But if we do get to the point where it's looking like doing something before the August recess to raise the debt ceiling, which the Treasury Secretary has warned is basically the deadline, is not looking realistic, how would Democrats use that moment? What would they use that leverage to try to get from Republicans? Because they haven't had much leverage to work with for the last 6 months.
I'm still not sure they have leverage, right? They have no majorities. They have no other fight here. I think that the best thing that they have is be putting these members, the Republican frontline members, in a position to take tough votes on cutting things like Medicare and Medicaid, like we're seeing them having to do now. That is the leverage that Democrats have, and it's leverage to move into the midterms and then to the presidential in 28. So I'm not sure that they'd be able to use it for the debt ceiling.
How much communication is there as we wait for this meeting to conclude at the White House between Mike Johnson and John Thune? Mike Johnson is clearly concerned that anything is going to be changed down to a point of punctuation. John Thune's got a room full of people who want to make changes, but they are talking to try to keep this from going off the rails, right? What are these conversations like?
They have been talking regularly for the last year. They talk all the time. They've been trying to coordinate on this. Senator Thune understands the problem that the Speaker Johnson has, and Speaker Johnson understands the lift that Thune is going to have to get the House bill, something close to the House bill through the Senate. So they talk all the time, much more so than the Speaker talked with Mitch McConnell.
Well, and they both deploy a similar strategy, which is get the president to weigh in too, which is why Thune has brought several Republicans to the White House to talk directly with Trump. But does the president have the same influence over the Republican conference in the Senate as he seems to in the House, Sarah?
It's close, but not quite the same. I mean, the House members are up every 2 years. Senators are up every 6 years. They get a little bit more breathing room. But the senators, he's very close to a lot of the senators. And Trump got a lot of them elected. I mean, look at, we got control just in the last election cycle, and they came through with Donald Trump's coattails.
A lot of things could change here when it comes to SALT, when it comes to the extent of cuts. Of course, Democrats are watching this from the sidelines. When it comes to things like Medicaid, for instance, and maybe even talking about fraud, waste, and abuse with Medicare, we're now hearing. What's the job in the meantime? Just keep making commercials?
Keep making commercials and keep letting the American people know. There's been polling out that say independents overwhelmingly, I think it's like 65 or higher % of independents and these swing voters do not like this bill as is. So I think that the Democrats are doing a really good job on the messaging front. They are winning the messaging front on this right now. And I think putting Republicans, especially Republicans in the House, in a tough spot for their reelection. I mean, this is where Elon Musk comes into play. He can fund some of these primary challengers for these Republicans that are going to take tough votes. And if he's unhappy with the way they're voting, he can fund them. And so I think that's all in favor for Democrats. So they just need to keep pushing forward on their message and stay together, which is a new thing for Democrats.
Well, when we consider tough votes, obviously there's tough votes on the big things like this, but I also wonder about tough votes on the little things, or the smaller things, shall we say, like the rescissions package the White House sent yesterday. $9 billion in cuts, USAID, NPR, PBS primarily. Even if it can get through the House, do you see difficulty in the Senate, given that it also cuts back on things like PEPFAR, for example?
I think it would end up getting through the Senate. I think it would be a little different version, but I think the Senate would pass it as well. We are looking to cut the bills in this country. PBS maybe won't be cut as much. I mean, the discussion last night is like, do we really want to cut Big Bird? So that could be a problem. But a lot of them, we are looking to make cuts and to lower the deficit. So I think you'll see it pass both chambers. And the best thing the Republicans have going for us is the Democrats really don't have a leader. You run commercials, but there's really no strategy, and there's no leader yet. And that really helps the men and women, because our men and women of Main Street are the ones that are on the front lines. And some of the commercials are being run against them in their districts. But right now, the swing voters, at least in their districts, are saying, we're good. We still like Trump. We would vote for him again, and we're happy with you.
Well, we appreciate the insights, as always, going into overtime with Sarah Chamberlain and Megan Hayes. A great panel with us this evening as we wait to find out what happened in this meeting at the White House. This is why you join Balance of Power every day. We're going to bring you there now, live from the White House, following his meeting with President Trump and other members of the Finance Committee. Republican Senator Roger Marshall of Kansas. Senator, it's good to see you. Welcome back to Bloomberg TV and radio. What went on in that meeting, and what's the new number on SALT?
Well, we didn't do anything with SALT. I think, first of all, the president is just so very positive. He's talking about a $15 trillion investment in this country. He's talking about the 4.6% growth we've seen this quarter as well. And I think that what that does is it affects the future debt that this country has, the national debt. So we talked a lot about that, is how does this bill impact it? And we just heard some numbers that probably over 10 years' time, we're going to cut back some $8 trillion in our deficit because of this bill. That's a big number.
How do you get to $8 trillion when the Congressional Budget Office actually says that $2.4 trillion will be added to the deficit?
Yeah, the CBO was wrong with President Kennedy's tax cuts, with President Reagan's tax cuts, and Trump 45's tax cuts as well. But we get there by rolling back a regulation and by essentially growing the economy. And we think there's a lot of growth there. There's a lot of tariff money coming in as well that we're already seeing as well. So this is the Trump economy. We have confidence that we'll get at least 3% growth. I think the CBO is thinking 1.6%. So that's where it will happen, is by the growth in this economy.
Did the lawmakers in the room today talk about permanence when it came to business tax breaks, Senator? I know this has emerged as an important theme in the Senate. Research and development deduction, bonus depreciation, interest expensing. Make them permanent. It's going to cost more money. Can you get that done?
I sure hope so. And we did spend a lot of time in that conversation, and we've not settled on it yet. But there's certainly a lot of us in the room that want to get to permanence. We're weighing it back and forth as well, but that would be my goal.
Mm-hmm.
Senator, I want to go back to what you said a moment ago, which is that you didn't do anything on SALT. Do you mean that that is just not something that came up in this meeting, or that the Senate's intention is to decide that the $40,000 SALT cap remains in place?
Yeah, so in an hour and a half with the president, we talked about SALT for 2 minutes. I think we need to go back and reach back to Speaker Johnson and kind of figure out, is there any wiggle room there? But there's a lot of consternation for a red state person like myself that this is basically a $350 billion subsidy for blue states. So we're not done with it, but it was not the tip of this conversation. I think the discussion today was where the economy is, the great growth that we're seeing, that we're going to prevent the largest tax increase in American history.
What did the president have to say about Elon Musk when this came up, Senator? This is remarkable. He calls it disgusting. The bill's bankrupting America. Shame on those who voted for it. Is Donald Trump upset?
Yeah, I can't speak for the president on that particular conversation, but Elon was not important at all as far as this conversation goes.
Okay, fair enough. He's certainly worked his way into plenty of other conversations, though, here in Washington, Senator. And he is arguing that the bill needs to be killed. And I wonder about the chances of the bill actually meeting a death when it goes back to the House if too many changes are made. How aware are you and your colleagues on the Finance Committee, not just on the tax issues, but on Medicaid issues as well, knowing how badly some fiscal conservatives wanted those cuts that they fought for in the House? How much are you considering your wiggle room to really change these things?
Well, I think we wake up in the morning, we go to sleep thinking about how much wiggle room do we have. And certainly we're proud of what the House got accomplished, especially those last 48 hours. I think what I've been talking about is, can we get another $500 billion of spending cuts somewhere in this bill? That would be my goal, is a $500 billion in addition to what the House does. I think much more than that, and the House won't be able to swallow, but I think that we could move the needle just a little bit in that direction.
Questions about Medicaid and specifically provider tax changes. Right. Senator, did you get to this? I know that there are a number of senators who are concerned, who come from rural states, about the potential for nursing homes or rural hospitals to be closed. And did Medicare come up, an attempt to find waste, fraud, and abuse in the main program?
Let's talk about the provider tax, first of all. The discussions we've been having on the provider tax is we're not going to touch the nursing homes. We understand that maybe 40–50% of people in nursing homes are on Medicaid, so we're not going to do anything to hurt people in nursing home, people with disabilities. We certainly talk a lot about rural hospitals and how that they're struggling as well. So those are very much of top of mind, and we're not going to forget about those. The only really small conversation about Medicare maybe around Medicare Advantage, the fraud, waste, and abuse going on there, that because of their upcoding, they cost American taxpayers some $275 billion more than if they'd just been on plain Medicare, so to speak. So there's a lot of concern on Capitol Hill about Medicare Advantage.
Senator, we spoke a moment ago about the Congressional Budget Office scoring of the tax bill that passed the House in particular, but was there conversation inside the White House today on the other CBO report we received about the $2.8 trillion that actually could be saved by the president's tariff policies? Did Donald Trump bring that up?
Well, certainly President Trump is very proud of his tariff policies and the income that's already coming in. I think that they released some numbers today. CBO maybe released some numbers that showed a much better outlook if you give us current policy, so to speak, as well. So yes, President Trump very proud of the tariff money that's coming in and think that there's more to come from that direction.
Is the parliamentarian going to be all right with this current policy baseline? We spoke earlier with Senator Elizabeth Warren, who launched an inquiry into this, calling it magic math. Do you know for a fact, Senator, that it'll survive the bird bath?
You know, I certainly think it will. The parliamentarian is certainly their own beast up here. I'm a simple country doctor. Sometimes it's hard for me to predict what the parliamentarian will or won't do, but certainly there's others that do, and I have confidence in John Thune, our Senate Majority Leader, and others who are really good working with the parliamentarian. I have every reason to believe that we're going to be okay in that realm.
Senator, while we have you here on Bloomberg TV and radio, I'm also wondering about conversations you may have had with Senator Thune around your Credit Card Competition Act potentially being attached as an amendment to the Genius Act, which could get a vote any day now. Your colleague, Republican Senator Cynthia Lummis of Wyoming, was on Bloomberg TV yesterday about that prospect. This is what she told us, and we'll have you respond.
One of the things that I'm looking for is whether the Durbin-Marshall bill, it will be attempted to attach to the stablecoin bill. It's not about stablecoins, it's about credit card swipe fees, and that would be a heavy lift to take a bill that already has been carefully negotiated and add a new subject that is that controversial.
Is that your intention here, Senator, or could the majority leader talk you out of that?
Oh, I sure think that we want to vote on this bill. Look, this bill is going to give inflation relief to hundreds of millions of Americans. This is the one bill that would actually decrease in inflation, that this bill would save probably 2 or 3% every time you use your credit card. Look, Americans are being charged 7 times more than what folks are in the European Union to use that credit card fee. So as we're facing kind of some issues around the tariffs and supplies coming into this country, that this credit card bill would help slow down that inflation, and I think it'll be good for everyone on Main Street. It would be good for hardworking Americans as well. Look, the crypto bill is really good for wealthy people, but people back home don't care much about this crypto bill as opposed to really caring about our credit card bill. I think the credit card bill is the double win for the president.
So do you see the crypto bill, though, as the best vehicle for getting your credit card bill passed, sir?
Oh, without any doubt that it's a banking bill. This is a bill that fits with that as well. This was assigned to the banking committee. What I really like about the connection here is that this will open up the opportunity for stablecoin to go onto credit cards as well and open that up. So I think that's the win-win here if there was ever going to be a win.
It's great to have you with us, Senator. Moments after the meeting concludes at the White House, Republican Senator Roger Marshall of Kansas, live on Bloomberg TV and radio. A fascinating conversation as we learn more about the progress here, and we want to make sure you're aware House Speaker Mike Johnson will be on Bloomberg TV and radio tomorrow morning. Bloomberg Surveillance, that's 7:30 a.m. Eastern, as the Senate considers its own revisions to this massive tax bill that narrowly passed in the House.
And then tomorrow on this late edition of Balance of Power, we'll be hearing from Republican Senators Tim Scott of South Carolina, the chair of the Banking Committee, as well as Senator Ted Cruz of Texas. That's tomorrow at 5 p.m. Eastern Time, right here on Bloomberg TV and radio.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered all he needed in one place on Amazon Business.
Peter Piper picked peppers, but rhyme, Humpty Dumpty fell down.
Soon, he possessed profound pepper proficiency. Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated.
We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate.
Putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning. Fantastic.
So take us, briefly through your racing career, because we want to talk a lot about you as a business person, but, as with Alex, so much of your approach is you were an athlete, you were on the grid, and we see this come through very clearly as you're advising and mentoring these young women who are in the academy. Walk us through your racing career.
Well, I started at 8 and wasn't a clear talent initially, but had a lot of tenacity. So I kept getting better and got to quite a high level in the national championships, then the British championships, qualified for the Europeans, and by the age of 18 was ranked 15th in the world. And I was often the only girl, but never saw myself as the only girl. In my sport, you wear helmets, so you don't actually see your competitors. But when I was 18, I was given an award as top female. And I think that was the first indication that I was seen as different, because I remember being embarrassed to get the award because I couldn't remember even seeing any other girls out on track. But that gave me the springboard, that good result, to move into single-seaters. So I started in Formula Renault and had quite some success, was racing against Lewis Hamilton, had some podiums, got a lot of attention because I was the first ever female to make the Young Driver of the Year award, which is a very prestigious award in Europe. And didn't win it, got nominated twice, lost it twice, but got noticed by Mercedes-Benz. And I had tried to make it into Formula 3, that category I'd seen as a young girl. But one of the difficulties in my sport is the financial barrier. You need money to go racing. You need to raise sponsorship. And I mean, I'm giving my age away here, but I had a great sponsor, British Telecom, because they were launching something called broadband. But they were a great support of mine. But when I was just started in Formula 3, I then broke my ankle. And that was one of the toughest episodes of my career, because everything really slipped away. I lost my seat, I lost my sponsor. But I got that one phone call from Mercedes-Benz, come and test for us. And as much as people say, well, there must have been so much riding on that test, I had nothing to lose. I had nothing. So I gave it all I had, and they offered me then a 1-year contract, and I ended up staying for 7 years, and then managed to make my way into Formula 1 as a test driver, and stayed there until I realised that I wasn't going to make it into a race seat. And I think, like as an athlete, your days will be up at some point. And I very much wanted to be in control of that decision and not wait for the phone to stop ringing or a contract to be produced. So I then decided in 2016 to call it a day.
Yeah, they often say that athletes die twice, real death and when you retire. And I found that to be true. But Susie, going back to your racing days, if I look at a baseball player or a young girl that's playing softball, I truly understand what makes that player good or great or not so good. I'm a novice, so excuse the simple question. What makes a good driver?
It's definitely a combination. I think the earlier you start, you build the synapses of what it is to be fast out on a racetrack. But for sure, if you look at someone like Lewis, who's possibly the greatest of all time, incredible hand-eye coordination, incredible balance, very good peripheral vision, that you understand what's going on, you can read a race out on track. And then the ability, we say when a racing car is dancing, because in the end, you are trying to push the car to the absolute limit. And the limit is where you need to be to put the best lap time together. And it's the drivers that are able to find that very sweet spot of being on the absolute limit of what the car is capable of. And getting 2 or 3 tenths close to the front is pretty manageable. Getting to be the quickest and pole position at the very limit, that's what takes something extra special.
And so talk about that moment of transition. You know, when you make the call to get into the business side, you make it proactively. How do you map that out? What's your playbook for saying, okay, I want to be this, or I want to pursue it in this way? Like, what's your thinking there?
Well, the decision was really easy. The aftermath was, even thinking back to it now, I fell into a black hole. I initially didn't think I wanted to move into the business side of the sport because by that time Toto was very successful, winning world championships with Mercedes and Lewis. I didn't want to work against him for the sake of our marriage, but decided I didn't want to work for him also for the sake of our marriage. So I was searching for the next challenge, and I'd been approached by a gentleman I'd met once before who'd wanted me to drive for him, Gildo Pastor. And when he called regarding Formula E, this new all-electric championship, I thought he was calling me to drive for his team again. He said, no, I want you to run the team. And I thought, run a team? No, I don't see myself doing that. But suddenly some jigsaw pieces fell into place. Dieselgate happened. The electrification of the automotive industry sped up, but then suddenly it's all everybody was talking about. And I obviously heard from Toto that Mercedes were very much looking towards electrification in the future. And Formula E then gained huge momentum, all electric racing cars, which none of us had anticipated in the industry, racing in city centres. And I went to visit Gildo at a race in Brooklyn. I could see the Statue of Liberty, electric racing cars, and I thought, okay, maybe this has something. His team was racing at the back, and he had a medical issue, which meant that it had been mismanaged for a couple of years. And he said, listen, bring it back to its former glory. The team was losing a lot of money, so I decided to copy and paste my husband's deal and said, okay, don't pay me a salary, give me equity. Give me 30% of the team, I'll turn it around. And we were very bound. If he wanted to exit, I would go with him. If I wanted to, there was a lot of tag-along and drag-alongs. But he was a great partner. And I was the mother of a young baby, said, listen, I can't move to Monaco where the team was based. And he said, I'm not going to judge you how you do it. You do it, and you call me if you ever need my backup. And I'll be honest, there were a few moments where I thought, what have I got myself into? Because the team was losing a lot of money, was not performing. But those were tough days, but my goodness, did I learn a lot.
So following up on what Jason said, it was losing money. You're going, did I make the right decision? I think we've all been there at some point. My question for you is, what were some of the 2 or 3 things you did to start turning the business around from losing money to making money?
First and foremost, I spent a lot of time on LinkedIn trying to poach the best people from other teams. In motorsport, if you can bring someone in who's won a race, they bring so much knowledge and know-how. We then won our first race the following season, and it was a very slow turnaround, but suddenly the energy shifted. We had great people on board who knew what it was to win. They knew what it took to win, and they brought that culture. We definitely became more trustworthy of each other. I set realistic targets, not immediately expecting to be racing at the front. And slowly but surely, we built this energy. We won a race, and suddenly we thought, well, we can do this. And then we got a great new partner on board, a new title partner. Then more commercial partners followed, and within 3 years, we were fighting for the World Championship, and we were profitable.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but he persistently missed packages. So he scheduled his deliveries from Amazon Business.
Peter Piper picked peppers, but run, rock, rhyme. Humpty Dumpty fell down. The kids are
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
You and I are in this together.
These are the good days that we dreamt about. Take it in.
Seize that moment when it comes.
So I want to fast forward a little bit because I want to get into F1 Academy and your decision to do that. It's a seismic moment, truly, in this rapid growth story that's happening around Formula One. So tell us about getting that call. I assume it's from Stefano Domenicali, the CEO of F1 Academy, who you obviously know well, has been in the business for a long time. What is that conversation like? How does it start?
Well, we had sold the Formula E team, Gilles and myself, and he's a visionary, and he was looking to move into the space industry. He wanted to build an electric rover to go on Mars. And I was really intrigued by the technology, really thought it would be great to get out of motorsport and push myself out of my comfort zone. So I was quite far along on that journey. And
you were literally headed to space.
I was headed to space. And I got a call from Stefano and Greg Maffei. They were at the Mexican Grand Prix.
Greg Maffei, who was then the CEO of Liberty Media.
Yeah. And they said, listen, we're thinking of starting an all-female racing series. I said, fantastic, it would be great, and anything I can help with in the background. And they said, no, you're going to run this for us. And there was a transition period because I definitely didn't see myself doing that. But after a lot of discussions at home, realised it was a once-in-a-lifetime opportunity. The sport that I knew so well, having been a driver, I knew all the challenges on being in a racing seat and how tough it could be. And I knew the business side of it. And very much felt, well, if I didn't take this opportunity and didn't hand the baton to the next generation and try to make it better, I would probably always regret it.
What were your reservations? What was your skepticism?
My skepticism was, did we need an all-female championship to help? You know, the sport isn't segregated. Is it right only to segregate at one level? And then the championship had already been set up to race on separate from F1. And racing on an empty racetracks with no spectators was going to always be difficult to make it a commercial asset for Liberty and ultimately Formula One. So I knew there had to be a completely different business model, and there had been a series that had tried and failed before, which had contacted me several times, and I never understood their business model, but I knew it wasn't easy to make something like F1 Academy into a viable commercial model.
So those were the kind of challenges. What turned you?
What turned me was their enthusiasm. I went to New York, I met with some of the Liberty board and realised they were going to put their money where their mouth was. And I had spent so long in motorsport talking about diversity, panel after panel after panel. I kind of felt I'd said all there was to be said, but here was the owners of the pinnacle of the sport willing to put in a lot of investment to create a platform that would help female talent on and off track. And I realised this wasn't just a box-ticking exercise. It wasn't just we better do this because, you know, we've got a huge female fan base now. They really meant it, and they've followed through it. They've given full support every step of the way, and I don't ever regret having made the decision.
So one quick follow-up. You talked about it was losing money at the beginning. Who funded F1 Academy? And have you raised or will you raise capital?
We haven't raised capital. I don't think there's any plans to. It's been fully funded by Formula One. And now, of course, we managed to get the 10 Formula One teams on board who are stakeholders of the sport alongside Formula One. And now we are very close to creating a platform which is financially sustainable over the long term. And I do believe women's sport, it's attracting a lot of investment, but I do think it has to come to the stage where it's also a business model. And thankfully, because of the huge interest that we're seeing, we're close to being there.
Yeah. Talk to us about getting those 10 on board, because I would imagine that's got to be one of the trickiest things. You have a lot of knowledge about all of those teams. What was the process like of corralling, cajoling them into really supporting?
It was interesting because when I first arrived, I said to Stefano, I'm going to need a couple of months to go away and really figure out what I think is going to work and dive deeper into kind of research and data. So I spoke to a lot of governing bodies. I spoke to all my contacts from the world of karting. Why are we not seeing more young girls? What do we need to do to just get lots of different opinions and form my own opinion as to what was the right thing to do. And it was one discussion with Fred Vasseur, who's a team principal at Ferrari and a good friend. And he had a young female driver in his Ferrari Academy. And he said, listen, we can put her in F1 Academy and we could paint the car red. Suddenly I thought, yeah, you could. And so could all of the other teams.
Yeah.
He said, well, I don't know about that, but, I can try, I can speak. And I said, Fred, that's given me a really good idea. We're going to get every team to take a car. So I
Because that was, sorry to interrupt you, but that wasn't the original plan.
No, the series had been set up racing separate from Formula One, and the budgets of the drivers were covered by the driver, the team, and 1/3 by Liberty. So I got home that evening. I said to Toto, I'm going to get every team to take a livery. I said, impossible. We will never get all 10 teams, A, to agree, and B, to sign the same legal document.
Right.
I said, yeah, you're right, it might be a challenge, but actually the support that I had when I had all of the individual meetings, they all very much had the same reply. We've got one shot to get this right if we're going to do this. I mean, bearing in mind the first time in the history of the sport that the Formula One teams were giving their name and livery to something outside of the cars they built.
Yeah.
And for an all-female category, it was bold. But we managed to get the top 3 teams. So Zach was one of the first to come on board with McLaren. I had Ferrari. And then one by one, I managed to get to the number 6. Toto, of course, always said you need to get more than 5 and then I can come on board. Then I got Mercedes, and I won't mention any names. Some were not that enthused, but I had more than half. And I said to them, well, we're going to launch and you're either with us or you're not. And I think the way the world is, they didn't want to be seen to not be supporting. But now I have to say, I have a great relationship with all 10 teams and they've been fully supportive.
Who had the most reservation? Who was the hardest to get?
It would be unfair to name names. Let's just say they took quite some convincing, but they're fully on board now.
Well, I mean, and I would imagine, Alex, you've seen this. I mean, it is, and this does get to sort of the macro of women's sports right now, that when people see the proof, and the proof really is in the numbers. The proof is in the viewership. The proof is in the sponsorship dollars. I mean, what was for the unnamed who weren't, as enthusiastic, what convinced, other than peer pressure, was there something that you used, a number or an argument that convinced them?
I think a big part was peer pressure. Yeah. But when I went to meet with each and every team, I very much said, don't view me as a woman running a woman's thing. This is for the greater good of our sport. Right. And this can be something hugely impactful and powerful in a really positive way. Because thanks to Netflix and Drive to Survive, 42% of the F1 fan base is female. The fastest growing fan demographic, the 18 to 24-year-old female. So there's a huge audience. And I think the teams realised that there was this massive shift and there was this younger female audience that was really getting into the sport. And it was about showing that the sport they loved wanted to create opportunity for women and wanted to show that the sport isn't any longer as male-dominated as maybe it was once perceived to be. So I think that was part of the reason, but also I respected their reservations. It was bold. My vision was bold. It was going to take a lot to pull it off. It was a tough time to get it done, but we got it done. And then as soon as we announced it, it was time to try and get on the F1 calendar. Right. Stefano gave me huge support to meet with all the promoters. Again, not all of them were hugely enthusiastic, but some were. And I got half a calendar, and Stefano helped me to get a few more on to make a full calendar. And now that's not an issue anymore. So that initial maybe skepticism, I think, has completely shifted because we're up, we're running, and people can see that it's having impact.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered the supplies he needed from Amazon Business.
Peter Piper, big peppers, run, rock, rhyme, Humpty Dumpty fell down, it's our time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
There's a sense of urgency that we all must do something. We shouldn't feel defeated, but we can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems? I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
Putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
Involved with the WNBA and team ownership with the Lynx in Minnesota. Over the last several years, we've seen this incredible amount of increase in interest, in dollars pouring into sponsorship and marketing. And then on the back end, the ROI has been incredible because the viewerships have never been better. But in your position as a leader of the academy, how do you think you can capitalize on the influx of capital coming into women's sports?
Well, we're lucky in that I never needed to look for investment. I never needed to go out and prove the business case because I had all the support I needed from Formula One and Liberty. But I do think to be successful in the long term, first and foremost, we need to create great racing. We need to create something that people want to watch because they shouldn't feel obliged to watch because it's the female category. We need to come to a race weekend and be a great addition. Promoters have to see the value of having F1 Academy. And then on the other side, if we get that extra viewership, if we get those extra eyeballs, commercially, we have a very strong proposition. And the two are so closely interlinked, and it's really that vicious circle. You can't really have one without the other. But suddenly we managed to get a lot of the F1 broadcasters also showing F1 Academy. Now we have our own Netflix docuseries. Suddenly we do have that reach. So for the commercial partners and for the teams, it's a real business case to go out to their partners and sponsors and say, okay, well, F1 Academy makes sense. Not only are we doing something that's good for the sport in supporting female drivers, but it's actually a return on investment for us. And I think the two had to go hand in hand. And it's been definitely lucky timing as well. The world changed, women's sport had this huge moment, and Formula One had this huge surge in popularity. And I do think all three came together that it gave us at F1 Academy a good shot at success, for sure.
So, Susie, when it comes to sponsorship, I mean, one of the ones that obviously jumps out when it comes to F1 Academy is Charlotte Tilbury. Not a natural name that we would associate with motorsports. Talk to us about how that deal comes about, because the car itself really jumps out, but even the association is notable. How does that happen?
Well, once I had the great idea of bringing in all the assets in-house and owning the liveries and commercializing them centrally. I woke up on the 1st of January last year and realized, okay, I've got 6 liveries I need to sell, and the first race is in kind of 8 weeks. But there had been a friend of mine through my racing career who had been in touch. She knew Charlotte Tilbury and said, listen, Charlotte would like to support a driver. So I immediately picked up the phone and said, listen, don't support a driver, become a partner of F1 Academy. And it was one of those phone calls, it was with their head of partnerships, where 10 minutes in, we just knew we were going to get a deal.
Wow.
We were so aligned. They wanted to move into women's sport. Their whole mantra is empowerment, see it, believe it, do it. And I very much wanted to bring in a female-founded, female-focused brand. I wanted to break down the stereotype that, well, to be taken seriously as a racing driver, you had to be like a tomboy. No, if you want to turn up at the track in a face full of makeup, you can, or with no makeup. That doesn't reflect on your ability as a driver. And we were just so aligned from the get-go. It was a challenging deal to piece together because Formula One was used to huge deals with oil companies, with logistics companies, and this had to be pieced together in a very different way. And when I called Stefano and said it's a brand called Charlotte Tilbury, he was like, who? I said, can you ask your wife? And I could hear him, Sylvia. And he's like, okay. He said, I trust you. If you think we're going to do this, then let's do it. And we got the deal done, and I said, okay, you have a livery to design. And they sent me through the livery with these hot lips plastered all over the race car with lipsticks hanging out. I thought, oh my God, this is going to create a lot of attention, maybe not all of it positive. But I knew it had a real impact when my stepdaughter, she's studying in LA, not really interested in motorsport. She called me and she said, you've just done a deal with Charlotte Tilbury. That is so cool.
Yeah.
And I thought, well, if we've reached a dorm over in LA, it means we've done something right. And it just blew up.
Yeah. And so what does a deal like that do in terms of not just drawing attention, but maybe changing the conversation with other sponsors? Or does it?
The amount of brands who I've spoken to have said, well, I want to do just what Charlotte Tilbury did. Let's copy and paste that deal. Because she came in and really disrupted, and we wanted someone to disrupt, to come at it differently. You know, in our Paddock Club area, we have a makeup station. We wanted to challenge what had always been the status quo in racing. Let's do it differently. Let's not be ashamed of our femininity. We can still be here and be taken seriously as women and celebrating being women. So it was that partnership which really was the foundation for others coming on board. Tommy Hilfiger was one of the first to call and say, how can I support? And also took a livery. And then slowly but surely we got most of the cars sold, and now I'm in a great position where I don't have enough cars left anymore for the demand, but I keep my feet firmly on the ground. You know, we've had a huge success in a short space of time, but we need to keep making sure that we're making the right decisions for the longer term, that we're still making sure that we're evolving in the right way for these young girls up and coming to see the opportunity.
A part of the larger event, obviously, and then its own sort of separate space. But I would imagine that that's a careful balance that you have to strike, right? You know, to appeal to the broader fan base, but also bring in, how do you do that? I mean, that must be something you're thinking about all the time.
It's definitely a balancing act because we are a junior championship. We're very lucky to race alongside F1, which is so established with a huge fan base. But we don't want to be a little sister in the room. We're there to take our space, to own it, to disrupt, to be bold, but in a way where it's respecting the bigger picture. Just because we're women, you know, someone says, oh, it's not fair that, you know, the F1 teams have the best paddock and you're off in the support paddock. I said, no, it absolutely is, because that's the pinnacle of the sport. And that's Formula One. And we're not here to disrupt what is a great, great sport. We're here to be an addition, and we're here to build up young talent that can hopefully progress. But it's definitely a balancing act of being taken seriously and of owning it, but then also understanding of where we fit in the bigger ecosystem.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered the supplies he needed from Amazon Business.
Peter Piper picked peppers, but run, rock, rhyme. Humpty Dumpty fell down. Kids all time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems? I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
Putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning. Fantastic.
So we are, if you don't mind, we're going to role play a little bit, okay? Jason, Mr. Kelly, is a CEO in a Fortune 100 company.
Okay.
He's very interested in giving you some dollars. Give me your 30-second pitch on what is the value proposition to Jason and his company partnering with you.
You are really putting me on the spot here, Alex. I will give it my best
I'm
shot.
his assistant.
Well, we would love you to come on the journey with us because F1 Academy is something that is young. It's only in its second season, but we've had huge impact in what is such a big global established sport. And we believe we can change the perceptions. We believe there's a great opportunity for your brand to appear on an F1 Grand Prix weekend and sit alongside huge names in the sport, but be seen as supporting something which is having huge positive impact in our sport to create change. We have great broadcasters. We have great audiences now watching F1 Academy, and we would love to have you on board with us.
Boom.
Is
All
that
right.
30 seconds?
That's
or did
good.
I go over?
That's good. I have follow-ups. I'm getting there. I'm almost convinced. But tell me about your audience. Like, tell me how how your audience is similar to Formula One. Who are you bringing in? Who am I going to reach that I wouldn't otherwise reach?
We're definitely reaching a younger audience. I mean, obviously with the demographic that Formula One is now hitting, it's younger than it's ever been. But we see that we have nearly 70% of a female audience. So less than, or let's say more females in Formula One. And we're definitely hitting an audience which isn't already in motorsport. It's an audience that's coming upon F1 Academy as something different, as something new. And it's not just your, let's say, average motorsport fan. And that's quite exciting because if you're already in the sport and you have that viewership, but we are attracting something which is not already known to the sport.
So I think we want to sign a 5-year deal, but Jason's the best 5-year, okay? So how does it look today versus where you see this in 5 years? Because we're in it for the long run with you.
Well, that's great to hear. But we are definitely got huge ambitions for it to be bigger and better in the future. But I've always said we can't run before we can walk. It's going to be a step by step. And I think one is the educational piece. We need more people to understand what F1 Academy is. I would love your daughters to say to you, oh, it's not F1 just this weekend, or F1 Academy is coming to Miami, that there is this education that we exist and that we are a great spectacle, a great sport to watch alongside Formula One. And we're not there yet. And we've still got a lot of work to do to build up that wider audience to make sure that we are attracting the next generation audience, those young girls, the 8 to 12-year-olds. If they can see a female driver zipping up a Ferrari or a Red Bull or a Mercedes race suit, it will change her perceptions of what's possible. So we've definitely got to make sure that we continue to get that reach. And one of the big moments for us will be our
Netflix docuseries, because I do think that's could be a game changer for us.
All right, we're done role playing. That was fun. You got your deal. You got your deal with, A&J Incorporated, the Deal LLC. Netflix. I mean, you cannot talk to anyone about Formula One. You really can't talk to anyone about sports and media without talking about the Netflix effect and Drive to Survive and everything that it did for Formula One. So now, here comes F1 Academy, your own Netflix series, but with a twist. You're in business with Reese Witherspoon and Hello Sunshine. Tell us how all of this comes about, because it feels, in retrospect, obvious, but it's never that easy, I'm sure.
No, it's never that easy, but it was a partnership that I felt was meant to be. I think Hello Sunshine and what Reese created with Hello Sunshine, trying to tell the women's stories in a way that hadn't been done before, it fitted so well with F1 Academy and our story. And the timing was quite opportune for them to say, okay, it was still a risk, because when they came on board, we were racing on empty racetracks. There wasn't really the momentum that we have now. But they were very committed. They could see the potential, and they very much wanted to do more in women's sports. So I would say it was a leap of faith from their side. Mm-hmm. Obviously, the way the series progressed was very favourable, getting the team on board, racing with F1. And then we had to find a streaming partner, and it was always clear for me I wanted it to be Netflix, because I wanted to be in the F1 paddock. I wanted to have the team principals as part of our story, because they were the people I dealt with every week. And I also wanted people to see how much support F1 was giving F1 Academy. And the negotiations started, and we had more than one that was interested, and that led to us getting a deal quite quickly with Netflix. And then it was, for me, really a voyage of discovery. I very much wanted this to appeal to people that weren't in the motorsport bubble. Mm-hmm. And I had to sometimes take a step back, because I don't think I'm the right person. I know too much about
You're not the target audience. Yeah.
I'm not the target audience. But it was a really interesting journey of trying to create something which we felt was compelling viewing, but also did justice to how credible and how important F1 Academy is in the bigger scale.
Yeah.
I think we have such a great opportunity with this series coming out. Obviously, we hope people will enjoy it. I say, even if we can have a fraction of the success that Drive to Survive did, it will be a game changer for us.
So tell us about it, sort of that compare and contrast, because I mean, you had a front row seat. Your husband, Toto Wolff, was notably very skeptical about Drive to Survive from the beginning. Mercedes didn't participate in the first season. He's talked very openly about how he got that one wrong, and obviously has become a key character. You obviously have appeared on Drive to Survive a number of times in your various roles around the sport. What did you learn from being featured in that series that impacted or affected how you think about this series about F1 Academy?
It was quite a challenge, because the Formula One teams and drivers and team principals are all very established. We have 15 unknown drivers who are at the very beginning of their journey. They're not established superstars yet.
They're literally teenagers in some cases.
They're literally young women who have been given this incredible opportunity. And for some of them, it was quite a big challenge to suddenly be with cameras everywhere on a Formula One race weekend. And we had to protect them in a way that we weren't being too intrusive, but we needed to see the drama. We needed to see the human stories. And because we're not in the F1 paddock, the cameras could go everywhere, and they managed to capture, for me, quite emotional to watch back, to see how tough it was for some of the drivers, and definitely made me question a couple of things that we can do to improve it for the young drivers. Because it is tough. You're suddenly in the limelight, and as much as you need that exposure and that limelight to help you in your career, suddenly there was a 17-year-old signed to a Formula One team, racing 2 hours before Formula One, and just 1 year previously she was karting. So it was a big step up, but I felt very sure that we needed to create that exposure, and we needed to create this disruption to get the eyeballs in the audience and to create that impact. So it was definitely a learning process. And then, of course, the balance between how much of the racing that people want to see. Was it more the drama off track? I didn't want it to look like a girly, reality TV show. These were serious young racing drivers that had to be taken seriously on screen. But I have to say, Hello Sunshine and Netflix was really a privilege to work with both teams, because we always had the eye on the bigger picture and the balancing act of doing it credit in the right way, but trying to create something that people enjoy watching.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered all he needed in one place on Amazon Business.
Peter Piper, pick peppers, run, rock, rhyme, Humpty Dumpty, fell down, kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
Rail, name something that's hard to do with your eyes open. Read. This boy in college. He leaned into the mic and said, read, Steve.
Watch the Family Feud channel on Pluto TV. You watch this show, it's fascinating because, you know, there are a lot of people who, you know, run leagues or run teams who, you know, they're a little bit, you know, removed from the action. Knowing this guy and knowing how passionate he is about the pursuit of excellence on court, on field, whatever, you have sat in these seats. And so you have this very intimate and emotional relationship with these drivers that may be, I dare say, different from maybe another executive. Is that fair?
Definitely, definitely. And there's moments where if I see a driver that's had a bad qualifying or a bad race, I can sympathize so much with how she's feeling. If a driver's under immense pressure because the results haven't come, I know what that feels like. But on the other side, I remember here last year, you know, Abby Pulling, she stood on the podium at the Miami Grand Prix weekend, and I thought, to have that opportunity, you know, I'd never had the chance to ever even close to Formula One when I was a young racing driver. So the idea that we've created that opportunity fills me with pride, but there's definitely, for me, a real emotional part. And I obviously have to try and stay a little bit detached from the drivers because I don't want to ever show favoritism, but I definitely have passed the baton on, and I have a new head of talent development who I can see when a driver's struggling, or I can see when there's an issue, and I always say, okay, you got to go and speak to her and these issues, and I can pass on all the mistakes that I want them to avoid that I made, and all of the things which, looking back, I could have done better. I love that I can pass that knowledge on.
You must feel that.
I do, and I got to tell you, Jason and I were speaking before you walked in, and we were talking about how great that first episode was.
Thank you.
It was really, really good. And I can relate so much with you because as you kind of walked in as the boss, when I entered the New York Yankees in 2004, I had another boss, and his name was George Steinbrenner.
Literally the boss.
The boss. And it was like this reverence and like this ultimate respect. And I saw those young ladies, and of course I think of my daughters, the way they look at you. Have you ever thought and pinched yourself the impact you're making in these young ladies' life, whether they make it to F1 eventually or whether they go on to be an executive like you?
I don't stop to think about it. I can see that they take on board a lot of what my opinions are and when I give them advice. And I certainly feel sometimes I'm sitting in a room full of men and we're discussing F1 Academy and they all have opinions, and sometimes I have to hold myself back because I think, well, you're not a woman. You've never driven a racing car, and you're trying to tell me that this is how it needs to be. But I respect the other opinions because I think sometimes it's different perspectives which can also open my eyes to new things. But I love what I do. I love the fact that I'm creating something which is giving these young drivers an opportunity that I could only ever have dreamed of, and that the sport that I love has made this possible.
You know, it's interesting when you say that, Susie, because I think I have some sense from your stories about what you're up against a lot of these times. And I do wonder, in your mind, like, are there times when you just think, God, this is exhausting? Like, why are they just like banging on doors or beating your head against the wall, whatever, you know, metaphor you want to use? Like, does it sometimes just feel like this is ridiculous that I have to work this hard for something that's so obvious?
Absolutely. There's definitely been moments where I thought, have I got this? Have I got it in me to keep going?
Yeah.
But I think it's from my racing career, that tenacity, that never giving up and being so close to achieving what I want to achieve. But there are days where it just exhausts me, the endless conversations and not being able to actually make things happen, just talking about. So yeah, that there are, but I think everyone has those tough days.
Sure. So it does feel like in these first 2 years, there have seemingly been moments, you know, I'm sort of flipping the question on its head when I said, are there frustrating moments? Have there been moments, a moment or two, where you've thought, what, like, we're doing something real here. This is happening.
It was the biggest moment for me was Jeddah last year, where I had few people with reservations that we should be racing in Jeddah because it was such a dangerous and fast racetrack. To which my answer was, well, if men can race it, women can race it, that shouldn't be a consideration. But it was the first time I'd seen the 10 Formula One teams with their own liveries. It was the first time I'd seen our partners with their own liveries. We put all 16 cars on the grid to take a picture. I had the Netflix crew following me with Hello Sunshine. And that was a moment where I suddenly got a bit emotional because all of that hard work, it had come to life. We were at the Saudi Arabian Grand Prix. There was those 16 cars all with their liveries, these young women with their race suits ready to go, and that was a very, very proud moment.
And so what's the next leap forward? I mean, what's the next big milestone for you and for the team? You're 2 years in at this point. You know, you're racing around the world. Does it expand to the grid? Is it about individual drivers? Is it all of the above? Like, what do you game plan out when you're doing those strategic conversations? What are you thinking about?
It's really important to me that our champion goes on to success in the sport, that the best female that we've identified can go back in and mix it at the front in a normal championship, because the sport isn't segregated. And our champion last year had our first race a couple of weeks ago and nearly finished on the podium. Such an important sign for us that we are at the level where these young women can compete and do have a chance of making it to the top. So the progression up the ladder is really important for our long-term success, as much as getting more young women racing, because we need to increase the talent pool. And when I go to kart tracks, and you know, my son had his first race a couple of weeks ago, and there was a girl fighting for the race win, and that's normal for him. He doesn't question a young girl being out on track with him and being really competitive. And that's changed. There's so many more young girls racing because now they have a clear target. Well, I want to get to F1 Academy. And we need both to function for F1 Academy to be successful long term.
All right, we're going to move to rapid fire. You know, no pressure.
Here we go.
Ready.
Well, I just did a pitch in 30 seconds, so I kind of feel I'm
come
prepared.
on, you're good. You've got this. What's one word to describe your deal-making style?
Authentic.
What's more important to you, your gut or data?
Gut.
Who's your dream deal-making partner?
Toto.
Oh, good one.
What's the best piece of advice you ever received on deal-making or business?
Always have another option. Don't fight to make the one deal work.
What's the worst advice you've been given?
The deal has to happen at any cost.
What's your hype song before a big meeting or negotiation?
Don't Stop Believing.
Good one.
As we've talked about, you have a new docuseries out on Netflix, F1 The Academy. What's your favorite sports documentary of all time, other than that?
I love the Michael Jordan basketball. What was it called?
The Last Dance.
The Last Dance was fantastic.
If you can only watch one sport for the rest of your life, which one is it?
Formula One.
What team do you want to see win a championship more than any?
Oh, the Scottish rugby team. They need to win something, finally.
What's your advice for someone who wants to have a career just like yours?
Go for it. I think quite often it's taking that first step, which is the hardest. But I think you need to believe in yourself and simply go for it.
Boom.
Susie Wolff, this has been such a treat.
Survived.
You did it. Listen, you were one of the first people I thought of when we started this show. I really have watched your career with a lot of admiration, as I said, and really grateful to you for spending some time with us. Thank you.
Well, thank you both for having me.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered the supplies he needed from Amazon Business.
Peter Piper picked peppers, but run, rock, rhyme. Humpty Dumpty fell down. Kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
Putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Heidi Strait-Watts. The top stories this hour. Treasuries rally as weak US services data adds to bets on 2 Fed cuts this year. Chips are in focus as the White House works to renegotiate global deals with manufacturers.
Elon Musk stepping up his attacks on President Trump's tax package, urging Americans to kill the bill, which he says could bankrupt America.
And it is crunch time for Nintendo as its Switch 2 console hits the stores with hype and high stakes for the Japanese gaming giant.
All right, let's take a look at what's in store for the trading day ahead. We're an hour away from the open of Australia, Japan and South Korea. We've got futures here in Australia looking kind of flat at the moment. Nikkei futures just off by a few points. We have the yen continuing to strengthen right now, 142.76. Just getting some breaking news as well out of South Korea, as you see on the screen there. GDP numbers for the first quarter. This is a partial reading, a contraction of 0.2%. That was very much in line with what was expected. The annualized figure, however, flat. We were anticipating that would contract a little bit more of 0.1%. The biggest drag on Korean GDP was construction. That contracted 12.5% on year. Manufacturing contracting 0.6% on the quarter. But in terms of an annualized figure, that's still seeing an expansion of 0.4% on year. A little bit of concern as well among the market, particularly the bond market, about just how much the incoming president intends to spend. We saw yields on 10-year sovereign South Korean bonds jumping to 2.9% due to concerns on rising government debt, Heidi.
Yeah, a lot of these concerns playing out in the bond market. Right, take a look at how we're tracking when it comes to US futures. We saw a gauge of global equities touching a record high after some pretty modest gains on Wall Street. We are seeing that looking pretty muted in that futures session. Trading pretty flat at the moment, a bit of downside there both for the S&P futures as well as NASDAQ 100 futures, and watching sort of treasuries as well. As Paul mentioned, a lot of focus still in that space. Treasuries we actually saw rally on the back of some pretty tepid US eco data, just kind of reinforcing those expectations that the Fed could cut potentially twice this year. Also watching oil, we're seeing that pullback about 0.3% softer there. We're seeing that Saudi Arabia is wanting more supersized OPEC plus hikes in that continued push for market share. So that is weighing into this after what has been several sessions that's been dominated by some of the more geopolitical elements of this dynamic. Well, US Commerce Secretary Howard Lutnick says the administration is reworking agreements with chip makers under Biden-era legislation to secure better terms and generate additional domestic investment.
With respect to CHIPS deals, we are improving those commitments to more than $300 billion, doubling the previous investment of those companies receiving CHIPS Act awards without costing the United States taxpayer a single additional dollar.
Let's bring up Bloomberg editor John Harney, who joins us out of D.C. And John, so President Trump had asked Republicans to repeal the CHIPS Act. How likely, I should say, is that likely to occur now?
From Secretary Lutnick's testimony, probably not so likely. President Trump often, both in this administration and his previous one, takes a dim view of the legislative accomplishments of his predecessors. But the CHIPS Act, passed, of course, under President Joe Biden, was approved with votes from both parties, Democrat and Republican. And there's very little enthusiasm at this point to repeal this act, as $52 billion in subsidies, along with investments by TSMC and Oracle and various other companies, are at stake here in many different states, both that voted for Trump and did not vote for him.
We've also got Elon Musk making increasingly strident and colourful comments in opposition to Trump's big, beautiful bill. How likely is this to damage the bill's progress as it moves through the Senate?
Call your senator, call your congressman, kill this bill. If there's not a rift between President Trump and the world's richest man, it's hard to make that distinction. So he thought the president assures everyone that, or the president, rather, uncharacteristically has not made any criticism of this attack on his one big beautiful bill, but his allies in Congress on Capitol Hill, House Speaker Mike Johnson and John Thune, the Senate leader, have made it pretty clear that they're moving forward despite all that Elon Musk has done for their party, with or without him. Now, the president called Republican senators at the White House just a few hours ago, and one of them, Roger Marshall, a Kansas Republican, said Elon Musk never really figured in the conversation. So it may come down to this. Many Republicans, who are probably a minority at this point, but a significant number because the margins are so narrow, have misgivings about this bill because of its cost, because of other considerations, and this this attack by Elon Musk may weigh on their concerns. Now, will it damage the bill? We don't know. One other thing that was not mentioned by Elon Musk was the whole salt tax donations, or the salt tax deductions that the Senate is saying will have to come back down after a very careful agreement in the House. That could present some real problems for the bill going forward.
All right, Bloomberg editor John Harney there. A weaker than expected U.S. services activity data has reinforced bets that the Fed will cut interest rates at least twice this year to prevent a recession. For more, let's bring in senior editor for markets and Bloomberg opinion columnist John Authers. John, are we seeing a little bit of a disconnect here between what the market is pricing and expecting and what we're actually hearing from speakers of the Federal Reserve?
I'm not totally sure about that. I think that what we're seeing is a massive time lag problem because people in the real world making decisions for their businesses can't make the same taco trade by assuming that Trump will always chicken out that people in financial markets can. So the latest wave of data that we're getting at the moment is coming. We also had the Beige Book and we also had the ADP payroll data, which is, we had quite a trifecta of generally pretty negative. We hear about the US today, but it all comes from a period when conversation was completely dominated by tariffs, when companies had previously brought forward their big orders and were now more concerned to wait and see. So unfortunately, I think the Fed is probably justified in needing to see quite a little more, and putting that differently, the market is justified in saying there's really no way the Fed is going to have confidence about the need to cut until September. I mean, it's still ultimately a belief that the Fed is going to have to be considerably more hawkish than most other central banks or developed market central banks around the world.
Joe, you've got to be wondering what those in the halls of power in Beijing would be thinking about the taco trade, right? Particularly as we get this sort of, late night lamenting from President Trump about how much he likes President Xi, but how difficult he is to make a deal with. What are markets sort of doing with the to and fro and the uncertainty when it comes to this set of trade talks?
I mean, remarkably little. It's quite interesting that I'm trying to piece together. I'm working on my column for tomorrow as we speak. There is this, but there is also Ukraine and yet another round of very interesting developments on Ukraine. After a certain point, markets lose interest. Liberation Day caused intense excitement, and now there seems to be a belief that we can safely ignore this, just as there has ultimately been a fairly clear belief as far as markets are concerned that they don't need to be too worried about what has been happening in Ukraine for getting on for 3 years now. I am therefore worried, you can use the taco analogy as much as you like, whether this means we're going to choke on our tacos or whatever, but the assumption that the president, who obviously genuinely does believe in tariffs, does believe in protectionism, and who obviously really hates the idea that he chickens out, that he is a pushover. I am still not clear exactly how the president gets out of this without leaving in place some tariffs that the markets are going to really dislike. But I guess it's still deniable. The animal spirits have turned, and there is this belief that he does always chicken out. I'm not sure we have enough evidence that he will cave for markets to be rallying the way they have been.
Bloomberg's John Authers there in New York. Well, coming up on the Asia Trade, we'll be asking Ashton Analytics about the likelihood of that call between China's Xi Jinping and President Trump, of course, now centered on this critical call as to the next steps for progress in this trade détente. Plus, Technalysis joining us a little bit later on to unpack today's release of the Nintendo Switch 2. Later on Inside with Haslinda Amin, the former Australian Prime Minister Malcolm Turnbull weighs in on President Trump's efforts to reshape the global political and economic landscape. That conversation at 11:15 a.m. in Hong Kong, 1:15 p.m. if you're watching here in Sydney. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered the supplies he needed from Amazon Business.
Peter Piper picked peppers, but run, rhyme, Humpty Dumpty fell down. It's our time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
The future of trading is here on Robinhood. Purpose-built for how you trade. With new ways to execute your strategies and analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures in one place.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise.
The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
President Trump says Vladimir Putin has warned him that Moscow plans to retaliate against Ukraine following recent drone strikes deep inside Russian territory. Trump and Putin spoke by phone as U.S. efforts to broker a peace deal show signs of stalling. For more, let's bring in Bloomberg's Michael Heath. Michael, no surprise really that we'd expect some Russian retaliation here, but in some respects, does that clear a path for tougher U.S. sanctions as well?
Well, you'd imagine so, Paul. You know, the stage is set there, and yet we got no sense of that from President Trump as well. And this sort of extraordinary situation of him reporting that Russia will retaliate, severely against Ukraine. I mean, Russia has been bombarding civilian areas, etc. I mean, the notion that it needs to retaliate further is sort of a bit strange. But this is the president of the most powerful country in the world talking to basically a regional power. You'd imagine he'd say, "Don't do that," or try and insist on talks or something. It's almost sort of what he's just reporting on what Putin thinks about events, especially when we talk about Iran as well. So yeah, unusual, but I guess we'll just have to see what Russia does. But you'd imagine he would have warned him not to do that. It was really quite surprising. They do have serious sanctions there, but again, every time President Trump talks to Putin, he seems to be more enamored and just doesn't have, there's no strength there given it provided at all.
These developments when it comes to North Korea is interesting, right? This sort of, strong level of support that's been pledged by North Korea to Russia and all its, quote, international issues. And it comes not really much long after we actually saw North Korea acknowledging that they have troops in these international battles.
Yeah, I think, look, my sense is that North Korea is getting a lot out of Russia for this. I mean, North Korea has these massive ammunition supplies, all these armaments that Russia, that will basically allow Soviet weapons to be used constantly, all those compatible bullets and shells and that sort of thing. So it's really in Russia's interest, but I think North Korea is getting probably a decent amount of technology from Russia there. It still has Russia still has a good technology gap there with North Korea, and Kim's regime getting access to that would be perfect for him. I mean, in a sense, the strange thing about 25 years ago when Putin came to power, people were sort of trying to bring North Korea towards the West. It almost looks like Russia is turning into
into a larger and milder, but heading more towards the North Korea direction, where it's just a large spoiler, powerful, important, but very, very difficult to reason with as well.
It's interesting when you talk about, almost the neutrality with which President Trump passed on that message, right? Just the messenger. What do we make of his foreign policy at the moment? He's obviously got a lot going on, both in terms of Ukraine, Gaza is still ongoing. This North Korea, relationship is interesting, right? Given we saw the Trump-Kim summit in the previous administration. Is there a sense that he's sort of being overwhelmed at the moment, or what's the strategy?
I mean, look, in fairness to President Trump, it is an extraordinarily volatile period, and there's, whoever was in power was going to really, really struggle with this, and there's no particularly obvious solutions to these issues. But his efforts with Russia, I mean, it's sort of you can see the flickers of realisation coming through there when he gets frustrated with Putin that the personal relationship is going to mean nothing. Everything in Russia is about interests, and as I've said before, they respect strengths. But in the end, the US is going to, if it wants to get something done there, it's going to have to put more pressure on Russia. But when it comes to Israel and these sorts of things, I think, President Trump he does like to think that he thinks outside the box, and in places like the Middle East, he does, in fact, in many respects. And we saw that extraordinary breakthrough late in his first term, where he brought the Gulf states the recognition of Israel, and he's looking for some sort of grand bargain like that again, which is interesting. But it's just the inconsistency, I think, with which he deals with things, that sort of erratic nature that pervades all of his policies. It's difficult to sort of follow. But when it pays off, I suspect it pays off well. We'll just have to see. It's still pretty early days, in fairness.
Bloomberg's Michael Heath there. Well, the European Central Bank is expected to lower interest rates for the 8th time in a year later on Thursday, bringing the deposit rate to 2%. The ECB is shifting from tackling elevated inflation to now a phase of unpredictability over the impact of President Trump's tariffs on prices. Bloomberg Economics sees policymakers retaining a dovish tone, though, to keep the door open for further easing later in the year. And on Europe, the EU Economy Commissioner Valdis Dombrovskis is seeing some progress when it comes to trade talks with Washington as negotiations race to prevent higher US levies from taking effect on July 9. But he also told us that the bloc will not hesitate to impose counter tariffs if the deal falls through.
We do see a negative economic impact from the tariffs already imposed on the EU by US, and also on uncertainty which those tariffs are creating, as we know that we are also not yet at the end of the negotiations. So correspondingly, we saw it as one of the factors slowing down European Union economic growth this year, and correspondingly we expect only EU economy to grow by 1.1% this year. So from European Union side, we are willing to find a mutually acceptable solution with United States as regards the tariffs, also to put an end to this uncertainty and to avoid further also global economic fragmentation.
If you guys cannot reach an agreement by this, at least the deadline that the U.S. has put on you for next month, have you prepared a package of retaliatory tariffs against the U.S.?
Well, as you know already, when the steel and aluminium tariffs were introduced by the Trump administration against the EU, we already prepared the first set of countermeasures, counter tariffs, but we also suspended these counter tariffs to give negotiations a chance. But we had reiterated that if we are not able to find mutually acceptable solution, we are ready also to put those counter tariffs in place as regards the first package, which was our response to steel and aluminium tariffs, but also broader package, which is a response to already further tariffs which had been imposed on the EU. But right now we are still negotiating. Actually, exactly today, our Trade Commissioner Maroš Šefčovič is in negotiations with U.S. Trade Representative Mr. Greer, and they are making progress.
Commissioner, at the same time, China has announced an agreement to buy Airbus planes, potentially 300 of them. And I wonder how much, while trade negotiations are going on with the U.S., the European Union is moving forward with some sort of discussion with China about tightening ties there.
As regards China, it's worth noting that China is second largest EU trading partner after the US. So obviously for us it's very important to have our transatlantic relations and including trade and investment relations on track, but obviously also relations with China are important.
It's EU Economy Commissioner Valdis Dombrovskis speaking with Bloomberg's Romain Bostic and Lisa Abramowicz. Other political stories that we're following. For the first time in 6 years, the Indian Prime Minister may miss the G7 summit. This is being attributed to frosty ties between India and this year's host, Canada. Sources tell us that Prime Minister Modi has not received an invitation yet from Ottawa, but officials say Modi is unlikely to attend even if invited. India is not a member of the G7 but has been invited to every summit since 2019. NATO is set to hold a summit on military spending later this month as leaders seek to win over President Trump with a pledge to boost defense budgets. Sources say leaders of the bloc are likely to agree to Trump's demand that member nations allocate 5% of economic output to defense. The summit will also address Ukraine's ties with NATO, with Secretary General Mark Rutte inviting Ukraine to the gathering on June 25. The US Education Department said Columbia University no longer appeared to meet accreditation standards due to its violation of federal anti-discrimination laws. Secretary Linda McMahon claims the school acted with what she called deliberate indifference towards the harassment of Jewish students as pro-Palestinian protests roiled on campus. Columbia, for its part, says it's committed to combating anti-Semitism. More ahead on the Asia Trade. This is Bloomberg.
You and I are in this together.
These are the good days that we dreamt about. Take it in. Seize that moment when it comes.
Truth or dare?
Truth. Truth.
Truth. If you have something to say, then I want to hear it.
You attack me every time I pass you in the hall. I think you're cute.
Dream on. Mystic Oracle. Is it true? Give me a dare.
Watch this.
Did you hear that?
You guys seeing this?
It is our job to take you where others won't.
Beverly Hills 90210 is back on its very own channel.
I love this place.
Here, the zip code isn't just a number, it's a lifestyle.
I'm so excited.
Relive your 90s dreams on the Beverly Hills 90210 channel on Pluto TV.
Well, it is a big day when it comes to those that are fans of Nintendo's gaming systems, right? This console, the Switch 2, this is the first gaming system that's new in 8 years from the company. The global launch is today, on Thursday. The company is planning to sell 15 million Switch 2 units by next March. Some estimates are sort of more towards 20 million. Will retail for $450 in the US. That is a 50% increase over the predecessor.
Big price jump. There's some early reviews of this console already starting to trickle trickle in. Some people saying, well, it feels like an upgrade. Is it worth $450 for an upgrade? An open question about that, but some very good reviews on the first games, particularly Mario Kart, getting very, very warmly welcomed there. But in terms of specs, we've got a bigger screen, 7.9 inches. Game Chat allows up to 12 users at a time to share their screen, and an NVIDIA graphics chip in there. It supports ray tracing. Basically, this makes images look more realistic due to the way that light hits them. So it's just a much better gaming experience. Users should see a much better performance over the original. But yeah, it's going to be interesting about that price point, isn't it? Whether that's going to persuade users to get a new console or keep the $450.
Yeah, it's interesting. Margins on sort of consumer electronics generally tend to be lower than other products, and particularly true when it comes to the Switch 2. The wholesale price allows for some pretty slim markups, if you will. So retailers, though, still obviously very keen to sell this product. Best Buy, GameStop will both be open from midnight for that release on the evening of June 4th. Best Buy hosting events in its parking lots. We've got trucks full of games for fans to play over the weekend and throughout the summer as well. So it'll be quite the fanfare. Nintendo also holding a lottery for those consoles at its retail locations in places like New York and San Francisco. There's a limit of 1 unit per buyer. We're seeing, of course, a lot of other events as well, particularly in Japan. 2.2 million applications were submitted for the lottery on pre-orders there, much more than what the company could obviously fill.
Yeah, certainly a lot of early interest in this. It's whether that interest can be maintained into 2026. Anyway, let's take a look at what markets are doing.
Yeah, let's take you to US futures. It was a pretty kind of muted session, some modest gains, if you will, overnight, even as sort of the global equities saw a little bit more energy than the Wall Street session. We're seeing S&P futures looking pretty flat at the moment, about 1/10% lower when it comes to NASDAQ 100 and S&P futures a piece there, and Dow also down by about the same tune. More ahead on the Asia trade. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered all he needed in one place on Amazon Business.
Peter Piper picked peppers, but run, rock, rhyme, Humpty Dumpty fell down. The kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate.
Putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
Watching Japan this morning as we get that key wage growth number coming through, and in fact it was a bit of a disappointment on expectations, lower than estimates, with April cash earnings rising 2.3% year on year compared to the median estimate of 2.6%, between 2 to 3% across 17 economists. Adjusted for inflation, real wages coming in at a contraction of 1.8% year on year. The estimate was for 1.6% there, and total wages on a same sample basis gaining 2.6%, a little bit softer softer than what we saw in the previous month. So Bloomberg Economics had expected to see a pickup of 2.9%, looking at some of that growth coming from calendar effects in particular. We did see wage growth pretty subdued in March as well, with those lingering leap year effects that we see continuing to pay out in the sort of the time that salaries were being paid across late February had an impact there as well. So full-time workers' base pay growth is one that we watch pretty closely. This is a measure preferred by the BOJ, and we are seeing seeing a little bit of weakness there as well. Overtime hours looking unchanged from March. Remember, Governor Wader said that the rise of around 3% in that particular gauge of full-time worker base pay would be consistent with that 2% inflation target.
Well, President Trump is positioning a personal discussion with China's leader Xi Jinping as the key to preventing the world's largest economies from spiraling deeper into their trade and technology fight. The White House said on Monday that a call could happen this week, but the lack of a Chinese response appears to be keeping the president awake at night. In a social media post after 2 a.m. Washington time, he said the Chinese president is very tough and proving hard to make a deal with. For more on this, let's get to Anna Ashton, founder of Ashton Analytics. Anna, feels like we've been waiting a long time for a phone call between Xi and Trump when it comes to trade. There doesn't seem to be any sense of urgency on the Chinese side to pick up the phone. What's the strategy here?
Thanks for having me, Paul. You know, we have been waiting a long time in the sense that the Trump administration has been dangling the prospect of a mano-a-mano meeting between Trump and Xi, or a call between the two of them since really the beginning of this administration in January. But that's never materialized. And I think that at this point, the strategy is probably that the pressure that China is exerting on the U.S. seems to be working. The president seems a little bit desperate. So why not let him sweat it out a little bit longer, so that the leverage actually produces some sort of result that is good for China?
Yeah, obviously the standoff isn't ideal for either country, but which economy can endure more pain at this point, the US or China?
You know, it's hard to say which economy overall could endure more pain. I think you're right that this is bad for both economies, but politically, the automotive industry having work stoppages would be terrible for the Trump administration. This is a key constituency for Trump voters. So this isn't something that the president wants to see happen. It's something that he probably genuinely is rather desperate to prevent. And those work stoppages will happen if there aren't significantly more rare earths arriving in the United States from China in the near future.
It's an interesting question in terms of who blinks first, right? And we've seen this kind of position of strength being built by Xi Jinping, and I guess historically, culturally, there is that sense of, you know, being able to withstand quite a deal of pain when it comes to the Chinese economy and the Chinese people. How much has he actually benefited from the sort of nationalistic rally and galvanization in this case?
Xi Jinping?
That's right.
Or Trump. You know, I think he benefits from not having quite such a difficult political climate to manage, it being a state that is not a democracy, right? So I'm not sure that he has gained necessarily all that much from playing into nationalism, but Trump's moves also play into Chinese nationalism. And certainly, you know, the fact that Trump has rolled out policies that are negative for China, that would hurt Chinese students, makes it easy for people to rally behind pushback policy on the part of Beijing.
There's a lot of other sort of peripheral issues that are at play here, and Beijing's reacted to some of them, including the visa restrictions, you know, the stricter checks when it comes to Chinese international students and the such, and it seems to be sort of a broader crackdown from the administration. But how sort of unhelpful are these sorts of things as well when you're presumably trying to get a trade deal done?
Well, it certainly doesn't seem like these things are very coordinated, does it, Heidi? I mean, you really have to wonder if the left hand is talking to the right hand here in the White House, because if the trade deal is indeed the goal, which it certainly seemed to be during that early May meeting in Switzerland, then why add fuel to the fire in terms of things that are upsetting Beijing? Why create more tension in the midst of it? I think that these are separate strategies reflective of separate sets of interests and also separate kind of camps within the Trump administration of people who think about the China relationship very differently from one another. And one of the challenges for the business community in trying to navigate and predict what's going to happen next is that it's really difficult to tell which of those camps is going to ultimately have more influence over the president.
Well, of course, President Trump's trying to make deals elsewhere as well. Could we say that the prospects for, say, a US-India deal might look a little bit more promising? And what could the contours of that look like?
They might look more promising, Paul. I mean, certainly the relationship is on better footing. And there are very clear things that the two sides want, and some of it is relatively low-hanging fruit, at least compared to the challenges that are plaguing the U.S.-China relationship. You know, India wants a waiver from the 26% reciprocal tariffs. The United States wants more access for its agriculture products, for example, in India's market. An agreement like that, an agreement that is focused on, a limited set of specific issues, I think is not unreasonable to expect given the tenor of the overall relationship. But the reality is that a broader agreement may be obstructed by the fact that the courts have recently made some rulings on Trump's use of the International Emergency Economic Powers Act to apply tariffs that make it seem like, there's a possibility that the Supreme Court might say these aren't constitutional tariffs. We don't know yet when the Supreme Court will review them, but the rulings are really significant, and they affect absolutely every single tariff that was rolled out on Trump's so-called Liberation Day, as well as all of the tariffs that have to do with fentanyl. So that's the vast majority of the tariffs that have been imposed by this administration so far.
Just quickly, Anna, we got the G7 in about 10 days' time. That feels like a natural environment for some sort of announcement with one of the US's more traditional partners. Are you expecting anything there?
I'm not particularly expecting some major breakthrough. I think the key thing to keep in mind there is that this time last year when the G7 met, they were talking about economic coercion in the context of China. This year, a lot of those same countries see the most significant economic coercion threat as the United States.
Anna Ashton, founder of Ashton Analytics. Really great to have you with us. And in fact, when it comes to some of these measures from the White House, we're now hearing breaking news that the Trump administration has put forth a new travel ban that fully restricts entries of nationals from 12 countries. According to sourcing from CBS News, these countries include the likes of Afghanistan, Burma, Chad, the Republic of the Congo, as well as other countries. Haiti, Iran, Libya, Somalia, Sudan, and Yemen are also amongst them. There are also restrictions of entries from other countries as well. We had heard reporting that there were discussions underway to revive essentially his Muslim travel ban with some targeted changes after the attack in Boulder. We remember, of course, back in 2017 that we did have the first Trump administration putting in place a partial ban imposed on travelers from predominantly Muslim population nations, hence why it was labeled a Muslim travel ban by Trump and his aides at the time. We have heard, according to some memos that have been cited over the past couple of months, that the administration has been considering a revival of these travel restrictions for citizens of countries as part of this new ban. The previous information that we had a total of 41 countries in 3 separate groups. This looks like a smaller number of countries at the moment. The 12 main countries we've just been talking about, the likes of Afghanistan, Iran, Libya, and some of those others on that list as well. So we continue to bring you the latest in terms of what the implications are for travellers as well as governments, but it does look like this is something of a revival of the travel ban that we saw during the first Trump administration as well. More ahead on the Asia trade, this is Bloomberg.
Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered all he needed in one place on Amazon Business.
Peter Piper picked peppers, but run, rock, rhyme. Humpty Dumpty fell down. Kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
The average person would rather suffer through team-building exercises than look for insurance. The Zebra searches over 100 insurance companies for you to find savings no one else can. Room for one more? The Zebra. We do the searching, you do the saving.
What are you doing tonight?
Novocaine is now streaming on Paramount Plus.
I'm in.
Novocaine, rated R.
Federal regulators are investigating whether Tesla's full self-driving system is safe for public roads following a fatal crash in the US. And this comes as Elon Musk touts plans to launch a driverless taxi service in the middle of June. For more, let's get to auto reporter Keith Norton. So Keith, what do we know about the investigation so far?
Yeah, so it centers around this crash that happened in Arizona a couple of years ago when a 71-year-old grandmother and her adult daughter and a coworker were driving along the interstate between Flagstaff and Phoenix, and there was a setting sun that was causing serious glare, caused an accident. They pulled over. A Tesla Model Y came along, never slowed, and crashed into the grandmother and killed her. So that set off an investigation of the full self-driving system that Tesla has.
We also know sort of more details when it comes to a fatal accident that Bloomberg uncovered involving a Model Y. What sort of concerns does this raise over, these ambitious plans for robo-taxis in Texas later this month?
Yeah, Elon Musk is planning to launch a robotaxi service in Austin, Texas on June the 12th. And, there are still things to be worked out with the technology that he has in his cars. And that's what federal regulators are looking at. They had investigated a previous version called Autopilot, and that resulted in the recall of 200,000 cars. So now they're looking at this full self-driving FSD technology, and that investigation remains open.
Well, there's a number of different competing self-driving technologies out there. How is Tesla's autonomous tech different than others, like Waymo, the self-driving cars from the Google parent Alphabet?
Yeah, so, the interesting thing is that Elon has really bet on a camera system. All of the sensors he uses are cameras, whereas Waymo uses cameras, radar, and LiDAR, which help overcome things like sun glare. Elon has said that they have had technological breakthroughs and all they need is cameras, but that remains sort of a controversial choice in the technology community because most autonomous vehicles are outfitted with radar and LiDAR in addition to cameras.
There's Keith Norton there, and you can read the full story on the Big Take by turning over to the terminal or by heading over to Bloomberg.com. And we do have the latest details when it comes to this Trump travel ban as the number of countries. The statements from the White House say that they've determined to partially restrict and limit the entry of nationals from 7 countries and fully restrict and limit the entry of nationals from 12 countries. Those 12 countries include the likes of Afghanistan, Yemen, Somalia, Libya, Iran, Sudan, Haiti among them. And this sort of harks back to what we saw in 2017 with that first travel ban that was put in place by the first Trump administration that targeted a similar number of countries. But we have heard over the last last few months that there has been discussions within the administration in terms of considering issuing these travel restrictions for dozens of countries as part of a new ban. That particular conversation centered around 41 countries in 3 separate groups, and we have had details about some of those countries now being the target of this new proclamation to ban travel from these nations. The travel is to be banned from certain countries on national security risks, including that full restriction of entry of nationals from those 12 countries, including likes of Afghanistan, the Sudan, Somalia, Libya, Iran, Haiti, and some of the other countries like Yemen and the Republic of the Congo, as well as some partial restrictions to other countries. Those on that list includes Turkmenistan, Venezuela is one of them, Sierra Leone, Togo, Cuba, Laos, and Burundi as well. So this is a breaking story, of course, as we learn more about Trump's new travel ban that has been announced from the White House now. More ahead on the Asia trade, this is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered all he needed in one place on Amazon Business.
Peter Piper, big peppers, run, rock, rhyme, Humpty Dumpty fell down. It's our time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
Let's take a look at futures as we count down to the open in Australia, Japan and Korea. We've got Nikkei futures looking a little bit softer at the moment, perhaps a function of a strengthening yen right now, 142.76. We've got S&P futures looking a little bit softer as well. Markets in the US were quite flat today, and flat is the word of the moment ahead of the open here in Australia as well. We've seen yields slipping a little bit as well. We had some weaker than expected US services activity and contracts for the first time in almost a year. Markets now waiting for non-farm payrolls tomorrow, and bets increasing that we're going to see Fed easing start in September. Well, Carlyle Group partner Steve Wise says companies without direct exposure to US tariffs should use this time to be more aggressive as others retreat. Speaking to us exclusively at the Super Return conference in Berlin, he also explained how CEOs are coping with trade tensions.
We just, fortuitously, we had a forum with our CEOs, about 40 of our CEOs just a few weeks ago. I think the reaction back then was, wow, just trying to understand the magnitude and the severity of the tariffs. It kind of caught a lot of people off balance. But in the last few weeks, they've had a chance to catch their footing. I think a lot of CEOs, certainly our best CEOs, have found their footing in this moment. And they've kind of gone through a playbook. You know, the first thing is assessing the risk. You know, for those that have direct tariff risk, what is that and how do you assess it? That's been done. That happened in a few days. Then it's how do you shore up your supply chains? How do you find, get vendor concessions, alternate supplies? A lot of that's been done, and some price increases to the extent you can do it. The third thing that they've done is look at their balance sheet and their liquidity and make sure they can endure, you know, what could be another change to the tariff situation. And it's also a really good time to find a way to cut costs. It's hard to cut costs in really ebullient times, but in times like this, it's an opportunity to tighten your belt. The fourth thing that they've done, and the most important, is staying close to the consumer, the customer, and seeing what the customer wants and what the customer needs. A lot of our company's competitors had a haphazard reaction to the tariffs and increased prices very quickly, which really made customers upset. A lot of our better companies didn't do that. They talked to their customers, they figured out what was needed, and they're able to take a lot of market share. So that was, hugely important. And the last piece is just investing in their business, being more aggressive, and being having their foot on the gas when others are retreating.
That's interesting, because what we've heard from a lot of businesses is now is the time to pause, to not be spending capital, to wait things out. Is that not what you're telling your CEOs to do? You're saying go full forward, and now is the time to invest in yourself?
For companies that have a lot of tariff exposure, and that's a very small part of our portfolio, we want to make sure those first things that we said are in solid shape first. But for a lot of our companies, which are service-based, U.S.-only based, which are in technology, they're in healthcare, they're in financial services, they don't have a lot of direct impact. We're asking them to lean in and be aggressive while others are retreating.
Carlyle Group partner Steve Vines is speaking exclusively with Bloomberg's Danny Berger. Let's get you caught up with the latest on the corporate headlines. And Bloomberg has learned that China is considering placing an order for hundreds of Airbus planes as soon as next month. Sources tell us Airbus is talking with Chinese airlines about the size of a potential order, which could involve around 300 planes. A big order would be a significant blow to Boeing, which has struggled to make sales in China. Chinese social media giant Xiaohongshu has seen its valuation surge to $26 billion in recent market transactions. The price tag emerged through a GSR Ventures fund document that shows shares changing hands. The platform, known in English as Red Note, has gained traction among investors as Beijing unwinds its crackdown on the tech sector. And we will be taking a look at how the broader trade tensions are affecting Chinese shopping platform Meituan, where we'll be speaking to the Vice President, Yan Mao. Don't want to miss that conversation, taking place on Friday at 7 a.m. Hong Kong time, 9 a.m. here in Sydney, Paul.
Well, we've got President Trump in the Oval Office at the moment. He's got that black Sharpie out again. He's signing a number of executive orders, some of which we kind of knew about, signing a proclamation to restrict Harvard foreign visas. So that really just puts the stamp of authority on this. But more recently, this idea to restrict travel from 12 countries from entering the U.S. So this is reinstating, well, another version of the travel ban.
Another version of the travel ban. It's a flurry of activity from the White House, right? We're also hearing, of course, this intention to investigate the executive actions under Biden's presidency as well. We know some of that has been going on, particularly when it comes to the criticism over the CHIPS Act, for example, but a great deal of confusion now as to what happens with that, given the sort of comments we've heard from Howard Lutnick overnight. The other thing that we're watching is, of course, the situation in Gaza. We're hearing now from Marco Rubio confirming that veto of the UN Security Council resolution on Gaza. We knew that from sort of earlier in the day, where we saw Russia, China, France and the UK all voting in favour of immediate, unconditional and permanent ceasefire, but the US vetoing the resolution for unconditional Gaza, an unconditional ceasefire in Gaza at the US Security Council vote. So 14 remaining countries on the council voting in favour, with the US vetoing that resolution for the ceasefire in Gaza. It is a resolution that also called the situation there catastrophic and demanded the immediate and unconditional lifting of all restrictions when it comes to humanitarian aid into the area, the safe and unhindered distribution at scale by the UN and humanitarian partners. This marks now the fifth time the US has vetoed a draft ceasefire resolution at the UN in order to align with Israel. The last one was back in November, Paul.
Okay, well, let's take a look at what to expect ahead of the market opens in Japan, South Korea and Australia. They get going in a little over 5 minutes' time. So we've got a much stronger yen there, as you see, 142.82, but it's been moving around a fair bit in that range over the last few weeks. We could see that way on the open in Japan. We do have futures for the Nikkei looking a little bit softer right now, but futures everywhere, to be fair, are looking a little bit softer. It was a very mixed session for the US as well. US dollar weakness continuing to be a theme. You see it there, 114.19 against the euro. Not a lot of change there against the offshore yuan either. And as we mentioned earlier, President Trump still waiting for China to pick up the phone and make a bit of progress on trade talks.
There's a lot going on, isn't there? And as we kind of deal with the frenetic pace of decision-making and announcements from the Trump administration, so far this morning we've had that proclamation to restrict foreign visas for Harvard. We've had the veto of the UN Security Council resolution on a ceasefire in Gaza. We've had the, as you say, kind of the version 2.0 of the Trump travel ban that we saw back in 2017, right, again targeting a lot of these sort of Muslim population dominant countries again, as well as the directed investigation into executive actions taken during the Biden presidency. So a lot for markets to contend with as we head into the start of trading in Asia in the next few minutes. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable is got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered the supplies he needed from Amazon Business.
Peter Piper, pick peppers, run, rhyme, Humpty Dumpty, fell down, it's our time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated, but we can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate, putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic. Never. This is the Asia Trade. We're counting down to Asia's major market opens. It's been a frenetic morning so far in terms of just the sheer amount of action that we've seen from the Trump administration. Some of it was sort of rehashing what we knew had been in progress, such as this, investigation into the executive actions of the Biden presidency, but also some of these other developments, another travel ban.
Mm-hmm. Yeah, and against that backdrop as well, just ongoing infighting about the fate of the big, beautiful bill. Elon Musk sniping from the sidelines has some pretty pretty strong.
honeymoon is over.
Yeah, he's got some strong opinions about the beauty of that bill, and particularly its impact on US debt. So that's bubbling along as well.
Bubbling along indeed. In the meantime, markets continue to bubble along the best they can. Of course, global equities are doing quite well at the moment, even as we had pretty soft sort of session that we had overnight. Some muted gains, I should characterize that as, when it comes to Wall Street. We had some interesting wage data out of Japan a little bit earlier on in the past hour. Broadly, the headline numbers looked a little bit softer than expected, but the key gauge that the Bank of Japan watches out for actually held up pretty well. So if that is still sort of consistent with their path towards 2% inflation, then the BOJ potentially is still sort of on track, as it were. The Nikkei 225, though, opening out of the gates softer by about 0.5% there, as we also see a bit of downside there for the topics. Dollar yen holding at that 142.75 level there. The dollar in the overnight session falling really to a session low after what we had separate readings that were softer on the US economy. Private sector job growth came in weaker. Services activity also lagged estimates as well. That pulled down treasury yields, of course, across the curve, and really pulled back into question this idea of perhaps we could get a couple of Fed easing measures this year. Also watching Japanese yields, of course. It has been sort of such a source of contention, particularly with these key auctions that we've had recently, Paul.
Yeah, let's take a look at how we're tracking in the Open here in Australia. Of course, the staggered Open, so let's give it a break for a minute. We're kind of flat right now. We're seeing some reasonable gains, though, for a couple of stocks, including BlueScope Steel. If we take a look at how yields are tracking as well, we've seen yields slipping a little bit in the US session. 2 to 10 year yields at their lowest now since May the 9th, and we're seeing that trend continuing at the moment. We did get some data out of the US, weaker than expected services activity. That contracted for the first time in almost a year. Private sector jobs growth showing weakness as well ahead of the non-farm payrolls tomorrow. The market now seeing 2 rate cuts this year, the first being in September. Word on the oil price as well, that's stopped defying gravity, is slipping a little bit. Saudi Arabia saying it wants OPEC Plus to just keep on carrying on with those production increases in the coming months. Saudi Arabia interested in recapturing market share, and we saw US crude inventories falling last week by the most since November.
And Paul, we're also watching Korea very closely, of course, the aftermath of the election result. Pretty sort of confident result, right? The clear victory of Lee Jae-myung in the South Korean presidential election. According to the likes of Goldman Sachs, feeling pretty bullish. They expect that to boost the country's stocks and currency, according to those strategists, largely because the party now controls both the executive and the legislative branches. So that cabinet formation should be swift, and substantial fiscal stimulus is expected. They're also expecting that renewed US-Korea trade talk situation, more progress. This is really key when it comes to the broad corporate governance reforms is all expected. So according to Goldman Sachs, saying all of this should ultimately aid in narrowing that long-held Korea discount in both equities and the currency. So we are seeing some upside there in the aftermath of that pretty clear, concise election result of 0.7%. Paul, I guess this is the idea that the political turmoil, at the very least of the past few months, or the past 6 months, is now firmly behind them.
Yeah, let's get some more on this. We're joined now by Dae-Yeon Hong, multi-asset portfolio manager at Shinhan Asset Management. And Dae-Yeon, thanks so much for joining us. I just want to get your thoughts on how the Kospi is tracking. We're well off those April lows now. Is the top in, or we've got likely fiscal support coming? Dovish BOJ, Bank of Korea, I beg your pardon. Is this all fully priced, or could there be more to come as the new administration starts to enact its agenda?
I think there will be more. We are in the boat also to be overweight Korean equities right now. After months of political uncertainty, Korea finally has a new president, and I think investment community is cheering for that. The new government, as you've earlier mentioned, is likely to quickly push for supplementary budget. The size is expected to be around 35 trillion, which is not small. And the cabinet formation, parliamentary hearings, all are likely to be swift, allowing the supplementary budget to be implemented as early as July. The fiscal boost is obviously positive for growth, positive for equity outlook. One of the key noticeable outperformance we saw yesterday was the financial sector. You also mentioned about the amendment of commercial code, some of the key financial market reforms. And I think this is what the investment community is really focusing on to improve minority shareholder rights. So all this really allows us to be confident in overweight positions in Korean equities.
And we're also seeing reports that a phone call between President Lee and President Trump could happen as early as today. This is obviously a priority for South Korea, is getting a trade agreement sorted out with the US. How much optimism do you have around that, and how much of a tailwind could that provide for Korean stocks?
To be honest, trade negotiations, as we have seen in the past few months, is really unpredictable. But we know that there is trade agreement already in place. So I'm not expecting a huge downside risks coming out of that. And the government will obviously try to negotiate as best as they can. So we could see, in terms of investment implications, we could see some downside risk temporarily, but I think that will actually give Korean equities an opportunities to buy.
Taeyoung, I wanted to get your view when it comes to the corporate governance reform story in particular for Korea. There's a lot of optimism here, but if you compare to how long Japan took to get to this point and the enthusiasm we're now seeing for Japanese equities, how long do you think it could be for Korea and to sort of play that catch-up?
It's a long-term push, and I don't think it will happen in a very quick period of time. However, it's the push and the determination, and the government also having the majority of the Democratic Party as a majority of the parliamentary seatings. So that will allow them to really easily push for whatever is needed to really reduce that Korea discount. So I think the optimism can stay for at least a few months, and we'll have to see how much of that is really followed by the actual passing of the law. But at this juncture, at least in the short-term view, I think it could attract a lot of investors, especially from overseas, who may not have that overweight positions right now. We've seen a huge 1.5 trillion inflows into Korean equity market from overseas just one day yesterday, and so I can see some of that shift from foreign investors as well.
I wanted to get your views on bonds, particularly where you like holding duration at the moment. We've got another pretty key 30-year auction in JGBs that we're looking ahead to today. Does the correlation when it comes to ownership between treasuries and JGBs give you a bit more caution, and therefore does it make something like Korean bonds, for example, more appealing?
Yeah, that's a great question. I think Korean bonds may move quite independently of U.S. Treasuries and JGBs at this juncture, because we are expecting sizable increase in issuance in bonds due to supplementary budget. So I would wait until we know the exact number of supplementary budget in terms of investing in Korean bonds. Now, JGBs, there was a lot of concerns surrounding high JGB yields the past few months, and we finally saw the government come out and say they will trim that super long JGB issuance. I think it was 27th of May that news came out, and we've seen intraday 20 basis point lower 30-year JGB yields moving 20 basis point lower, and that to me was a trigger and an entry point to buy U.S. Treasuries. Now there are a bit of differences between JGBs and U.S. Treasuries, obviously, because JGB is mostly held by domestic investors, but Japanese investors are one of the main holders of U.S. Treasuries, and the Japanese yields matter from Japanese investors' point of view when purchasing treasuries. So when we see JGB yields fall substantially, it gives me a cue also how the US Treasury could move.
Dae-Yeon, can you give us your outlook for the Korean won as well, which continues to strengthen against the dollar? It could be as much a story about dollar weakness as anything else. And does that make you more enthusiastic about Korean equities as well, and not just Korean equities, but emerging market equities more broadly?
Yeah, we are bullish on Korean won. That's why we, in a global portfolio that we have, we are overweight Korea versus other countries like the US. That gives us more exposure in Korean won too. So I guess it's similar for overseas investors. When looking at Korea, it's not just the return from the equities itself, but there's also potential to gain from Korean won. Last year, a lot of the weakness was driven by domestic retail investors purchasing U.S. equities. It would depend on how the stock market would be like for the rest of the year, but that amount of purchase going out from Korea to U.S. obviously had slowed down, and so I think that there's a less pressure for dollar won to go up, and with the broader dollar weakness, I think there is a room for Korean won to rally even more.
Dae-Yeon, really great to have you with us. Dae-Yeon Hong, who's a multi-asset portfolio manager at Shinhan Asset Management. We do have more ahead on the Asia trade. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered all he needed in one place on Amazon Business.
Peter Piper, big peppers, run, Humpty Dumpty fell down. Kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
There is a sense of urgency that we all must do something.
We shouldn't feel defeated, but we can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems? I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
putting all the knowledge together.
Más gente involucrada, más gente. We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise. The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
President Trump says Vladimir Putin has warned him that Moscow plans to retaliate against Ukraine following recent drone strikes deep inside Russian territory. Trump and Putin spoke by phone as U.S. efforts to broker a peace deal show signs of stalling. That's Brian Bloomberg's Michael Heath. So it's quite interesting, President Trump kind of playing the messenger here.
Yeah, I mean, it's sort of surprising because on one hand, Ukraine's attack was obviously really, did some pretty significant damage to Russia's its strategic fleet there. And as I mentioned earlier, they're sourcing the parts to repair some of those planes, which are really dependent on Western technology now. Russia doesn't make that sort of stuff anymore. It's going to prove problematic under the sanctions. But yeah, you sort of, when President Trump sort of broadcasting this, as Bloomberg reported it, that Putin plans to retaliate, the US wouldn't in some way warn him against it or make any point there. I mean, Russia has been bombarding civilian areas. It's been on the front foot with Ukraine the whole time, so the notion of it needing to retaliate seems strange. And it just seems that President Trump still hasn't quite crossed this barrier of realising that he doesn't share anything particularly special in terms of a relationship with Putin. It's all cold, hard politics. And yeah, that this his post sort of seems to suggest that hasn't changed yet.
We've also got a situation where the UN Security Council has demanded an immediate and permanent ceasefire in Gaza. It's been vetoed by the United States. Why?
Yeah, Secretary Rubio put out a statement, and basically his argument that the wording of it sort of creates this false equivalence of Israel and Hamas kind of thing. But the main thing it seems the US wanted was this, the inclusion of the Hamas disarms that it leaves, that it basically, that it provides equal weight there. It's not just Israel that's the problem here. But it sort of speaks to a broader point as well that, outside of the US, which is obviously massively important, Israel is increasingly isolated in the world. And, the sympathy, the global sympathy, which did last for quite a long time, and it was a horrific attack on Israel. There's no question about that. But just the extent of the war and the amount of force that's being used now, etc. It's really grating, it seems, on the world, and the images are horrific as well. So, yeah, I mean, look, on one hand, the US supporting Israel is sort of not unexpected, but it almost sort of feels perfunctory too, because I'm not sure the US is particularly happy with what's going on there. Again, a bit like Ukraine and Russia, this is just an intractable issue at this point.
All right, Bloomberg's Michael Heath there. Coming up later on Inside with Taslinda Amin, former Australian Prime Minister Malcolm Turnbull will weigh in on President Trump's efforts to reshape the global political and economic landscape. You can catch that interview at 11:15 this morning in Hong Kong. That is 1:15 p.m. in Sydney. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Peter Piper picked a peck of pickled peppers, but the process was painful. So he ordered the supplies he needed from Amazon Business.
Peter Piper picked peppers, rhyme, Humpty Dumpty fell down, kids are time.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated. Well, we can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems?
I love for my research to have an impact in the life of people.
It takes a collective effort from all of us
to inspire, to educate, putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
Bloomberg has learned that China is considering placing an order for hundreds of Airbus aircraft as soon as next month, when European leaders visit Beijing to celebrate the country's long-term ties. Katrina Nichols, who leads our Asia transport coverage, joins us now with more on this. So, Katrina, how significant is this deal for Airbus?
Yeah, well, look, it is very significant because of the magnitude of the deal. We're hearing that as many as 300 planes could be involved, and one person familiar with the matter saying that could even stretch to as many as 500 jets. So very significant for Airbus. Airbus has been steadily increasing its share of sales in China, and that's helped by the fact they've got this final assembly line in Tianjin for its very popular A320 family of aircraft. I think also it would allow Xi to send quite a strong message to Trump over trade. You know, we've got French President Emmanuel Macron among leaders that may visit Beijing in July to mark 50 years of diplomatic relations between China and the EU. And France and Germany are two big shareholders in Airbus. So I think inking that sort of deal, when the US and China are at loggerheads over trade would probably send Trump a real message.
In terms of the potential magnitude of this deal, how does it rank against sort of other, sales deals that we've seen?
So, should the order run up to 500 planes, it would certainly rank as one of the biggest ever globally, and certainly also the largest for China. There was a deal for about 300 single-aisle jets, Airbus jets, that was made back in 2022. That was worth about $37 billion at the time. So that gives you the sort of scale of at least the dollar figures that we're talking about here. In terms of other really large aircraft orders that we've had over the more recent years, Air India, they inked a purchase for 470 Airbus and Boeing planes back in 2023, and a little bit later that year, in around June 2023, another Indian airline, a lot of growth in that market, placed a record-breaking order with Airbus for around 500 narrow-body aircraft. So anywhere between 300 to 500 is really going to put this potential deal up there as one of the world's biggest ever.
Katrina, let's talk about who this deal is not with. It isn't with Boeing. How significant is that?
Yeah, well, Boeing hasn't actually won a major order from China since at least 2017. And this is due to, quite a number of issues, not only the trade tensions that I mentioned before, but also several sort of what you might call self-inflicted issues. If listeners recall, back in 2019, China became the first nation to ground the MAX, the 737 MAX, following those two deadly crashes. And then there were trade disputes with Biden, and even in the first Trump administration, that also helped tilt any aircraft orders that we did see come out of China toward Airbus. And then, as recently as January last year, Boeing suffered another sort of huge quality control crisis when a door plug blew off Atlantic flight mid-flight, and that forced Boeing to slow output and really dented its reputation among the flying public again. So definitely this is a big win for Airbus if it comes to fruition, and I suppose you would say another setback for Boeing.
All right, Katrina Nicholas, who leads our Asia transport coverage. Well, Carlyle Group partner Steve Wise says companies without direct exposure to US tariffs should use this time to be more aggressive as others retreat. Speaking to us exclusively at the Super Return Conference in Berlin, he also explained how CEOs are coping with trade tensions.
We just, fortuitously, we had a forum with our CEOs, about 40 of our CEOs, just a few weeks ago. I think the reaction back then was, wow, just trying to understand the magnitude and the severity of the tariffs. It kind of caught a lot of people off balance. But in the last few weeks, they've had a chance to catch their footing. I think a lot of CEOs, certainly our best CEOs, have found their footing in this moment. And they've kind of gone through a playbook. The first thing is assessing the risk. For those that have direct tariff risk, what is that and how do you assess it? That's been done. That happened in a few days. Then it's how do you shore up your supply chains? How do you find, get vendor concessions, alternate supplies? A lot of that's been done, and some price increases to the extent you can do it. The third thing that they've done is look at their balance sheet and their liquidity and make sure they can endure, what could be another change to the tariff situation. And it's also a really good time to find a way to cut costs. It's hard to cut costs in really ebullient times, but in times like this, it's an opportunity to tighten your belt. The fourth thing that they've done, and the most important, is staying close to the customer, and seeing what the customer wants and what the customer needs. A lot of our company's competitors had a haphazard reaction to the tariffs and increased prices very quickly, which really made customers upset. A lot of our better companies didn't do that. They talked to their customers, they figured out what was needed, and they're able to take a lot of market share. So that was, hugely important. And the last piece is just investing in their business, being more aggressive, and being having their foot on the gas when others are retreating.
That's interesting, because what we've heard from a lot of businesses is now is the time to pause, to not be spending capital, to wait things out. Is that not what you're telling your CEOs to do? You're saying go full forward, and now is the time to invest in yourself?
For companies that have a lot of tariff exposure, and that's a very small part of our portfolio, we want to make sure those first things that we said are in solid shape first. But for a lot of our companies, which are service-based, U.S.-only based, which are in technology, they're in healthcare, they're in financial services, they don't have a lot of direct impact. We're asking them to lean in and be aggressive while others are retreating.
That's Carlyle Group partner Steve Wise speaking exclusively with Bloomberg's Danny Berger. Other political stories that we're following: President Trump has signed a proclamation banning individuals from 12 countries from entering the U.S., reinstating one of the most controversial measures from his first term. And this comes in the wake of an attack in Boulder, Colorado, that targeted a march in support of Israeli hostages. Second-term travel ban includes Afghanistan, Myanmar, Chad, Haiti, Iran, Sudan, and Yemen. The measure also partially limits entry from 13 other countries. The U.S. Education Department said Columbia University no longer appeared to meet accreditation standards due to its violation of federal anti-discrimination laws. Secretary Linda McMahon claims the school acted with what she called deliberate indifference towards the harassment of Jewish students as pro-Palestinian protests roiled on campus. Columbia, for its part, says it's committed to combating anti-Semitism. For the first time in 6 years, the Indian Prime Minister might miss the G7 summit. And this is being attributed to frosty ties between India and this year's host, Canada. Sources tell us that Prime Minister Modi has not received an invitation yet from Ottawa, but officials say Modi's unlikely to attend even if invited. India, of course, not a member of the G7, but has been invited to every summit since 2019. More to come on The Age of Trade. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
Peter Piper picked a peck of pickled peppers, but he persistently missed packages. So he scheduled his deliveries from Amazon Business.
Peter Piper picked peppers, but run, rock, rhyme, Humpty Dumpty fell down. The kids are down.
Soon, he possessed profound pepper proficiency. And Peter Piper, the pepper picker, positively prospered. Amazon Business, your partner for smart business buying.
It's just like our new house. I hope you have an American Home Shield warranty. Leaky toilet? Fixed. Oven beyond repair? If AHS can't fix your comfort item, then replace it, no matter its age. Sign up today at AHS.com.
This is the challenge.
The Challenge Channel keeps you in the competition.
The most competitive and cutthroat game on television.
It's gonna get ugly.
Revel in all the mud, sweat, and tears on the Challenge Channel.
Take a look at Nintendo. It is a big day, of course. The launch globally of the Switch 2 console. High demand is expected. Retailers are organising events for gamers to try it out. There's been global lotteries that have been taking place, limits on how many units that people can buy as well. But of course, at the end of the day, this is going to be a crucial element for Nintendo. A strong debut is really needed for the console given the higher price tag. We're seeing a bit of downside in trading in Tokyo today for Nintendo stock. Let's bring in Bob O'Donnell, President and Chief Analyst at Technalysis Research. So the price tag, do you think it's going to be worth it in the minds of, enough consumers to make this a sufficient success?
Well, thanks, Heidi, for having me. And yeah, look, initially, of course, there's going to be massive demand for it. Like you said, there are huge lines and lotteries and people very eager to get it and looking for who is going to restock it because the first orders are commonly sold out in a lot of retailers around the world. So there's huge pent-up demand and excitement. I mean, look, Nintendo has done an incredible job of creating these very friendly and, for the most part, fairly affordable devices. And most importantly, of course, it's that games, right? It's all the Pokemon games, all the other games, the Mario games that they've created over the years that just keep their platforms so sticky. And people are excited to get a better version of the Switch with the Switch 2.
Bob, anecdotally, what are you hearing in terms of the level of enthusiasm and how crucial is this going to be for Nintendo's business more broadly, given how long awaited this upgrade is?
Yeah, well, I mean, it's been like, 7-8 years in the making until to Switch 2, and it is incredibly important. But, one of the big questions is how many people with original Switches are going to want to upgrade? Just on a personal note, I have 2 adult children, each of whom own the original Switch, love it. My daughter in particular uses hers all the time, and I asked them both, I said, hey, are you guys going to upgrade? And both of them were like, nah, they're okay with their first one. And one of the concerns that my son raised actually was he's like, look, the price of games, $80 or $90 versus the original games, were $60. That's a big price jump. Those are U.S. prices, obviously. That's a big jump for a lot of people, and there is a concern that the game cost could be a little bit of a detriment for certain groups of people.
Also, how exposed are these consoles to the whole tariff environment as well? Because these are manufactured in the countries that the U.S. has been targeting.
It's very true, Paul. And, look, there is as much subject to the tariffs as anything is these days, which could be anything and it could be nothing. It's hard to tell anymore. But obviously that would be a big issue because, a lot of people who are buying these are younger, their incomes are lower in a lot of cases. It's kids or teenagers or young 20-somethings in a lot of cases. Of course, a lot of adults buy these too. But the point being that additional tariff cost could be a big factor for certain people. Now, look, the other thing I was going to say, the other side of the equation in terms of buyers, because it has been so long since that first Switch came out, you could argue like there's a generation of kids, half generation of kids out there that never had that exposure to the first Switch. I mean, the first one's been around, but this is going to feel fresh and new, and so hopefully there's a lot of excitement there. You've got some nice hardware ray tracing, better graphics, faster frame rates, 4K TV support. So there's definitely some enhancements there, and some folks are going to go for that.
I think the last console I had might have been an actual Game Boy, or maybe I didn't even own it. I might have just borrowed it from a friend. But Paul, I know that you own the previous iteration. Just as a straw poll, are you interested in upgrading?
Yeah, look, it's a good point. I'm a geek from way back. I've loved video games since I was a kid, and the technology just keeps getting better. But to answer your question, I do have the original Switch, but I'd rather keep the $450. So Bob, I'm like your kids in that respect.
Yeah.
Down the track, how does Nintendo keep sales rolling? Are we going to see discounts heading into Christmas, that type of thing?
I mean, I don't think we will. I think usually, especially with the first year of a new generation console, I think the prices are probably going to be fairly safe. Again, depending on the tariff situation. But look, there's going to be new games that take advantage of the higher power, horsepower. It's an NVIDIA chip, by the way. It's a custom NVIDIA chip for this, which will help their gaming business in the long run. But we're going to see new games that take advantage of these higher frame rates, the higher resolution. And of course, now they have accessories. You're going to be able to get cameras to be able to watch other friends play. That's another capability you couldn't do on the first Switch. So, I mean, again, there's going to be a number of things out there that I think will keep the price points high and will trigger a certain amount of upgrades from existing users, but also I think will be a new opportunity for a lot of people who never bought into the first Switch and maybe have been doing PC gaming, which continues to be popular, but they like that interactive capability, the live chat, giving your friends grief as you're playing with them. All that kind of stuff is fun, and I think this becomes available here on the Switch too.
This conversation is making us all feel really old because, you make the fair point. The gap has been so long in developing this follow-up that there is, in fact, new generations of kids, actual kids, not just kids at heart, like the rest of us, who, might be a pretty strong demographic for Nintendo.
I think it is. Look, Nintendo has always done very well with young kids because they've had very family-friendly games, and everybody is comfortable playing these games, and parents are comfortable buying the devices with these games, the Mario Kart games and the Pokemon games and all of those. They're all, very widely, friendly to, in any kind of culture. So I think that's where, Nintendo continues to see their opportunity. And people, it's clear, people love to game. I mean, I remember 10 plus years ago, people were saying, oh, it's going to be the demise of gaming consoles because people are going to do it on PCs and most importantly, they're going to do it on smartphones. And sure, we see that, but that hasn't kept the console market from continuing to be an important force. And this is just yet another example. And of course, Nintendo is the key player here. And they have a great form factor, and it's portable and yet can plug into the TV. So it checks a lot of boxes for a lot of folks.
Bob, never mind buying the Switch console. Do you buy Nintendo shares? They've had a pretty good year so far.
Look, fair question. It's the big question mark that overhangs all this, certainly for the U.S. market, is going to be any potential tariffs, and we just don't know. I think, Nintendo is like a lot of other consumer-oriented tech stocks where there's a lot of uncertainty. It's just not clear whether or not those could be a big factor. I would argue, look, they have been proven to be pretty timeless. That is the games and the consoles, which in the long run is a great thing. It means you get a lot of life out of these things. They've gotten unbelievable life out of, Pokemon games and cards and all the other things that they do. And so I certainly think there's growth opportunities there. And that would, depending on how you interpret that, that certainly seems like an incentive.
If you want to be that really fun parent, you can buy them NVIDIA shares instead of a Switch console. Your kids will love you for that. But Bob, we mentioned tariffs a little bit earlier. Clearly, there's still a lot of uncertainty, right? Things are changing from day to day. We know that parts of this are dominantly made in places like Vietnam and China that would be heavily hit if there is no longer-term resolution. I think Bloomberg Intelligence saw that price going up to somewhere close to $600 in that situation. Is that a risk that you're still watching, or do you think that the tariff situation, the supply chain situation, even pertaining to chips and such, may have calmed down enough?
Well, I mean, it's calmed down for now, but, 24 hours from now, it could be totally different. That's the problem. It's that uncertainty that I think has really been driving people kind of crazy. And you can't pretend like they've gone away. They haven't completely gone away. They're apparently on pause right now. And there's certainly this, chance that some of these tariffs could come back. I mean, the steel tariffs just kicked in. we'll see what happens. And the problem is that, ultimately, I'm a strong believer that tariffs are not going to manufacture new jobs in the U.S. just because people want that to happen. These supply chains are so complicated and so complex and so interwoven amongst different countries. You're going to have to continue to have that to have a robust consumer device and other technology market. And I'm hoping that the administration is going to recognize that and move accordingly, and we'll see what happens. But to answer your question, you can't pretend it's not there and avoid it. So yes, I am still watching it, as I think most people in the tech industry still are.
All right, Bob, always great to get your insights. Bob O'Donnell, President and Chief Analyst at Technalysis Research. Thanks so much. And stay tuned for live coverage on Bloomberg TV and radio from the Bloomberg Tech Summit in San Francisco. Industry leaders are gathering to discuss how executives, entrepreneurs and investors can navigate the hazards and opportunities in today's business landscape. We're going to be hearing from Alphabet CEO Sundar Pichai later this hour. Heidi.
Take a look, of course, at how the trade war, even with this trade truce for now, affecting Chinese food delivery platform Meituan. We'll be speaking with their Vice President, Yinan Mao. Don't miss that conversation on Friday, 7 a.m. Hong Kong time or 9 a.m. if you're watching here in Sydney. More ahead on the Asia Trade. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
There's a sense of urgency that we all must do something.
We shouldn't feel defeated.
We can do it.
Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems? I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
Sentiment has changed. The whole tariff events have impacted mostly, I would say, the growth in the U.S.
Market forces, the so-called BOD vigilantes, have woken up those to the concern about the growing deficit in the United States.
They are starting to pause or slow down, at least, their allocations to the U.S. Bomb that people are watching is tax policies and potentially a tax war.
Right now, the big focus is on rates and the deficit, obviously, as the current administration is focusing on their big, beautiful bill.
And this is mainly the result of the global trade war, the risk of tariffs, although not knowing exactly what the impact will be. But Europe suddenly appears more attractive now.
And people are seeing Europe as a safe haven at the moment.
Some of our guests there at this year's Super Return Conference in Berlin with their views on European assets. For more, let's get now to our Bloomberg FX and rate strategist, David Finnerty. And David, we're on central bank watch again. It's the ECB up next. 25 basis point reduction seems pretty much nailed on at this point. But what are the implications here for the euro? Because we've got a weakening greenback as well.
Yeah, I think this is what he said. The ECB is widely expected to cut by 25 basis points. What the market's been looking forward to is what it signals moving forward. The market's pricing basically one more cut this year. Does the ECB, given the recent inflation data was weaker than expected, does it signal maybe the chance of two, or does it say no, one and done? Obviously, if it's one more additional cut, then that's already priced into market. So it could actually be always supportive. But as you said, it really goes to the dollar dollar side of the equation now. And, what happens with dollar? We saw the data come out last night, overnight, and, ADP data came in weaker than expected. I think even more interesting was the services data came in weaker than expected, the ISM service data. Remember, the US economy is a service-related economy, and you actually saw the data come in weaker, but the prices paid come in higher. So if you're in the stagflation camp or worried about stagflation, you would certainly look at that data and go, there's some proof of that. Now, of course, one piece of data doesn't make a trend by itself, but it's something to allude to. So I think going forward, your markets can look at what's payrolls come out on Friday, but certainly the idea of how is the US performing is still in debate because the data's coming out very mixed at the moment. If it's better, dollar rallies. If it's not, dollar weakens. And as a result, the euro goes the opposite side. So I think at the moment where the euro goes, ECB is going to come and go. They'll very quickly move on US data with non-farm payroll being obviously the most important piece of data this week.
So if we get that unemployment rate shifting up maybe 4.5%, do you think that's going to be enough to kind of further solidify these expectations of 2 Fed moves this year?
Yeah, I think the market has said, is priced in 2, and the Fed has been pretty clear on it. It's like 2 is what we're looking. The dot plot said 2. Lots of Fed speakers said, look, we're not going before basically September because we need more data. But as you rightly alluded to, the unemployment rate really of all the data is the key thing to look at because that's what the one thing piece of data the Fed has said, look, that if we look at all this data, that's the one that we are definitely looking at. If it does uptick, then it does raise the question is 2, will it be maybe 3? Do you go September and the other 2 meetings after that? The market always is very happy to price in rate cuts if you give it a chance. And obviously we have President Trump encouraging the Fed to cut rates. So I think if that unemployment rate does uptick, the market will go, well, okay, it is 2, but there's a good chance it may be 3 before the year's out, even if we start in September. And obviously that would add to dollar weakness.
JGB is back in centre stage with another key auction. What are you watching?
Yeah, I think this is the key thing. JGB auctions for the last 2, if you look at the 10-year and the 40-year, they both come out very different. One being very good, one being very bad. So the question is, okay, how's the 30-year come out? And now obviously it's longer term, so you go, is it more like the 40-year, which was bad? But I think the question is about that. It's like, well, how does this auction come out? Because we have had mixed reactions recently. Obviously, if it comes out weak, and that's an if, I'm not saying it will, if it does, then that puts pressure on yields. And I would certainly say the 10-year, even though it's a 30-year auction, if you look at the 10-year yield, that 1.6 level is certainly, everyone's looking at that level, shall we say, if it was to breach that level. So I think today is going to be very interesting in terms of we've had good, bad. Is today the Goldilocks scenario where it comes in just right? So, time will tell, shall we say.
Bloomberg FX and rate strategist David Finnerty there with what we're watching today. More ahead on the Asia trade. This is Bloomberg.
I'm Jason Kelly, and this season on Power Players, we're taking you behind the scenes to see how the business of sports has gone global.
I want sports to grow. I want sports to be bigger because we have talent.
What we have achieved in the NWSL from an investor perspective over 2 years is the equivalent of what it took other leagues 25 to 30 years to achieve.
You've got to have a business that's sustainable. The only way it's sustainable, it's got to make money.
There is a sense of urgency that we all must do something.
We shouldn't feel defeated, but we can do it. Perpetual planet means protecting nature as if our lives depend on it.
We have to keep hope alive.
How can we use our skills to solve these global problems? I love for my research to have an impact in the life of people.
It takes a collective effort from all of us to inspire, to educate,
putting all the knowledge together.
Más gente involucrada, más gente.
We are not going to stop until we get the job done.
It was just the beginning.
Fantastic.
look at how we're faring about 50 minutes into the start of trading here. Really the highlight today might actually be Australia. We're seeing an upside of just about 1/4%, but still that may be enough for this index that is poised to close at a record high. That previous closing record high was from February 14th, but of course this is a benchmark that has really tracked global equities higher in recent weeks. Really some of that supportive sentiment coming through from a softer Trump tone on tariffs, expectations of further RBA cuts, particularly with the softer eco data that we got throughout the course of this week as well. And we are seeing a pretty decent rally. Tech property shares among some of the highest gainers here in Sydney today. This with that global backdrop of equities worldwide hitting that record high. The previous high was also set in February as well. The softer US eco data overnight also giving us giving traders some expectations of more supportive easing measures from the Fed this year. The Kospi also looking pretty good, putting on about 1% in the aftermath of what was a very decisive and clear election result. We are hearing some very good signals from the likes of Goldman Sachs saying that the election result should revalue both stocks as well as the Korean won as well, given that we expect a pretty quick, swift and substantial fiscal stimulus to come through, the formation of the new cabinet, the control of both the executive and legislative branches by Lee's party. All of that should feed through to more progress when it comes to broader corporate governance reforms, those US-Korea trade talks, and just more decisiveness when it comes to policy making. The underperformer in the day's session is really what we see in Japan, about 0.3%. But of course, the action there is really watching for the 30-year bond auction, which will be seen as crucial and a great deal of caution. Let's take you live now to the Bloomberg Tech Summit in San Francisco, where Bloomberg's Emily Chang is speaking with the Alphabet CEO, Sundar Pichai. In a way, Mo.
I would have loved to. We're still working on making sure they're safe and can get through freeways. We're making great progress, but hopefully same time next year, I can do it all the way from Mountain View.
All right, I'm going to hold you to it. So I just want to start with a vibe check post-IO. I feel like we saw a slightly more confident and cohesive Google. How would you describe it? Like, are you getting better at choosing your own dance music?
Look, I think when you undertake a set of things, it takes time, but internally we have known all of this was in progress. We've been training Gemini, releasing versions every few months. I think 2.5 was a real breakthrough in terms of capabilities, and it's at the frontier of where the models are. And so putting that in our products across our suite of products, I think that's what makes the story come alive.
So candidly, I'm using chatbots more and I'm using Google less. Maybe you are too. What is the fate of search in a world of AI agents and personalized answers? Is it evolution or extinction?
Look, people have been asking this question now for a couple of years. You've had these chatbots scale up to hundreds of millions of users. We've grown in queries. So I think it feels very far from a zero-sum game to me. To use other areas in parallel, like TikTok came in, everybody started using TikTok. YouTube grew and did very, very well in those moments too. So, I do think search is very, very good at what it does. Empirically, people value it for what it does, and they're actually showing it by using it more.
So investors are clamoring to know, but you haven't shared the specifics. How much money are you pouring into AI, and how much money are you actually making from AI?
Well, in 2025, our capex is $75 billion, right? So we are definitely investing for the long run. But, it's the same investment which powers businesses from search to YouTube to cloud to workspace to Android and Play to Waymo, right? And so, and to our subscriptions business, we just launched Google AI Pro and Ultra, and it's definitely doing well. I've been pleased to see the reception. So I think it's such a profound technology. I feel the opportunity ahead is bigger than the opportunity we had in the past.
So to double click there, if I may, what specific new revenue streams do you see increasing, and what revenue streams do you see decreasing?
There is, look, our entire, the growth in cloud, like Vertex AI, is up 40x in usage on a token basis just in the last 12 months. So obviously, we have billions of dollars in providing AI-based solutions, in AI as an infrastructure, AI subscriptions. So there are many, many new businesses.
YouTube and the web more broadly is being overrun with AI-generated content. What effect is that having on Google products and services? Are you finding you need to allocate more resources to filter out the low-quality content?
I mean, look, anytime there are these technological inflection points, it's always a cat and mouse game, right? So the new technology creates new opportunity, more people can create content, but you also have a rise in low quality content. I think moments like this is what we actually, it's what Google is good at, right? Separating, finding the needle in the haystack, making sure you surface the higher quality content. We are using Gemini to help improve YouTube's recommendations. So we are using AI to help improve how we direct content, etc. There are good content being created using AI as well. So we're just trying to elevate high quality content.
There is a lot of anxiety out there about the health of the open web. AI it relies on the good stuff. Like it relies on high quality content. As you push further into AI-generated content, does that undermine the entire system? Like, does the web become just a watered-down version of itself?
Look, it's another area, people have had questions about the web now for the past 10, 20 years, right? I said this during I/O, but if you look at the index, we index the web. The number of web pages that we are indexing is up 45% just in the last 2 years alone.
What about the last 2 months?
There's just definitely, people are creating a lot more content. I do think, creation is getting easier, not just in web, across, if you look at YouTube, etc., the amount of content is exploding, right? And so I do think as content creator, you have to think about many, many modalities, platforms, etc., but the opportunity space gets bigger.
You've said AI overviews are good for publishers. The publishers we talk to say it's tragic. Like studies show dropping click-through rates. I don't always click through when I see an AI overview. You're answering the question for me right there on Google. Publishers say they can't opt out or they might be de-indexed from Google entirely. So what is the concrete evidence that this is actually for them and not just good for Google?
A few things. I think compared to most companies in the world, we take care to design experiences which is going to showcase links, right? And we took a long time testing AI overviews and prioritized approaches which result in high quality traffic out. I'm confident that many years from now, that's how Google will work, right? We think the value proposition in Google is people come. Yes, sometimes they may get answers. That was true when we launched featured snippets many years ago. But people come back, people are curious, people are expanding their use cases, and people do seek out sources on the web. And we are going to prioritize approaches. Obviously, with AI overviews, the quality improves, the context we are giving users improve. What we are seeing is people are clicking and going to a more diverse set of websites, and they are spending more time on average per click.
You announced new spectacles at I/O. Maybe Google Glass was ahead of its time, but I'm curious what evidence you have that we really want to put computers on my faces now, on our faces now, and give tech companies even more of our information.
Look, ultimately, you could have asked questions like this about driverless cars, right? Ultimately, it's the people who choose what they want to do, right? And so you will only succeed in these things if you're building something delightful. I'm wearing glasses right now, right? So for me...
They don't have a camera in them, do they?
They don't, and they don't have a display in them, they don't have audio in them. But if you could make something which has no additional cost for me, but when I want it to, it's going to give me important information, make it more useful, my life gets better, look, I've been playing around with the AR glasses. In fact, I was talking with a friend who had it on and shot a basketball, and he had an air ball, and it told him like